within. And we absolutely do see opportunities within Europe. We can talk about banks alongside, U.S. banks as well, but banks in Europe, I think, are a really interesting focus given the improvement we've seen from a fundamental perspective, but also the shareholder return that I think from a dividend perspective and also buyback perspective, which is, I think, important.
So that's interesting because we've had someone else on the show this week also making the case for European banks, and despite this weak kind of macroeconomic backdrop for Europe, particularly versus the US. But there is a case there to get further exposure to European banks. Some of those the positive catalysts, you would argue, are not yet priced in.
I think we continue to see more upside potential, especially when we're looking at, what that earnings staying power could be, and when we're also looking, I think, at some of the underlying drivers in terms of, loan growth, credit quality, and then I think, on top of that, of course, you are talking about a higher for longer rate environment, even if it is a hold or even if it is one hike and not a sustained cycle. Again, that higher for longer environment, I think, is a positive one for banks. And within the European story, I would also add, of course, this focus on security, and I'd also, highlight again technology within Europe as well.
What would you avoid right now? Which sectors, whether it's Europe or the US, is there a sector that stands out to you that's either looking too richly priced or fundamentals are looking fragile? Is there anything that you would steer clear of?
I think that, again, it comes down to the individual, company stories, but there are areas of the market that we see, less promising opportunity. For instance, staples is one of those when we're in more of a, a volatile inflation environment, and, the read-through into what that means for raw materials and what that might mean for consumers and durable goods. That's probably one area that we would highlight as being a little bit more, hesitant on.
How do you think about the UK right now, UK stocks? I mean, there's the FTSE 100 or the more domestic stocks. Is there a role to play? Is there once we get more political certainty after Monday, do you relook at allocations around the UK, or is the growth story just not conducive to wanting to have exposure?
So I think the market's not the economy for any of the markets that we're discussing, as you know, and so certainly you might see the market trade in a way that might feel counterintuitive to what the economy is also signifying. But I think given the degree of uncertainty that we continue to face, we would take a very, I think, selective approach to investing within the UK market.
Okay, very interesting. Madison, thank you as ever for your time, for your insights. Madison Fuller, Global Investment Strategist at JP Morgan Private Bank. Let's check in on the .46 right now, and ASML is going to be the standout as we bring up the chart for you. There you go, the pop of 5.5%. You had seen gains of 7%, which had been, I believe, the strongest gain off an earnings picture for ASML since January of 2024. The gain's now 5.4%, so still decent for ASML. On the downside, you're seeing pressure on Rheinmetall, speaking of the defense space, down 3% right now. Rheinmetall taking a knock then. Nestle a bit weaker by 1.2%. Schneider Electric just down by 0.3%. LVMH in the luxury space, that is the other upside story coming through on the back of decent numbers, very strong numbers for Richemont. So LVMH is up 10 points, up 2%. Let's get more in terms of some of the individual stocks on the move this Wednesday and bring in Chloe Melee. Chloe.
Good morning, Tom. Indeed, you were just talking about luxury, and we are seeing green across the screen for that sector this morning after Richemont came out with very strong sales numbers that were driven in particular by strong demand in the US for Cartier jewelry. And so this is the first big luxury company to report this season. And as we can see, this is injecting some optimism into that sector and driving up the rest of that industry this morning, with LVMH, Hermes and Kering also in the green. We are seeing a very similar story for ASML, which is also driving up the rest of that sector, with the exception of STMicro. So ASML came out with an upgrade on sales guidance, and essentially the fact that this AI boom is really boosting demand for chip-making equipment. And so we are seeing that read across in ASM&B Semiconductor this morning. Moving on to the banking sector, and specifically in Sweden, well, we have two different stories there. We have SEB beating in their interest income and therefore seeing that boost in the shares, and Handelsbanken missing their interest income estimates and therefore seeing that bit of a drop in the shares. It seems that those two companies, those two banks have reacted very differently to this change in the interest rate environment in Sweden and have different levels of resilience to that. Moving on to the house building sector over here in the UK, and Barratt Redrow is up quite strongly this morning, more than 4% after announcing a buyback and saying as well that profit will come in line with expectations. This was seen as quite reassuring given the very worrying updates that we've had from different house builders over the last few weeks. It's worth noting that those rising building costs and that lower demand are still challenges for that sector. And finally, let's end on Evotec, which is the pharmaceutical company that yesterday saw a huge drop in the shares after cutting its full-year sales guidance. And today it got downgraded by TD Cowen analysts. And so we're seeing further weakness in those shares this morning, down more than 6% for the pharmaceutical company.
Chloe Melly, thank you very much indeed with some of the stocks on the move this Wednesday. Coming up, more on ASML as the firm boosts its full-year outlook, riding the global AI investment wave. We have the details and a view on what could be next for this company. That's coming up. This is Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in 1.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Latest business news wherever and whenever it happens. I'm Scarlett Fu, reporting from America's biggest military shipyard. This is Bloomberg.
Welcome back to the opening trade. We are 18, almost 19 minutes into today's session across the European benchmark. benchmark, you are seeing now modest losses of 0.1%. Here in the UK, the FTSE 100 is down 60 points, as you can see. The CAC current is over in France, currently down 0.2%. The DAX also weaker by almost a full 1 percentage point. This is despite the fact that we have strength coming through for earnings from ASML and in the luxury space as well. And luxury as a sector is one of the best performers, is the top performer right now, up 2%. Tech is also gaining 1.6%. Shares of ASML higher. That is the positive story in the tech space, and higher by 6%. Look at that, after the firm lifted its annual sales forecast for the second time this year and laid out plans to increase production as the surge in AI spending drives demand for the Dutch company's chip-making machines. Let's bring in Bloomberg's Amsterdam Bureau Chief, Dasha Afanasieva, now for the details. Dasha, talk us through the earnings then. Where is that demand coming from for ASML?
So for the quarter, ASML beat on both sales and net income, but what we really care about is the forward-looking indicators. And for the full year, you got quite a significant increase in the outlook, as you said, for the second time. Of course, that's driven by AI capex spending. ASML's customers are scrambling to get more capacity, and then therefore, at least for Logic and DRAM, their own customers are putting in longer-term agreements. So that's why ASML has given this much more detailed update with greater visibility for 27 and 28.
That's really interesting. Those long-term agreements are starting to benefit ASML, so we get a bit more clarity. What have executives been saying about how the company can ensure that it delivers on this high demand then?
Well, that's right. Sort of the demand has been less of a concern recently, and it's been the question of whether ASML can actually meet that with supply. And I think ASML sought to reassure markets on that today. It's increasing capacity by 30% next year for EUV and investigating whether to do so in 2028 for EUV. And of course, EUV, which is the second most advanced machine that ASML has, drives demand in DUV because each chip is made with both. So they're looking to increase capacity for that by 30% in both years too.
What are the order plans then for, as you talk about EUVs, what do we know about their order plans for their EUVs, whether it's the low or the high NA? Do we have more details on that?
Yeah, we do. So for the EUV, what's underpinning those capacity expansions is that they're already close to receiving all of the EUV orders they need for 2027, and they're increasing they're also getting a large number of orders for 2028 as well. On the high NA, there's a major milestone for ASML in that Intel, one of its biggest clients, has said that it's actually properly using the most advanced high-NA machines, which means that the new Intel chips will actually be using this machine, which is important because there's been question marks over the adoption of this most expensive machine, with TSMC, for example, saying it costs too much for now.
Yeah, no, that's interesting. What we've been hearing from Intel, because they took I believe the first high NA EUV, but were kind of using it to test, and now they're actually using it for production. So that's an important marker, isn't it, as you say, for ASML. Dasha, thank you very much indeed for that update on of course, a company that is currently Europe's most valuable, with the stock up close to 6%. Dasha Afanasieva with the details there. Let's turn to the luxury space, because Swiss luxury retailer Richemont, their shares are jumping as well and lifting the broader luxury sector after its first quarter sales expand nearly twice as strongly as expected, supported by robust demand among wealthy Americans. Richemont's jewelry division, which accounts for 3/4 of its business, posted growth of 24% in a sign of resilience against a broader luxury sector slowdown. Is that still what we're seeing? Let's bring in Bloomberg opinion columnist Andrea Felsted. Andrea, what is driving this US demand? The US story is really strong.
It is, and it tends to be correlated with wealth creation and stock market. And as we know, the stock market has been on a tear. When Americans see their stock portfolio go up, they treat themselves to luxury goods, and that's what's happening.
Okay, so it's partly linked to the stock story,
Absolutely.
the equity story.
Absolutely.
Okay,
yes.
that's really interesting. We wrote there in the intro then that this is on the backdrop of a slower picture when it comes to the luxury story. Is that the right way to frame it at this point?
Well, this is undoubtedly good news. You know, US spending is still going strong. There were worries it would slow. China does seem to be recovering, albeit slowly. China is going, so you've got those two engines of growth are going in the right direction. But we shouldn't get too excited. There is limited read across. Jewellery has been a very strong sector. As the price of handbags has gone up, jewellery's looked better value for money. So many customers have switched to jewellery. Richemont has some fantastic brands, namely Cartier. And although it's jewellery that's driving it, Cartier watches is counted in jewellery. So the strong growth in Cartier watches, the Panthère has been a real standout, the Bangle watches, the switch from those big chunky steel sports watches to smaller gold watches. You know, Richemont is at the forefront of that.
So the point you're making is that the gains that we're seeing in the luxury space today, the read across from Richemont maybe isn't justified. This is to some extent an idiosyncratic Richemont story. At least Richemont has a particular story to tell.
Absolutely. I mean, it's no doubt good news. This shows luxury isn't falling off a cliff, but it's perhaps no one else will perhaps be as good as Richemont.
Okay. What else? What other trends are you going to be watching for in the earnings story when these companies report? Is it China? Is it that K-shaped economy in the US? Is it production costs? Is it input costs? Is it metal costs? What else is going to be?
I think one of the other things to watch is we've had this great luxury reset, lots of designers. So we're going to get all their collections sort of came in, sort of, you know, probably from the start of this year, the new designers' collections will be coming in. We need to see if they're working. So this is going to be the first sign of whether that great reset is encouraging customers to buy.
How is things like AI changing luxury in terms of how consumers access these products, the marketing for some of these, how designers are thinking about using AI tools? Is that something you hear about? Are these companies starting to think about that?
Yes, I mean AI is starting to change the way we perhaps search for goods. You know, the search is different, so you maybe get different kind of search results. I don't think, you know, we're going to buy luxury through a bot. You know, we might buy something, you know, functional, but I think luxury, you still want that personal touch, and you want that, you know, you want that feeling when you buy luxury.
Before you drop thousands of dollars.
Exactly, yeah.
Okay, Bloomberg opinion columnist Andrea Felsted, thank you very much indeed on those Richemont earnings and the read across for the broader luxury sector. Coming up, we're going to move from luxury to what is happening in tech. IBM, very different story when it comes to AI. The wipeout in IBM's shares yesterday after disappointing earnings was quite remarkable. Reigniting concerns about software disruption, of course. IBM has lent into software in recent years. We're going to discuss those concerns for the sector with Andrea Urbach from Cambridge Associates. That view and that context is coming up next. This is Bloomberg.
Is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop. I'll still be driving something.
Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
This is the opening trade. We're 30 minutes into the Wednesday session. This is the picture. Europe not really benefiting so far across the benchmarks from the gains that we're seeing in terms of the likes of ASML, the luxury space from Richemont as well, with some really solid numbers coming through for both companies. Across the benchmark then, you're down 0.3% after modest gains of 0.2 yesterday. DAX now down more than 1% over in Germany. You're also seeing losses here in the UK. The FTSE 100 back below 10,500, dropping 82 points, down 0.8%. Let's talk about tech away from ASML. ASML showing the strength, the picture around demand. IBM yesterday, wow, what a shocker. The stock's suffering its biggest single-day drop since at least 1968. Even Neil Campling wasn't around in 1968. After its prelim second quarter revenue fell short of Wall Street's expectations. The CEO, Arvind, I'll give some context there, Arvind Krishna, said IBM was caught off guard as customers shifted spending towards servers, storage, and memory. Let's bring in senior strategist, not that senior, Neil Campling. Neil, explain for us what is going on and going wrong for IBM then.
A bit of context is that where the stock is now trading is only back to where it was in May of this year, before we heard about the US government investing in the company, in the space, in the area it's involved in. Now, I think the big concern from left field in yesterday's update was the fact that they were effectively saying that it's not just like sort of capital being deployed across everything. It's that to invest in the AI infrastructure side, clients were putting other projects and other investments on hold. So the concern is then, is this an IBM thing or is this an industry situation? And that, for the time being, is an unknown. We're going to hear from other mega cap tech stocks like Microsoft later this month, who will give their first sort of full guidance for their following fiscal year to see, again, whether there is software issues or whether it's just AI investment is coming at the expense of other spending. So I think it's the unexpected nature, and also if you look at the actual letter that was written by the CEO yesterday, there were concerns because we've been talking about sort of software being disrupted. Does it then impact big IT service companies in terms of future bookings guidance from companies like Accenture, for example? Is this more signs of AI victims, as in companies that are losing out to the capital being deployed in a very sort of unique set of properties? So it leaves more questions in some respects.
It was quite the mea culpa, wasn't it, from the CEO in terms of how the team had missed the ball. It is a reminder, the wrinkles and maybe distortions that are coming about as a result of this, of the money piling into different parts of the AI space, and then what is then left exposed. IBM have lent into software. How much has that been a challenge for them? Does it bring this? A number of software names were underwater yesterday, or at least under pressure and selling off yesterday. Does it bring that SaaS apocalypse fear back to the forefront?
It will bring that fear back, although, for some context, if you look at the start of this quarter, the start of this month, there's been a massive shift, actually, into software. hugely outperformed. There's a couple of baskets. Software had outperformed chips by more than 20% in the first sort of 10 sessions that we'd had this month. So there's a little bit of a reset there. And if you looked at what happened at the start of the US session yesterday, the software ETFs were down significantly, chips were significantly higher, and that did actually trail off in terms of that disconnect during the session. So it will certainly bring that back to the fear for sure in terms of the SaaScopolis and whether, the whole idea that companies like Anthropic, in terms of the key frontier technologies, are able to do what software hasn't been able to do or taken many years or decades even to perform certain functions. Anthropic has managed to do in mere hours. So those kind of questions will definitely remain.
Now, Neil, in the break, you mentioned to me that you're watching credit, and particularly credit linked to hyperscalers, and a Goldman Sachs index at that. What are you watching on that front?
Yeah, so we're doing some analysis at the moment. There are this particular basket that Goldman's have created is looking at these perceived very high quality AI tech stocks. But in terms of the spreads themselves, they're really kind of giving a sign that the cost of this debt is really blowing out. And it's something that I think you've mentioned on this program a number of times in the past, in Oracle in particular, which doesn't have the balance sheet or the free cash flow that some of the other big tech stocks do have. But now this basket is kind of suggesting that there's some potential stress underneath the hood, perhaps, that's moving in other parts of the market. So we're going to do some more work on this. But it's something that, I'm a markets-focused, equity-focused, so on. But I'm also well aware that in terms of the bond markets are kind of really like the big brother to equities in terms of they'll determine the long-term outcomes for these kind of situations. So we need to keep an eye on this for sure.
Neil, thank you very much indeed. Neil Campling, of course, with a view there on what is happening across IBM and the credit story as well when it comes to these big names and some of the hyperscalers and the spend around AI. Let's get more analysis now and bring in Andrea Auerbach, who is Global Head of Private Investments and Partner at Cambridge Associates. Andrea, thanks for coming to the studio from SF, from San Francisco. Yeah. What is your take in what's happening with software and the SaaS apocalypse? Do you have much exposure to these names? Where do things stand?
Well, when you think about it from a private markets perspective, so in the private markets, we're investing in companies that haven't yet gone public, right, or may not have issued debt in a public context. And so within the private markets context, about 37% of all capital is deployed into enterprise software. And Tom, I'm not talking about venture capital, which is below the private equity side. It's within the control investing in the private markets. So enterprise software and investor exposure to enterprise software is very real. And the SaaS apocalypse definitely reverberated around the private markets today.
But was the baby thrown out with the bathwater to some extent?
I would argue yes. If you look at the average, the median enterprise software multiple is now around 3.7 times revenue. I do not believe that every private enterprise software company is worth 3.7 times revenue, nor do I believe that every AI company is worth, I think the median is 25 times revenue, right? So there's
that gap is going to, those two things come together. The multiples for some of those AI companies come down.
Yeah.
Do you, when we get an Anthropic listing or an OpenAI listing, how does that change the dynamic for your space?
Well, what's really interesting about that is if you dial it back, I think 50% of all IPOs are venture-backed or private equity-backed. So a lot of the exits that we're all experiencing right now, we're expecting, are actually coming up and out of the private markets. And as you know, the average age of a company going public today is what, 12 years? So we have a chance to watch these winners really begin to emerge and gain quite a bit of momentum before they hit those public markets. I think the impact of what we're watching with SpaceX, for example, right now, is it's really lifting all boats in the venture space. So pre-money venture valuations across all stages are up significantly. Even the seed rounds are up 20% in value over last year's pre-money valuations alone, and even more significantly in the later stages, which is really the kinds of companies we're talking about right now.
As the IPO pipeline opens up, does that sideline the secondary story? Because that had been quite a driver of returning liquidity to investors and to employees, particularly last year.
Yeah. The reality is, there are thousands and thousands of venture-backed companies, and some are doing very well, as we talked about. Not every company should be valued at the median amount, and there's always a certain number that are going to go public. But if the average number of IPOs is about 100, maybe 150 in a good year. And there are thousands of venture-backed. There's still going to be a healthy market for secondary, but I do think that the post-IPO market performance of these venture-backed companies is going to lift and increase market valuations across the board and probably benefit the secondary trade market as well.
We've been talking again this morning about the fact that, and maybe this comes up on earnings calls and when we interview and speak to the CEOs of publicly listed companies about whether they give more transparency, more detail about the token spend and the ROI. And there's a timeline. There seems to be investors have been relatively patient on this story, but whether that timeline starts to compress, how close we are to the point where investors say, do you know what, we need more evidence so that token spend that's increasing and the ROI maybe isn't matching that. How are you thinking about that story? When for you does that do we get to a crunch point on needing to demonstrate real ROI?
Well, Tom, what I would say from a private markets perspective, the investors, Cambridge Associates, we're talking with the managers that own these private companies all the time. And so we're exactly monitoring that, right? The farther we get away from the blast radius of February SaaSpocalypse, the more we get into, all right, how much are you spending? What's really happening with your incorporation and integration of AI into your tech stack, into your product development? Are we watching customer retention wane or increase? Are we watching your cost and your profitability margins increase or stay the same? And so we are starting to see a little bit of noise around, okay, we've had enough fun in this sandbox of experimenting with AI. Now it's time to put it to work. And in the private market, we are absolutely talking with the owners of these companies and in many cases the management of the companies to get a real feel for, is the rubber starting to meet the road today?
Are you seeing evidence of that?
It's interesting. When we back up and look at the Bessemer Cloud Index for enterprise software, you can see that median revenue growth has been increasing slightly over the last couple of quarters. So I'm viewing it as, okay, retention is holding. Are your margins, are your profit margins increasing, staying the same? Talk to us about how many initiatives you have on the go at your company. It's going to take quarters. It's going to take time, right, for all of that, all the evidence to show up in the financials. And then I think the markets will adjust and start to move forward with that information.
What brings you to London? What are you seeing? Are you seeing opportunities in the UK? Are you seeing opportunities in Europe?
Absolutely. What we've noticed in Cambridge, we're a global firm where we have investors that we're working with on a global scale, and more capital is interested in coming to Europe. And so we're watching a little shift in the weights in the private market towards adding more European exposure.
Is that because Europe is cheap or because Europe has innovation?
I would say Europe is never cheap.
Really? Okay.
Actually, the performance of the European private markets usually is right on par with the performance of the U.S. market, which is broader and deeper. But I think what investors are seeing here is more opportunity to get in maybe on ground floor development of the private market, investing in certain industries that are taking on more private capital. Keep in mind, there's something like, I think, 45,000 private companies in the UK alone. And so there's a lot of opportunity here from a private markets investor perspective.
Okay.
And that's just the UK.
Yes.
Like, the rest of Europe just add to that.
We've seen a lot of US capital coming and increasingly taking public companies here private as well.
Yes.
In the UK. And part of that seems to be a valuation story, that there seems to be a mismatch in terms of how public markets value companies versus private markets, at least in the UK.
I mean, typically, if you're going to do a public to private, you're probably paying a premium to the current share price. But I also think part of the calculus that's happening in the private markets is these managers are taking control of these companies and maybe bringing their legions of value creation talent, operating talent. We have an AI lab that we're going to bring to this company as well. And so really working with that company privately before potentially re-debuting it publicly or selling it on. So there's a lot of work behind the scenes to understand why are we going to take this company private. And from a private markets perspective, that often does play out very profitably from an investor perspective.
Okay, really interesting. Andrea, thanks so much for coming into the studio. Come back next time you're in London. Really appreciate your insights. Andrea Arbach, who is Global Head of Private Investments and Partner at Cambridge Associates. Coming up, talking to the UK Chancellor Rachel Reeves delivers a cautious economic outlook in what is likely to be her final Mansion House speech. That is all but certain. This is Bloomberg.
mind being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise Ahead or Gattaca?
Maybe somewhere in the middle.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
Welcome back. We are 46 minutes into the open here in the UK this Wednesday, and you're looking at negativity across the benchmark, down 0.2%. It seems that the oil price story, the tensions in the Middle East, Brent above $85 a barrel, oil up for 3 straight days, is a bigger risk factor for the equity markets of Europe, as we've seen, of course. And this is the headwind, it seems, looking past the strength that's coming through on the earnings front from the banks in the US, from the likes of ASML and Richemont. It is the geopolitics, it's high oil prices that continues to drag and be a concern for European equities. The UK as well, FTSE 100 is currently down 0.6%. Talking of the UK, the Chancellor, Rachel Reeves, delivered what is likely to be her last Mansion House address yesterday, where she cautioned about the UK's economic protection.
The resumption of hostilities in the Middle East in the last few days has shown that our economic resilience will continue to be tested. And the market response to those changes shows that there is still work to do to ensure that our economy and our country is protected against a volatile global economic landscape.
Bank of England Governor Andrew Bailey also spoke at the dinner, where he called on the incoming government to prioritise economic growth and maintain fiscal discipline. Let's get more with Matt Bunny, UK economist at Bloomberg Economics. Matt, what did you make of what we heard from Andrew Bailey, clearly signalling and giving a message to the incoming new government of likely, of course, Andy Burnham?
So the purpose of Burnham's speech was really centred around regulation and how that can boost growth. There was a nod towards the need to drive up potential growth, as you mentioned, perhaps a nod to the incoming Burnham government. I mean, I wouldn't say there was anything materially new in there for investors or on the direction of monetary policy. What is going to be more important for monetary policy, of course, is the developments we've seen recently in the US and Iran, and the increase in energy prices. Indeed, we've seen markets up their bets for rate hikes from the Bank of England to a bit over 1.5 by the end of this year. That said, it's worth noting at this stage, it doesn't look like the inflation issue is evolving into a more persistent problem. Of course, that remains a risk, but at this stage, inflation expectations remain in check. We're expecting the labour market to soften over the back half of the year. So that is why, at this point, we still expect rates to remain on hold over the range of the year, unlike markets.
Okay, that's interesting. So it's a softening of the labour market, presumably weaker wages then, and that maybe is going to be a bigger factor than the inflation story. But as you say, the caveats around what's happening, of course, in the Middle East. PIMCO's Andrew Ball's telling us he doesn't think the BOE hikes this year, which is interesting. What are we hearing? What more do we know about who is going to be in Burnham's team, particularly when it comes to the Chancellor?
It's the question everyone wants to know the answer to. I mean, the pick for Chancellor will be an important signal of the direction that fiscal policy is heading in. A name that's been floated is Ed Miliband. If Ed Miliband is the pick, that would signal a more material shift to the left for fiscal policy. Other names that are being floated are the likes of Wes Streeting, which would be more consistent with the continuation of the kind of Starmer-Reeves economic model. But looking more broadly, we're still trying to kind of get a sense of what exactly Burnham's policy platform will look like. He oversaw a period of remarkable economic growth in Manchester as mayor. He has spoken about the importance of devolution, moving power outside of Westminster to the regions, about putting more, getting more public control of essential services, as well as increasing house building. Whether or not he can deliver on these promises obviously remains to be seen.
Have we heard anything from Burnham and the people around him that suggests that they're going to do anything in the short term? Those sound like long-term changes and significant changes, but are they looking to do anything in the near to medium term that can significantly shift the growth dynamics of this economy?
This is a really good question, because the longer term issues that you point to don't often have short-term political payoff. And Burnham is obviously going to be acutely aware of a general election coming up in 2029. So we think it's quite possible he will look to implement some kind of cost of living relief in the next budget, effectively to bring down inflation, to help win over consumers. The question will be how they fund that. He's ruled out any of the big tax levers that the government has, because he said he's going to stick to Labor's manifesto commitment. So one potential avenue they could pursue is raising capital gains tax.
Okay, Matt. Thank you very much indeed, Matthew Bunny from Bloomberg Economics, and what we're hearing at Mansion House and the potential policy coming through from the likely incoming Burnham government, of course. Let's look ahead at what else we are watching throughout the day today. US earnings, of course. Morgan Stanley up front on the banking space after the significant gains that have come through for the US banking story and the banking earnings strength yesterday. So we'll see if Morgan Stanley can build on that. United Airlines in the airline space as well, coming through with numbers. At 10 a.m. UK time, the OECD Economic Survey of the UK will come out at 1:30 p.m. after softer than expected consumer price in the US, CPI index in the US. We're going to get producer prices. That's for the month of June, so that will build on that picture. That's 1:30 p.m. UK time. At 3 p.m, Fed Chair Kevin Walsh is back, giving testimony, his semi-annual monetary policy report to Congress, this time in front of the Senate Banking Committee, so we'll be across that for you, of course. He says he remains committed to the 2% target of the Fed. And at 7 p.m, we're going to get the Fed releasing its beige book as well. So the Fed taking up some of our attention today as well as yesterday. Speaking of banks, Wall Street's biggest lenders shattered equities trading records in the second quarter. JP Morgan Chase executive CEO Jamie Dimon, of course, credited a surge in market activity for his bank's record profit, while cautioning it may not last.
I just think we're in a very healthy, active, exuberant market with very high prices and very high volumes, and we benefit from that. We just don't know how long it will continue. Could it get a lot better than this? It can get better, but how much better, I don't know.
For more, let's bring in Bloomberg's Tom Metcalf, who leads our European finance coverage. Tom, I mean, record after record seems to have been broken, particularly when it comes to equity trading yesterday for the big US banks. What stood out to you? How have they managed to achieve this? And how does this set us up in terms of the broader banking space?
Yeah, so the numbers we're seeing were enormous, like really across the board on the capital markets side, but particularly, first of all, JP Morgan came out and, breached $6 billion on a quarter, first time that's happened, and then Goldman came through with $7 billion. So it was
like, hold my beer.
Yeah, exactly. It was quite the day. I mean, look, there's a few things there. One is, and I think Diamond spoke to this, like maybe this is as good as it gets in terms of, a lot of things coming together. And there was an interesting column, actually, from my colleague Paul Davies saying, part of the reason these numbers are so large is what we're seeing in the markets, right? There's this huge AI trade, there's lots of speculation, perhaps there's lots of leverage behind some of these, shares trading on the retail side, for example, or something like that. So it's really interesting. I mean, it's, one of those quarters, as I say, you really can't imagine how it went much better for whether it's the deal makers or the traders. But those comments from Diamond are interesting in that there is sort of still that note of caution, and frankly, I think it's hard to see how they can keep this run going, but I've been saying that for a few quarters now, and every time, whatever's happening in the wider economy or the wider geopolitical sort of space, the US banks just keep on delivering.
They keep on delivering. What about costs? Is that a cost looking comfortable? Is it anything on cost that causes concern?
Yeah, no, definitely. And actually, initially, JP Morgan, at least in the pre-trade, its shares dipped despite these kind of blockbuster numbers, precisely because of that question around, is the sort of cost going to be higher than expected? The bank was kind of guiding they're going to be, a couple of billion higher. So certainly that's something investors are looking at, and you can also see that come through in the Citi sort of share reaction, where again they blew past estimates, but actually it was the CEO's comments around, we might be investing more in the coming months. It's sort of spooked investors in terms of, how big are those costs going to be? And I guess it shows how fragile, it's very much sentiment driven, I suppose, because everything is, as people have been saying for months, if not years now, everything seems to be priced for perfection.
Do we assume, given the strength that came through for Goldman Sachs from their trading team, that Morgan Stanley will have had a similar quarter? What are you watching for when they come through with their earnings later?
Well, I think it's one of those where, the bar was already pretty high, and now after yesterday's results, Morgan Stanley similarly have to kind of deliver. I mean, that's the thing. What I was interested after JP Morgan came through was like, okay, have they maybe taken a bit of share from other banks? Doesn't seem to be. It just seems to be the pie is getting bigger. So I would expect Morgan Stanley to sort of also deliver, but the question is whether they can quite do what a Goldman did, which I think was something like 135% jump.
Okay, just 135%.
Just 135%.
There's the bar. There's the bar for you, Morgan Stanley. Tom, thank you very much indeed, with a roundup, of course, of what we saw from the US Bank's earnings story yesterday, and a preview of Morgan Stanley later today, of course, which we'll be covering for you, Tom Metcalf, from and leading our finance team here in EMEA. Let's switch focus right now briefly. Just 3 teams remaining in the World Cup. England taking on Argentina tonight. Starts at 8 p.m. London time. I won't pretend I don't have a bias. Come on, Jude. Come on, Kane. That is coming up, 8 p.m. That is the big one. Spain through to the final after a 2-0 victory over France. That is it for opening trade. The Pulse is up next. This is Bloomberg.
The global economic playbook is being rewritten, and the levers of power are moving in real time.
To see where the world is headed, you have to look where the action is.
I'm Haslinda Amin in Singapore.
I'm Menika Doshi in Mumbai.
Welcome to Emerging the New Economy podcast.
Each month, we dive deep into how the world's most exciting, rising economies are shaping the global future.
Join the conversation. Subscribe to Emerging on your favorite podcast platform today.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Know how the market day started.
Find out how it finishes.
public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it.
I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
The U.S. carries out more military strikes against Iran, but President Trump backs away from his plan to impose a cargo fee in the Strait of Hormuz. Traders cut bets on rate hikes as U.S. inflation eases, but Fed Chair Kevin Warr says inflation is not mission accomplished. Plus, ASML tops expectations as Europe's most valuable company rides the wave of booming AI demand. So there's a lot going on in the markets, of course, a lot going on in chips. Overall, technology stocks seem to be leading equity markets higher. This is after ASML earnings offered some fresh evidence that a lot of traders were looking for, that there is strong demand for chips that are powering this global artificial intelligence build-out. I'm also looking at oil prices. You can see Brent 86.21 rising for a third straight day after the U.S. military carried out these new waves of strikes. Investors saying that crude prices could actually remain well above their highs of $100 a barrel earlier in the conflict. Traders now looking at whether earnings can justify higher valuations. In Europe, if you look at the CAC 40 and the DAX, the CAC is down some 0.8%. This has nothing to do with the World Cup, although maybe there is a little bit of less consumer spending that will come through after France got eliminated last night. The DAX down some 0.4%. Now, Stripe and Advent have also offered to buy PayPal at a valuation topping $53 billion, according to Reuters. And so pre-market PayPal gaining some 13.9%. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, expectations of a Fed rate hike are lower, but the U.S. carries out more military strikes against Iran. So we discuss the inflation outlook in just a moment with Mohit Kumar from Jefferies. But first, ASML has lifted its annual sales forecast for the second time this year. That comes as a surge in AI spending drives demand for the Dutch company's chip-making machines. Now, ASML remains a key part of the semiconductor supply chain. Let's get more from Shona Ghosh, our EMEA tech editor. Shona, thank you so much for being here. I mean, this is another blowout for the most valuable company in Europe. So what's really driving this demand? AI.
Morning. Yes, it's very much artificial intelligence. So ASML, as you pointed out earlier, is a key part of the semiconductor supply chain, which means that it basically builds the machines that make the chips. It doesn't make chips itself. So its biggest customers are chip makers. Now, if you look across the board at SK Hynix, Samsung, Intel, all of them have announced that they're building new fabrication plants, i.e. the factories where they make and manufacture chips. So for those, they need ASML's machines. So the more fabs that are being built, the more you'll see demand for ASML's equipment. Why this morning's news is very positive from an investor point of view is not just about sales. We know that everyone wants ASML's machines. They are very, very complicated to make. They are made in a modular fashion. So actually a really important part of the results this morning was ASML saying we are going to be able to make more machines over the next couple of years. So it's about meeting demand, not simply seeing rising demand.
How significant is it that Intel is using some of their most advanced chips?
Yes.
Or chip-making machines.
Exactly. Yes, so that the top of the line, very cutting-edge machines that ASML is producing cost $400 million a piece. So that is very, very expensive for context. It's a lot of money. And Intel announced this morning that they're actually using one of these machines in production. That's positive news because, as I say, the chip makers are ASML's biggest customers. Intel isn't actually the biggest, but it's significant. It's a significant player, clearly. So announcing that these machines are not just about use in research, but about the actual day-to-day production of chips is a very positive sign that there'll be future demand for these very expensive machines. By contrast, ASML's biggest customer hasn't said that. It said these machines are too expensive for us to use right now. So it would be even better news if TSMC sort of said something similar, but it's pretty positive news that Intel is saying this.
So interesting. Shona, thank you so much for joining us. Shona Ghosh there, REMEA tech editor. Now, as the AI trade gathers fresh momentum this morning, my next guest says AI is following the classic position unwind cycle. I'm joined by Mohit Kumar, Chief European Economist and Strategist at Jefferies. Mohit, as always, thank you so much for joining us. I mean, there's many questions on AI. If we start with valuation, I mean, they seem to be more and more supported because we're seeing use cases. Is that fair, or do you still have many question marks about the valuations?
The valuation part I'm comfortable with because earnings are still strong, capex is still ongoing. I think the part where we start getting a bit uncomfortable is expectations, because expectations are very high. And that's why, for us, one of the most important things to watch, purely from a market perspective, is looking at positioning. AI trade is a very crowded trade. And that's why I mentioned it's a classic position unwind, because positioning was very heavy in June. And what we have seen in the last few weeks is an unwind of those positioning. So medium term, still positive on AI, still positive on the picks and shovels trade, but we have to bear in mind that expectations are really high.
And so what does that mean in terms of your positioning? What are you buying or selling right now?
So we took a step back from tech. Early June, we took a step back thinking positioning is too heavy. Now, if I look at the positioning, is much cleaner today. So I think we're getting to the levels where we are ready to go back into the picks and shovels trade. Because medium term, we are still positive.
Mohit, I mean, overall, what's driving, equities right now? So I know there's a lot of questions about geopolitics. I mean, oil actually didn't really behave like the majority of investors thought it would, or certainly of analysts. Maybe investors knew something that the others didn't. And then you have, of course, Kevin Warsh, and we're still trying to figure out what happens next with the Fed.
Well, like you said, these are the two things driving. So, oil, I would say more it's central banks, whether it be the Fed or BOE or ECB, and AI. But to me, it's central banks and AI which is driving. And when I read Warsh, everyone tries to say, is he hawkish, is he dovish? I actually have a slightly different take. I think Warsh is positioning himself into the credibility camp. He wants to say that he's credible. Inflation is not something that the Fed wants to tolerate. But the key word is sustained inflation. And in our view, when we look at medium-term inflation forecast, inflation is still likely to move lower. Of course, it depends on how long oil prices stay at these levels. Do they go higher? So a lot of uncertainty. No. Fully agree. But you look at inflation break-evens, which is the medium-term expectation of inflation, they're very well contained. So as long as medium-term inflation is contained, I don't think the Fed needs to hike rates.
Yeah, I mean, for me, Chair Warsh, and you're really right on the credibility part, but he also had a great reputation, right? He's been Fed governor before during the financial crisis. And for me, what was interesting is when they were talking about the fact that, he didn't need to raise rates, and that was appealing to President Trump, he was looking at it from an AI perspective. When do we have to actually start looking at AI impacting our economies instead of the valuation question?
So when we think about AI, actually, paradoxically, initially AI is inflationary. The first few months, first few quarters.
Because of the spending.
Because of the spending, also commodity prices. Electricity prices, or you look at copper or commodities, they will go up. Medium term, it should be deflationary. So it leads to improved productivity, but lower inflation. But medium term, we are talking of 2 to 3 years. So the question for Chair Warsh or any other central banker is, do we look through that initial impulse of higher inflation and focus on the medium term, or we focus on the near term? I think oil adds a lot of complication to that picture. So end of the day, it's about credibility. The Fed has to respond to whatever data it is. I think Chair Warsh is genuinely one of the best candidates. I don't think he is going to be politically driven, but he has to respond to data. And if medium-term inflation is anchored, they don't need to hike rates.
Okay, Mo, don't go anywhere because we're going to talk about the Middle East in a second. Mohit Kumar, Chief European Economist and Strategist at Jefferies. Now, the U.S. has carried out another round of strikes against Iran after reimposing its naval blockade. Well, President Trump has backed down from his plan to charge a fee on cargo shipments through the Strait of Hormuz, but continues to threaten more military action. Let's bring in Paul Wallace, Managing Editor for the Middle East and Africa. Paul, how significant was the president's climb down on the idea of a Hormuz toll, and what does it reveal about U.S. strategy?
Hi, Francine. It was significant, I think not because people in the world of shipping or here in the Persian Gulf where I am in Dubai literally thought that the US was going to charge 20% on all cargo, all ships passing through Hormuz, because this was something that was announced out of the blue by Trump. It's a huge fee. It would have meant roughly $35 million for the biggest oil tankers. I mean, these were fees that were way above what even Iran itself was saying it wanted to charge for ships going through Hormuz. But the fact that Trump reversed or did a U-turn so quickly within 24 hours, I think it underscores just how frustrated he is with Iran right now over Hormuz and how he's struggling to come up with a strategy to get the waterway open and then to eventually end this conflict once and for all. So it shows once again how the US president is sort of vacillating between different tactics and different moves because of the fact that he's stuck in a bind over Hormuz and by extension the war itself.
Paul, what impact are the strikes actually having? Is there any suggestion that it could have more of an impact than before?
This is hard to tell. I mean, in markets, we've obviously seen oil shoot back up to about $85 a barrel. You know, it's up 13% this week. Still way below its highs from late April, but, you know, still up significantly over the past week. In terms of the damage it's doing to Iran, that's difficult to tell. The U.S. says it's striking a lot of things like radar sites and missile and drone sites, but Iran is not backing down, and it itself is, if anything, escalating its counter-strikes on the likes of Bahrain and Kuwait. Kuwait saw heavy attacks from Iran in the early hours of this morning. So at the moment, both sides are being very stubborn. They're not bending. However, we have been here many times before in this war that's, you know, now more than 4 months old, almost 5 months old. And it is at times like this when the US and Iran have actually got back to the negotiation table and worked out some kind of temporary easing of tensions. And it's something we could possibly see again in the coming week or so. Trump, it's just worth noting, he says he's going to escalate US strikes on Iran until the Islamic Republic comes back to the negotiating table.
Paul, thank you so much. Paul Wallace, our Middle East and Africa managing editor. So let's get back to Mohit Kumar from Jefferies. Mohit, I mean, the big problem I see is that it changes all the time because it's unclear actually what the real U.S. strategy is here. So how much does it complicate things for investors?
Well, I think no one really knows what the U.S. strategy is. And I think what Paul was mentioning, and I fully agree, there is midterms coming. Trump cannot afford oil prices significantly higher because he could lose the Senate. So he is worried about oil prices. He wants to get out, but the question is who controls the strait? Iran wants to have control over the strait, and for US, it's totally unacceptable. So I think what could happen, and this is one of the theories I have, we could get some form of fudge in the near term. So we get a deal, make sure oil prices are $80 or below $80, but I do believe that Middle East is fundamentally unstable today compared to pre-war. So post-midterms, when Trump doesn't have these concerns, it is possible that we could escalate even further. So I fundamentally think we are in an unstable situation.
And of course, if the price of oil goes higher from here or even stays at these levels, it feels like it's, you know, the UK and the Asian economies that will suffer the most.
Absolutely. So if you look at the 20 million barrels that comes out of the strait, actually US gets less than 500,000 barrels.
Yeah, they're fine.
They're fine. It's Asia which is the most impacted. And it's not just about oil, it's also about gas. You look at a lot of South Asian economies, they're very dependent on gas. Europe is next, which gets impacted, and of course UK gets impacted as well. So purely from a growth perspective, it's Asia, Europe, UK, which are much more impacted than US.
So what does it mean for investment strategy? Are are there question marks about emerging markets that, frankly, so far have had a great year? And is that a question for next year or mid-2026?
But emerging markets, there is a divide. So the way we are seeing it is the divide between commodity producers versus commodity importers. So if oil stays at these levels or goes towards 100, it's the commodities importers that get impacted, which basically means if you think about Asia, the South Asia belt is the most impacted. But if you're talking of markets like Korea, Taiwan, or even China, China does get impacted, but there is a big tech sector as well. So the Far East Asia tech continues to do well. Europe gets negative on the growth, which means the consumer sectors get impacted. No. But the tech sector doesn't. Tech sector does not care what the growth is over the next 6 months. So I think it's about winners and losers. And as oil price goes up, I don't think it's fundamentally definitely bad because there is a big AI and tech boom that's going on. So it's about winners and losers and identifying even within the emerging markets.
Mohit, what's your take on the UK? So again, this is a small open economy. We also have a change of prime minister in the next couple of days and on the cusp of the World Cup. No, I don't want to jinx it, but the UK has its own set of problems if you're the Bank of England governor.
Massive. And I think what Bailey has been focusing a lot on is growth. And when we think about oil price impact, there is the growth dynamics and inflation dynamics. A lot of academic papers suggest it's almost equal and opposite. Bank of England has a dual mandate. They need to look at growth and inflation. So yes, inflation can be high, but as Governor Bailey has told us, growth picture is not great. In that scenario, we think Bank of England just does nothing. They don't hike rates, they don't probably cut rates, but they just stay the course and see how data evolves.
That's so interesting. So you expect also the same from the Fed. For the moment, wait and see. Mohit, thank you so much for joining us. Mohit Kumar, Chief European Economist and Strategist at Jefferies. Coming up, our exclusive interview with the boss of the consulting firm McKinsey on the impact of AI and geopolitics on business. That's coming up next, and this is Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacroix here in London. Now, the boss of consulting giant McKinsey says the firm is on the edge of a possible golden age as companies seek help with issues such as artificial intelligence. Well, McKinsey has cut staff from its support teams on the back of the AI wave, but he says they're also hiring more consultants and is set to grow headcount overall. In an exclusive interview, we also asked Bob Sturfnels about the impact of geopolitical stability.
I think there's a potential that this is a golden age for us. A truly golden age. And the reason is the world has some really existential challenges and opportunities facing it. And you've had many people come on and talk about this, but you think about this AI moment, you think about complicated geopolitics, You think about a whole reset in the energy climate nexus. You think about changing demographics. These are all world-class problems to solve. And what we try and do is we try and work with CEOs on their most complicated problems. And at least we see over the next 5 years, the complexity of those problems going up, not going down.
No. But so what's the biggest disruptor to any business? AI or geopolitics? Do you have to choose whether you're an ally of the US or China?
AI or it's like trying to pick, well, which kid do you like better? Like, these are two massive. You know, I would honestly, I think they're the twin biggest issues facing us today. And but by the way, I would say challenges, but equally opportunities. And this is one of the things that, you know, I always talk to if ever I meet a CEO, I say, okay, draw a line down the center of the page, and let's write challenges and opportunities from each of these topics. And it's easy to talk about the challenges. Will AI disrupt jobs? Yeah. Will it dominate the energy stack? Is it going to take everybody's water? But equally, you know, could it create and unleash a wave of growth that solves many of the other crises that we face?
So how do you use AI within the firm?
You know, it's like you talk to every leader, this is changing so fast. And, you know, what I would say is we're doing two things. One, the first is we're trying to help our clients. This is about half the work that we're doing today with clients around the world. And large enterprises struggling with, how do I really reinvent myself with AI? My costs are going up. You've talked about, you know, token costs going through the roof. We've seen many companies blow their budgets in the first 3 or 4 months of a year. Mass experimentation doesn't necessarily yield enterprise impact. So we're focusing in on how do you really get value from AI with clients? That's a client lens.
And so how do you get value?
You know,
because it's also difficult to integrate, right? It can't be
hard.
It can't be sitting outside if you're looking at AI and tech.
You're so right. It's hard, right? And there are, I think, a couple principles that are emerging. You know, the first is you got to focus. If you just let 1,000 flowers bloom, you will have waste in an enterprise. And, you know, our work tends to indicate that 4 to 6 end-to-end processes in any organization, and those vary based on the industry, can drive 80% of the value from AI. So first is, are you focused? And I often ask, do you know how to double your market cap through AI? Right? If you can't do the math, good old-fashioned strategy, you're going to be inefficient, part one. Part two is you have to change the organization model. Right. And so my other simple answer to or question to a CEO is, do you know what your org chart looks like in 3 years' time? So if you can't link the value to the org change, you're not going to get the value, right? And then the last part is, how do you bring everybody along? Right? Change is hard. And if you have a large workforce, you need to create the incentives for people to want to drive adoption. You can't force folks. And so those are some of the principles that are, I think, emerging right now.
And so, Bob, what does that mean for McKinsey?
Yeah.
Right?
So,
because you've also announced job cuts, quite significant ones.
Well, you know, it's interesting. People love to latch on to half the headlines. So
not us, sure.
No, of course not. But we're hiring in record numbers, our client-facing consultants. McKinsey has 2 workforces, and the workforce that most of our clients understand are the people who live and breathe with the client, and we're growing that workforce quite aggressively. And we're arming that workforce with agents. So on average right now, every client deployed consultant has about 3 agents. And the joke amongst, I was just with some new business analysts, the joke was, if your agents don't work all night, you will. Which I loved, right? I loved it, right? Because it was a little bit of like, hey, right, you know, you got to step up.
But give me a sense of, so how much of the workforce are you reducing that you can replace by agents, and how many consultants are you hiring? Is it like net?
In total, I think you will see our workforce now start to rise. So we've done, look, like all of our clients, we've really looked for efficiencies in our indirect processes. And there is value in that in AI, and we're trying to liberate the folks who come out of that to then be redeployed to do new things, and also natural attrition. But we've kind of done a lot of that restructuring, and now we're actually focused on how do we grow the consulting base. I think it's an exciting time because, you know, also there are a lot of folks who aren't really hiring a lot of young folks. And so we're like, hey, come, right? This is a great place to be for a couple of years.
And you think face-to-face consultants are AI-proof?
Yeah.
This is what we're all trying to figure out, right?
Well, and this is for all of us. I look at what can the models do and what can the models not do. And, one of the things that starts to really rise is, I think, what's uniquely human in this. And so what we're starting to focus on is, okay, you're freeing up a bunch of time. You'll use that time to spend more of it with the client. What do you do with that time? And what we're finding are a couple things. The models don't set a goal. They don't set an aspiration. It's a uniquely human thing to say, hey, should we go to the moon? Should we go to Mars? And do we both believe in that? And so there's a uniquely human thing of how do we aspire? We're focused on building that skill. The other is judgment, right? The models don't know right and wrong. You have to train them. And so how do you work with a client to say, look, you should be the custodian of judgment in your own company. By the way, you can reference your own values.
Yeah.
To have the models reinforce the values of the company, that's a human thing. The humans have to impart what are the values of this institution. And the last one is working with other humans, the human-to-human interaction skills. And so we're focused on a couple of those things with our folks. And I do think those are AI-proof. I think maybe they're even AI-enabled as we think about it.
That was Bob Snurfnells, McKinsey's global managing partner, speaking to me a little bit earlier. Now, Stripe and Advent have offered to buy PayPal at a valuation topping $53 billion. That's according to Reuters. And you can see pre-market PayPal gaining almost 15%. Now, this is a picture for U.S. futures. A lot going on, of course, when it comes to tech. We had that ASML blowout. Now, the stocks rally in tech seems to be continuing. I guess this ASML earnings offered fresh evidence of strong demand for chips that are powering the global artificial intelligence build-out. Now, coming up, Ukraine is expanding its naval attacks against Russia in the Black Sea, including oil and gas tankers. We discuss all of this with Claudia Major from the German Marshall Fund. That's coming up next, and this is Bloomberg. The other thing we're watching out for is, of course, the price of oil. Oil prices rising for a third straight day after the U.S. military also carried out another wave of strikes against dozens of targets near the Strait of Hormuz.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start in the third floor or the lobby. You actually have to start in the basement.
investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up to them in the news whenever and wherever it happens. I'm Chevrian in Seoul, and this is Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francie Lacquet here in London, and these are your top stories. The U.S. carries out more military strikes against Iran, but President Trump backs away from his plan to impose a cargo fee in the Strait of Hormuz. ASML tops expectations as Europe's most valuable company rides the wave of booming AI demand. Plus, traders cut bets on rate hikes as U.S. inflation eases, but the Fed Chair Kevin Warsh says inflation is not mission accomplished. Now let's get more on that story now. Kevin Warsh has delivered his first congressional testimony as chairman, warning against complacency on inflation.
It's one data point. The reason I created a task force on data is I don't want to overread or cherry pick data. There might be some that look at this morning's data and say, oh, mission accomplished, everything is swell. That is not my view.
Well, let's bring in Alistair Bull, one of our senior editors. Alistair, what did the data and Chairman Warsh's commentary tell us actually about the outlook for rates in the U.S.?
It tells us that Kevin Warsh is a pretty lucky guy. He couldn't have scripted it better. He had a softer than expected CPI print on his first day in front of Congress. That can be a grueling experience. It turned into a pretty comfortable performance from him. And the downturn, which was was stronger than expected, is sort of hardening views among smart people, including Bloomberg Economics, that inflation peaked in May. And if that's true, if that turns out to be the case, Kevin Warsh, while continuing to talk tough on inflation, can probably just sit on his hands, keep rates on hold, and as inflation gets closer to the Fed's 2% target, the conversation will start to turn to rate cuts next year. But he's not going to let up on the hawkish rhetoric because there's a lot of data to come. We have PPI coming. There's the PC, which is what the Fed actually targets, coming after their next meeting in July. And if it doesn't go in the way he needs it to go, then a rate hike is going to certainly be back in the conversation, Francine.
Alistair, I mean, what are the meanings of these Warsh task forces? And we know at the time that he's planning to change Fed communications. So is this about changing the Fed, or is it just about building his credibility?
No, it's both. I mean, he's come in saying he wants regime change, and he certainly needs to build his credibility as a new Fed chair who's arrived under enormous scrutiny on whether he can hold out against the president who wants lower interest rates and will indeed be independent. But he's not given much away. I mean, he was asked about the task forces. He said that they will report, they will give updates, and he hopes to have some conclusions by the end of this year, but he's not going to prejudge. He's not going to front run. They are in a discovery phase, and he's playing his cards pretty close to his chest. One thing we can say, though, and he was asked about this yesterday by the House Financial Services Committee, is that he's not going to pre-commit to holding a press conference after every FOMC meeting. Francine.
Alistair, thank you so much. Alistair Bull there with the very latest, of course, on Kevin Warsh. Now, the Bank of England Governor Andrew Bailey has called on the incoming government to prioritize economic growth and maintain fiscal discipline. Also speaking at what's likely to be her last Mansion House address yesterday, the UK Chancellor Rachel Reeves had this warning about the economic outlook.
The resumption of hostilities in the Middle East in the last few days has shown that our economic resilience will continue to be tested. And the market response to those changes shows that there is still work to do to ensure that our economy and our country is protected against a volatile global economic landscape.
Lower productivity growth means lower growth in incomes and lower growth in living standards. It means fewer resources are available for households, businesses, and public services. So reversing this trend and continuing to reverse this trend must be a national priority. I strongly agree with the Chancellor on this and on what she has been doing.
Let's get more on all of this with Rosa Prince, Bloomberg opinion columnist, Catherine Griffiths, Bloomberg's city editor, and Philip Aldrich, Bloomberg's senior reporter for UK economics. I love it. We have like the city, the politics, and of course the economics. So what did we learn in this Mansion House speech? Catherine, you were also there last night.
Yes. So in many ways, we didn't learn that much new from Rachel Reeves because the Treasury team has briefed out this speech like nobody's business. I think she chose to sort of give really quite a political speech, which was quite unusual in this environment of sort of the city audience. I think people felt it was a weird event because likely Rachel Reeves won't be Chancellor for that many more days. There had been a hope that the Mansion House huge event that it is in the city would be delayed until the new Chancellor, who will probably not be Rachel Reeves, could give a speech and give a real sense of what is to come in the Andy Burnham government. That's what people really want to know. They want to know on the economic front what he and whoever the Chancellor is going to do, and they're not looking forward to a summer of uncertainty.
Yeah, and it's very difficult, or it's proving very difficult to have a name for a Chancellor. So we'll get on to Rose in a second. I mean, we're expecting Andy Burnham to be Prime Minister on Monday, and we're hearing that there's still, advisors are fighting about who to pick for Chancellor.
Yeah, it's hardly the easy run-in that you would want from the new Prime Minister. It's kind of shades of the chaos we've had of the past in this final run-up. You've got Rachel Reeves, who is the Chancellor. You've got Wes Streeting, who clearly wanted to be the Chancellor, but has not been given an opportunity. You've got Ed Miliband, who's the front runner. And now suddenly Shabana Mahmood is sort of suddenly the main name in the frame. And there's only a couple of days left. Really, you'd have thought this all has to be sorted out before the weekend. So when Burnham takes over, he's kind of off to a flying start, so that his administration is clear about what they want to do. So I'd say this is a little bit disturbing to have this kind of chaos so close for such an important appointment.
So, Rosa, how does it work? I know from, foreigners, especially Americans that watch us, they're always surprised that literally the Prime Minister, goes to see the monarch, the king, and then that's it. They move into number 10, like, there and then. So, Monday, what do we know the series of events? The football may also complicate things if England makes it to the final on Sunday.
Yeah, that's right. So, as you say, Britain does not have a transition period, but there is a little mini one, because on Friday, Andy Burnham will formally become leader of the Labour Party. He is the only candidate. It became something of a coronation. All the other rivals fell away, so we know that's going to happen. And then he'll have the weekend to finalise his plans. Usually, it would be expected that Keir Starmer would resign, say, early on Monday morning. But with the World Cup, England potentially being in that final, if that happens, he will go to New York, and then he'll have to hop on a plane and fly back, and then he will probably more likely be handing in his resignation around noon to King Charles, and then Andy Burnham makes his drive to Buckingham Palace to, we call it kissing hands with the king. These days they don't literally kiss his hand, but they will have a formal handshake, and then he will become Prime Minister. And only then, probably, will we begin to get the names of his cabinet and that all-important Chancellor pick.
Yeah, and that's when the real work starts. I mean, you were saying that the City of London and a lot of, the grandees here, of course, are waiting for Chancellor on economics. Do we know any, of these names, like where they stand on banks, on ring fencing, on taxes for banks?
So we don't know where they stand on those things. But so I suppose what the city's operating on the basis of is Ed Miliband, the current Energy Secretary, is on the left side of the candidates, where Streeting is sort of on the right side of the candidates. Quite a lot of the city obviously like that about Wes Streeting, though they don't like his lack of economics experience. Shabana Mahmood, I think they have really no idea where she might land on these issues. The name in the room last night was Pat McFadden, who is the Work and Pensions Secretary. He has been an MP for a good 2 decades. He has worked in the Treasury. He doesn't want to be Prime Minister. I think they would favour Pat McFadden.
No. I mean, Yvette Cooper also kind of emerged as one of the contenders.
Yeah.
I mean, is it just every name? Are you, Phil, up for Chancellor? Of course you can't, because we'd have to change the Constitution. But are we just going to have a lot of names the next couple of days before they settle on something?
It does seem so. I mean, again, I don't think even sort of city senior city figures, I don't think, have an in the way that some of the sort of deeply immersed political people do. But their view, for what it's worth, is that Burnham has still probably not chosen.
And this is, just so that everybody understands, is this because the Labour Party is still so diverse that they're trying to find a candidate that appeases all factions? Or is it just that they don't have a name that would be, the markets would be happy with?
Yeah, I mean, it seems like there has been this infighting within the Labour Party, and again, the difficulty Burnham is having in deciding on who. I mean, if it is the case that there is a difficulty here to decide who's going to be his chancellor, would reflect, as you said, the different factions in the party. Pat McFadden, months ago, he was the name that was being talked about, and he was talking to his team was talking to all the other potential leadership contenders because they were expecting to be at least a front runner. So his name has been sort of absent quite a lot from this.
What do you think Andy Burnham's biggest challenge will be? Because again, we don't really know where he stands on Ukraine. I mean, he's just untested also on foreign policy. So he has domestic economics and then foreign policy that could be wide open.
Yeah, I think it is that kind of everything all at once aspect of being Prime Minister. You're there in this 19th century building. It's not got a great infrastructure to support the leader of a G8 economy. So I think that will be a massive change for him. He's only been back in Parliament a week or so. He was running a big city, but that's very different from running a country. Just to return to the question of the Chancellor pick, I think what's going on here, my reading of it is that he would quite like Ed Miliband, who is his old friend, probably got quite similar politics, but as you were picking up, Catherine, not very popular in the city, probably not the first message he wants to send in that important few hours. So I think he's kind of been going to and fro about whether to pick someone who's a bit more friendly to the markets, like a Pat McFadden figure, or perhaps Yvette Cooper or Shabana Mahmood. So I think that's the dilemma haunting him at the moment.
And yes, another name to the many, John Healey, who was until recently the Defence Secretary. Again, there was this intriguing bit of information going around at the dinner last night that he's been out there in the city talking, so we shall see.
I mean, the other thing which I find, maybe a little bit surprising was the Bank of England governor basically urging, UK growth and maintaining fiscal discipline. I mean, this was really speaking to Andy Burnham, wasn't it?
Get your growth strategy lined up, mate. Yeah, it was. If you think about it, the productivity collapse came after the 2008 financial crisis. So somebody born that year is now an adult, and we've basically had sort of very, very weak productivity growth, much weaker than we had in the previous decades since then. And it has been the Achilles heel of the UK, and that has seeped into politics and the grievance and the issues that we've faced since then. So, Andrew Bailey's absolutely right that is the big issue. There seems to be no easy solution, and Burnham's way of addressing it appears to be devolution. He wants to get regional growth to be lifted, but it's a slow process, devolution, and it's certainly no sort of magic bullet to restore growth.
Rosa, do we know who he'll surround himself with in terms of advisors? We know Jim O'Neill's very close to Andy Burnham. I mean, any sense of what kind of number 10 kind of working processes will be like?
Yeah, well, one of the picks we know came out a couple of weeks ago was James Purnell, who's going to be his chief of staff. He's another throwback to the Tony Blair era. I think that was a good choice. He's very smart. He's run institutions in the past. He's been head of a university, so he kind of knows how to get things done. We think he'll have his two close advisors, MP colleagues Louise Hay and Annalise Midgley, and the Deputy Labour leader, Lucy Powell. She might be, we've been talking about that Downing Street in the north. She might be running that as Deputy Prime Minister.
Okay, so interesting. Between the football and Andy Burnham, we're going to have a really big, 5 days ahead. Catherine Griffiths, Phil Aldrich, and Rosa Prince from Bloomberg Opinion. Thank you all for joining us. I have a feeling we're going to see a lot more of each other in the coming days. Now, Ukraine says it hit 20 Russian tankers in the Black Sea overnight, nearly all of which were carrying oil or gas. Kyiv has been targeted targeting energy infrastructure to try and weaken Putin's ability to fund the invasion. Now, of course, this escalation comes as European allies prepare to play a larger role within NATO. Well, let's discuss all of this with Claudia Major, Senior Vice President for Transatlantic Security at the German Marshall Fund, who used to work at the NATO Department of the German Foreign Office. So, Claudia, thank you so much for joining us. I mean, it does seem like Ukraine, President Zelensky and Kyiv has really they've upped the attacks. Does that mean they feel stronger, or are they desperate? Claudia, I think we're having just a couple of difficulty. There may be a mute button or something like that. We'll get back to Claudia in just a second to hear. I think I can hear you. Claudia, yes. Can I hear you?
I can hear you.
Wonderful. It works. If I can hear, it's 50% of the job done. So I was asking whether Ukraine, do they feel stronger? And is this why we're seeing more stepping up of attacks?
Yes, Ukraine has been extremely successful over the last weeks and months in hitting Russian strategic targets on Crimea, in the Azov Sea, and also in the Russian mainland. That's the good news. The bad news is that this pressure, together with the economic pressure and also political pressure in Russia, has not yet translated in a Russian willingness to negotiate or even to accept a sectoral ceasefire. So yes, the pressure on Russia is mounting. Ukraine is successful, but so far it has not yet changed the Russian calculus. It has not yet changed the Russian willingness to really end the war or to enter meaningful negotiations.
Yeah. Claudia, were you expecting more from the NATO summit, but also what happened in Paris in the last 2 days, or was it anyway as good as it was ever going to be?
I mean, we have several elements where Europeans try to signal that their support for Ukraine is long and sustainable. At the NATO summit, NATO allies agreed to spend for the next 2 years, each year 70 billion euros to support Ukraine. So the signal is there is a long-term support, not just some months, but 2 years. Then we had the meeting of the coalition of the willing in Paris yesterday, where Europeans confirmed again that they will support Ukraine, and the French president announced that they were doing exercises of the coalition of the willing in neighboring countries. Ukrainian soldiers participated in the military parade in Paris. You had co-crews, French and Ukrainian pilots flying over the Champs-Élysées. So you had a very strong political and military signal. And today you have Commission and President von der Leyen going to Kiev, also to underlining that the EU support is very big. So you have in the moment Europeans trying to signal, not trying, they're actually signaling that there is a long-term sustainable support for Kiev, even if there are increasing doubts about the US role with regard to Ukraine.
Do we, Claudia, overall, is there, we worry about U.S. commitment? I mean, U.S. money and arms have been really far between and slow in the last couple of months. So does it really make a massive difference? I mean, do you really worry about this also because the U.S. is clearly focused on the Middle East?
I didn't hear the last element of the question. My apologies. We seem to have some technical problems. Can you maybe just repeat the last element?
Yeah, so the U.S. is so focused on the Middle East. Does it really make them a less reliable partner for Ukraine?
It's not so much the focus on the Middle East. From a European perspective, many European allies worry or wonder where the U.S. is really in its position with regard to the war, Ukraine and Russia. And if you look back, the US president tried to negotiate, tried to broker a ceasefire and a peace since he entered office, which Europeans really supported. But over the last year, we have seen many rounds of negotiations in Istanbul and Anchorage and in other places. But so far, they have not convinced the Russian president to really stop the war. In the moment, we see lots of air attacks in the nights in Kiev, and they don't only target civilian infrastructure, they also target cultural places, so the very identity of Ukraine. So from a European point of view, there is the question, where does the US stand on this war? Are they a supporter of Ukraine? Are they a moderator between Russia and Ukraine? Or might they be more on the Russian side? So from a European point, the impression is that it's up to the Europeans to assure the political, military, and economic support of Ukraine, which is in the end justified because it's happening in Europe. The Iran war is taking away attention, that's true. But I think the questions of the Europeans is far more general. It is the question, how does the US government sees Russia? If you look at the national security and defense strategy, they don't seem to see Russia as a main threat. So the question for the Europeans is more, where does the US stand on Russia? Where do they stand on Ukraine? And there are many question marks.
Many question marks. Claudia, thank you so much for your time today. Claudia Major, Senior Vice President for Transatlantic Security at the German Marshall Fund. Coming up, exuberance across equity trading drives records on Wall Street. We'll, of course, unpack a bumper set of bank earnings next. This is Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Well, Wall Street's biggest banks have shattered equity trading records in the second quarter. We're now joined by Tom Metcalf, our managing editor for EMEA Finance. So what we learned, Tom, is that they are fine.
Yeah, I mean, what we learned is this is a huge bar for any other quarter now. You know, I think you had Diamond yesterday going, you know, he was asked, is this as good as it gets? And he was like, it was pretty damn close to as good as it gets. I mean, some of those numbers you're seeing crossing the headlines. JP Morgan came out first with some huge equities trade numbers, but then Goldman just absolutely blew them away with, I think it was $7 billion, north of $7 billion, second quarter. First time anyone's ever done that. So really interesting. I think it speaks to just how strong, you know, all the markets, businesses are right now. But there was still sort of within the results some cause for, you know, at least caution among some investors, principally around costs among some, you know, specific kind of warnings the banks were giving.
Yeah, and I guess costs, it's tied to AI or some digital tokens. But what are we expecting from Morgan Stanley today?
Well, I'm expecting, again, a very strong performance, and I think the big question is, you know, with this bar now being so stratospheric, can they actually, you know, whatever they do, is it going to kind of impress the market? Because they'll all have yesterday's numbers in mind. I mean, my sense is that you look at, you know, both JP Morgan and Goldman did well. I expect Morgan Stanley will also, you know, blow past at least its estimates.
Very quickly, costs, is it digital tokens or is it just costs in general are rising?
It depends on the bank, right? So Citi's shares are actually down because Jane Fraser was sort of signaling, hey, we might have some more investment coming in the next few quarters. And, you know, again, everyone just takes fright at that bottom line sort of hit. And then JP Morgan as well, moving away from this, you know, absolutely blockbuster sort of markets
trade. And they were saying, hey, our full year costs are actually going to be slightly higher than we expect. And again, that certainly, at least at the start of the trading session, seemed to sort of dismay some investors.
Tom, thank you so much. Tom Metcalf there, Bloomberg's managing editor for EMEA Finance. Now, Swiss luxury retailer Richemont has impressed investors, lifting the wider luxury sector. First quarter sales have grown nearly twice as much as expected. So let's get more from Bloomberg opinion columnist Andrea Felsted. Andrea, is this all about U.S. demand?
Yes, US demand is a lot of it, but Asia seems to be Asia's going in the right direction. China particularly seems to be going in the right direction. South Korea's been good because of the AI boom, but yes, it is principally US.
And so what does it mean for the luxury sector at all? Is it because Richemont has great products, or is there just a revival for luxury in general?
I think for luxury, it shows luxury hasn't fallen off a cliff. Obviously, with the Iran war, there was a worry that that would hurt demand, not only in the Middle East, but more broadly. We tend to buy luxury when we feel happy, wealthy, confident, and that wasn't really helpful to sentiment. So not falling off a cliff, but I'm not sure anyone else will be as good as Richemont. Richemont is in the right place. It has jewellery, which has been a really great area. It has Cartier, fantastic brands. And in the jewellery numbers, we have Cartier watches. We know Cartier watches have been doing very well, that shift from big sporty steel watches to smaller gold watches. The Panthère, the bangle watches are becoming more popular. So it's definitely in the right place.
I mean, if you look at the watches are doing great, I guess, especially for female.
Yes.
How does it compare with, for example, high-end beauty products or the bags?
Well, the bags have been a problem. Leather goods have been an issue for the luxury brands because they put up prices so much. Plus, there wasn't much innovation. They relied on their older styles, so there was little reason to buy. But we've seen, with the incredible success of Chanel, we have seen that when a brand gets it right, when there's innovation, when there's excitement, customers will buy.
Thank you so much, as always, Andrea Felsted there. Bloomberg Opinion, of course, focused on luxury. Now, this is the picture overall for U.S. futures. Again, yesterday was a big day. Today we have a lot of tech stocks, that rallying, or tech stocks in general, leading equity markets higher after ASML earnings offered some pretty fresh evidence of the relentless demand for chips enabling this global AI build-out. The other thing I would say is, of course, we had Kevin Warsh yesterday, consumer price data on Tuesday delivered pretty strong downside surprise, and that really prompted traders also to dial down expectations for near-term interest rate hikes, and that's giving another boost to equities. Up next, Bloomberg Brief. We'll have, of course, a full roundup, a little bit of football, but also markets. This is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend. This is Bloomberg Television.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
The global economic playbook is being rewritten and the levers of power are moving in real time.
To see where the world is headed, you have to look where the action is.
I'm Haslinda Amin in Singapore.
I'm Menika Doshi in Mumbai.
Welcome to Emerging the New Economy podcast.
Each month, we dive deep into how the world's most exciting rising economies are shaping the global future.
Join the conversation. Subscribe to Emerging on your favorite podcast platform today.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
In New York City, 10 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. AI momentum, ASML reports leading equities higher today after showing fresh evidence of strong chip demand. Mission not quite accomplished. Inflation eases, but Fed Chair Kevin Warr says the job isn't done. And an exclusive interview this hour with Zoom CFO Michelle Chang on the growth of the 15-year-old company. All right, it is all kicking off again with the chip space. We'll take it over to Asia and see what's been happening over in Asia with Winnie Su in Hong Kong. Hey, Winnie.
Good morning, Bonnie. We are seeing Korean stocks leading broader Asia higher again today, with the Kospi up more than 6%, led by the surge in SK Hynix. Now, that's coming after better sentiment with the U.S. ADRs up more than 27% the day before, and that is driven by how options were made available, as well as a target price set, a pretty bullish target price set for how the SK Hynix will be narrowing its valuation gap with Micron, as well as how the memory chip, the rally in the memory chip will continue to continue going forward. Now, flip the board, we take a look at the broader Asia market, because overall we are seeing further strength on the tech rally, also supported by the softer U.S. CPI numbers, as well as those earnings from ASML. Now, when it comes to the mainland Chinese market, we are seeing a bit more softness after the quarterly GDPs coming slower than expected, while we are seeing a bit more strength when it comes to currency following a stronger fixing.
Yeah, interesting. 4.3% for the second quarter, below the official target. Winnie, thank you so much. Winnie Su there in Hong Kong. Now let's get over to London for a look at the European session with Justina Lee.
Good morning, Vonnie. Now, it's generally a pretty quiet day in Europe, with the Stocks Europe 600 unchanged, even though we had some pretty good beats from Richmond and from ASML. But generally, of course, an up day for oil is a bad day for European stocks, and we can see a bit of that in German stocks today. Now, when it comes to the bond market, yesterday, obviously, we all got some relief from those U.S. CPI numbers, but on the long end, German bond yields are still up. And now if we flip the board here and we look at natural gas, and, we always talk about oil, but gas is also being affected by tensions in the Middle East and, of course, demand for energy with this heat wave in Europe we're going through. And you can see that it's reached the highest in a few months. And I think this is what we also need to watch out for when it comes to inflation and energy costs, especially with kind of Europe already starting to refill those inventories of natural gas ahead of next winter, Bonnie.
Absolutely, Justina. Thank you so much, Justina Lee. And I'll take the baton and show you the price of oil, because it's been a fourth consecutive night of strikes on the U.S. part when it comes to Iran, and President Trump is threatening to increase and escalate those attacks until Iran relents on the Strait of Hormuz. That said, oil, while it's holding on to its gains, it's not gaining even further. We have Brent crude trading just below 85 and WTI just below 80, and interestingly, further out the curve, we're not seeing that much of a premium either, so it's pretty flat, the 6-month curve on oil, even though the outlook for the Strait is pretty cloudy at the moment. Let's take a look at bonds, because wow, did we see that bear steepening move. We'll take a look at futures first. We have ASML setting the tone here, basically saying all is well in demand for massive machines that make specialized chips, and that's setting the tone around the world, really, for equities. That, and of course, the CPI data yesterday, which was way more benign than the market expected. And to that effect, let's move it to yields, because we did see the 2-year yield come right back down. We're still, relatively elevated, but the market hasn't priced out a 1 month decrease in rates as quickly after a CPI report since 2008. So that was a pretty big statistic that I saw. 30-year yield still pretty elevated, though, at 5.10. All right, let's get to some individual market movers now. We'll go back over to London and to Chloe Melly.
Good morning, Bonnie. PayPal is soaring this morning in pre-market after a report from Reuters that Stripe and Advent International are considering a $53 billion takeover for the company. This comes at a time of a lot of weakness, actually, for PayPal. And so we are seeing investors quite keen about this potential deal there. So up very strongly for PayPal. Moving on to Europe, where we've got ASML, which you've just mentioned, Bonnie, which has upgraded its guidance and really confirmed that there is this continued demand for chip-making equipment thanks to this AI boom, this AI spending spree. And so this reassured investors across that tech sector this morning, and we're up 4% for ASML. And finally, over in Switzerland, the watchmaker Richemont is up this morning very strongly as well after sales came in way ahead of expectations, driven by the US demand for Cartier jewelry in particular. And we saw that driving the rest of that luxury sector as well this morning, with LVMH and Hermes also in the green in Europe.
Chloe, thank you so much. Chloe Melly there in London. She'll be back a little later this hour. Also coming up in this hour, Kayla Sader of State Street on investor risk appetite. Let's kick things off, though, with ASML's strong results. Bloomberg EMEA tech editor Shona Ghosh joins us now. So ASML giving us a read on demand as far out as 2028. That's pretty unusual. It's almost becoming like a Boeing at this point, Shona, with these massive machines and, trying to build them as quickly as possible.
Yes, so the question around ASML is not so much demand. We know there's demand. As mentioned, there's a big artificial intelligence spending boom going on. Lots of ASML customers are building fabrication plants. For ASML, the question has often been about supply. Can it build its complicated modular chip-making machines quickly enough to meet the demand? So here, ASML is showing confidence, saying actually we can ramp up production and increase capacity, which is good news. In a market where we've got memory chip shortages, we've got a lot of demand, people saying more. So it's a good sign, it's a positive sign that ASML is saying yes, we can ramp up capacity. It's just a question of whether investors across the board will see it as enough capacity to sort of unlock some of those bottlenecks.
China's contribution to system sales was down to 14% from 19%. Shona, I'm curious, is China actively dialing back its AI investment, or is it just that other countries are ramping up so much?
So ASML is impacted by the US export controls, so it's not allowed to sell its absolutely most advanced machines to China, and its most advanced machines cost 400 million euros, so $400 million, sorry. So it's a big chunk of change at the top. And so it simply can't ship its top machines, and it's even limited in terms of the repairs and the maintenance it can do in existing machines. So actually, it's not unexpected that you would see a slowdown in business from China and an uptick from the US and other Asian markets, particularly Korea, where most of its largest, and Taiwan, where its largest customers are located. So I think you'd probably expect to see the China business slow down a little further over time.
Shona, thank you so much. Certainly a halo effect on global equity markets today. That is Bloomberg's Shona Ghosh. Fed Chair Kevin Warsh will be on Capitol Hill again today to testify before the Senate Banking Committee this time. That's at 10 a.m. New York time. He spoke before House lawmakers yesterday for his first semi-annual testimony before Congress.
If we get policy right, and I can assure you we will, the inflation surge of the last 5 years will be a thing of the past. The members of our committee have no tolerance for persistently elevated inflation, and we share a resolute commitment to ensure price stability.
Joining us now is Bloomberg senior editor Alistair Bull. So we got the testimony and we also got the CPI data. Alistair, do we have now any inclination as to what the next move will be? Is it back to, well, could be up, could be down?
Not quite. Good morning. So first and foremost, Kevin Warsh had a good day yesterday. He got pretty lucky with the CPI print, which was much better than expected. It takes the pressure off him to hike in July. He didn't take it off the table. He continued to talk tough on inflation. But the truth is that the numbers are going in his direction. There's smart people, including Bloomberg Economics, who think that inflation has now peaked in May. that proves to be the case, Walsh can continue to talk tough, but sit on his hands, keep rates on hold, and as the data continues to come out and we get several more months going in the right direction, they will stay on hold and the narrative will turn to cuts. But it's premature to do that, as he said. We've got PPI coming up. We've got a lot of other data to come. There's renewed tension in the Straits of Hormuz. The oil price is up. And those things could easily push in the other direction. And I'm sure that the market, which is still priced for a rate hike this year, is going to keep the thought of an insurance hike in the back of its mind in case the numbers do start to turn up again. Bonnie.
Yeah, just curious, you know, we may see inflation data reversing. It's likely, in fact, but can we at least say that maybe tariff pass-through is out of the way now if oil pass-through isn't?
I think that's probably true. I think the Fed's own research shows that to be the case. There was a speech, I guess it was on Tuesday, by Governor Chris Waller, who made that very point, that the bulk of the tariff inflation has passed through. Now, that doesn't mean other tariffs can't come into play and create another shock, but from what they can see now, that is mainly passing through. Now, Waller's speech was important because it laid out two scenarios. One scenario where inflation continues to trend down and the Fed can stay on hold, and another scenario where the widening of price pressures out to core and to services and goods inflation means they may have to tighten again. Now, he pinned a lot on the CPI print, and if he said it came in hot, they probably have to consider a near-term hike. It didn't. That takes the near-term hike off the table. But that peril still remains as the data comes in, which the Fed will watch very carefully and expect Walsh to remain hawkish. He has every incentive to persuade markets that if he has to raise rates, he will. And I think they've taken him at his word.
Alistair, moving to China, we got Q2 growth coming in at 4.3%, lower than, you know, even the low rung of the target that officials had set. Does it mean we'll see stimulus or will they hold back?
I think that there's a strong expectation that they will enact more stimulus to push back into that 4.5 to 5% range. Let's not forget that for the first half overall, growth is still running at 4.7%, which is comfortably within that range. But the expectation is that they will do more, but probably on projects, infrastructure projects, which are already in train. So they're kind of more shovel ready. Bonnie.
Alistair, thank you so much. Global central bank and monetary policy outlook there with Alistair Bull. Now to other top stories trending on the terminal this morning. President Trump backtracked on his plan to impose a 20% charge on cargo shipments going through the Strait of Hormuz, saying Gulf allies urged him to drop it. Trump says the expected revenue will be replaced by direct investments in the U.S. from Gulf states. Stripe and Advent have offered to buy PayPal at a valuation of more than $53 billion, according to a Reuters report. The firms are offering $60.50 a share. Stripe and Advent have not received a response from PayPal. It's surging, though, in the pre-market. And Richemont shares are surging, too, after sales grew almost twice as much as expected in the 3 months through June. The 20% growth was spurred by a high demand among wealthy Americans for Cartier rings and bracelets. Richemont sales are thriving despite a broader slowdown in the luxury sector. Coming up, a conversation with Zoom CFO Michelle Chang. This is Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bloomberg Brief. I'm Vonnie Quinn in New York. It is time now for our CFO briefing, where we speak to leaders on what investors should be watching. Joining us, I'm pleased to say, is Michelle Chang, CFO of Zoom. We also have with us Bloomberg Senior Editor Nina Trentman. So, Michelle, let me get to you first. The company is turning 15 years old, which is sort of difficult to believe. What happens at this point with growth? We obviously saw the massive COVID boom and then maybe a little bit of a drop-off. Yeah. Where do you go to from here?
So first, we're here, celebrating the 15-year anniversary of Zoom, and what has remained throughout this 15 years is just a deep respect and love for our customers, and really making sure that we're focused on the value. But the company, to your point, has been reinventing itself since the pandemic. So focusing a lot on product diversification, on infusing AI in everything we do, and a lot of where we're headed is all about a concept we like to talk about called system of action. So how do you go from conversation, which Zoom has always been known for, our meetings business, and move that into action? So it's something we're really excited about because of what it can mean to our customers.
So just to follow up on that, actually, I'm curious, could you talk a little bit about that new product enhancement that you talked about and how AI comes into the fore?
Yeah. So, when we think about going from conversation into action, there's so many products then that can go into. So Zoom has built not only the meetings business that we were obviously known for in the pandemic, but a phone business, a contact center business. So a lot of the same red thread being that conversation into action. And to your point, AI is what enables that action. So picture a day where we can be in a meeting and it's no longer just about the conversation. AI is listening, it's taking the notes. If you can't make it, it informs you after. And you don't have to wait till the end of the day to get to action. You can just be having those moments in the meeting, whether it's updating another system of record like Salesforce. So super excited about what that means, again, to our customers.
How exposed are you to costs? AI costs, of course, is a huge topic, I think, for executives, specifically for CFOs. How does the company manage that part of the AI story?
Yeah, I think there's not a tech CFO alive that isn't very focused on tokens, and frankly, it's not even just in tech. So look, it starts with visibility and making sure you've got kind of a handle on those expenses, making sure with any expense that you're forcing the trade-off. But to be honest, where we're more, making sure that we're pushing things is what's the true value to the company? It's no longer just that world where it's AI for AI's sake. You've got to have a concept of what it's doing, for the company.
Well, because investors will sell your stock if you don't, right? That's something. That's one of the imperatives here. Yeah. Let me ask you. You did do something very wise. You bought a stake in Anthropic. It's now worth $1 billion. What are you going to do with that $1 billion?
Well, we're not seeing what we're going to do about it. Look, Anthropic has been a great investment for us, as you know, and also a great partner. So the concept of what we did with Anthropic is something we do with many different companies, which is we try and invest early stage in technology that we think will be important to kind of our AI future, primarily these days. And so Anthropic is a great example of that. And those early stage investments allow us to understand where the tech is going and to build that in. And ultimately what it does for us at Zoom is make sure that we have the best quality and also that we're able to kind of, monitor costs and having different providers, not just our own SLM, but other LLMs like Anthropic, like OpenAI, is really, again, in service of our customers.
You've been CFO for about 2 years, coming up in October, I think. I'm curious, you made a few changes when you took over as CFO, including tweaking the company's buyback strategy. Can you talk a little bit about that?
Yeah, so look, I say before I get into the buyback, my focus as CFO was really to come in and make sure that we were inflecting our revenue growth. That's the best thing that we can do for our shareholders, was to get that growth. And we've made great progress going from 2 to 5%. But as you can imagine, lots of other changes in terms of maintaining profitability and shareholder return. And so one of the things that I thought was important, investors were giving us feedback about capital return to shareholders. And since then, we've issued $4.6 billion of buybacks and executed against 3. So it's something that I'm very proud of, that we've made that more of a predictable measure for our investors.
Speaking of career history, you spent 25 years at Microsoft before moving to Zoom, and you were responsible for Teams. That was your division.
In the pandemic,
Yeah, crazy. So I'm curious, what did you bring with you to Zoom from that role? And also, is it a little chilling seeing what's been happening to that sector?
Yeah, look, I had the pleasure of working under 2 amazing women CFO at Microsoft, so, many great learnings there. I think probably my biggest learning from Microsoft that is so relevant to where Zoom is about how to work through transformation. And look, tech delivers, endless streams of transformation from cloud to AI. So it was, how do you keep a focus internally, and how do you tell that message externally about where you're going, and make sure that people aren't confused on the biggest priorities?
Give us the secret.
Look, for Zoom, what we've talked about is, hey, there's 3 priorities. There's 3 business priorities. We're going to be about infusing core AI into our core products. We're going to be about scaling contact center. One of the product diversifications that Zoom is really seeing success in is our contact center business. So we're going to be about scaling that. And then we're going to be working to bring new forms of AI monetization on. And so it's that 3 priorities. Every dollar we invest, every conversation we have to show progress to our investors, all centers around those 3 priorities. So it's not different inside the walls of Zoom than it is out. So.
Maybe one quick follow-up before we have to wrap up. I'm curious, in the past, of course, organic development was one of the hallmarks of Zoom. How do you think about deal making and adding to that product?
Look, our CFO, or our CEO, excuse me, Eric, has had such a great history of building amazing products. But in an AI world, there's a different time, and I think you see it reflected in a lot of what Zoom has even done in the last 6 to 9 months. We've acquired now 3 companies. So I think it is a different era as things speed up in an AI world. And so it's something that, we're both embracing sort of our traditional build model as well as acquisitions.
Well, congratulations on Zoom's 15 years, and it was lovely to have you in studio. Typically, we have guests on Zoom at this hour, so very nice to meet you in person. Michelle Chang, CFO of Zoom, and of course, Bloomberg's Nina Trentman. And do check out Nina's CFO briefing newsletter by using the QR code on your screen right now.
anything we do in Africa is going to be more risky than the U.S. I think the approach we want to take is how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation was a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Ahmed, only on Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Time now for your front page news. And first up, the New York Times reporting China's economic growth of 4.3% in Q2, reflecting a broad slump outside of the country's export-oriented manufacturing might. It's the slowest quarterly growth rate in 3 years. Next up, the Financial Times reporting Ukraine will be allowed to spend funds from an EU defense loan on Chinese drone components. And finally, the Washington Post reporting officials are investigating whether Taco Bell restaurants played a role in the illness outbreak caused by that parasite that contaminates fresh produce. Coming up, we're going to be speaking to Kayla Sater of State Street.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. AI momentum, ASML results lead equities higher after showing fresh evidence of strong chip demand. Mission not quite accomplished. Inflation eases, but Fed Chair Kevin Warsh says the job is definitely not done. And oil rising for a third straight day after another wave of strikes by the U.S. military near the Strait of Hormuz. And that's where we'll start with a look at oil, because we're staying with that 85 handle on Brent, just below 80 on New York crude. Now, it is maybe a little consoling that further out the curve, we're still relatively flat. So the president reversing course on that 20% reimbursement, talking about trade deals instead, might be impacting this market. The future of the Strait, though, still pretty cloudy. And we did have a fourth consecutive day of strikes against Iran, and President Trump saying he is going to escalate attacks until Iran relents on Hormuz. Let's get to the rest of the market, because CPI data, the Fed's, Kevin Warsh's testimony, all impacting the equity market yesterday and today. But ASML is also casting a nice glow over this market, talking up demand for their huge machines right through 2028, and that helped in Korea, up more than 6% there on the Kospi, and that's bleeding as well into U.S. equity index futures. Take a look at the yield curve, though, because that's where we're seeing really the most movement in the last couple of days. The two-year yield back down to 4.2039, massive bear steepening move after Kevin Warsh's testimony, but particularly the CPI data, which was much more benign than the market was anticipating. And it was a pretty steep drop in the expectation. We had been pricing in a rate hike in July, and now we definitely are not going to be looking for a rate hike in July. The 2-10 spread there, back below 40 basis points. Let's get to some individual movers now. London calling with Chloe Melly. Chloe.
Good morning, Bonnie. PayPal is soaring in pre-market trading this morning after a report from Reuters that Stripe and the private equity firm Advent International were looking for a $53 billion takeover of that company. And so we are seeing that really drive the shares very strongly this morning, up more than 16% for PayPal. Moving on to ASML, which has upgraded its guidance and also laid out plans to increase production. This really confirms this AI momentum, this AI spend on this chip-making equipment, and this is something that has reassured investors across that tech sector this morning. And we're seeing ASML up almost 4% this morning in the Netherlands. And finally, going over to Switzerland, where Richemont has reported sales that were way ahead of expectations, thanks to wealthy Americans buying a lot of Cartier jewelry, and then every region actually having very positive sales as well for Richemont. So this is the first big luxury company in Europe to report, and this might be boding quite well for the rest of that sector, with earnings reports expected from LVMH, Hermes and Kering over the next few weeks as well.
Yeah, the upper part of the K for the consumer definitely working this quarter, Chloe. Thank you so much. Chloe Melly there in London. June's CPI print showed inflation easing, but Fed Chair Kevin Warsh says there's more work to do.
It's one data point. The reason I create a task force on data is I don't want to overread or cherry pick data. There might be some that look at this morning's data and say, oh, mission accomplished, everything is swell. That is not my view.
Kayla Sater, macro multi-asset strategist at State Street, joins us now. Kayla, the market obviously priced out the July rate hike, but is it pricing in a victory maybe too quickly?
Yeah, that is the concern, that the market will get so excited that inflation is coming down and, the Fed can claim success. And as we just heard from Chairman Warsh, that's not the case. I think there's a couple factors to think through. First, the Fed has been off target for 63 months now. So I think, the market should be skeptical that we won't see reversal. Part of that, too, is that when we look at what's happened just over the past couple weeks, we've started to see upside in commodity prices again. And even when we look under the surface, something that we're paying attention to a lot at State Street is the whole influence AI could have on inflation. So this time last year, folks were saying AI could decrease R-star because of the impact on the labor market. What we've learned over the past year is the labor market is still strong. There's actually tightness on the supply side. Simultaneously, you have AI influencing inflation to the upside, creating more productivity. And so I think when we look at some of our daily measures of inflation and price stats, what we see is very, very high electronics prices. And so that's one example of something that's in core that could still lead inflation higher. And so even though yesterday's print was, let's say, very benign, you have geopolitical factors, and you also have structural factors.
Well, that's the thing. I mean, the market was so relieved yesterday, right, that you have to wonder if there's a bit of a reversal next time around, and there's likely to be at some point soon, because of these oil prices that went right back up. Does the market basically freak out again?
I think freak out is a good word to use here. You know, one thing I look at when we look at nominal yields, breaking it down into real yields and break-evens. And when we look at break-evens yesterday, the move was quite large, and we saw this big drop in break-evens. And so I think when we think about mechanically what would increase rates here, I think there is room for reversal on that break-even side, and so we should see yields move a little higher over the next couple weeks.
What happens if we get a weaker employment report than we'd like to see?
I think it depends on what's driving that weakness. So at this point, I would focus more on the unemployment side and also pay attention to what's going on in the participation rate. If the participation rate fluctuates, that's an important signal. So looking within the data there, but also, you know, the market does tend to overreact, I think, to these NFP prints. When we get a low NFP print, that's not necessarily a bearish signal for the overall economy, because that could be reflecting supply, where we just don't have enough folks to increase that NFP number. And when we think about the break-even rate within the employment picture, we really don't need very strong NFP prints to keep unemployment stable at this point. So I really think, you know, looking through low NFP numbers, focusing on employment, as well as focusing on wage growth. If we're in an environment where inflation has come down, actually, and we're starting to see wage growth accelerate or stay strong, that's a signal that demand could still be very strong, and ultimately that could also prove inflationary moving forward.
It seems like we've been waiting for so many factors to appear. So the influence of, you know, immigration, for example, you know, the influence of the World Cup. I mean, are some of these behind us? Are some of these baked into the data at this point, and we can sort of put them behind us as concerns in the sense that at least we know the outcome? Or are we still waiting? I mean, even tariff-induced inflation.
Right, right. There's a lot of factors, and I think that's one thing that's interesting with the current administration that is actually an inflation risk is, for example, with tariffs, if you just saw a one-time price increase, that wouldn't be inflationary, because ultimately that would, you know, ease out of the numbers. But if we start to see tariff policy shift, that could be inflationary. Also on the commodity front, we're living in this example where, you know, we had the good news on the MOU that has since been reversed, and so you see these fluctuations. These fluctuations can be much more inflationary than just a one-time hit. Also on that structural employment front, one thing we're looking at is what parts of the economy see, or what parts of the labor market are seeing less job growth, and how does that compare to wage growth? And when we look at that wage growth, it's actually sectors that have seen job contraction see wages increase the most. And so to us, that's a sign that employers are struggling to find the workers they need and are having to pay more to attract those workers. So that's a supply side issue on the labor market.
You know, one-year inflation swaps did drop below 2% at one point. Are we going to see a continual repricing, you know, over the next few months? And what is State Street expecting for, you know, the next Fed move, and when?
That is the question. You know, I don't think it's out of the question to expect at least one hike at this point. Certainly not in July, probably more so Q4, just to see where the data do shake out. You know, the message we got from Chairman Warsh yesterday is, you know, he needs to see consistent prints essentially. Otherwise, he'll stay more hawkish. And when we think about, you know, what is an ideal world for the Fed right now, it's lower inflation at this point. When we think through some of the policies Chairman Warsh has talked about, a smaller balance sheet, for example, less need for communication. Both of those things are much easier when inflation is not an issue. And so I think that's why it makes sense for him to be very persistent in more of his hawkish speak, because he doesn't want to overcommit to anything too early.
Speaking of the balance sheet, he said, we are not going back to the 2006 balance sheet. That ship has sailed.
Yes.
Where do we go, though? I mean, it has shrunk a little bit, but, how much more can it shrink?
That's a great question, because we're not quite where we were pre-COVID. It would probably take a little more than $1 trillion of shrinkage there, which still is quite a bit. I think really what it comes down to is, what can the economy do with fewer reserves? And so we hear a lot of discussion around decreasing banks' demand for reserves. And some of that can happen through regulation. So we've heard a lot of discussion about that. But ultimately, what we would need to see is, banks being able to do more with fewer reserves, become more efficient. So far, what we've seen is the central bank's the economy rather, is not able to handle that at this point. There's a reason why just this week, Roberto Perli, who runs SOMA, announced that the Fed is going to continue their reserve management purchases at the current pace. Part of this is because we still see increased issuance. And so as we see more issuance on the fiscal side, it's very challenging for the Fed to shrink their balance sheet.
All right, well, we'll see what we hear from Mr. Warsh today. Kayla, thank you so much for all of your thoughts post-CPI and the Fed Chair's first day of testimony. That's Kayla Sader of State Street. Now to other top stories trending on the terminal this morning. Stripe and Advent have offered to buy PayPal at a valuation of more than $53 billion, according to a Reuters report. The firms are offering $60.50 a share. Stripe and Advent have not received a response from PayPal. Richemont shares are surging after sales grew almost twice as much as expected in the 3 months through June. The 20% growth was spurred by high demand among wealthy Americans for Cartier rings and bracelets. Richemont sales are thriving despite a broader slowdown in the luxury sector. Spain advanced to the FIFA World Cup final after a 2-0 victory over France. They were able to shut down an impressive French attacking trio led by star Kylian Mbappe. Spain will face the winner of Argentina versus England. And that'll happen this Sunday at MetLife Stadium in New Jersey. Coming up, President Trump vows to intensify strikes on Iran until it stops attacking ships in the Strait of Hormuz. Details next. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, my dream is to play football and play professional football, and the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start on the third floor or the lobby. You actually have to start in the basement.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
I'll save the energy targets for last, but ultimately we'll hit energy targets, yeah. But we're going to hit them very hard tonight. We're going to hit them very hard tomorrow night. We're going to hit them very hard the night after. And then next week it gets really bad for them because next week comes the power plants. Next week comes the bridges.
President Trump keeping military pressure on Iran for a fourth day and continuing. U.S. forces hit Iranian military targets overnight again. Kate Ackley of Bloomberg Government joins us from Washington. So, you know, he's threatened so many things, but we are now back into a fourth day of strikes on Iran. We're hearing of, you know, hundreds of people injured at this point. Kate, does this continue? Will he strike power stations? And, you know, he's threatened desalination plants and so on. Will he do it, Kate?
Well, we have seen this before where there was, you know, sort of using this to get closer to a deal, but that memorandum of understanding with Iran obviously seems to have not held up. So, you know, just it's a very volatile and uncertain situation. And as you know, it has this ripple effects in the oil prices and all this stuff that has to get through the Strait of Hormuz. So it's something that, you know, people are watching obviously very, very carefully. There has been, like you said, 4 days of more bombing. If you look at the situation, you know, back here at home in the United States, this conflict in Iran has hurt President Trump's polling numbers. It's hurting, you know, then Republicans who support it, hurting their poll numbers as we're, you know, really about 4 months out from these pivotal midterm elections, which will decide control of the House and the Senate. So you know that that's also top of mind for the White House team and for the Republicans on Capitol Hill. And we've seen Democrats this week, you know, lawmakers have come back to Capitol Hill, and Democrats are talking about the situation in Iran, and they are, you know, using it as a messaging point, if you will, that to go against Republicans.
Yeah, and I mean, nothing is getting any better. The Strait of Hormuz at one point was way more open than it is now. I mean, the UN maritime chief actually told Bloomberg just in the last few hours, it is not safe. And we know that ships are just dribbling through, if at all, at this point. So the carrot approach didn't work, I guess, if there was maybe a carrot. The stick approach is not working. Is Iran just going to wait this out for a lot longer?
Well, and then there was this idea floated. President Trump floated the idea of charging, you know, 20% on shipments going through the Strait of Hormuz, and backed off of that after, you know, U.S. allies in the region pushed back on that. So, you know, you see these kind of ideas be floated, how to deal with the situation in the Strait of Hormuz, which is this very important thoroughfare, especially for oil and gas, but also other things, helium. You know, many things sort of go through that strait. So I expect you will see other ideas floated, and the administration will be seeing what might stick, while they also, you know, sort of have this back channel negotiations going on to resolve the conflict.
All right, Kate, we will obviously continue to monitor the situation. Thank you so much. Kate Ackley of Bloomberg Government. Let's turn to what's driving equities higher today. It's ASML lifting its annual sales forecast for the second time this year. A surge in AI spending driving demand for the Dutch company's chip-making machines. Joining me now is Bloomberg senior strategist Neil Campling. So we know that there's going to be huge demand until 2028. Neil, are these clients locked in, or at some point could that demand, you know, drop off? I mean, it's a bit like Boeing at this point. You're looking at deliveries as opposed to, you know, anything else. Any other metrics?
Yeah, we're looking obviously at the long term here rather than the single individual quarter numbers, Bonnie.
as you mentioned, because if we look at it, we know the AI narrative is very strong in the short instance from all of the sort of anecdotes that we're seeing. The key coming into this was clearly about how high they'd be able to raise guidance. And crucially, short term for the stock and momentum, they managed to raise guidance for this year for revenues above all street expectations. So even the most bullish estimates were bettered in terms of the guide. The conference call, which will come at 9 o'clock New York time, is definitely going to focus on what happens in the long term in terms of are they able to create enough supply and the equipment to meet that huge AI demand. There's clearly going to be no real color yet on what happens longer terms in terms of the demand dynamics, but certainly given the fact that demand is so high, the key is going to be that they can match in terms of the supply. And that's been the concern going into the print. And there's a bit of a catch-up trade here because ASML has actually underperformed their peers and the SOX index year to date into today's numbers.
Yeah, it's only up something like 60+%, right, Neil? Speaking of, crazy pricing, SK Hynix all over the place. The ADRs are trading at a 51% premium now to the stock in Korea. Who's right? I mean, is it trading at a discount in Korea, or are we way overpaying here in the US?
It's, I think one of the attractions of the listing in the US was certainly that when investors want to play the memory trade in AI, then it's been somewhat limited in terms of these kind of HBM chips to just playing Micron. So now you have another alternative. There are technical factors going on here between the listings of the different stocks. So I think we're going to, an options market started trading yesterday as well. And so for the time being, there are factors at play in terms of options, in terms of short sellers positioning, in terms of index positioning. There's a whole range of factors which will probably narrow that in the course of the next few weeks. But volatility will remain. Keep an eye on that.
Yeah, that does not surprise me, Neil. At this point, Neil Campling, thank you so much for joining. Morgan Stanley releasing results before the opening bell, rounding out big bank earnings already for the second quarter. Joining us now is Bloomberg Managing Editor of EMEA Finance, Tom Metcalf. So Tom, if yesterday is anything to go by, really everything is green and golden and there are no problems out there. Is that what we'll hear from Morgan Stanley?
Well, I think they better deliver on that line, right? Like the bar has now been set so high, particularly by Goldman Sachs on the equity side. So, I think that's probably the new challenge Morgan Stanley's just been set is can they meet, those expectations, which presumably after yesterday have just been pulled even higher. Certainly, as you look across the 5 banks that reported yesterday, it was just like, wall-to-wall strength really in the trading business. Obviously, that's a big part of Morgan Stanley's world as well. And for me as well, the other interesting thing will be, with a huge wealth business, what are they seeing, investors doing? Presumably piling in to equities, piling into investments still. But sometimes you kind of extract some sense of, is there a little bit more, perhaps from a certain subset of those wealthy investors, a certain set of kind of more caution perhaps?
Yeah, I mean, really only Citi, maybe disappointed yesterday, not even talking about the stock price movements really, but the actual results, and still their trading quarter was phenomenal. Have we put to bed all of the concerns that might have been out there, the so-called cockroaches and so on?
Yeah, it was interesting to watch yesterday. So, Citi and JP Morgan both sort of maybe slightly spooked the market as well. Funny enough, obviously, because of that bottom line they were looking at, right? So you're JP Morgan, but effectively saying, hey, our year-end costs will probably be somewhat higher. That is obviously the last thing shareholders want to hear. And then on the Citi side, they started strongly out the gate, but then you had the CEO, Jane Fraser, just sort of flagging, hey, we might be investing more in the kind of coming months. And again, shareholders took that and thought, ooh, what kind of costs are we going to have coming up down the pipe? And that's partly why you saw the Citi shares drop.
Yeah, but definitely investors prefer costs than they prefer problems, I'm sure. Tom, thank you so much. Bloomberg's Tom Metcalf. This is Bloomberg.
bringing you the latest business news wherever and whenever it happens. I'm Scarlett Fu, reporting from America's biggest military shipyard. This is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Now look at what is ahead today for your trading day. Another read on U.S. inflation. We get PPI data out at 8:30 a.m. New York time. And then, of course, Morgan Stanley reporting before the bell. We also get United Airlines, though, after the close. And it is day 2 of Fed Chair Kevin Warsh on Capitol Hill. He testifies before the Senate Banking Committee at 10 a.m. This is your macro picture for the day. The Nasdaq looks to be about to open higher in a few hours. This on ASML, talking up chip demand right through 2028. Brent crude, as we've got 4 consecutive days of strikes now, and that 2-year yield back to 421.
Today, Wayfair sees immense potential in brick-and-mortar stores.
When we got into physical retail, our view was that, even if the market continued to grow for e-commerce, probably a large chunk of the market in the space would stay offline.
Kate Gulliver showed me around Wayfair's new 150,000 square foot Atlanta flagship store.
When customers who have seen us online come into the store, they're generally a bit surprised by actually the breadth of what we offer. Often if you're going online, maybe you're looking for something particular. But when you come into the store, you walk in, you see, the market square, you see all these pillows, you see the decorative accents. So what we're seeing actually is that in store, we do really well in some categories that online are, less a percentage of the total.
How does technology help in kind of making it seamless online to store?
I think
and vice versa.
The biggest thing is for the customer on the front end, that she can be in the store, that she can actually shop here, go back home, complete that purchase. And if you look at these sort of price tags and everything, they're all these digital tags. That's because they're the exact same prices they are online. So you're not going to be surprised that you saw something in the store and then you decided to purchase it online, that it's somehow different and that the offering is different. It's actually very consistent. But when she's here, she can have her app open, and everything that she's doing here can be very similar to what she's doing at home. And I think that consistency is quite important.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
power of earnings is too strong.
Earnings revisions breadth is still surging.
At some point, valuations will become an issue for investors.
We've been warning our investors that a correction was coming across the board.
It's premature to get too worked up or too bearish.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Wednesday, wrapping up big bank earnings. Morgan Stanley, BNY set to report following blowout numbers across Wall Street. PPI, the next data point to drop after CPI comes in much cooler than expected. Heading into day two on Capitol Hill for Fed Chair Kevin Warsh. Warsh facing down the Senate.
Yesterday, the message coming from Kevin Warsh was mission not accomplished. We'll probably hear more of that today, even if we get another softer than expected print on PPI. Question is, which mission is he talking about? Because when it comes to mission transformation or mission information, he seems to be winning. If you take a look at the two-year inflation expectations, they're near the lowest since October 2024, even with oil prices rising. So even though Kevin Warsh did not lay out his plan going forward for exactly how he planned to anchor inflation expectations, he has done so with remarkable care.
That's the issue. We know what he doesn't like. We don't know what he wants to do about it. Is this just a communication exercise, or is there some real intent? Is this about hiking interest rates at some point, or just holding rates at this level for a whole lot longer? They're the questions we've got to ask. I think today in the Senate, if you have an opportunity, good morning, senators, just ask him whether he believes we are sufficiently restrictive or not, based on the policy rate where it is right now and the economy that we have. Are we sufficiently restrictive or not?
Yeah. Do you think that right now, by doing nothing, we could still get inflation down to that path? He probably will say there's a task force to analyze inflation, which he did discuss and go into in terms of a default. But this really is going to be the key question. When you take a look at where investors are positioned, the Bank of America Fund Manager Survey came out for the month of July.
Punchy.
83% believe that the Fed will not hike rates before the midterm elections. And increasingly in notes, I see the expectation for a rate cut come in 2027 and being on hold this year. So despite market pricing, the sentiment from Wall Street analysts seems very different.
Looking at the same survey this morning from BofA, US equity overweight is the biggest since 2024. Cash levels fall to an uber low 3.6%. That's a pretty bullish setup coming into this month. Check out crude, WTI and Brent. We've added about $10 back to the price of crude. 85 on Brent this morning. WTI at around 80 and up by 0.8%. The stress in the Middle East continues, and the flip-flopping around policy does as well.
Yep, we're flip-flopping in terms of potentially this 20% reimbursement. The president wanted to charge vessels for transiting the Strait of Hormuz. He now says it could be done in trade deals. So if you're a Gulf country, invest more in the United States. There's really no details on exactly how this would work, but clearly he's been advised that the United States charging a toll is not going to work the same way the Iranians are trying to charge a toll. However we want to slice it, though, the strikes continue, and the president in a Fox News interview last night not only said they were going to happen last night, but they're going to happen again this evening, and then he foreshadowed energy targets in Iran will be left, quote, for last.
How much comfort can you have in the inflation story? We just had the biggest decline in gasoline prices since 2022. How much comfort can you have with CPI yesterday, PPI later this morning, when this story can flip again, Bramo, over the next month?
You know, I don't really understand why two-year inflation expectations are as low as they are, why they are continuing to come down, why the disinflation belief seems to be prevailing on Wall Street, even though we do have rising oil prices. This is a tension that needs to get resolved.
Should we check out ASML as well, reporting over in Europe? The good news, that stock is doing well. That's the AI trade in many ways. It's the CapEx trade. ASML this morning up in Europe by close to 4%. It's CapEx for the few, not for the many, and I think they're getting that CapEx. IBM certainly is not getting the spend right now.
Yeah, and arguably the two stories are highly intertwined, with people investing in the hardware of ASML and not in the software of IBM, really front-running some of these orders. The idea that their guidance for total revenue for this year came in almost $9 billion above the low point in previous expectations for the full year gives you a sense of just how much of a beat you're getting on the hardware side of things.
IBM just getting absolutely hammered in the last 24 hours. Coming up this hour, we'll catch up with Steve Chevron of Federated, wrapping up earnings on Wall Street, Anna Rosenberg of Amundi as President Trump walks back plans for a Hormuz toll, and Stefan Slavinsky of BNP Paribas as IBM loses a quarter of its value in a single day. We begin this hour with stocks pushing higher, heading into earnings from Morgan Stanley and BNY. Steve Chevron of Federated writing, despite all of the headline risk and volatility, the relentless march of earnings growth continues to drive the market higher. Steve joins us now for more. Steve, good morning, good to see you.
Good morning.
How high is that earnings bar going into earnings season?
It's the highest in a while. I mean, expectations are that earnings are going to grow 22% on a year-over-year basis. That would be the strongest quarter since Q4 of 2021, coming right out of COVID. We generally beat 5 to 8%. And so, is it impossible to see a 30% year-over-year earnings growth number? I think it is. I don't know it's likely, but it's possible. And it's broad-based. I mean, certainly tech and energy are playing a big part here, but 10 of the 11 sectors are likely to see positive growth. Healthcare is the only one that's not joining the party. What we're seeing is margin expansion at a rate equal to or better than any other period we've seen in our careers. And I can say that safely for all of us around the table. That's the big story. That's what's driving markets higher.
The story's great. It just depends how well priced it is right now. I know it's really, really early days, but it was touch and go just yesterday morning where it felt like the beats weren't really being rewarded, but the misses were being absolutely obliterated. Those stocks got punished. IBM, a great example of that. Is that an early lesson, or is it too premature?
I don't think it's just about beats and misses. I think one of the things that's happening is that the nature of risk is changing. It used to be that it was a growth or a value story or a factor story. It's who are AI winners and losers right now. And you're funding your AI CapEx by not spending on mainframes. And I think as the market looks at that, they're asking, well, is this something that's going to continue for an extended period of time? Because you can't really start to ask if AI CapEx is going to peak until the hyperscalers stop raising capital to increase even more on the CapEx side. So when you look at things like the chip trade, I think they have room to go because the demand continues to outstrip. I also think that it's going to get more volatile because the first leg of this was earnings moving higher. You could see these chip stocks and you can see their earnings jumping. Now the question the market's wrestling with is, via long-term contracts and the sustainability of this play, should the multiple revalue? And anytime you're in a multiple revaluation story, it tends to be a little bit more volatile.
This has been an incredibly complicated year because it's both a micro story and a macro story. On the micro level, yesterday when we got the earnings reports, we did see pretty tremendous beats, and then we saw some of them with pretty paltry gains. Goldman Sachs is a perfect example. As the session grew older, those shares gained more and more. Yes, it was the commentary, but also it was this idea that disinflationary print on CPI would give the Fed more room not to hike rates. How much is this a rate hiking story as much as it is a micro story and a story of AI?
So if I were to rank them in priority order, I think the big story is earnings. That's really the underpinning of what's going on here. I think as it relates to the Fed, I agree with that survey. I think what you can misread from Chairman Warsh is I don't think he's actually being hawkish or pivoting in a hawkish direction. I think what we're doing is we're going back to a different kind of Fed guidance, and that is I'm going to be staunch in my defense of price stability in my comments, and I'm not going to tell you what I'm going to do. I remember being a young analyst on Wall Street once and hearing Greenspan speak, and he was about to do an interview, and he said, please don't ask me about monetary policy. I might be forced to launch a 30-minute answer where I tell you nothing. And I think that that's what you're going to see from Warsh today in front of the Senate. I think he's trying to break the market's dependency on being spoon-fed guidance. And I think that that can be misinterpreted by some as hawkish. I think what Wall Street is looking at is just as it would have been ridiculous to cut rates in the face of rising oil prices earlier this year, it's equally ridiculous to really be considering hiking rates until we see how all this plays out.
Putting aside Kevin Warsh, what his actual decision of what he's going to do is, it seems like the longer they remain on hold, the more the punch bowl is available to all the investors on Wall Street. The more you can get these earnings that continue to outperform in a massive way from the big banks. Why is that not how you see it, essentially?
Yeah, because I think when you look at the bulk of this earnings growth, it's not coming from rate-sensitive companies, right? It's not coming from smaller cap companies. Even the banks, while their numbers are good and they were terrific and very good for the banks, they're not really driving the kind of 30% year-over-year growth. That's really coming from tech. That's really coming from places like material. That's really coming from places like industrials. The companies that are spending on chips have more money than the Lord himself. They don't need to borrow at the federal funds rate. And so I think that earnings growth is, in a lot of ways, at this point, really independent of rates. What you see, though, is that there's large swaths of the economy, middle-income Americans, lower-income Americans, smaller businesses, that do care about rates, and they've been under pressure for 3 or 4 years. And look, we can quibble about this, but the inflation rate's 2.6%, and the federal funds rate is 3.75%. That is those are real rates that are high relative to history, and I think they probably don't need to be there. We just need to get through some of this noise for that to become apparent.
Do you think it's that cohort that's being affected by those higher rates that's going to hold the Fed back from having a potential hike?
Yeah, look, I think that's right, because I think what you would do by hiking rates is punish those that are already being punished. You're not going to slow down AI CapEx spend, which is pushing up memory prices. You're not going to slow down the high-end consumer, where higher rates mean more money from their kind of money market account or their savings, and they all have fixed rate 30-year 3% mortgages. So I think it would be counterproductive, quite frankly.
Steve, you alluded to it. Do you think the multiple's going to go up?
So that's been the thing that I think we've gotten right over the last couple of years, is that if you're in an environment where margins are growing and the S&P is getting more profitable because of mix shift, because of more subscription-based models, then it's unreasonable to think that the multiple doesn't follow. And that's really been correct. If you look at where margins have gone, so too has the multiple followed. And until that stops, I think that's right. So what used to be a kind of 16 times, fair value, we think is somewhere right now between 20 and 22. That doesn't mean that that lasts forever, but until these margins stop going higher, there's really no reason to think that the market would pay less for a higher margin
investors
profile.
right now obsessed with potential downside. What I'm hearing from you is potential upside. What kind of upside are you thinking about?
So we're at 9,000 by the end of next year on the S&P. We think that that's, if you look at what that really represents, sounds like a big number.
Sounds like a massive number.
It does, but it's a year and a half of average equity returns. Kind of high single-digit, low double-digit returns. That's on average what the S&P does. But we think that that's the direction of travel. The CapEx continues to be there. The bottlenecks continue to be there. The pricing power continues to be there. This is the largest infrastructure build since the railroads. And the capacity that can come online that would derail these are hard assets. This isn't like a software upgrade. It's 3 to 5 years to build that chip capacity that then makes these prices go the other way. So we think that this has legs.
Steve, it's good to see you.
Always
Always is. Thank you, buddy. Steve Chevron there of Federated. NASDAQ futures this morning up by 0.5 on the S&P. We're positive as well. The earnings keep coming through. Speaking of big beats on Wall Street, BlackRock delivers another one.
As Steve is talking about how maybe we're underestimating how much the margins can keep increasing, take a look at this. The second quarter adjusted earnings per share for BlackRock, $13.91 versus the estimate of $12.66. This is a massive upside beat. Net inflows of $191.7 billion versus the estimate of $175 billion. When you take a look at the total assets under management at BlackRock, $15.3 trillion. I'm just trying to get my head around that number. It was expected to be below 15.2. The shares are up almost 2%, but it gives you a sense of the magnitude of beats that are coming out, surpassing already elevated expectations. Will it be the same for tech? ASML giving a sense of that. Nonetheless, you have to give credit to just how much this is blowing expectations out of the water.
BlackRock, the stock up by 1.7%, a series of upside surprises over the last 24 hours, and another one to start this morning. Let's give you an update on news elsewhere with your Bloomberg Brief. Vonnie Quinn joins us for more. Hey, Vonnie.
Good morning, John. Fed Chair Kevin Warsh returning to Capitol Hill today after telling policymakers that slowing inflation in June doesn't mean the central bank has accomplished its mission.
The members of our committee have no tolerance for persistently elevated inflation, and we share a resolute commitment to ensure price stability.
Warsh testifying before the Senate Banking Committee this morning. ASML shares rising in European trading. The Dutch chip maker lifting its annual sales forecast for the second time this year and laying out plans to increase production. The company saying a surge in AI spending is driving demand for its chip-making machines. In sports, Spain is headed to their first World Cup final since winning the tournament in 2010. They beat France 2-0 after the favourites only managed 3 shots on goal. Spain will meet either England or Argentina in Sunday's final. And that is your Bloomberg Brief. John.
Vonnie Quinn, thank you. Looking forward to later this afternoon. Up next on the programme, dropping the tax on Hormuz.
Saudi Arabia, UAE, Qatar, Bahrain, and Kuwait, they would love to invest more money in the United States at record amounts, and this way, there's no fee.
Up next, Anna Rosenberg of Amundi, live from New York City this morning. Good morning.
politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
Earnings season on Wall Street in full swing. 2 more to go. BNY at about 6:30 Eastern Time. Look out for numbers from them. At 7:30 Eastern Time, we'll hear from Morgan Stanley. Looking forward to that over the next 60 minutes or so. Later this morning at 8:30, PPI data. And then after that, 90 minutes later, the Fed Chair, Kevin Warsh, testifying before the Senate Banking Committee. Looking forward to that. Equity futures right now into all of those risk events. Equity futures this morning positive by 0.2 on the NASDAQ 100, higher by 0.5. In the bond market, a bit of a reset following softer than expected CPI data yesterday. Twos back to about 420. They were pushing up to, say, 430. Yields are higher this morning by 2 basis points. Tens up a single basis point, still around 460. This is not a massive game changer. We talked about this yesterday. This maybe removes the urgency to hike, but does not settle the debate, especially with these numbers in the commodity market. Crude, WTI and Brent. Brent right now around 85, WTI Bramo around 80.
It is notable, though, to see that inflation expectations over the next 2 years keeps falling, even as oil prices start to climb once again. So again, this goes to the question of credibility gap for both what we see at the Federal Reserve as well as just how quickly we can bring oil prices down. People seem to believe that this is temporary and that this is just yet another blip on the path to disinflation.
Crude this morning higher by 0.8%. Under Savannah's this morning, dropping the tax on Hormuz.
I don't like the concept of a fee, but at the same time, it's not fair that we're protecting this strait for the entire world. Saudi Arabia, UAE, Qatar, Bahrain, and Kuwait, they would love to invest more money in the United States at record amounts, and this way, there's no fee.
So here's the latest this morning. The president reversing course on a charge for Hormuz cargo, vowing to escalate attacks on Iran and threatening the nation's energy infrastructure. With the latest, Tyler Kendall has more. Hey, Tyler.
Hey, John, good morning. Well, it feels like while President Trump is dropping one threat, he is expanding another, saying that the U.S. could hit Iranian power plants and bridges by next week if the country doesn't come to the negotiating table. But at this point, we've gotten very little indication that Iran is willing to back down, with the IRGC saying in a new statement on Iranian state TV overnight that the Strait of Hormuz will remain closed until further notice, and adding in part, quote, the region's oil and gas exports are either available to all or available to none. Now, we know regional allies are urging for a solution. You heard President Trump outline there that he spoke directly with officials from these countries like Saudi Arabia, Qatar, the UAE, and Kuwait about dropping that 20% reimbursement fee in favor of trade and investment deals, though at this point it's unclear if there are any new commitments. What is clear, though, is that the U.S. is opting for that economic pressure to try to put the pressure on Iran when it comes to the Strait by renewing this U.S. naval blockade. Our analysts at Bloomberg Economics estimate that it costs the U.S. military between $31 and $45 million per day to keep that blockade intact. And John, that is renewing the spotlight on U.S. resources and stockpiles, which President Trump is actually set to address today when he comes here to Pennsylvania for a speech focused solely on bolstering the U.S. defense industrial base, just made even more urgent amid this conflict with Iran.
Looking forward to your coverage. Tyler Kendall from the Defense Summit in Pennsylvania. Joining us now to discuss, Anna Rosenberg of Amundi. Anna, welcome to the program. We're obsessed and focused on one thing, and that's policy and changes to policy. Is this a new policy or not from the president?
the new policy to drop the tolls. I think that is a rather surprising development to the degree that the US has benefited from free waterways, from the freedom of navigation really for the last 80 years. And to actually drop the principle and introducing a tax for the waterway would undermine that core US principle. So it was never really realistic in the first place. So I was skeptical when I heard the plan in the first place. I am not surprised that he ended up dropping it.
Okay, but now he's saying that Gulf states will be making deals into the United States. Is he just trying to squeeze some of these rich economies to make more investments in the U.S., or will there actually be some sort of carrot and stick approach where you would actually see these deals materialize?
I mean, we know that this administration is very keen on getting more investments into the U.S., and we have heard about many deals and many investment promises in the past, but not all of these have materialized. And I think to this degree, the situation in the Strait of Hormuz is, of course, costing the global economy quite a lot, and the U.S. is trying to guarantee its security. You can argue that this is not necessarily fair, but nevertheless, this is the situation it is. The U.S. is a guarantor of global security to many countries, of its allies, etc. And ultimately, the U.S. also started this escalation alongside Israel. So, of course, we may see some of the deals materialize, but many may not. And ultimately, you'll see other kinds of collaborations to try and get more ships passing through Hormuz. I think the Trump administration is hoping that its new campaign, its new military campaign, is weakening Iranian military abilities to the degree that they can help escort more ships through. But that is quite difficult at this point.
The president also said that potentially energy targets would be left for last. Do you take him at his word, or do you think this is a way potentially he could try to push the Iranians into either stopping going after some of these vessels or potentially back at the negotiating table?
So firstly, this is not just in Trump's control. We have seen forces unleashed that are outside anyone's control, really. Even in Iran, there are competing forces at place. You have, on the one hand, the RCG, which is much more ideologically motivated, and they think that the only way to get more resources in is to control the Strait of Hormuz. And then you have within Iran also those that are still interested in negotiating. So those are not on the same page. And if anything, the last week has made the IRCG argument much stronger. If you want to get any kind of income, you need to control the Strait of Hormuz because you don't trust the US in delivering on sanctions release and assets unfreezing, etc. So that argument is pretty strong. So there are forces out there that the US administration cannot control, firstly. Secondly, the Iranians still have the upper hand. They can attack regional oil and gas infrastructure and cause much bigger economic chaos right now. So we are in a situation where things have changed since the MOU was signed. The Trump administration is a little bit more confident that they can escort ships through the Omani route, but the Iranians have become a lot more hardline. So this entire situation is moving up the escalation ladder pretty fast.
Anna, why do you think the market hasn't really come around to this? Yes, on one hand, you've seen a creeping up of oil prices, but still below where they were just last month. And there's a sense among a lot of investors, this is already passed in terms of the risk of the extreme $120 a barrel types of situations. Do you agree?
Well, to some degree, yes, because a lot of the oil price, a lot of the oil has been rerouted already. And we have seen some still passing through Hormuz. So that has eased the pressure on the oil prices. And actually, the focus should probably be more on gas because rerouting is a little bit more difficult to that degree, and other critical things that are passing through the Strait of Hormuz, like helium, for example, as well. But in terms of oil price, we have seen successful rerouting. And as a result, this is emboldening Trump as well to be a little bit more aggressive and to take more risks because the oil price is what impacts the US voter the most. Gas prices is more something that concerns the European consumer that are obviously not as important for the midterm elections. So the oil price will likely go up if the Strait of Hormuz stays closed, but it's not what moves the needle here. It is the other things that are passing through Hormuz and have a bigger impact on other regions of the world.
Anna, it's good to hear from you. Anna Rosenberg there of Amundi. As we're having this conversation, some headlines dropping from U.S. Central Command at 6 a.m. Eastern Time today. U.S. Central Command forces began launching a wave of strikes against Iran. These strikes are designed to further degrade military capabilities Iranian forces have used to attack commercial shipping in the Strait of Hormuz. The latest from U.S. Central Command. Crude off the back of those headlines, just a little bit higher, $80 on WTI. Brent crude around 86.
Well, the market was expecting this from everything we've heard from the president and other leaders in the administration. 6 a.m. Eastern, so just 25 minutes ago. That's 1:30 p.m. in Iran. Probably likely going after those assets that are along the coast.
Tension simmering across the Middle East. Coming up on the program, we'll catch up with Stefan Stavinsky of BNP Paribas as IBM suffers its worst one-day drop in nearly 60 years.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Stocks are positive this morning, higher by 0.1% on the S&P 500, up by 1/3 on the Nasdaq. As Lisa mentioned, fantastic numbers out of BlackRock, stellar numbers across Wall Street over the last 24 hours. More still to come. BNY in a few minutes' time. In the next hour, we'll hear from Morgan Stanley. Looking forward to all of that with the bond market poised like this going into PPI later this morning. We've got yields higher by 2 or 3 basis points now, back to 422. on twos, 10 still north of 460, 30 still around 5.1%. You haven't seen a massive change, even with softer than expected CPI data yesterday. The debate hasn't changed that much.
Well, ultimately, a lot of the softness, the first drop going back in 6 years really came from the idea that we've seen oil prices come down. If you've got oil prices rising once again and inputs like those related to artificial intelligence, how much comfort can you get? Mission not accomplished. Those were the words that really rang true to Wall Street yesterday.
Well, let's turn to crude and let's look at the price of energy together. WTI and Brent pushing higher by more than 1% this morning. Close to 86 on Brent, through 80 on WTI. Took a very small leg higher in the last 5 or 10 minutes off the back of these headlines from US Central Command that at 6 a.m. Eastern Time, so 30 minutes ago, US Central Command forces began launching another wave of strikes against Iran.
And CENTCOM is saying this is to further degrade military capabilities they've been using to attack commercial shipping in the Strait of Hormuz. We understand the kinetic warfare of all of this, what exactly the United States is going to be striking. The president even put energy targets, potentially, that could happen later this week. He said, or that would be the last we would go for. What is a little bit more unclear, and you've been talking about this, Jonathan, is what actually is the policy now? We went from a 20% reimbursement to the United States if you were able to traverse the strait, and now it's just invest in the United States and we'll have some deals.
Yeah, I don't think we've got much of a policy right now. And we talked about the new normal. The new normal at the moment is a messy set of negotiations, some unworkable proposals. That defines the last 24 hours, punctuated by a series of strikes, more strikes again this morning, and it keeps energy prices elevated, and that's the story in the energy market. As we count you down to the opening bell, 3 hours away, let's get you some single names, some morning movers. Yahira has more. Hey, Yahira.
Hi, John. We start with PayPal. Shares are soaring nearly 19% in the pre-market on takeover reports. Reuters is reporting that another fintech, Stripe, and a private equity firm, Advent, have made a roughly $53 billion deal for the company, which they will jointly own if the deal goes through. It comes as PayPal, the original fintech darling, has been struggling to turn around its business as new entrants enter the field. Meanwhile, we are seeing SK Hynix ADRs falling 6.7%, giving back some of yesterday's massive gains. The stock closed the day up about 27%. And what's notable is that at that point, the ADRs traded more than 50% above the Korean share price, an unusually wide gap, and the reason is because of strong investor demand here in the U.S., plus temporary restrictions that have prevented arbitrage traders from closing that gap. And we end on Lucid. Shares are sinking another 4.4% after a roller coaster session yesterday. That's because the company had to come out and clarify that it was working with restructuring advisors to turn around the business, not because it was considering bankruptcy. It called those claims completely false, but not before shares plunged as much as 57%, its worst intraday drop on record. John?
Yahira, thank you. Thanks for the update. More earnings still to come. Morgan Stanley in the next hour. BlackRock, Lisa went through the BlackRock numbers. Just fantastic results across Wall Street. BNY just dropping just moments ago. It's back-to-back quarterly revenue records for BNY. Lisa, one number that catches my eye. Assets under custody and or administration, 62.6 trillion. That is more than the estimate, and that is a record for this company.
Yeah, and it's versus the estimate of $61.3 trillion. I'm losing conception of the numbers here that we're talking about, but BNY is one of the biggest asset management companies and custody holders. Interesting to see that, again, they beat across the board with respect to net interest margin at 1.45% versus the estimate of 1.4%. Net interest income also beating. You just have to wonder how much people are already seeing these and then expecting even more. I am curious to see how the shares respond. Nonetheless, across the board, beat, 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 beat. That's what we've seen all of this quarter.
The stock is up by 1.2% so far this morning. On the session, on the year, it's higher by more than 30%. Later this morning, around 8:15 Eastern Time, we'll catch up with the CFO, Dermot McDonough, on the latest results. But Bramo, to your point, the weather's been fantastic, the backdrop is great, and execution across a number of banks in the last 24 hours appears to be tremendous.
Yeah, you can see that people are looking for things to worry about, and even the CFO of JP Morgan said, you know, look, of course we're going to look for things to worry about, but maybe we should also worry about being too worried, because ultimately we've seen these upside beats after upside beats. You know, people are trying to wring their hands and find holes in the story of capital markets prowess. They can't find them just yet.
This is all I can find. Jamie Dimon. It's getting as close as it is to as good as it gets, maybe, right? Like that's the question right now on Wall Street. Is that it? Can it get any better than what we've just seen at some of these banks?
And then he goes on to say, we just don't know how long it's going to last because nobody knows. So this is the place that we're all left in. Can this really remain the case for a long period of time?
That's as bad as it gets this morning. Is this as good as it gets? Things are pretty decent right now. BNY higher by 1.2%. Looking forward to catching up with the CFO later this morning. Morgan Stanley, those numbers drop in about an hour from now. On our radar this morning, President Donald Trump pledging to escalate attacks on Iran.
We're going to hit him very hard tonight. We're going to hit him very hard tomorrow night. We're going to hit him very hard the night after. And then next week it gets really bad for them because next week comes the power plants. Next week comes the bridges.
The US launching a fifth day of strikes on Iranian targets this morning after resuming the naval blockade in the Strait of Hormuz. Elsewhere, Fed Chair Kevin Warsh saying cooling inflation data doesn't mean it's time to declare victory.
There might be some that look at this morning's data and say, oh, mission accomplished, everything is swell. That is not my view. The Federal Reserve can and will deliver price stability. We have the tools to deliver that.
The Fed chair facing the Senate Banking Committee later on this morning. And finally, ASML boosting its sales forecast for the second time this year. Surging demand for AI chips pushing Europe's largest company to aggressively scale up machine capacity.
Yeah, ultimately, it all is about hardware, and that is a story, the ASML versus the IBM. IBM highlighting the concern among a lot of software companies that money is going to be diverted away from their services toward the hardware of the world. ASML's beat, though, just to give you a sense, net sales will grow between 43 billion euros and 45 billion euros. That's up from the 39 to 43 billion or 40 billion that was previously expected. So just incredible beats as people continue to hoard some of this hardware technology.
And of course, this all comes as their customers just continue to line up. They say that their customers continue to, quote, accelerate their capacity expansion plans. So for them, that means ASML was also having to expand their capacity, and yet they were able to do it.
And this is a theme already, and it's an expected one, and it's CapEx for the few, not for the many. There's a lot of spending, a lot of capital raising right now, but the beneficiaries of that are a small group of companies. IBM's a fantastic example of this, and we talked about this 30 minutes ago. The phrase they use, CapEx reprioritization. That's the issue right now for everybody else versus this handful of companies. Yes, there's a lot of money being spent, but only a few are receiving it.
It feels like it's a rolling ball of choke points because on one hand, you see a prioritization of the hyperscalers and who has the best model. Then it was running to the large language models that could potentially disrupt them, the Anthropics, the OpenAIs. Then it was moving to the hardware and to the energy sector. Where is it going to go next? And that anxiety, I think, is underpinning some of the massive moves that we're seeing after these releases.
ASML this morning higher by close to 4% in European trading. Let's talk about IBM losing a quarter of its value in its biggest one-day loss going back decades. Stefan Slavinsky of BNP Paribas keeping an underperform rating on the stock with a price target of 195, writing, we believe IBM was not a canary in the coal mine for software, but more of a CapEx casualty, where its mainframe business suffered from CapEx crowd out. Stefan joins us now for more. Stefan, welcome to the program. Do you believe that's a one-off or an ongoing durable story for the time being?
Yeah, good morning. I think that was the confusion yesterday around IBM. I think we can understand the CapEx crowd out justification, customers looking to spend on servers and memory ahead of even more price increases. But then IBM also did say that there were issues around cybersecurity. We assume that relates to the Mythos model from Anthropic and the Glasswing episode in Q2, where banks in particular, which are big customers for IBM, may have been distracted, may have prioritized more cybersecurity spending. And so that looks like it had an impact as well. And then IBM also called out execution, their own execution, which led to numerous deal slippages. So I think that caused a bit of confusion and nervousness. And as you point out, with the stock down 25% yesterday, there are a lot of nerves. And of course, even if there are justifications, investors also jump right to, is this something deeper around AI disruption? Is this finally the AI disruption of the mainframe coming? And you get those nerves coming through in the share price performances.
Stefan, even if you don't have some sort of bigger overriding existential thesis here, there is a question about the reprioritization and how long it will last. It isn't going away anytime soon, the investment in hardware, the investment in cybersecurity with new models coming out every single day. What's your sense of the timeline for when capital will get reprioritized back to the software names?
Yeah, that's the tricky question for this quarter in software. As you point out, we're spending on CapEx, we're spending on cybersecurity. When does it come back to maybe more traditional horizontal software? We saw the cybersecurity software stocks up mid-single digits, so they potentially are benefiting from this. We don't think this is the quarter that we see that reprioritization back to traditional platform software. We just published this morning our BNP Paribas global software reseller channel checks. They actually took a bit of a step back from April. The trend is still better than 24 and 25, but slightly weak. And I think that when you now have kind of a rekindling of the war in Iran, you're probably going to see companies continue to be cautious about the outlooks for Q3 and the rest of the year. So it's hard to see that reprioritization near term happening. And that's why investors are staying on the sideline for the most part for a lot of your traditional software stocks.
How much paralysis is there to get some of these bigger deals done just more broadly in the software space? Because a lot of companies are wondering, can we do this with our own staff, given some of the new advancements in large language models?
Yeah, so that continues to be a debate, which is the DIY AI, the do-it-yourself AI. Of course, you've had more recent discussion around pushback around token maxing, moving to token optimization, token capping, as we've discussed before. And so potentially some pushback on the OpenAI and the Anthropics and what they're charging. And so, you're seeing Microsoft, you're seeing Amazon, you're seeing some of the more traditional software and platform providers trying to step in and say, look, this is not something that you could just do yourself working directly with these models. That's complicated. There's lots of risks, right? We saw Satya Nadella over the weekend, with his essay around the risks of working with these AI models. We saw Dennis Hassabis yesterday talking about the need for regulatory framework around AI. And so, all of that is certainly some of the big players talking their own book and trying to push their customers back into their ecosystems to do this work.
Well, IBM was pushing the money elsewhere. CrowdStrike yesterday rallied by 12%, closed at a record high, on the line out of IBM that customers were distracted by cybersecurity. Stefan, my issue with IBM yesterday, and my issue with a lot of companies when they report earnings, was trying to work out what's real, what's an excuse. Was that real? Is that what you see too?
In our survey we published this morning, cybersecurity was #1 in terms of prioritizations last quarter, but it usually is. Most people usually say cybersecurity is our #1 priority. So that's really the first that we've heard of this in the quarter. Again, it may be skewed for IBM because they are dealing with the banks. That's a big customer base, and that's where you probably had the most of those concerns. But we do think that certainly was an issue in Q2, will continue to be an issue, as you said. Today, we've highlighted companies like Microsoft, which is actually the largest cybersecurity company in the world, and also a ServiceNow, where they perform quite well in our results. In our survey, they just closed the Armis deal back in April, so they now have more of their own cyber and more security business, and they're starting to hit some easier comps in terms of U.S. federal, where last year you had the DOGE effect and the government shutdown effect, and of course those ease. So we do think cybersecurity is a durable growth driver for the pure plays, but also some of those other companies I just mentioned.
Stefan, it's good to see you. Thank you, sir. Stefan Slavinsky there of BNP Paribas. Thank you. CrowdStrike don't report until the end of August, so we'll wait for those results to see just what happened last quarter.
Yeah, and whether it really is as a result of the big banks getting incredibly spooked by what they saw from Mythos. And just anecdotally talking to bank executives, there were weekly meetings with the top bank executives of the biggest banks for the first time since the financial crisis about this. I mean, it was really a major issue. So clearly there is something real. How much of this is also execution also is a key question.
Nasdaq futures this morning higher by 0.4%. Equities doing okay. Let's give you an update on news worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. BNY reporting second quarter earnings that beat Wall Street estimates across the board, boosted by record sales and revenue. And coming up at 8:15 Eastern, we'll be speaking with BNY CFO Dermot McDonough. BlackRock shares rising in the pre-market, second quarter earnings beating estimates with assets under management topping the $15 trillion mark. BlackRock also seeing record net inflows in the first half of the year. Bank of America releasing its fund manager survey for July, finding investor sentiment remains more bullish on a macro boom, AI capex, and they have dovish Fed expectations in the main. More than 80% of investors surveyed find going long global semiconductors is the world's most crowded trade. And that is your Bloomberg brief. John.
I'm shocked. Bonnie, thank you. Appreciate the update. Seriously bullish one out of the fund manager survey from Bank of America this morning.
Nobody thinks there's going to be a recession. 2% of the people surveyed believe that there would be a hard landing, though most people on record believed that there was going to be no landing. Welcome to the recessionless nirvana that we're all living in, evidently.
It's crazy low, isn't it? Those expectations, just crazy. Up next on the program, mission not accomplished.
I reviewed the data on CPI, and I'm not going to show up here and say mission accomplished. The reason I create a task force on data is I don't want to overread or cherry pick data.
Up next, we'll catch up with Krishna Gua of Evercore, live from New York City. You're watching Bloomberg Surveillance.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The term for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Stocks are doing okay. Busy morning already. Equity futures positive by 1/10% on the S&P 500. Very bullish fund manager survey out of Bank of America. More bullish on the so-called macro boom on the Nasdaq high this morning by 0.4. Let's talk about some earnings. Numbers out of BlackRock. That started our morning. AUM, was it 15 trillion? Crazy numbers out of BlackRock this morning. The stock is up by 2.5%. BNY, more records there too. Back-to-back quarterly records for revenue, profit great as well. The outlook better. Beating a raise from them. They're looking for total revenue up by 10 to 11% for the year. They had seen it at about 5%. So again, Bramwell, it's another morning of it, kind of like yesterday.
Just to give some perspective on the assets under management for BlackRock, 2 years ago, in the second quarter of 2024, the assets under management were $10.6 trillion. They have increased to Microsoft in that period of time in terms of their assets under management, about $5 trillion of assets added, just to give you a sense of the momentum underpinning some of these numbers.
BlackRock this morning can't buy 2.5%. Need to turn to what's happening elsewhere in the energy market. Brent and WTI pushing a little bit higher so far this morning. This came from US Central Command earlier on. That is 6 a.m. today, so 50 minutes ago, US Central Command forces began launching a wave of strikes against Iran, another wave, and that's just this morning.
That's just this morning. The president said yesterday in an interview that we'll also have more strikes this evening, potentially, and then he even said it can go on to things like power plants and energy at some point. That'll be the last that get hit, maybe even bridges. So potentially more civilian infrastructure, which will be very controversial. CENTCOM just told us that at 6 o'clock they're doing this, but later today, hopefully we'll get a list of the targets.
Brent crude right now at 1%. The pressure still building on this Federal Reserve. Under surveillance this morning, mission not accomplished.
I reviewed the data on CPI, and it was positive relative to expectations. I'm not going to show up here and say mission accomplished. There's plenty of work to do. The reason I created a task force on data is I don't want to overread or cherry pick data.
So here's the latest this morning. The Fed Chair, Kevin Warsh, preparing for a second day of testimony on Capitol Hill. Warsh vowing before Congress to curb inflation. Krishna Gua of Evercore writing, Warsh's comments plus June CPI make us more confident in our base case call that the Warsh Fed will narrowly avoid raising interest rates this year before cutting once next year. Krishna joins us now for more. Krishna, you're a very well-followed Fed watcher. What did you learn yesterday?
A few things. First, I thought Kevin Warsh was extremely accomplished and effective in dealing with Congress, reassured in particular on Fed independence, was not seen in any way as partisan. Second, I think it's what he didn't do. He didn't start to prepare the ground for a near-term rate hike, but he certainly didn't rule anything out as we look further out. Third, he drew attention back to the balance sheet, and I think that's a reminder that there's still a lot to come, not immediately, but a lot to come over time on the Fed balance sheet from Warsh.
Krishna, how much power do words have after a while if there is no action? And this is something increasingly people are asking as they are trying to glean whether or not there'll be a rate hike or just a rate hold, yet seem to have faith that they're going to bring inflation down.
Yeah, so I think Kevin Warsh has come out the gates making very strong statements about credibility, about the Fed's commitment to bringing inflation lower. Whether he has to then operationalize that by raising rates is a close call. My hunch is that he is at least putting some space between these two. Assert the credibility first, observe the inflation data over the summer, see if it's starting to move the right way. But I think if it's not, he's going to get called at the September meeting and we'll have to go through with a hike. We don't see that in our base case. Why? Because we think the inflation outlook is starting to turn, but it's very close. And I certainly don't think that you can rely on statements of credibility only without action if the data doesn't cooperate.
Even if he doesn't want to give guidance, we are hearing from the Fed's Williams, Cook, and Musalem today. We have continued to hear rosters of Fed officials speak. How do you understand their words? Are they as relevant? Are they more relevant? Are they less relevant?
I think the unfortunate reality is that when the Fed chair refuses to discuss his strategy in any detail at all, then that creates a void. And that void is inevitably filled by comments from other Fed officials. But there's a higher ratio of noise to signal because you can't be clear exactly who is speaking with authority for the committee. I don't think this is helpful, and I do hope that over time, Warsh will be willing to flesh out his strategy some more.
Krishna, yesterday he said his commitment and the entire committee's commitment is to take sticky prices and unstick them. How can he do that without a hike?
Yeah, that was not a phrase that I thought was particularly well unpacked, let's say. Look, I actually don't think that the US does have a sticky inflation problem right now. If it did, I would be calling for rate hikes. I think the reason inflation is continuing to run several clicks above 3% on core PCE is because you have 3 one-time waves rolling through on top of underlying inflation. That's tariffs, oil and the peak AI CapEx cost spillovers. That's keeping inflation high. It's the very opposite of sticky inflation because, of course, these are different things, rolling in, peaking, rolling off. But let's take Walsh's formula. Suppose they are sticky. How do you unstick them? Well, I guess in theory, you could have some shock to expectations, reassurance about the Fed, so powerful that people no longer anticipate and factor in somewhat higher inflation. But as you indicated earlier, I think the idea that you can shock expectations to unstick sticky prices without moving rates and potentially, not just once by any means, I think that seems a bit far-fetched.
Krishna, it's good to catch up. As always, thank you, sir. Looking forward to day 2. Krishna Kua there of Evercore. It sounds more and more like an argument to hold rates and not hike. When they say that inflation is above target and we won't tolerate it, I guess at that point, this point, it means we're not going to cut. Doesn't mean we're going to hike.
Right. Well, that's essentially what people are interpreting this as. At a certain point, though, you're not going to tolerate it, but it's been there.
Right, for 5 years.
For 5 years.
You have been tolerating it.
And you're continuing to tolerate it. So, again, lots of questions.
Looking forward to day 2, are you? Yeah.
Oh, very much so.
In front of the Senate Banking Committee later this morning. That kicks off at 10 a.m. Eastern time.
Argentina versus England.
That kicks off a little bit later, unfortunately.
You can make both.
If it was at the same time, I don't think there'd be much of a side-by-side there, Bram.
Exactly.
I think it would just be one screen. Kevin, of course.
Yeah, exactly.
Up next, Cam Dawson of New Edge Wealth, General Robert Walsh of Academy Securities, Joe Cassidy of RBC, Jill Ford of Wells Fargo.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
At any point in your tennis career, did you say, I've had enough and I'm just going to retire at the top? You ever worry about that problem, staying too long?
It's a great question, and it's one that I think every athlete finds a different answer to. Mine came a little bit later than when I would have liked. I think stubbornness was a great quality that shaped a lot of my victories, but in the end of my career, I think it became a flaw because I was so stubborn to get healthy, for my shoulder to recover. I was also at an age where just my body didn't recover as quickly. And so for a year or two, that stubbornness got in the way of other great things in my life.
What would you say is the thing you're most proud of having done as a tennis player? Was it winning Wimbledon? What was the highlight of your tennis career?
I'd say consistency. I think consistency is, you can have results and they could, come at various times in your career, but I was consistent for many years, and you have to show up. You don't just show up to play first round of the finals, but you have to show up for press conferences before every match, before every tournament, and just the consistency and the mental wear and tear of showing up week in, week out. So I felt like I consistently showed up for my team, for my sponsors. As I look back, I'm proud of that.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffiti.
We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
We think inflation actually is coming down.
Overall, we don't have an underlying inflation problem.
This print does suggest that there's reason to believe that that cools down in the second half of the year.
The Fed should act with even more force in order to reinstate that level back to 2%.
I don't think that the Fed chair has a lot of power to limit the ability of people to talk about their outlook for monetary policy.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now, and your price action and scores look like this. Equity futures on the S&P 500 firmer by about 0.1%, up by 0.5 on the Nasdaq 100. The earnings coming out already this morning. BlackRock, record AUM. BNY, record assets under administration. BNY this morning down about 1%. BlackRock higher by 4.3%. The AUM, $15 trillion for the first time. Crazy numbers coming out of that bank. A little bit later, we'll be talking about PPI. That drops later this morning. Your bond market set up as follows. 2s, 10s, and 30s. Yields still elevated in the bond market. Your 2-year at about 421. 10s at 460. When PPI drops at 830, that should set the stage for Chair Walsh, day 2 on Capitol Hill, going in front of the Senate Banking Committee.
Or will it? Because yesterday we got that CPI that came in weaker than expected, a bigger decline than expected, and he said mission not accomplished. Essentially, 1 month of data isn't going to change our view that we will not tolerate above 2% inflation. Of course, they have tolerated it, and they are going to continue tolerating it, considering the fact that July is not going to be a rate hike. Nonetheless, we are expecting to hear maybe some questioning that gets him to elaborate a little bit. I don't know. I wasn't that excited about these because I didn't think that anything would actually come out of them. And so far, I mean, essentially, there's a task force for what he's going to talk about.
Well, what did the heavy lifting for him yesterday was actually the softer CPI. And what helped CPI was, of course, that gasoline price was down some 10% on the month. The issue potentially the Fed is going to have now going into the summer is that we have fresh strikes. Last night, the U.S. military ended at 10 p.m. Again this morning, 6 a.m., they started strikes again on Iran. All of this is going to continuously add to the geopolitical risk premium you're seeing in oil prices.
Well, let's talk about what the strikes were for. So this came from U.S. Central Command about 1 hour ago. They said the strikes are designed to further degrade military capabilities Iranian forces have used to attack commercial shipping in the Strait of Hormuz. This is the issue for me. Whether you pay for it, whether you invest in America or not, do we have the capability right now to help that energy flow through that strait?
Well, at the moment, what the IRGC has been able to prove is that they can go after some vessels that are going along the U.S.-supported protected route. Last night, when CENTCOM came out and said they finished some of their strikes, they went after things like fighter aircraft drones and naval vessels that launch precision munitions against Iranian missile and drone sites, naval capabilities, coastal defense system. So they are trying to degrade all of these assets Iran has at their hands that go after those vessels. How long is it going to take? We don't know.
You know, there's an interesting divergence right now. On one hand, you're having oil traverse through the Strait of Hormuz and traverse through pipelines that have been created. You're not seeing natural gas. Some of the refined products also getting hit much harder. If you take a look at diesel prices, they've continued to inflect a lot higher than, say, just gasoline or Brent. And you start to wonder, what about helium? What about these other assets? For gasoline, it seems like that is getting through, or at least for oil, that is getting through enough to ameliorate some of the bigger concerns that were present earlier this year.
Brent crude around 85 so far this morning. Coming up this hour, we'll catch up with Cam Dawson of New Edge Wealth on the sky-high bar for earnings. We'll speak to General Robert Walsh of Academy Securities, warning that the war has reached its most dangerous phase yet. And finally, we'll speak to Jared Cassidy of RBC as Morgan Stanley aims to cap off a record-shattering week for the big banks. Morgan Stanley reports in the next 30 minutes. We begin this out with stocks adding to gains following strong results from ASML, reigniting confidence in the AI trade. Cam Dawson of New Edge Wealth writing, given high expectations, there is no room for error in 2Q26 results. Cam joins us now for more. Cameron, good morning.
Good morning.
What's the lesson of the last 24 hours with regards to these earnings stories?
Yeah, if you beat, you get rewarded maybe a little bit. If you miss, you get punished a lot. And I think that we'll continue to see that outsized punishment of misses simply because the bar is higher. We have to appreciate that 2Q earnings bar is so much higher than what we had in 1Q. 1Q, you went into the quarter expecting 9% growth and you got 29%. This quarter, we're going in expecting 23% growth. And importantly, you've seen that number for 2Q earnings move up through the quarter. Typically, you see estimates get cut through the quarter, but instead, estimates have gone from 18% to start 2Q and now sitting at 23, which just means, again, you have this higher bar that companies will have to jump over. And if they don't, they will get outsized punished.
When I hear things like that, I think the right question is to say, typically I'd ask you, what do I want to own? Sounds like I need to ask you, what should I avoid this earnings season?
Yeah, I mean, it seems to be that you want to avoid places that have not had good earnings momentum, and you want to continue to be in places where there is potential for further upside. The challenge or further upside to earnings expectations, the challenge is you've raised forecasts so much for those areas. The SOX earnings forecasts for 2027 are up 72% this year. 72%. How much more upside is there to those estimates? And what we think is most important coming out of 2Q is not what happens in 2Q, but what does that mean for 26 and 27 estimates? 27 estimates and 26 estimates are up about 14%. That's why this market's been resilient. That's why we've been able to throw so much negative headlines at the market and have it continue to trend higher. So for this bull market to continue, we think we need to continue to see that uplift to 26 and 27.
One of the confusions has been how concentrated this has been completely in the AI trade versus a broader-based type of expansion. What we heard from the banks yesterday was that consumers are doing really well, that you're not seeing any deterioration. If anything, it's a reacceleration. Then you also are seeing the tech side of things, at least in the hardware, continue to outperform. Are both performing well, or is it more isolated to AI?
66% of the names in the S&P 500 are above their 50-day moving average. You have an advanced decline line, which is just a way to capture how many stocks are participating in the bull market versus not participating in the bull market. That's hitting new highs. So that suggests that it is not just an AI story. Now, because the gains and returns have been so powerful within AI infrastructure specifically, that has been the bulk of the earnings growth and the bulk of the upside surprise. But that does not mean that you're not seeing other areas of the market see earnings revisions move higher. You've seen about a 10% increase to earnings revisions for the equal weight S&P 500 this year. So again, it's not just the cap-weighted index benefiting from these AI names, but you're starting to see it in the average stock as well.
So how do you explain Pepsi? Because Pepsi's sort of the outlier in all of this. And John came back to me yesterday. They said, what about Pepsi? And it's cherry picking season. You could talk about Pepsi and the fact that consumers are pushing back and that they're much more discretionary when it comes to how much they're willing to spend. Which side of that story potentially is one to watch more?
Yeah, consumer discretionary and consumer staples are two sectors that have seen negative earnings revisions as we move through 2Q. But I think what's fascinating is that if you add up both of those sectors within the S&P 500, it's still smaller as a weight than the semiconductor industry group. So the industry group of semiconductors is a 19% weight in the S&P 500. You put staples and discretionary together, it's just 18%. So that's why this market is just so bifurcated, that yes, there is pain within the consumer because you still have elevated gasoline prices. They're still 80 cents higher than they were prior to the war. However, on a weighted basis, it doesn't matter as much as the absolute boom in earnings you're seeing within semiconductors.
How long is this going to last? Jamie Dimon's question yesterday.
Well, I think that is the ultimate question when we think about the semiconductor trade. It's not whether or not the earnings are strong today. Look at ASML. The earnings are incredibly powerful. It's how long it can last. And the thing about these businesses is that there's so much operating leverage in them. Earnings or overall revenue growth for semiconductors will be up 35% this year, but earnings will be up 135%. Last year, you had EBIT margins of 16% for the semiconductor group. Now they're going to be 44% this year. So yes, it's great when you have top-line revenue growth, but the warning story is that if you see top-line wobble even a little bit, you go from having incredibly powerful incremental margins to really painful decremental margins. So the question is whether or not you see a peak in revenue anytime soon and you see that deleveraging.
26 years ago, if we were doing the program then together, we were all much younger, we'd be asking the question whether there was a bubble in price. 26 years later, Liz Ann Sanders at Charles Schwab is asking the question whether there is a bubble in earnings expectations.
Yeah.
Do you think there is?
Well, I think that the definition of bubble is really fascinating because what we see it as a pull forward of either price action or earnings power capacity, which means that right now you're seeing so much earnings growth within these semiconductor names that it's a question of how sustainable they will be. And I think the biggest challenge that you have is that the prices of the stocks will peak before the earnings. If you go back to that time in 2000 when we all were a lot younger, what you saw is that the prices peaked 12 months before earnings peaked. So you're going to have a 12-month period potentially of cognitive dissonance where the earnings are going to be incredibly powerful, but the prices will be flat to down. An understanding of whether or not you should be selling rips or buying dips is going to be the ultimate question as we move through that period. And I think that's where we have to use the technicals to be our guide. If we start seeing things like lower highs, unable to take out prior highs, that could be a sign that the market is thinking that we're nearing a peak.
I've got to ask you the impossible question then. Are we there right now? Do you see that in any way, shape or form?
I don't think that we can make that call yet. I think it is an innocent until proven guilty. If you look in the last 3.5 years, you've seen 6 corrections of 15% or more. And each of those corrections have been great buying opportunities because people have been underestimating the earnings power. Just look at 2026. Earnings estimates were 50% too low for the stocks at the start of this year. So it is very possible that you start to see some more churn. People start thinking that 27 is the peak, but the question is there any evidence that we're seeing that? And I don't think that there is yet.
Cam, it's good to see you. Thank you. Cameron Dawson there of New Edge Wealth on the earnings and the price of the earnings right now.
Yeah, you know, there's a question of who's going to pay for this, right? We talked about the transfer of wealth from the hyperscalers to the semiconductors. Well, the transfer of wealth has gone so far that people are starting to push back. Who is going to prove that they have enough return on investment from deploying some of these large language models to pay the high price versus, say, being cost constrained, which you're hearing on a lot of calls from earnings, particularly from companies in the banking sector.
From the banks yesterday,
exactly,
yeah.
JP Morgan.
Rationing use.
Exactly.
Don't use it for the easy stuff.
Yeah, just try to be mindful of exactly where you use and which models you use, and you hear this more and more. Even cutbacks to their overall budgets because they're not necessarily able to cut staff or create other efficiencies elsewhere.
Humans are cheap, Rama. There you go.
God,
right.
That makes me feel great.
Ask for a raise.
They are, yes, especially if you work in some of these industries. That's the reason why people are worried about expenses.
Sales and trading in the last quarter, without a doubt, right? I mean, come on.
They're feeling their worth right now.
Huge bonus coming at the end of the year.
I mean, that's the reason why also Richemont's doing so well.
Oh, because they're spending already.
Cartier.
Going into the watch store straight afterwards.
Actually, a lot of the jewelry in Cartier is doing very well.
Futures this morning up 1/10% on the S&P. Let's get you an update on news worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. U.S. Central Command saying it began a 5th day of strikes against Iran at 6 a.m. Eastern this morning. President Donald Trump saying the strikes will intensify until Iran agrees to open the Strait of Hormuz. Iran retaliating against the U.S. overnight, hitting bases in Gulf Arab states. OpenAI is developing its first device. Sources telling us here at Bloomberg it is a screenless mobile smart speaker with integrated AI capabilities. Plans for the device have been complicated after Apple filed a lawsuit accusing the AI developer of stealing trade secrets. SpaceX shares are on the verge of falling below their IPO price. Shares of Elon Musk's company closing $1 above their $135 a share IPO price yesterday. The stock has plunged a third from its post-listing peak, erasing nearly $850 billion in value. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. More from Vonnie in about 30 minutes. Up next on the program, threatening escalation.
I'll save the energy targets for last, but ultimately we'll hit energy targets. Next week it gets really bad for them because next week comes the power plants, next week comes the bridges.
Up next, General Robert Walsh of Academy Securities, live from New York City this morning. Good morning.
investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Futures positive by a tenth on the Nasdaq. We're up by about 0.5. In about 15 minutes' time, we'll hear from Morgan Stanley. The numbers so far, fantastic for the financials. BlackRock early this morning, record AUM north of $15 trillion over at Larry Fink's shop. Robin Vince of BNY doing well as well. Record quarterly revenue for a second consecutive quarter. The stock is down by about 0.75% on the session. It's higher by more than 30% on the year. We'll catch up with the CFO, Dermot McDonough, a little bit later this morning, in about 60 minutes from now.
Yeah, just to give you a sense of how good the big bank earnings have been so far, total trading revenue generated by the 6 largest banks in 2019, or actually last year, was $13.5 billion. With Morgan Stanley, it's expected to surpass $25 billion so far. Just to give you a sense of how much they have expanded. And BNY is no stranger to that kind of dynamic, also expanding their assets under management. It truly has been a blockbuster quarter.
The numbers have been absolutely fantastic. More still to come. Morgan Stanley in about 15 minutes' time. Let's turn to crude. Energy this morning, Brent's higher by 0.9, 85 on Brent, WTI at 80. Under surveillance this morning, threatening escalation.
I'll save the energy targets for last, but ultimately we'll hit energy targets, yeah. But we're going to hit them very hard tonight. We're going to hit them very hard tomorrow night. We're going to hit them very hard the night after. And then next week it gets really bad for them because next week comes the power plants, next week comes the bridges.
So here's the latest this morning. U.S. Central Command saying the U.S. launched a fresh wave of strikes against Iran at 6 a.m. this morning. The president vowing to continue the attacks if Tehran doesn't come to the negotiating table. Bloomberg's Tyler Kendall has the latest. Hey, Tyler.
Hey, John. Well, CENTCOM confirmed that this latest wave of strikes launched within the last hour are focused on degrading Iran's ability to target commercial shipping amid very little indication that Iran is willing to back down at this point, as the IRGC said in a statement overnight to Iranian state TV that the Strait of Hormuz will remain closed for now. Now, we did get an update from the International Maritime Organization, a UN body that helps to oversee the traffic in the strait, speaking to our colleagues on Bloomberg Radio earlier today, saying that they have deemed the strait too dangerous to transit, including the fact that we have seen some of those ships that have turned their transponders off even be hit by Iran in recent days. Now, today marks the 5th straight day of U.S. attacks against Iranian assets as President Trump renews his threat to hit critical infrastructure if Iran doesn't come to the negotiating table by next week. He mentioned power plants and bridges, but as you heard, he said that the U.S. would save energy targets for last. What is clear is that the U.S. is trying to prioritize that economic pressure at the moment when it comes to reimposing that U.S. naval blockade, even if it moves forward without that plan for that 20% reimbursement fee. But John, our analysts at Bloomberg Economics estimate that it costs the U.S. military between $31 and $45 million per day to keep that blockade intact, which is raising questions about U.S. resources and stockpiles, which President Trump is expected to address in remarks later today here in Pennsylvania.
Tyler Kendall with the latest. Tyler, thank you. Appreciate it, and looking forward to your coverage later on today in Pennsylvania. The words of the president, next week, it gets really bad for them. General Robert Walsh of Academy Securities writing the conflict has entered a more dangerous phase than at any point since the initial outbreak earlier this year. This is becoming an economic contest as much as a military one. General Walsh joins us now for more. General, some people might be surprised by that statement, that this is worse than what we saw through March into April. For you, sir, what makes it worse?
Hey, good morning, John, and thanks for having me today. I think what makes it worse is we went into a period of negotiations where we thought there would be an agreement. We had a memorandum of understanding. The key pieces to that was the U.S. would stop the blockade, which we did, and Iran would open up the Straits of Hormuz, and that didn't happen. And Trump really was trying to get to negotiations, to get to a deal, and now that's all broken down, and you saw now that he's escalating the U.S. reaction to this, taking it to a much higher level. And I think that the challenge really right now, which makes it more risky, is that there really is no signs that the negotiation is going to start. He's going to put the economic pressure, as you see with the blockade restarting. The sanctions are now reinstituted, and now just much more military power going at strategic sites now to kind of open up, number one, open up the straits by not allowing Iran to hit commercial shipping. And the other one is to hit the ballistic missile sites that cause the ability of Iran to retaliate against U.S. bases in the region and also our Gulf state partners.
General, you heard the president, though, also talk about potentially going after civilian infrastructure, energy, bridges. Do you think that's a credible threat?
Anne-Marie, I think, sometimes when you get to this point, I mean, obviously we're trying to open up the Straits of Hormuz. That's the military tactical problem. But you also see that Iran is willing, the IRGC leaders are willing to take a lot of pain. So now you have to ratchet up, you have to escalate to bring more pain to them. And one of the ways to do that is start going after the infrastructure targets. Things like the president mentioned, bridges that are dual-use bridges that can supply the military bases. If you look at Iran's terrain, it's a lot of mountains and gorges. They have a lot of bridges that resupplies them. By cutting that off, it not only causes problems for their military, but it also causes problems for their infrastructure, civilian infrastructure, and it just starts to get so painful. The infrastructure grid and hitting their oil capacity at Carg Island, which President Trump said he would hold off on for now, those are type of targets that he wants to get to the point where if there was a regime change, we would like to be able to go in there and help Iran rebuild and not have lots of massive damage caused by some of the attacks we would do. So I think he's starting there, ratcheting up this escalation, trying to bring pressure on the IRGC. And this right now is turning into an endurance campaign. This is now, can we, extend this, this campaign? How long can it go? The president just told Congress that he was going to extend this now for 60 more days, start that clock on July 10th. Iran would like to take this and extend it right through the midterms and cause the president lots of political problems. So I think that's the endurance situation we've got going on right now. Iran wanting to continue, Trump wanting to really put the pressure on them to bring them back to the negotiating tables, to negotiate in fairness, to open up the straits and have the discussions on the nuclear capabilities.
How would you characterize this moment we're in? Because it's certainly not a ceasefire, but the president will stop short from calling it all-out war.
It's certainly the continuing of the conflict. It's not in the same heightened phase where we were earlier in the first phase, that ended back on April 8th when we were hitting targets all across the country. This is now much more focused on, hitting the targets that would cause the straits to close or put risk on commercial shipping. So it's a very focused phase on the Straits of Hormuz. But now the president is starting to open that up a little bit more with this escalation of now being able to hit infrastructure targets, he said, starting next week. That would start taking it now from the phase of just focusing on the Straits of Hormuz and opening it up to more of a strategic campaign to bring pressure to the Iranian government by hitting some of those more strategic infrastructure targets.
General, how unified are the Iranian leaders, given the fact that it seems like the U.S. is struggling to negotiate with one voice? It seems like that was one of the sticking points, and the flipping and the flopping. In other words, can negotiations be a solution to this when it's unclear who the parties are doing the negotiating?
Yeah, Lisa, it's a great question. We're trying to really see how that is all playing out, but it's obviously the political leaders that are making these deals have no control really of what the IRGC is doing. So it almost seems to be the point you have to deal with the IRGC, because whenever you come to any type of agreement with the political or diplomatic negotiators, it unravels very, very quickly, and none of the negotiations have stayed intact. So I think the key thing here is now trying to bring pressure on the IRGC, taking away their power, their tools, the things they use to be the predator of the region that they've been so long, not only attacking the Gulf states, but also resupplying their proxies throughout the region. That's what's allowed them to be the predator. That allows them to intimidate and coerce other nations. That's what they want to do, and that's where they see the strategic capability of closing the straits now allows them to be even more of a predator in the region. And that's why I think the key thing now is to bring pressure on them to see if you can get that. This is going to be very difficult, and it's going to be hard to see whether, President Trump can do this in the 2 months, because he's got about 2 months, not only the 60 days he's told Congress, but he's probably got about 2 months till we start getting close to the midterms, and the IRGC knows that. So now it's how much will he ratchet it up, how much pain can he bring to them to see if he can bring them to the negotiating table.
General, we appreciate your insights, sir. As always, thank you. General Robert Walsh there of Academy Securities. Bramo, you nailed it, and that's what makes this so messy right now.
How do you get to a solution if negotiation's your ultimate goal, if there isn't a reliable person you're negotiating with? And we've heard reports about how one deal is struck, then the IRGC doesn't agree with it, then it gets revoked, people internally trying to struggle for power. It's a very difficult moment. How does this get resolved? There isn't an easy pathway in sight.
The attention turns to Wall Street. More earnings, this time from Morgan Stanley. So far this morning, BlackRock, record AUM, BNY, record revenue. Numbers from Morgan Stanley up next.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersecci in El Ola, Saudi Arabia, and this is Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
So the story so far this morning for bank earnings. BlackRock, Wall Street, record AUM for them north of $15 trillion. BNY, record revenue. We saw this yesterday as well. JP Morgan, record revenue. Bank of America, record stock trading. Goldman Sachs smashing Wall Street records. So when you get to Morgan Stanley, you're not expecting anything different. This is what we got. Wealth management for the second quarter, net revenue $8.86 billion. The estimate, $8.68 billion. The beat, equity trading revenue, $6.3 billion. The estimate, $4.47 billion. They smashed it too. The stock is higher by 1.5% on the session, on the year, up by about 30%.
Yeah, so right now, all the trading volumes coming in well north of $25 billion for all the major banks, led by equities trading. All of that rotation under the surface, the paddling duck that Amy Wu Silverman of RBC talks about, has been a complete boon for the banks, particularly those that have been on the underwriting side of a lot of these IPOs and share sales in general. Morgan Stanley and Goldman Sachs together have generated some almost $14 billion of just equities trading revenue for this quarter. The number is absolutely shocking, record across the board.
Notable equity trading strength in Asia. Was that South Korea? No, I'm just guessing here.
The instability that will never stop giving. It seems like that would be a likely candidate.
I think it's the right kind of volatility for some of these businesses right now. What a backdrop for those particular firms. Beats across the board on Wall Street. That name, Morgan Stanley, just a little bit softer. But that was the story yesterday as well. A bit touch and go. That some of these beats weren't really rewarded in the way you'd expect them to be. But the gains we've had so far this year, the bar was already very, very high. Goldman did get rewarded later on the day, so we'll see if this move sticks this morning.
Yeah, Goldman had one of its best post-earnings trading days in years, up 9% at the end of the day. A question, though, a couple of questions that Ted Pick will be answering this morning, I'm sure. Provisions for credit losses actually came in a little bit above expectations, still below $100 million, so nothing to write home about. And fixed sales and trading, we had seen a couple of underperformances there at other banks, also coming in just a little bit light at $2.46 billion versus $2.56 billion. These numbers are massive, so it's not exactly as if, this is some sort of miss or loss. The forward look about the pipeline, is there the same kind of resilience and confidence that this could continue for a longer period of time?
I think it's fair to say that Ted Pick won't lose any sleep over that move this morning in the pre-market. We're down by about 0.1%. To your point on the pipeline, we heard this from Brian Moynihan at Bank of America. The pipelines remain strong. We heard this from David Solomon. Our backlog increased to its highest level in 5 years. So there's a lot more business still to execute for the year ahead.
Yeah, and that wasn't just Bank of America. Also, we heard that over at Goldman Sachs from David Solomon, over at JP Morgan, a similar kind of tone. And that's the reason why even Jamie Dimon, who's looking for all of the potential risks on the horizon, saying we have no idea when they'll arrive. But it seems like this can't last forever. Nonetheless, right now, as far as they can see, things look pretty good.
Futures this morning positive by about 1/10 on the S&P 500, on the Nasdaq 100 higher by, let's call it, 0.5. Let's get you a wrap of the morning movers. Some single names. Yahira has more. Hey, Yahira.
Hi, John. Well, we'll stick with the financials because we are seeing BlackRock shares rising 4% after it delivered a blockbuster quarter. It attracted $192 billion in client assets, pushing its assets under management to $15 trillion for the first time ever. Earnings also beat expectations, helped by strong demand for ETFs, active strategies, and private markets. Meanwhile, just like we saw yesterday with some of the big banks and today with Morgan Stanley, banks are not necessarily getting rewarded for beating earnings. BNY shares are down nearly 1% in the pre-market despite posting a profit beat and record revenue. But the stock, like many of the others, had already been on a huge run. Just yesterday, it hit a record high, so expectations were clearly high for this name and have been for the rest of the financials. And we end on PayPal. Those shares soaring 20% in the pre-market on takeover reports. Reuters reporting that Stripe, another fintech, and the private equity firm Advent have offered to buy the company in a $53 billion deal. If it closes, the two would own it jointly. It has been, as PayPal has been struggling as other fintechs enter the market and take over this, the darling, the original fintech. John?
Yahara, thank you. Stock is higher by 20%. Let's turn back to our top story on Wall Street. Wrapping up bank earnings, Morgan Stanley adding to a record-shattering week for the big financials. Jared Cassidy of RBC joins us now for more. Jared, welcome back. It's good to cover this stuff with you. Let's start with the good stuff. Let's start with equities trading revenue at $6.3 billion against an estimate of $4.5. Jared, why has the backdrop been so good for that particular part of the business, not just at Morgan Stanley, but across Wall Street?
You're absolutely right, John. Across Wall Street, the trading revenues in equities has been extraordinarily strong. And there's a couple of factors there. First and foremost, the volatility in the markets, obviously coming out of February with the conflict in the Middle East and what has happened with the price of oil. That is one factor. But the other factor, too, and you guys have talked about it on the program, is the strength in the tech sector, especially linked to AI. And when you think about the semiconductor stocks, what they did in the second quarter in performance was extraordinary. And this all showed up in the equity trading numbers. Volatility is good for equity trading. And what we saw with the tech sector was another contributing factor why you're seeing such strong numbers.
Ted Pick, no doubt, can speak for himself a little bit later this morning on the call. But this is what we heard from Jamie Dimon of JP Morgan. It's getting as close to as good as it gets. Jared, is it fair to say this might be as good as it gets for some of these names?
John, you're absolutely right. The numbers are very, very strong, and this is probably as good as it gets. We won't know for certain, of course. We'll look back 2 years from now, if you and I are chatting on the program 2 years from now, and we might say, my gosh, you know, the SpaceX deal, the IPO was the top of the market for equities. We just don't know, but it is still strong. We're not expecting it to drop off, but seasonally it will slow down, of course, in the third quarter, but it's still a very robust market.
So how much can you take forward in terms of forward pricing, given the fact that we're seeing share buybacks across the board, dividend increases, and just, yes, maybe we'll see a bit of a deceleration. But just to throw this at you, the 5 biggest U.S. banks reported a combined $50 billion just from their trading revenues in one quarter. That's more than a third of all trading revenues last year from these banks. I mean, is that enough to get you excited about these names, even if there is a slight drop-off in acceleration?
Lisa, it's a very good point, and we have to look through the valuations relative to expectations. And you're right, the stocks have had very good moves, and they're trading at very rich valuations. Morgan Stanley's over 4 times tangible book value. Goldman and JP Morgan are over 3 times tangible book value. So you really have to expect for these stocks to really work going forward like they have in the past 18 months. You have to expect that these activity levels are going to continue, and that could be a big ask.
At this point, there seems to be a little bit of nervousness, and I stress a little bit of nervousness on the part of investors that there is an overbuild going on in the AI space, and that maybe they don't want to back anything and everything related to a data center, at least not without some pretty strict terms. Is there any sense of how much that could potentially crimp activity heading into the remainder of the year?
It's a good question, and I've been asking that question on the earnings calls that we had yesterday. We'll likely ask that question today. How do we frame out the impact that AI is having on not just the markets, but the economy? And I don't mean just the building of data centers, but the whole ecosystem of AI. How is it impacting? It's enormous. And I haven't received a good quantifiable number to say it's a third of the business or anything like that, but that we have to keep in mind, because we know it's a boom cycle for AI, and eventually it will slow down, not over the near term, but eventually it will, and it will have an impact on the capital markets businesses.
Well, in just a moment, we'll be talking about the amount of equity supply, Jared, that we've had in this market. Coming to market, Alphabet with a monster equity capital raise. We had one from SpaceX with a record IPO, SK Hynix, the biggest ever first-time issuer from a foreign company. All of that in the last month. Jared, there is a question, still an open one, as to whether we will see the likes of OpenAI follow anytime soon, or whether we started to see some crowding out appear that would push these deals back a little bit, Jared. What are your thoughts on that?
It's interesting, John, because if you look at the wealth of the United States, for example, back at the bottom of 08-09 during the financial crisis, this country's household wealth was about $61 trillion. Today, it's $183 trillion. The Fed's balance sheet back then was $700 billion. It peaked at $9 trillion at the peak of the pandemic. It's now about $6.5 trillion. There's enormous amounts of liquidity left over from the pandemic. And so we'll see. It's hard to really gauge whether there's a crowding out. It doesn't appear that way. The demand seems to be strong. And as long as the market's moving higher, I think that's going to continue to, the supply will continue to satisfy the demand.
And Joe, can I just say we will be here in 2 years. You'll be here in 2 years too, unless we're replaced by robots, and I hope that's not the case. Before you go, favourite pick until we next speak, next quarter when we cover all these names together, what's the favourite pick through the summer?
I think through the summer, Bank America would be the pick to gear to.
Jared, thank you. Jared Cassidy there of RBC, with Bank of America remaining a favourite for him and the team over at RBC. Let's talk about some of these capital raises. They've been so oversubscribed. The amount of wealth in this country, clearly there's an opening, and we'll talk about it with Jill Ford in just a moment, for more still to come.
Yeah, and this is the reason why you've seen such incredible earnings, because not only is it the trading side, it's also the underwriting side, and the fact that there's a whole lot of market making that comes along with this. You asked a really important question. How much more is to come with the likes of OpenAI, with some real questions about the competition between OpenAI and Anthropic? And are people getting exhausted? You know, right now it doesn't seem like anyone's getting exhausted. It seems like they're just getting started. And based on these results, you know, some really good bonuses coming.
The numbers are crazy. What was that number for trading across 5 big names?
$50.53 billion from their trading units in the second quarter.
More than $10 billion than what was expected.
Yeah, correct. And it compares to $145 billion total for the entirety of 2025. That is more than a third. These numbers are absolutely astronomical. Record after record after record in every single unit. And that is what all of these CEOs keep talking about.
I saw a stat from the team here at Bloomberg that the equity business over at Goldman, Q2 was bigger than all of 2019. 1 quarter. Q2 bigger than all of 2019.
I saw that as well. It gives you a sense of just how big this beat was. They combined with fixed income and their equities trading made north of $13 billion, maybe $14 billion in terms of revenues. I mean, it's just incredible numbers. You start to see $15.3 trillion over at BlackRock, and you start to talk about real money.
This market, the bar will creep higher, right?
It's
and
true.
It starts to demand a repeat again and again, and that's the issue.
Yeah.
That's why we're asking the question, is this as good as it gets for some of these names?
And is that enough, right? If it's as good as it gets, if it lasts for a couple of years, it's just hard to feel really optimistic when you start getting surprised again and again and again to such upside, and you start wondering, you know, at some point, the music's going to stop. It starts to make people feel uncomfortable.
Still playing right now. We're up by 1/10% on the S&P 500. What do they say? Keep dancing, right? Chuck Prince, something like that. All right. Let's give you an update on stories worldwide this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. Morgan Stanley, as you've been saying, shares rising in the pre-market. The bank's second quarter earnings topping estimates. Trading revenue coming in well over expectations at $6.3 billion. The bank's assets across wealth and investment management topping the $10 trillion mark. New York issuing the first statewide moratorium on new hyperscale data centers.
I want to make sure that we take the time to have a community investment framework to give to localities. But also, you have to be able to power yourselves. You either bring your own power source, or you have to pay a premium to use our grid. And those are the basic foundations of what we're doing with this moratorium.
Governor Kathy Hochul emphasizing the pause is, quote, not a ban. Americans may be keeping their clocks fixed on summertime. The House passing a bill that would make daylight savings time permanent. The bill now heads to the Senate. Even if it passes, states could opt out in favor of permanent standard time. That is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Up next on the programme, we'll talk to Jill Ford of Wells Fargo on why she believes this equity market is still wide open for supply. That conversation up next.
anything we do in Africa is going to be more risky than the U.S. I think the approach we want to take is, how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation was a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Equity futures this morning positive by 0.1% on the S&P 500. On the Nasdaq, shaping up as follows, higher by 0.4%. Earnings from Wall Street's biggest names in the last 24 hours, printing record after record after record, and this morning no different. BlackRock with record AUM, BNY with record assets under administration, Morgan Stanley setting another quarterly record for stock traders, Morgan Stanley higher by 1.5%, reporting just 20 minutes ago.
Yeah, north of $6 billion for their equity trading revenues, also saying that they had records in each three of the geographic segments. Again, it's almost getting exhausting. Record, record, record. Who isn't having a record? At the same time, it really is the sustainability. And so far, we have seen ongoing resilience, at least in the commentary coming from the big banks. The pipeline is big, and there's a lot that still needs to get financed.
The backdrop is good right now. The weather's been absolutely fantastic.
Lovely.
The sun is shining brightly.
Sunny squalls.
So the only thing you can ask is, does it get any better than this, right? Peak Bank. Peak Bank was something that we spoke to Eric Najarian of UBS about earlier this week. Looking ahead to these earnings, is this as good as it gets?
Yeah, and are people going to get penalized for not necessarily highlighting just how much further it can go? Is it enough, though? If this is as good as it gets, but it keeps going for a while longer, that's enough. What? Keep dancing? So this is sort of the question that a lot of people have. It seems like CEOs don't have visibility into when it potentially will stop. So that's the one kind of silver lining for investors and the reason why you aren't seeing them being punished.
Morgan Stanley this morning higher by 1.3%. That's the story for the big banks. They've been leveraging this under surveillance this morning, sustaining AI spending. Here's the latest. Big tech racing to raise capital following Alphabet's monster equity capital raise, SpaceX's record IPO, and the biggest ever first-time issue from a foreign company from SK Hynix. Jill Ford, the co-head of equity capital markets at Wells Fargo, writing, markets are wide open. If you hit on the right theme, which is everything within what the market perceives as the golden halo of AI, that's where things land. Jill joins us now for more. Jill, good morning, good to see you.
Good morning.
So I think you've got to an important point. Yes, the equity market's wide open, but is it wide open for only the companies that tick certain boxes?
Look, it's been an incredible first half of the year with respect to the equity capital markets. And as you rightly point out, you know, the AI super cycle is taking hold. They're using all of the tools in the toolkit across the AI ecosystem, from the hyperscalers to the neoclouds to the semiconductor companies, all the way down to the real infrastructure, the data centers and the power behind that. But as they use all the tools in their toolkit, the equity capital markets are a meaningful part of that. So it's not just structured privates, it's not just the bond markets, but it's also the equity markets. And you're seeing it, obviously, what you just mentioned in terms of follow-ons and converts. but in the private markets and then ultimately in the IPOs as well.
We've seen some massive issuance from certain kind of companies, which is what I'm trying to dig into here. Software. Is the path available for those names too? IBM got hammered yesterday. Can you walk us through the kind of contagion effect, the chilling effect that might have for the potential for some companies like that to come to market?
Well, look, I will tell you that the flavor of the month, the flavor of, let's call it the year, is AI. No question. All eyes are on that as it relates to tech. But there are definitely software companies sitting in the private realm who can and should be public. I'm thinking cybersecurity type names. I'm thinking those software companies that are owning the data horizontally and vertically. But there are also many who I think will have to sit it out and may, in fact, have to consolidate with others or not exist. If you look at some of the public mutual funds who have to mark their private positions, and as you know, those mutual funds have been investing in the private realm for some time now, they're marking those positions down 20% plus. So there is definitely a re-rating in valuation. There will be some that will be made obsolete by AI, and there will others that will have a tailwind and will be able to exist in this world, and those eventually will come public. But all eyes, make no mistake, right now within tech are on AI and everything within that ecosystem.
Those eyes are not indiscriminate, and they're not necessarily just buying blindly. And we saw that with Amazon. We've seen this with other issuances where there's been a little bit of pushback on the edges. At least that was on the debt side of things. We also have seen SK Hynix with an incredible amount of volatility in the ADRs and frankly in Korea as well. I just wonder if we're starting to see the beginning of a bit of pushback, if there is a little bit of supply indigestion that's coming down the pike as some of these other issues prepare to go to the market.
Well, look, I'll take your attention back to SpaceX. SpaceX was an incredible exhibit, reminder that the U.S. public markets are incredibly deep. For a deal that was 3 times the size of the largest IPO to ever come, and to have multiple times of oversubscription, to be able to garner demand from all corners of the world, all different types of investors with different lenses, and still be able to not only absorb that supply, but to keep on trucking in terms of additional supply that has come since and before, as you point out with Alphabet, is really a testament to the fact that there are deep pockets within active money management. And I don't think that we have exhausted the amount of that demand because people are making money. You know, you talk about SK Hynix, it's been incredibly volatile, but people made money on that. And the average IPO cohort, if you look at right now, it's close to 15%. So I don't think the music stops because of supply. I think the music stops if we don't have the incredible backdrop that we're enjoying right now.
What would cause the incredible backdrop to be less incredible? I mean, is it something macro, or is it something where suddenly people realize who's going to pay the bill for all of these big hyperscalers and for these large language models that are being levered at pretty significant rates, even though a lot of companies are pulling back on their expenses or actually rationalizing their token use?
Look, I think we have a long way to go with respect to AI and figuring out where all the chips are going to fall. That being said, I still think we're on the precipice of changing the way the world does business, changing the way that we all live, and the capital formation that has to accompany that is incredible. Right now, what could derail things, I think, are more macro. You know, we've got increased tensions in the Middle East. Right now, the market is shaking that, you know, shaking it off. The consumer still appears very healthy. If that changes, right now, inflation appears relatively under control. If that changes, all of those macro indications that, you know, we can't be priced to perfection. Right now, we're priced to perfection because earnings have been great, because the backdrop has been relatively calm. The VIX is sitting at 16. If that were to change, particularly in the back half of the year where the calendar starts to shrink in terms of your windows to be able to go public, then you could start to see some around the edges, some marginal people putting off or perhaps a rationalization on valuation as well.
There's also a midterm election towards the end of the year. And
no question.
We saw yesterday this moratorium on AI data centers. Do you think policy potentially could have individuals thinking, I'm going to wait and want to see how all this shakes out?
I think investors are worried about it. And I think as we speak to issuers, many people want to get ahead of it because they don't want to have to be in that maelstrom of headlines and people wondering what that means. So I do think it's on people's minds, and we'll see what comes up.
So you think before the end of the year, more people are going to want to go maybe before that date in November?
I think so. What you're dealing with, though, is, you know, you'll have the August doldrums. The Labor Day is a week later than usual. Then you've got the Jewish holidays. Then you've got Thanksgiving. You've got the midterms. You've got Christmas. I also think investors may close their books early because they've done so well. They won't want to risk it going into year end. So there's a lot that's going on the technical side of it that maybe people want to accelerate their plans and come earlier in the last quarter versus what they normally would. And then many may wait until 27 and things calm down.
I'm right there with them. Shut it down. Take the year off.
I was going to say,
You right there too?
I was just going
Right?
to say, is it too soon to close
Jill's
the
had
books
a great
right now?
year already. Just shut
exactly.
it down. Long vacation.
We're just getting
for the rest
started.
of the year. Yeah. Oh, yeah?
Jill Ford of Wells Fargo. Jill, thank you.
you
Appreciate
very
it.
much.
Just getting more details of another round of strikes across the Middle East, across Iran from U.S. Central Command. Those details drop in just moments ago.
Right, so they wrapped up the latest strikes, the morning round this morning at 7:30 a.m. Eastern, and CENTCOM is saying that the U.S. launched precision munitions against coastal defense systems, cruise missile storage, launch sites, basically going after anything that Iran has in capability to attack vessels that are trying to transit the Strait of Hormuz.
It's keeping crude elevated. It's not adding to the rally. Crude this morning higher by about 1/10%, 79 on WTI. Brent crude around 85. If you turn to the bond market, yields have been higher throughout much of this morning, up by a couple of basis points, up by 2 on 2s to 421, on 10s just north of 460. The next stop for that bond market, not just energy, but PPI data. That data drops in about 35 minutes' time. Up next on the programme, we'll catch up with Ed Yardeni of Yardeni Research. We'll speak to the BNY CFO, Dermot McDonough. We'll catch up with Stephen Stanley of Santander, plus the former U.S. Commerce Secretary, Gina Raimondo. All of that in the third hour of Bloomberg Surveillance, just around the corner.
Anytime you have an industry that grows like that, there will be pockets where things are more difficult. So if they're smaller companies, it's harder to deal with tariffs, it's harder to deal with labor and with rising interest rates. So there you may see some poor performance. That doesn't necessarily mean that lenders will lose money, but it may be more difficult. And then pockets of software, everybody's been worried about how will that play out. I think there was a lot of capital that was put in from very smart private equity and very smart institutional investors into software really in the 21-22 vintage that was pretty highly priced. And that, as that works its way through the system now 4 or 5 years in, you may see pockets there. But I also think that the need for income, people want income in their portfolio, and they can get that in many ways. You can get that from the treasury market. You can get that from a bank. You can get that from high yield right now is pretty good. High yield has very little exposure to software. And then you can get it from private credit where you maybe get more return and a little less liquidity. And so that, I don't see that going away. In fact, I see investors wanting more of that and wanting it from real estate, wanting it from real assets.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, my dream is to play football and play professional football, and the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
Tune in to to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
The power of earnings is too strong.
Earnings revisions breadth is still surging.
At some point, valuations will become an issue for investors.
We've been warning our investors that a correction was coming across the board.
It's premature to get too worked up or too bearish.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now, and your scores, the price action looks like this. Equities higher by 0.1% on the S&P, on the Nasdaq up by 0.4%. The bank earnings roll in. Earnings season completed on Wall Street. There we go. In just 24 hours. Not bad, eh? BlackRock this morning, record AUM. That stock is up by 4%. BNY, record assets under administration. That stock is down 1% this morning, up on the year by more than 30. Morgan Stanley also higher on the year, around 30%. Morgan Stanley this morning up by 1.8%. Another record, this time again, for the stock traders over at Morgan Stanley. We've seen that on repeat over the last day.
And they're not small beats. These are massive beats. And you can see that the collective beat across Wall Street is up by some $10 billion just in the trading revenues overall when you combine the top 5 banks. Question is, how good is it going to get? Can this be something that can be repeated again and again? And how big is the pipeline going forward? So far, the commentary is the visibility that we have is all systems to go into the end of the year. For people who want to be nervous, that kind of positivity makes them nervous. You see this in the Bank of America Fund Manager Survey as well. Nonetheless, the data seems to be backing it up and at least disinflating enough to keep it on the rails.
You said this earlier this morning, I'm right there with you. It was a bit touch and go yesterday morning, where these beats weren't really being rewarded and the misses were getting massively punished. And that changed at about 8:30, when CPI came in a bit softer than expected. Rate hike expectations, at least in the immediate term, the very near term around July, started to soften up a little bit. It allowed the equity market just to go a little bit more. I don't think we would have had the moves we had by the end of the day without that happening at 8:30 Eastern Time.
I couldn't agree with you more. This is both a micro story and a macro story. The micro story has to do with AI, although that's turning into a macro story, and how much it's fueling some of the capital markets activity. On the macro, the Fed needs to not get in the way for a lot of these multiples to sustain themselves, and that's what a lot of people have been saying. If the Fed takes away the punch bowl, and they can if they hike enough, then potentially that brings the end to the party. Right now, it seems like the CPI report we got yesterday does not create urgency to raise rates in any material way in the near term, thus allowing the party to keep going and allowing people to get enthusiastic.
Twos this morning up 2 basis points. The next stop for that debate is PPI in 27 minutes time. Your 2-year at 421, 10's up 2 to 461. Off the back of this move in crude. Crude still elevated this morning, up about 0.5%, around 80 on WTI. Brent crude around 85. As US Central Command indicates, they've wrapped up another round of strikes.
Right, 90-minute wave of strikes this morning, and we're getting a little bit more details on what actually the U.S. forces were targeting. They were going after coastal defense systems that the Iranians have, cruise missile storage, launch sites. All of this is to try to degrade Iran's capability to go after commercial vessels in the Strait of Hormuz. I was very impressed with what General Walsh said this last hour. And he made the point that when it comes to Iran, the objective is disruption, not necessarily denial. If it's only disruption, there's only a little bit amount the IRGC needs to do to disrupt waterways and stop vessels and having them second guess if they should go through, which is why the United States, it might take a lot longer to go after a lot of these sites and almost scare them back from doing even a little bit amount of disruption.
It doesn't cost them much to do it either.
Nope.
That's part of the problem. Coming up this hour, we'll catch up with Ed Yardeni of Yardeni Research on reduced urgency to hike interest rates. We'll catch up with the BNY CFO, Dermot McDonough, as Wall Street crushes estimates, and the former US Commerce Secretary, Gina Raimondo, on what's ahead for the American AI build-out. We begin this hour with stocks little changed as investors count down to fresh inflation data and day 2 review of Fed Chair Kevin Warsh's testimony on Capitol Hill. Ed Giardini of Giardini Research writing the Fed Chair's core message was that the Fed must stay focused on inflation while recognizing AI's potential to support stronger, less inflationary growth. In other words, he endorsed our roaring 2020s narrative. Ed joins us now for more. Ed, welcome. To get your roaring 2020s, and we're more than halfway through at this point, do you need this Fed to stay on hold?
Yeah, well, this is actually the 7th year of the roaring 2020. So if we make it through this one, I think we got 3 more years, and then we can look back and say that turned out to be an amazing decade, and then we can start talking about the roaring 2030s. But I'm very pleased to see that Fed Chair Kevin Warsh shares our optimism about the outlook for technology-driven productivity. And that may explain why we're getting lower than expected inflation, because unit labor costs, which is hourly compensation offset by productivity, that's only up 0.5% on a year-over-year basis during the first quarter. And it does correlate with the CPI, and the CPI came in, as you all said, remarkably cool.
Ed, I'm pleased you've got visibility into the 30s, because I can't see beyond next week, at this point anyway. Let's talk about the here and now. The positive earnings shock that we witnessed at the start of the year that took a lot of people by surprise. How well priced is that positive earnings shock now?
Well, that's really the issue for the next few weeks, is we're now in the second quarter earnings season. And the problem is that the market may already be discounting remarkably strong earnings. As a matter of fact, on a year-over-year basis, analysts are predicting something like 20 to 25% increase in second quarter earnings on a year-over-year basis. So how much better could it possibly be? And so the answer, I think, if it turns out that the answer is that they're only as great as everybody expected, you might have some profit taking, but then watch the dip buyers come right back in. We see that over and over again because the reality is the earnings prospect remains very positive. Second, third, and fourth quarters, analysts are looking for 20 to 25% increases in earnings.
It seems like, Ed, a lot of how long this can continue really does hinge on the inflationary backdrop and the policy response to it. Something we saw yesterday, a disinflationary print really did unleash an even bigger rally in equities. I'm just wondering how much you actually took from yesterday's CPI print. Max Kettner of HSBC just came out and said the downside surprise was pretty broad-based, and they think is the first sign of U.S. exceptionalism unwinding, unlocking lower yields. Do you agree with that?
I do, actually. Going into the CPI numbers, we thought that we did expect the pivot from easing back in April to tightening in June. We also thought that there was a rate hike possibility in July at the end of this month. And now I think the CPI took that right off the table. Interestingly, the 2-year and the 10-year treasuries are still anticipating that nonetheless there will be at least 1, if not 2 rate increases over the next 6 to 12 months. And that's still possible. I mean, we still have the war is not over. We still have potential upside in oil prices, though that's also been a remarkable surprise. And then we've got the AI situation that, at least in the short term, is turning out to be inflationary. But all in all, you have to say there may be some real magic here in productivity.
Are you nervous that people are so optimistic, including yourself? And I know I sound like the ultimate bear looking for something to be bearish about, but I'm looking right now at these surveys that show that just 2% of people in the Bank of America Fund Manager Survey see a hard landing as possible in the near future. Does that give you pause?
Yeah, I do tend to have a contrary streak, but I don't go contrary unless, the fundamentals really suggest to me that the crowd is missing something here. And look, I'm not dismissing the possibility of a significant pullback. We had one during March when the war was red hot. We could have another pullback in the current earnings season if suddenly one of the hyperscalers says, you know what, we're finding it difficult to build the data centers. Maybe we've got more capacity than we need. I mean, all those things are possible. And so there's still a lot of nervousness about the whole AI situation for sure. Obviously, less nervousness about inflation, less nervousness about what the Fed's going to do. But between the ongoing war in the Middle East, the potential for higher oil prices, the fact that inflation isn't back down to 2%, and Warsh has pledged that he will get it down to 2%. The question is, will he actually have to raise interest rates to do that, or will productivity do the job for him? So I think everybody knows the bear case, and it wouldn't take much to bring it to the fore. But I'm going to stick with a story we've been telling since the beginning of the decade, and that is that the economy is resilient, and the consumer is resilient, and therefore earnings are resilient.
Ed, you're dubbing this phase of the conflict as Iran War 2.0. What does the market need to know about this version and place where we are with the conflict versus when it first started?
Well, this version seems to be more focused on trying to get Iran to finally give in. The problem with Iran is it's not clear who's in charge. There seems to be some sort of government, but there's also the Revolutionary Guards, and the end of the recent ceasefire seemed to have been triggered by the Revolutionary Guards kind of unilaterally disagreeing with the government, saying we're not on board here with any peace treaty whatsoever, any understanding whatsoever. So I think right now the war situation is really kind of focused on once again shutting down the ports of Iran in order to really immiserate their economy. The problem is the Revolutionary Guards don't care if their people suffer. So it could be a protracted situation where the United States really does have to provide military escorts to get ships out. But meanwhile, everybody's scrambling to find other sources of oil, to get oil distributed through other means. And it seems to be working. And in addition to that, it looks like China's economy is fundamentally weak, and that's depressing their demand for oil. So the oil market just has actually been far less troublesome than widely anticipated.
GDP a bit weaker out of China than expected a little bit earlier. Ed, final question before we go. You coined the phrase, bond vigilantes. Did they stay on vacation through the summer?
Seems so. I've been thinking that the bond yield is pretty much where it should be. We're back to normal in the bond market. I think normal is about 4.5%, plus minus maybe 50 basis points, so a range of 4 to 5%. I don't think is a problem for the economy. Quite the opposite. I think it's a signal that the economy is back to its old shape, that it can not only handle these rates, but can do business quite readily at these rates.
Close to the middle of that range this morning. Ed, good to catch up. Good to see you. Ed Yardeni there.
Thank you.
Of Yardeni Research. Thank you, sir. Yields up by 2 basis points. 461. We're doing okay in the equity market off the back of this. Looking ahead to PPI data in about 20 minutes' time. Let's get you an update on news worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thanks. U.S. Central Command saying it began a 5th day of strikes against Iran at 6 a.m. Eastern this morning, and those strikes lasted for 90 minutes. President Donald Trump saying the strikes will intensify until Iran agrees to open the Strait of Hormuz. Iran had been retaliating against the U.S., hitting bases in Gulf Arab states. NVIDIA CEO Jensen Huang saying the company's next-gen AI accelerator systems are on track, following reports that the rollout could be delayed due to manufacturing issues. Huang said Vera Rubin is already in production and on pace for giant production volumes. The fossilized skeleton of a Tyrannosaurus Rex sold for a record $50 million at a Sotheby's auction. The T-Rex, named Gus, is described as one of the largest and most complete dinosaur skeletons ever recovered, the buyer unknown at this point. And that is your Bloomberg Brief. John?
There's one guy I thought of. Funny, thank you.
Me too.
Kenny G.
He already did it.
Well, we don't know if it's him this time, but because he already did it.
Maybe he's building a collection, which, to be honest, is so cool.
How cool would that? 8-year-old dream, right?
I was just gonna say. It's a dream now.
If you asked an 8-year-old kid,
it's a dream now.
If I gave you $1 billion, what would you do? They'd be like, buy dinosaurs.
Absolutely, and then recreate Jurassic Park.
Yes.
For the record, I've got no idea if it's Ken or not, but
but there we go.
People are wondering. Up next, the Morning Calls Plus, we'll catch up with the BNY CFO, Dermot McDonough, as America's oldest bank delivers another record quarter. That conversation up next.
politics to the world of business. Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
Across Wall Street, the trading revenues in equities has been extraordinarily strong. The numbers are very, very strong, and this is probably as good as it gets. So you really have to expect for these stocks to really work going forward like they have in the past 18 months, and that could be a big ask.
That was Gerard Cassidy of RBC weighing in on the financials a little bit early this morning. Equity futures at the moment up by a 1/10, on the Nasdaq up by a 1/3. That's the price action. Let's get you some morning calls. The big banks in focus. First up, Morgan Stanley raising its price target on JP Morgan, citing better than expected guidance for net interest income. Your second call from Barclays raising its price target on Goldman, highlighting better than expected trading and investment banking fees. And finally, Wells Fargo raising its price target on B of A, citing strong underlying financial trends. That stock is up again this morning. We're higher by 0.5%. Let's stick with our top story. Wall Street delivering a blowout earnings season. America's oldest bank, BNY, adding to those results, posting back-to-back quarters of record revenue and sales. Joining us now to discuss is the BNY CFO, Dermot McDonogh. Dermot, welcome to the program, buddy. It's good to see you. Record performance in Q1, again in Q2. What's behind the activity, Dermot? And the question I think that applies to your bank and so many others this morning is, can this continue?
Thanks for having me, Jonathan, and great to be with you. When I was getting ready for the show this morning, I wasn't too sure whether to put the tie on or put the England shirt on. So I put the tie on, but hopefully you'll bring it home today and enjoy the match this afternoon. Listen, BNY today, great results. We're really pleased with the performance. We feel like the firm is humming at the moment. We've built the company for durability and to take advantage of opportunities like this that the market has presented over the last quarter. The U.S. economy is strong. We continue to be positive on the U.S. economy. There's a lot to be optimistic about in terms of what's happening. Full employment, the yield curve is behaving well, flows are strong. And when you have a company like ours who has built a broad set of durable businesses and has been in this for a long time, with 20% of the world's investable assets flowing through your pipes every day, this shows up in kind of record net revenues, which we're just posting this morning, of $5.7 billion. So as a company, we're very pleased, but we feel like we have more white space to go and more opportunity, and we're going to keep pushing on into the second half of the year.
And Dermot, record assets under custody as well, north of 60 trillion. That's a record for the firm as well. You talked about it, you just alluded to it there. Help us draw a distinction between the backdrop and execution, the environment, and how the bank actually performed. What's happening there?
So look, we started on this journey 4 years ago, and I can say confidently under Robin's leadership that BNY today is a materially different company than it was a few short years ago. And I give you a couple of examples of that. We will talk this morning about this being our 14th quarter of consecutive year-on-year sales growth. This year alone, first half, we've had 2 record sales quarters. Our mandates are growing in size. 10% of our sales this year have been with new logos. So that points to the fact that clients are seeing what we're doing. They see the reimagination of the firm. They want to partner with us more in many different ways, and that's showing up in the numbers.
One thing that we saw, Dermot, was a sense of a real upgrade in terms of full-year revenue guidance that you put, up about 10 to 11% year over year versus the 5% previously. What gives you confidence heading into the second half that the momentum can continue to the degree that we saw earlier this year?
So look, I live and breathe BNY. I see the 47,000 people around the world working together as one, delivering for clients, and that results in strong pipeline, strong backlog. We're a better firm today than we were a year ago. And so, look, I think 4 years ago, if we had this backdrop that we're experiencing over the last quarter, we wouldn't have performed as well as we have this quarter. So we're making that 1% better at the firm every day, and that compounded over a long period of time is going to give us the confidence that we can deliver for our shareholders, for our clients, and for our employees over a long period of time. So we're very bullish at the US economy. We're very bullish BNY and our strategy. We feel like it's working, and we kind of feel like that we have a lot of opportunity ahead of us. There's no shortage of work to do to make this company better.
Dermot, one thing that we've seen pretty much across all the banks is that expenses came in heavier than a lot of people had expected. I wonder how much of this is structural, that there is a sense that everything is getting more expensive, whether it's the personnel that potentially can drive the change in the performance, as well as some of the technological advancements that you need to be investing in.
So look, I obsess about expenses every day, as you would imagine me to do. The expense growth that we've seen this quarter, and we updated our guide for the full year to 6 to 7%, it's largely revenue related plus investments. Over the last 3 years, we've roughly invested about $500 million in the firm in strategic growth initiatives, and that's largely been offset by our efficiency and transition to the platform operating model. So you can see that the investments that we've made over the last 3 years, you see that proof in today's results. And we're going to continue to invest in a thoughtful and prudent manner, and that will deliver durable results over the long term. I'll say this on the call today. We've developed new products, whether it's buy-side trading, Collateral One, Borrow Plus, products that weren't that meaningful to the overall revenue pie a couple of years ago are now delivering meaningful contributions to the revenue mix. So BNY is innovating as well and partnering with clients and stitching the firm together to deliver integrated solutions that we believe will allow us to grow revenue in the future.
I think, to be fair to you, Dermot, 10 consecutive quarters of positive operating leverage speaks to some of the things you just said there, that balance between cost discipline and investment. When it comes to investment, the focus right now is firmly on AI. Some companies seem to be rationing spending right now, Dermot. What comes out in the release from you and the team this morning is that your spend and the investment you've made on AI is translating into real business impact. Can you share with us where specifically and how this is trending?
So look, we talked a lot about, and we had a slide in our disclosure in Q1 about what we're doing on AI. Like in the context of BNY and a $4 billion engineering budget, our investment in AI is modest in the context of the overall budget. We've got a good strategy at BNY. We're very proud of it. We've been at it right since the start, since the launch of ChatGPT, and we're very proud of the platform that we've built, Eliza. It's LLM agnostic, and so we feel like we have the right structure in place. We've had broad adoption with our people around the firm. We've upskilled people. Pretty much 100% of people at BNY now know how to use AI and are doing it in their daily work. And we think about enterprise productivity and individual productivity. And Robin says this lots of times, AI for everyone, for everywhere, for everything. And it's all about creating capacity and productivity so that we can allow the firm to grow and use AI to enable that. So we're AI optimists at BNY. We believe it can upskill our people, allow them to do more interesting work, and at the same time partner with clients to grow the firm.
Another record quarter. Dermot, appreciate your time. You've been generous with your time on a busy morning for you and the team. Thank you, sir. The BNY CFO, Dermot McDonogh, following another record quarter, following another record quarter.
Yeah, and talking about how it's both the backdrop, the weather, but also about some of the changes that they've made to the institution over the past 3-4 years. I'm interested about some of the names, Eliza, Claude. I'm wondering
where did they come from?
Yeah, well, I mean, this one actually comes after Elizabeth Hamilton, who was one of the people who was involved in creating this. So evidently it has to come from something, but, you know, will there be any children named Eliza and Claude in this next
Hamilton
generation?
founded the bank, of course.
Yes, exactly.
Yes.
So
Right.
this makes perfect sense.
You know, just a little nod towards history.
Thank you, rather than like founding the AI.
Right. Got it? Okay.
Thank you, I
All right.
appreciate it.
Anytime.
That was graceful.
That's what I'm here for. Okay. Coming up, we'll get some breaking inflation data, PPI, in about 5 minutes' time. We'll catch up with Stephen Stanley of Santander. He'll break it down for you in just a moment. Equity's doing okay on the S&P 500, just about unchanged. In the bond market, yields have been higher through much of this morning. We're off the highs. We're up a single basis point. Your 2-year this morning at 420, 10s at 460, up by a couple of basis points. And crude, still elevated. WTI higher by 0.7%. WTI 80, Brent crude at 85. PPI is up next.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you the latest business news wherever and whenever it happens. I'm Scarlett Fu, reporting from America's biggest military shipyard. This is Bloomberg.
It's going to be a hot one later on. We're going to get into the 90s here in New York City. It's going to be very hot where England are playing as well.
Yeah, well, that's...
I thought you were staying down there for the game anyway.
I was going to, and then I just was compelled. I couldn't stay away, especially bank earnings.
Did Bastian have the tickets?
He did, but not for me.
Oh, did he?
Yes,
Is he taking
was
the team
definitely
over
gonna
Delta?
I don't know who he's taking, but, I tried to throw out. I'd be interested. Wasn't interested.
Yeah, it's going to be hot across the East Coast, that's for sure. Equity futures right now in the S&P positive by a tenth. On the Nasdaq, we're up by about a third. PPI data just crossing. Mike McKee has the numbers. Hey, Mike.
Good morning, John. Well, we had good news for the CPI yesterday, and today we have good news in the PPI, at least for the Federal Reserve, and the inflation fight at the moment. PPI for final demand down 0.3% on the month. Ex-food and energy is up 0.2. That's a tick lower than was anticipated. And food, energy, and trade is up just 0.1%. So that leaves the year-over-year numbers at this point. Final demand headline 5.5. That's down a full percentage point from last month's 6.5. The food and energy core 4.7, down from 4.9, and the PPI ex food, energy, and trade at 5.1%. The index for final demand goods moving down 1.4% in June. That's the largest decrease since July of 2022. And of course, leading the decline, prices for final demand energy. 2/3 of the index, they say, for final demand goods can be traced to prices for gasoline, which were down 12%. And then the index for services rose 0.2%. 60% of that is for final demand trade services, which is, of course, the profit margins for warehouses and retailers. They were up only 0.4%. Half the index is also for on the service side margins for people who sell fuels and lubricants. So the suspension of the war playing a big difference in what's happening in the PPI this month, as well as the CPI. One other number quickly we got for you is the Empire Manufacturing Index rebounds nicely to 15.6 from 5.7, and we saw a big drop in the prices paid index. It falls to 52.3 from 61.0. So we're really seeing that impact of slowdown in prices during the month of June. Now the question is, can we keep it?
Mike, Anne-Marie thinks you look like a park ranger and wants to know where you are. Where are you?
I'm at the Rocky Mountain Economic Summit in Victor, Idaho, and I will go out and see if I can find her a bear.
Okay.
What's on your shirt?
Stay safe, Mike. Thank you. Michael McKee. I mean, Kevin Walsh doesn't think mission's accomplished, but based on that, it was like Mike's phoning you in.
Exactly.
Taking the rest of the year off.
Well, you might be right. I mean, you could just, head over, get another job as a park ranger.
Clearly, PPI is not a problem. All right, equity futures positive by 0.2 on the S&P, on the Nasdaq higher by 0.5. In the bond market, yields were a little bit higher. Now they're a little bit lower at the front end of the curve, still dancing around 420, 417. Yields lower, Bravo, by a single basis point.
Yeah, a lot of this being driven by energy, but nonetheless, across the board, the idea that ex-food and energy year over year is coming in at 4.7% versus the expected 5.1%. And there were some downward revisions as well to the prior month. This all giving a sense of support to what we saw from yesterday's CPI. That said, the fact that oil prices inflecting back higher again, and given the robustness that we're seeing from Wall Street, again, expect to hear mission not accomplished and some questions down on Capitol Hill, which is the reason why you're not seeing a much bigger move in the bond market.
Thank you for remaining so professional. We appreciate it.
Oh, yeah, me. I'm just the picture of professionality.
Stephen Stanley of Santander joins us now for more. Stephen, good morning.
Good morning.
Thanks for wearing a tie. We appreciate that too.
I don't know how I can top the conversation so far.
What's the reaction to CPI to PPI? Are we close to mission accomplished?
Yeah, well, look, the inflation situation is extremely complicated. I think one thing we learned yesterday is it feels like we're getting past the tariff pass-through. So that's one thing we can set aside for now. We've still got the question of how much of the oil shock is going to pass through more broadly into the core numbers. I don't think we have an answer to that just yet. And as Lisa said, you might have thought a couple of weeks ago the oil shock was over. Now we're back up again. So I think that question is still before us. But I think the big issue, and Warsh alluded to this yesterday, I mean, it would be one thing if the core PC deflator was running year over year 2.4. You say, okay, we're a little above. We're at 3.4. So we get one good inflation number, and to Warsh's point, it's not mission accomplished because we have such a margin that we're missing by that it's going to take a lot to get us back.
This is how we start the show. We know what he doesn't like, okay? What we don't know is what he's willing to do about it and whether he believes we are actually sufficiently restrictive or not.
Right.
Have you got any understanding of that at this point after a day of testimony?
The man of mystery,
right?
Chairman Warsh. Yeah, so I think that...
Is the ambiguity strategic?
Oh, for sure. I think...
What's the strategy?
Here's what I think is happening. So I think Chairman Warsh would argue strongly, and I think most of the people in the committee would agree, that the Fed was using too much forward guidance, basically leading the markets around by the nose. If you think to the Powell regime, and more than likely, if the Fed were thinking about hiking in September, let's say, they would have already been trying to signal it in June. He wants to do away with that. At the same time, he's moved to the polar opposite extreme of, I'm not going to tell you anything. I'm not going to tell you whether I think the economy is strong. I'm not going to tell you what my reaction function is, what I'm paying attention to. Just all I'm going to tell you is we're meeting again in 6 weeks, basically. There's a happy medium somewhere in between. I think my sense is that what he's doing now is he's trying to wean the financial markets off of this steady diet of forward guidance. So we're going cold turkey for a while, and ultimately, you know, whenever, maybe it's after we get the working group results back or whatever, hopefully we'll get to something in the middle.
He has the luxury of going cold turkey because right now the Fed's not in the driver's seat and they don't have more visibility than the market does. So right now it's a great time to go cold turkey because they're not on the hot seat to actually take immediate action. That said, I'm struggling with the cognitive dissonance of the disinflation that we're seeing in these numbers, earnings coming from the biggest banks showing absolute boon time types of profitability. Also, a separate report from the New York Fed from their general business conditions coming and showing that the employment component rising to the highest level since December of 2022. All of these signs of reacceleration of the consumer and the commentary from some of these executives. How do you square that with disinflation ongoing?
Right. Well, I guess it's disinflation from where? Again, if we're moving, you know, we were, what, in the high twos for most of last year on year over year for core inflation. We're currently at 3.4. If we disinflate back to the high twos, that's good, but it's still not mission accomplished, right? It's still above the target. I think there are a couple of things that I would say from trying to look at it from Warsh's lens to the narrative that you just explained. The first one is we know the employment situation is a lot better now than it was perceived to be late last year. So when the Fed was easing last year, they were easing because they thought the labor market was soft. And that's off the table now, which allows the Fed to focus entirely on inflation. I think another point that Warsh has been eager to make is he's not a Phillips curve guy. So the Fed as an institution has always been of the view that inflation always and everywhere comes from the labor market. And clearly, the inflation that we're getting now is not coming from the labor market, right? Wage growth is not accelerating, and yet inflation has moved up into the mid-threes. So I think what Warsh would say is, firstly, and this was why people thought he was going to be super dovish before he took office, good growth is not a problem necessarily from an inflation standpoint, particularly when it's being driven by investment. AI should raise productivity over the long run. In and of itself, it's not inherently bad. But if it leads the economy to overheat, then you do get inflation. And so I think he's willing to sit back and see how things play out. But the way that things seem to be playing out, in my view, is we are getting inflation, and the Fed does have to respond to that.
One of the pushbacks that we get from people is that if the Fed were to raise rates by 25 or 50 basis points, it wouldn't constrain some of the main nodes of inflation, which is the AI investment, which is a sort of secular overlay, not exactly monetary driven. That said, whenever we see the prospect of tightening, we see stocks sell off, which is essentially monetary conditions, or financial conditions doing the work for them. So which is it? Does it have an effect or not if they were to hike 25 or 50 basis points?
Well, I mean, it clearly has some effect at the margin, right? It affects the environment. And right now, I think by any measure, you would say financial conditions appear to be extremely easy. So I think it's hard to make the argument as a policymaker that the funds rate at its current stance is restrictive. I think the consensus view on the committee prior to Warsh coming in was that the Fed was modestly restrictive, and if they could just hold at that level for a long enough period of time, it would bring inflation down. And I think what we're seeing is, I mean, certainly financial conditions would suggest the Fed isn't really easy right now. I think that's a reason why they're ultimately going to have to nudge rates higher.
Well, when it comes to when this could potentially happen, do you think they would really make a move before the midterm election?
That's a good question. I think that would actually be exhibit one in Warsh's argument for, hey, we're independent, right? So in some ways, hiking in September, which, you know, would be kind of something that the Fed typically has avoided moving right before the election. But I think moving in September actually bolsters his credibility in a way, especially if there's a strong case for the move. I think where the Fed gets in trouble is when they get really aggressive at a point in time where the case for doing so isn't so great. And that's what happened in 2024, right? The Fed goes 50 basis points right before the election, and you know, after the fact, Trump is saying, "Oh, you were being political," right? If the case for moving 50 basis points had been cut and dried, nobody would be saying that. So it depends on the circumstances and whether it's justified. But I think going in September actually would be something that would be good for the Fed's credibility.
What would they need to see?
I think for me, the number one thing that's important in terms of inflation going forward is this issue of whether the energy costs are getting passed through. I mean, when the first couple of months of the energy price shock, the trucking freight line item in the PPI over 2 months went up by more than 10%. Not annualized, just up more than 10% in 2 months. Everybody assumed that was immediately going to show through into food prices and pretty much anything that has to be shipped. And we haven't seen that yet. I mean, food prices were up 0.2 in May. They were up 0.2 in June, you know, pretty normal type numbers. So I think the jury's out. We're still waiting. But I think for me, as a Fed official, what I'm trying to ascertain at this point is how much pass-through is there going to be. And that's something that the data we'll be looking at the data, of course, but also anecdotes, talking to businesses in the district and kind of figuring out what's really going on behind the scenes.
Stephen, it's good to see you. Thank you, sir. Thanks for being here. Thank you. Stephen Stanley there of Santander on this Federal Reserve. As a softer PPI print follows a softer CPI print and takes some heat off this Fed chair on day 2 of testimony down on Capitol Hill. Equity futures positive. Near session highs up 0.25% with an update on news worldwide. With your Bloomberg brief, Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. Recapping the data we just got, U.S. producer price inflation unexpectedly decelerating in June, falling 0.3% month over month. PPI excluding food and energy increased 4.7% from the year before. The data suggesting the fallout from the Iran war did remain somewhat contained so far. SpaceX shares are on the verge of falling below their IPO price. Shares of Elon Musk's company closing $1 above their $135 a share IPO price yesterday. The stock has plunged 1/3 from its post-listing peak, erasing nearly $850 billion in value. In sports, Spain are into their first World Cup final since winning the tournament back in 2010. They beat France 2-0 after the favourites, who only managed 3 shots on goal. Spain will meet either England or Argentina in Sunday's final. And that's your Bloomberg Brief. John.
Looking forward to the game later this afternoon. Vonnie, thank you. Appreciate it. Up next on the programme, we'll set you up for the day ahead. Plus, we'll catch up with the former US Commerce Secretary, Gina Raimondo, on the massive push to shape the nation's AI future.
we should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
The U.S. economy is strong. We continue to be positive on the U.S. economy. There's a lot to be optimistic about. We're very bullish at the U.S. economy. We're very bullish BNY and our strategy. We feel like it's working, and we kind of feel like that we have a lot of opportunity ahead of us.
Back-to-back record quarterly revenue from BNY. That was the CFO, Dermot McDonogh, following a fantastic roundup of Wall Street earnings. Equity futures so far this morning, just about positive going into the opening bell. Stocks up by 0.2%, up by 0.5 on the Nasdaq 100. With your morning movers, some single names. Yahara has more. Hey, Yahara.
Hi, John. Well, Morgan Stanley is bucking the trend that we've seen with some of the other big banks. Actually, not anymore. Shares are down 0.3%, even after the company had posted a strong quarter. Equities trading stole the show. That jumped 69% to a record $6.3 billion. Investment banking also got a boost after the bank co-led the SpaceX IPO. So this wraps up what's been an exceptionally strong quarter for the banks, and yet a lot of them not seeing the jumps that you would think given these strong results. Meanwhile, BlackRock, we are seeing those shares moving higher, up 5% after the firm delivered a blowout quarter. It attracted $192 billion of new client money. That brings its assets under management to more than $15 trillion for the first time ever. It was helped by strong demand for its ETFs, active strategies, and private markets, all areas that attract juicier fees. And we are seeing BNY shares also slipping this morning, down 1% in the pre-market, despite posting a profit beat, and as you said, another record quarter for revenue. But the stock had already been on a huge run. Just yesterday, it closed at a record high, so it seems a lot of the good news had been priced in. John?
We've seen that movie a few times in the last 24 hours, that's for sure. Yahara, thank you. Appreciate it. Let's turn to this. The AI build-out growing as a political flashpoint. New York State leading the pushback, becoming the first in the nation to issue a moratorium on new hyperscaler data centers. PJM, the largest grid operator in the country, saying data centers have increased supply costs by more than 60%. The former U.S. Commerce Secretary, Gina Raimondo, is leading Raise US, a nonpartisan organization designed to help the American labor force adapt to AI. The Secretary joins us now for more. Madam Secretary, welcome to the program. Let's just start the conversation with the kind of work you're doing and what we need to know this morning.
Good morning. Good morning. So Raise Us is the new organization that I am leading, and our mission is very simple. You know, we want the U.S. to lead the global AI competition, but to have a strategy so that every American worker gets brought along. And right now we're not headed down that path, and it's something I'm deeply worried about. We have extremely outdated infrastructure, social insurance, support for workers, incentives for companies to retrain and redeploy instead of just laying people off. And so I think it's time that we get to work. We're working with governors of both parties. This is a nonpartisan, non-political effort with companies, and just trying to find some creative, innovative solutions. Because I will tell you, one of my greatest worries is even if America has the best chips, the best models, the most data centers, but doesn't have an intentional plan to manage this transition and falls into a period of very high unemployment, we will lose the AI race because that will be too destabilizing.
What's your reaction, though, to what New York Governor Kathy Hochul is doing in terms of the moratorium? Because this potentially can slow down how quickly the U.S. can advance in the AI space.
Right. So I think this is a perfect example of what we're trying to do, which is to say Americans are worried, right? They're worried about when the average American hears AI, what they hear is, I'm going to lose my job, my electricity prices are going up, my kids won't have a job, I've just spent money for college. Those are real, legitimate, valid anxieties, and we have to find solutions to address them. So while I don't think, like, no one is happier than the president of China that we are slowing down data center construction. That being said, it's not okay if people's electricity bills are going up, or people's water bills are going up, or people's economic security is going down because of, AI companies. So we must find a way to do both, steam ahead with data centers and technology, and make sure, these companies pay their fair share so other folks' electricity bills don't go up, and people have, frankly, a job, a meaningful job in an AI economy.
You recently wrote an opinion piece where you said what we need is a new grand bargain between the public and private sectors. When it comes to AI, what do you make of the Trump administration looking at taking equity stakes, another version of industrial policy that some of which started under the Biden administration?
Yes. So listen, I do think it is a good idea for the American people and the American government to share in the extreme profit and commercial benefit of AI. That being said, I personally have always been a bit of a critic on the government taking big equity shares of companies. I'm still a believer in capitalism, however many flaws it has right now in the way it's playing out in America. And I just, the government owning the means of production is, the definition of socialism. I think it's creates a lot of potential for corruption. So I think the intention is a good intention. Personally, I just get very nervous if we're stepping down a path of like a state-owned enterprise, et cetera. So I'd like to find another way.
How do you balance the idea of trying to create some sort of pact with the U.S. Worker, with the U.S. average citizen, while also maintaining a U.S. edge versus China, right? I mean, do you want to sort of create this sense that there is isolation between the two stacks? And I just wonder what the ultimate goal is, what the approach you're hearing from some of the folks you're speaking with.
I think if you talk to the tech companies in AI, many of whom are partners with us and Raise Us, they feel that they're in a global arms race to, get ahead of each other and also get ahead of China and other technologies. And I understand that. But I will say this. If we as a nation put our blinders on, and if every company just moves forward at pace to implement AI, to increase profits without a people strategy. And if we wake up in a couple of years with millions or tens of millions of Americans put out of work because of AI, we will lose the global AI race because there will be massive regulatory backlash. It will be massively destabilizing to our economy. It'll be recessionary. It'll be massively destabilizing for our politics. So what I'm trying to say to business leaders, to governors, to Congress, to everyone in America is let's get together and find solutions. Let us be intentional about how we transition to an AI economy, because quite frankly, every American deserves to see themselves productive and having a good job in that economy. And until we convince the people of America that there's a good future for them in an AI economy, you're going to continue to see what you just asked me about, moratoriums on data centers, other kinds of uprising, and that's bad for America. That's bad for everyone in America.
No doubt that debate is going to continue. We look forward to covering it with you. The former U.S. Commerce Secretary, Gina Raimondo there. Madam Secretary, thank you. Unfortunately, that debate, at least for the short term, has been hijacked by the political cycle, with the midterms very much top of mind.
Yeah, and a real question of how much you prioritize trying to win in the race versus understanding how to create a more sustainable path going forward. And you feel this tension, frankly, from some of the earnings and from some of the CEOs that are talking about retraining people. Yes, you have seen cannibalization from certain units, but they've retrained people to go elsewhere. So you're hearing this from the executives as well.
That wraps up earnings season on Wall Street. Take the rest of the summer off. Right? No?
All right, ciao.
No? Okay.
World Cup.
Kevin Walsh coming up in about an hour from now. Look out for that full coverage right here on Bloomberg TV. Coming up tomorrow, fantastic lineup of guests, including the United Airlines CEO, Scott Kirby, from New York City this morning. Good morning to you all. This was Bloomberg Surveillance.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The term for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
Back to within 1% of all-time highs. 30 minutes to go until the start of your equity trade. I'm Danny Berger.
And why would you be surprised, Danny? I'm Bonnie Quinn. Open interest starts right now.
Coming up on the show, Wall Street's winning streak continues. Morgan Stanley delivers another record quarter.
Tech stocks advance as ASML offers fresh proof the AI boom is still going strong.
And we've got yet another tame inflation reading. Producer prices cool again as Fed Chair Warsh returns to Capitol Hill.
All right, let's take a look at some of those stocks to watch. Just mentioned it, ASML driving broader tech stocks higher after an earnings beat and raise. It also plans to boost production to meet demand. It essentially gave us an outlook right as far as 2028, Danny.
So that's driving tech stocks. And to everybody else, congratulations, you survived all of the bank earnings. You did it, and it was rounded out by Morgan Stanley this morning. They reported record stock trading revenue alongside all the other big banks. They say that the deal-making pipelines are full. We also heard from asset manager BlackRock. Total assets are now above $15 trillion. For the first time, as industry-wide earnings top estimates, the animal spirits and financials are alive and well, Vanya.
Well, let's get more on that, Danny. Indeed, from Bloomberg Intelligence financials analyst Neil Sipes. Neil, Morgan Stanley, the final one, bringing us to a close, really, for this earnings season, at least for the big brokerages. What about this $148 billion in net new assets in wealth management? What did they do to attract all of that money?
Yeah, so that's a meaningful number. And I think especially when we look at Morgan Stanley going after all of the larger banks yesterday, the wealth management franchise is the bread and butter of Morgan Stanley. They've been building that out for, over a decade now. And I think you're seeing some of the fruits of that sort of integrated wealth model that's attached to the institutional franchise, the capital markets unit that has been producing the eye-popping numbers that we've seen so far this earnings season. And when you look at that $148 billion in net new assets, that's about 8% organic growth, so that's pretty good within the wealth complex. But interestingly, this quarter, and something that people have been focused on is, with these sizable private companies coming public, there's a lot of wealth tied up in that with the employees there. And so about half of those flows actually came from IPOs in the second quarter, presumably a lot of that from SpaceX. And so with more mega IPOs on the horizon, whether it's in the second half or pushes into 27, it seems like that sort of flywheel of institutional and wealth can sort of propel this franchise.
It's remarkable to look at the equity trading. Also based off that, the results of having SpaceX come in, it's a perfect storm because not only that, just the size of SpaceX caused a lot of managers to rebalance, which creates more equity market volatility. Equity market volatility already alive and well because of AI. Those specific conditions, is that repeatable or even beatable for these big banks?
Yeah, I think that's where we stand today is the question of, okay, is this repeatable or is this a one-off quarter? I think that remains to be seen. I mean, there's nothing on the near-term horizon that suggests markets just shut off and turn dim. But that is sort of the idea around the trading businesses and why analysts and investors tend to assign lower multiples to that revenue is because, okay, the second quarter was incredible. We had multi-billion-dollar beats in numbers that we haven't seen either ever or in a decade plus for the equities franchise. So what does the second half bring? What we can see on the investment bank side is, pipelines are full. Goldman Sachs posted the best investment banking fee quarter since 2021, which was a record when they reported yesterday. But they also said the banking backlog is at a 5-year high and increased sequentially. So despite all the conversion, despite all the fees and IPOs that came through, the second half looks potentially even better.
And Morgan Stanley shares are down now, but we saw the same with Goldman and JP Morgan, that they maybe wobbled in the pre-market and ended up, at least in the case of Goldman, much higher. It wasn't the same for Citi. And I wonder if there's some read-through between both Morgan Stanley and Citi. Morgan Stanley reported higher expenses than expected. And Citi especially is talking about this idea that they're going to lay off more people and make more investments into their business. And that's going to cost more. Is that enough to spook this market, just hearing of higher expenses despite other parts of the business being extremely strong?
Yeah, and I think that's the tough position where you are today, where I think a lot of that capital markets windfall that we're talking about today and sort of expecting in the second half, some of that may sort of fund the investments going forward, which of course brings into question operating leverage and how much that actually flows into earnings. So, obviously Citigroup has a longer-term transformation that they're undergoing right now, whereas for some of those capital markets-oriented franchises, I mean, you look at Goldman Sachs, you look at Morgan Stanley today, I mean, significant compensation ratio relief. So effectively, the revenue windfall from the capital markets business that's firing is flowing to earnings, and that's what you typically want to see from an investor base. Obviously, lots of ideas swirling around AI. Most of them have framed it as a productivity increase and sort of maybe absorbed through hiring rather than slashing heads and replacing humans with robots. That doesn't seem the base case today.
At least if they are, they don't want to talk about it because it's bad PR. Neil, thank you so much for joining. Really great to have you on. Neil Sipes of Bloomberg Intelligence. Elsewhere in this market, tech stocks are leading the broader market higher today. ASML, which is key in the AI pipeline, reporting an earnings beat and raised its forecast. Bloomberg Tech's Ed Ludlow joins us in San Francisco. And Ed, maybe today's a good case study for SK Hynix of how it helps to have ADRs trading, because the ADRs of ASML are doing extremely well in the pre-market too. Some of these companies, even when they beat earnings, it's been disappointment. Samsung among them. Just how strong were ASML that despite a 75% rally year to date, we can still get a nudge higher?
And they talk about customers, both on the logic side, compute and memory, placing longer term agreements for the latest chip making equipment, but also they're servicing existing customers. The installed base is upgrading its technology, it's servicing its technology. Why did SK Hynix sell the ADRs? In part, they're going to buy ASML machines. So that's a big part of it. I would say look at the sell side summary. The analysts are very focused on how big a signal ASML's capital expenditure growth is, its commitment to improve capacity or boost capacity. But yeah, that certainly would seem to have cleared a high bar in the context of this year's performance.
Ed, what do you think about the Reuters report that Stripe and Advent are teaming up to buy PayPal? I mean, there's a lot of detail in this report, and PayPal is up 18%, so there's something going on out there.
I've been thinking about it a lot, Vonnie. I try to think at this time in the morning. I mean, we reported in February, right, that Stripe had expressed interest in part or all of PayPal. $60.50 a share in what's really interesting, by the way, in the context of deals, like Stripe, as Reuters reported, coming with private equity in Advent and saying, this is the premium, 28% to Tuesday's closing price, with no intention of breaking it up. And, a lot of people have seen logic in the idea for Stripe. Stripe is a juggernaut, but PayPal just has the consumer wallet. So it instantly gives you access to a different market and makes Stripe a more holistic financial services platform. Merchant, peer-to-peer through Venmo, if they go ahead with this, right through to checkout. So it's an interesting one. I think we wait for a response, right, from PayPal's board. They have a new CEO at PayPal. They're trying to cut costs. What's really interesting, again, the analysts look at this and say, it's probably a sign that PayPal shares have been a little bit undervalued, and that, whether this goes through or not, there's a lot of opportunity in future for PayPal.
And you'd have to wonder about regulatory concerns as well. I'm sure we'll be revisiting this soon. Ed, thank you so much. That is Bloomberg Tech's Ed Ludlow. We also have our eye on the healthcare sector this morning. Johnson & Johnson shares dipping just a little bit after the company reported revenue for its medtech segment that fell short of expectations. The firm also posting mixed sales for its drugs. Joining us with more is Bloomberg's Madison Muller. What's the read across, Madison? Is this purely a J&J story? Is it a consumer story? Why the maybe slight underperformance?
Yeah, thank you for having me on. I mean, J&J is interesting because it is a really diversified company. The company has both drugs, they also have med tech devices, they make surgical tools, and typically that can be a boon for them. But when one of the units misses, like we saw today, came in a little bit below expectations on the med tech side, that can hurt their shares and hurt the sentiment among investors. So one of the reasons that their med tech business is coming in a bit below expectations is because of this company Abiomed that they acquired, and they make devices like heart pumps and things like that, and there have been some recalls there. There was also a recent study that didn't do as well as people had hoped, and that sort of hurt demand as well. So what we're seeing right now is pretty isolated to J&J, but J&J is typically one of the first pharmaceutical companies to report earnings, and so it can be a little bit of a bellwether for the rest of the sector, although we as of right now, it seems like this is maybe a bit isolated to a J&J situation.
We did see some maybe of the smaller healthcare players report earnings. Yesterday, Madison, the whole entire sector took a slump after HCA reported earnings, and they're talking about people losing their access to insurance via Obamacare. What exactly is happening there?
Yeah, so there were some changes and some shifting payment trends earlier this year, and that prompted millions of people to drop coverage this year. There are even more changes looming with some new eligibility rules for Medicaid taking effect next year. And so that's something that could also affect this sector, as we're seeing that could have come into play a bit with J&J as people potentially delay surgical procedures as they're unable to afford them. So that's something to definitely continue watching in this sector over the next year or so.
All right, Madison, thank you very much. Bloomberg's Madison Muller, the latest on healthcare. A check on your equity market this morning. We got fuel from yesterday's CPI report that put us within striking distance, less than 1% away from all-time highs. We gained this morning. It's being led by tech, up 0.5% for the NASDAQ versus the S&P's 0.25% gain, thanks to strong earnings out of the Netherlands, ASML, helping to carry us further. 10-year yields, those continue to come in. We saw a huge rally yesterday after CPI that was somewhat muted post-testimony from Kevin Warsh when he continues the Fed chair to talk about commitment to taming inflation. Brent crude still higher, though under $86 a barrel, Vani.
Let's get a look at some individual movers on our radar now, Danny. BNY Mellon profit beating estimates as revenue hit a record due to higher fees.
Meanwhile, some other bank earnings. PNC topped second quarter profit estimates. Higher net interest income and fee revenue helped offset a rise in credit costs.
Intel shares higher after ASML said that Intel had begun to use its most advanced machine for chip production, up more than 2% now.
Coming up, we talk more about inflation, another key gauge coming in tamer ahead of Fed Chair Warsh's Senate testimony. We're going to take a look at PPI numbers. That's coming up next. This is Bloomberg Open Interest.
We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Now to high interest now, a look at what's making headlines around the world. The US launched more airstrikes on Iran today, with President Trump pledging to intensify the bombardment until Tehran stops attacking ships in the Strait of Hormuz and agrees to open the waterway. Meanwhile, Iran insists the strait will remain closed until American attacks and the naval blockade end. The House has passed the Sunshine Protection Act, which would make daylight savings time permanent and end the twice-yearly clock changes. The bill passed 308 to 117, now heads to the Senate. Supporters cite brighter evenings and safety benefits, while critics say the permanent standard time is healthier. Over 400 CLO deals could see ratings upgrades after Fitch Ratings and Moody's proposed methodology changes. Now, the firms say they're updating outdated assumptions. Critics, though, warn the changes could revive pre-2008 concerns about ratings competition, while supporters say they better reflect how CLOs have performed. Danny.
Let's get more on the inflation data that was out this morning. Producer prices rose less than expected in June, suggesting the fallout from the Iran war remains somewhat contained. It also comes alongside Fed Chair Kevin Warsh returning to Capitol Hill today. Joining us now is StartupPal of Bloomberg Economics. 2 days in a row, softer readings when it comes to inflation. How much comfort can you take in these figures?
Well, it's at least favorable for the June PCE reading. That's really what I'm looking at the PPI report for. We get a lot of the inputs to the PCE from today's PPI report. And what we really saw is a major downside surprise in portfolio management fees. That's one of the major swing factors every month that goes into the core PCE, and it matters a lot for fine-tuning that PCE reading. Also, a lot of medical care services that feed from the PPI into the PCE came in pretty tame. One factor that is nudging up core PPI services that caught my attention was the margins charged by fuel retailers, right? Of course, you have the cost of fuel itself, but the margin that is collected by fuel retailers is an indication of the value of the service that's being provided by those retailers to firms, and so that counts as a separate category. About half of the monthly increase in core PPI services is that margin being collected by retailers. And now what that matters is that the president has been really attentive to gasoline prices, because gasoline prices have not come down from where we saw commensurate with peak oil prices. That margin is creating a buffer. It's creating a little bit of a dislocation between what we see in retail fuel prices and global energy prices. And so the volatility that we're seeing in global energy prices is being buffered. It's being a little bit dislocated from what we're seeing at the retail level. And so just as we're seeing an uptick in global energy prices over the last couple of days with escalation in the Middle East, we probably will not see a commensurate increase, because that margin is creating a buffer. It's creating a little bit of a loose
Why not, though?
joint.
I mean, the margin goes up when the prices go up. So 2 questions. A, are we going to see this become a problem, or is it just too small in the PPI to, rear its head? And B, could the president go after the retailers as opposed to big oil?
It's interesting. So that margin widens when you have increased volatility and uncertainty in the outlook. And so while we have seen a little bit of additional escalation over the last several days, I'll say even major escalation over the last several days, even global energy prices have not risen in line with what we would expect with, let's say, the extent of the bombing campaign. So even global energy prices are not as reactive. That margin is not going to be widening as much as, let's say, we saw in March and April, given the fact that everybody is more fine-tuning their expectations for the outcome of the war and ultimately the flow of energy through the strait.
So we also had Kevin Warsh speak yesterday. The data originally led us to our biggest decline in 2-year yields since May. 10-year yields, they somewhat cap some of that decline. They still decline after Kevin Warsh basically says CPI data doesn't mean that we have reached mission accomplished. What do you make of that? Because he's someone that has been more reserved in commenting off data directly, yet he gave us that nugget of information yesterday.
Yeah, so I think that Kevin Warsh has a few different jobs that he needs to accomplish in his 2 days of testimony. First, yesterday before the House Financial Services Committee, and today before the Senate Banking Committee. That first job is that he has to at least assert his independence from the administration. He has to appear to be willing to take on a president who has been advocating for lower interest rates. By asserting his independence, he's going to sound incrementally more hawkish. The second item, and it's related, is that by being a little bit incrementally more hawkish, he gets to talk down the long end of the curve, which is really what matters both for the federal government and ultimately for consumers who a lot of their financing costs are tied to rates further out the curve, not the Fed's policy rate. And that's really what I think he was trying to do. In addition to buying a little bit of time, the CPI buys him some time to build a coalition on the FOMC.
Well, he said that would be his ideal scenario, right? Bring down longer end rates, and that would help the housing market as well, which is really the only way the Fed can do that. Stuart, thank you so much. Stuart Paul of Bloomberg Economics. Coming up, Victoria Fernandez talks about the signs she's watching for a peak in this bull market. This is Bloomberg Open Interest.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Strategists looking for signs that the bull rally is near the top. Crossmark's Victoria Fernandez says if profit margins are peaking, we would anticipate the labor market to begin to show cracks 6 to 12 months out. Keep an eye on consumption if earnings start to disappoint lofty expectations. Let's bring in Victoria. Victoria Fernandez, Crossmark Chief Market Strategist. And Victoria, you put it really well. Expectations are incredibly high, something like an upgrade of 20% on earnings year over year. Do you think that bar, is it troubling to you, or is this one that you think corporate America can easily meet?
It's troubling in the sense that we don't know how long we're going to be able to meet these types of expectations. So can we meet it this quarter? Probably yes. You know, we have really strong profit margins. Revenue growth is strong. So it seems like we would be able to meet the numbers that are out there. The concern is this the peak? Is this as good as it gets for us? And it's downhill from here. And if so, then I think we're setting ourselves up for some disappointment. We'll have to see the market start to consolidate or pull back if earnings can't continue the levels that we're expecting.
Victoria, you say a market top is typically associated with, financial underperforming, credit spreads widening, money leaving the market, right? Credit spreads are not widening and financials didn't underperform. So is that proof enough that we haven't hit peak yet?
Well, at least it tells us that for right now, the market is pretty confident and we have these strong tailwinds. So you're right. When we look at credit spreads are about where they were a year ago. They've tightened in from earlier this year. So that's a support for the economy. We actually have some decent liquidity in the market right now. That's supportive of the economy. And you're right. When we look at money in this market, at a market top, money tends to leave and go to the sidelines. We're not seeing that. The conversation, as you guys know, over the last few weeks has been all about the rotation. So people are still wanting to be invested. They're still putting money to work. This tells us the tailwinds are there for now. But again, it's looking forward over the next few quarters. Are we going to continue to see that? Or do investors start to get really concerned that the profit margins are not going to stay where they are?
I was listening on Surveillance. They had on with them the Wells Fargo head of equity capital markets, and she made a really interesting point that one of the risks for year ends is just the fact that this year has been so strong. And given all the volatility and uncertainty, maybe you just have more people taking profits and less willing to participate in this market. Is that a risk, Victoria?
It is a risk, Danny, and I don't think that's necessarily a bad thing. I mean, we tell our clients all the time, when we've made, really good profits on a certain name, we feel like it's gotten maybe a little bit overbought. There's nothing wrong taking a bow, trimming some positions, taking that money and putting it to work somewhere else. And I think we could see people start to do that, especially as we get more and more concerned around CapEx. Obviously, IBM yesterday made a lot of people concerned around, are we going to see that CapEx? I think the phrase they used was reprioritization, going more to hardware than to software. We could start to see some profit taking, and that would be supportive again of the rotation as long as people see positive earnings and profit growth going forward.
All right, Victoria, you're going to stick around with us through the opening bell, Victoria Fernandez, as stocks rally. Again, just minutes to go until your cash trade.
Being called an ideological lunatic or a bunch of left-wing nut jobs?
I've been called worse things than that.
You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. When you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these. Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise ahead or Gattaca?
Maybe somewhere in the middle.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Seconds until we start your trading day. This is Bloomberg Open Interest. I'm Danny Berger, and it might not feel like it, but we're not too far away from all-time highs. We just need to gain less than 1% to get there. We're up 0.25%, not quite there at this moment. The Nasdaq outperforming. That is up 0.5%. Some good earnings in the Netherlands for ASML, helping to revive some of the AI trade, though some of the chip stocks are selling off again. The Dow, that is up 0.2%. Down at the New York Stock Exchange, we have the hosting committee for the New York, New Jersey FIFA World Cup tournament. Do not try to contact me at 3 p.m. I will be rooting on England. Don't give me your bullish predictions on Argentina. I don't want to hear it until after that game is over. Okay, maybe more importantly, Mike, I'm just going to ask you if you can come in and just zoom in on these adorable faces. I'm going to step out. You don't want to see me. You want to see these adorable little doggos down at the Nasdaq. This is the North Shore Animal League America. They are apparently the largest no-kill rescue shelter in all the United States, and that is important. And I don't know why they're at the Nasdaq, but I'm so happy they are because it's so cute. I love it. Okay, back to these markets. ASML, again, that's driving some of this tech trade higher. It's up by nearly 2% in the U.S. trade for their ADRs, and earnings beat and raised. It also plans to boost production to meet demand. Again, the chip makers selling off, Lonnie, this morning. SanDisk down 3%. It might just be because, I don't know, they had a good day yesterday, and it's a ping-pong narrative, and they move not necessarily on any news these days.
Yeah, I mean, SK Hynix itself, the ADRs were up 27% yesterday, Danny, so I think there's a lot of churn going on in this market. Meanwhile, Morgan Stanley reporting record stock trading revenue and a huge inflow of assets for its wealth management business. BlackRock total assets are above $15 trillion for the first time as industry-wide earnings top estimates.
Let's bring in Crossmark Chief Market Strategist Victoria Fernandez. And Victoria, let's start on those bank earnings. Incredibly strong. The reaction wasn't even across the board, but for most of them, huge gains like Goldman Sachs posting in not just record trading when it came to their equities business, but also its best day in terms of the trading of the stock itself since we had Liberation Day. What do you take away from these bank earnings? Is it something to give you cheer, or is it something that looks less repeatable, just given SpaceX's IPO and the market volatility they were able to capitalize off of?
Well, we do know, Danny, that the IPOs gave a lot of lift to them, especially when you look at Morgan Stanley and at Goldman. I think the numbers for Morgan Stanley was $148 billion in new assets coming in that were tied to the SpaceX IPO. So I'm not sure we can repeat with those same types of numbers, but I do think it supports the idea that financials are doing better. They're in that uptrend. They're continuing to produce new highs. We had 50% of the banks in the sector yesterday in the S&P finance sector actually hit 3-month highs. So there is a trend there, and I think it's an area we're investing in, and I think it's an area that you can look at going forward to maybe rotate some of those funds out of tech into the financials for the coming months.
It's interesting though, Victoria, isn't it, that at a time when we've seen record volumes, we are now seeing actually pretty low volume. Have people started to step away from their desks for the rest of the summer, or what exactly is going on?
Maybe so. Maybe they're all going to the game today like Danny wants to do, right? I don't know. Maybe World Cup is getting people moving around. And it is the end of the summer. You do start to see some thinning and trading as we come, and you start to see seasonalities change as you go into the end of July and the beginning of August. So there is an element of that that's coming to fruition here. But I also think you're looking at new escalation in the U.S.-Iran war. You're looking at an earnings season, and so people might be sitting a little bit here and waiting to make their moves until they get earnings numbers or until they get better clarity as what things are going to look like in terms of energy and commodities.
You've also noted, Victoria, that much of this earnings season rests on the shoulders of the consumer. We haven't gone full force into consumer earnings yet. We maybe got a sneak from Pepsi last week, and it wasn't fantastic. I wonder, is that very specific to consumer staples and discretionary, or is it enough to upset this overall equity market, just given at the moment gains have been incredibly narrow surrounding AI-related companies?
Yeah, I don't think it's just the consumer sector that we have to worry about because it's a much broader issue. The concern around the consumer is going to come from the fact that if we do see profit margins start to weaken, if we do see layoffs start to pick up, then that's going to affect consumers in all of their spending, right? Not just that discretionary spending, but across the board. So I do think consumers right now are supporting a lot of what we're seeing in the economy. Obviously, they've had boost from the One Big Beautiful Bill, from tax refunds. They've been spending down their savings, but that can't continue to go on for very long. So we have to be mindful of what it looks like, especially when consumption is growing faster than incomes. And obviously, World Cup and Prime Day probably helped those numbers over the last few weeks. I can say I was part of the Prime Day buying frenzy that there was, but I do think going forward, we might see that pull back, and that's going to be a concern across the board.
Victoria, what was the fallout from the SpaceX IPO? Will we see Anthropic and OpenAI delay their IPOs because of this? Or, I mean, are conditions so good that why would you delay?
You know, Lonnie, it's true. We have seen, I think, already some narrative around those getting pushed further out. We were expecting them to be, I think, before September, and now it looks maybe they might be later in the year or even going into 2027. I do think there might be a little bit of hesitancy, and some of that related to cost of capital that we're seeing, yields moving higher, more concern on the geopolitical side. So perhaps there's some other reasons that are feeding into having a delay, but I would expect them to come to market over the next 6 months or so, and I would expect them to be oversubscribed, just like we've seen on SpaceX.
How is that still the case, Victoria, with just the amount of supply that's come to market, be it SpaceX, some of these other IPOs, a cross-listing, the biggest ever from a foreign company in the way of SK Hynix? I know a really big bullish thesis for not just the equity market, but credit markets too. It's just there's a lot of money on the sidelines that needs to get put to work. Is there a level, or is it just so far away at which there's enough supply that starts to tip that supply-demand balance?
Look, demand is there. I mean, it doesn't matter, it seems like, what's coming to market. The demand is there and it's soaking it up. Even if you see it in the credit markets, like you mentioned, we've seen a lot of the hyperscalers come to the credit markets. Those are oversubscribed. We see it in the SpaceX IPO and then SK Hynix, like you mentioned. There does not seem to be a lack of demand from investors that are wanting to put money to work. And I know there was a lot of discussion around maybe that's part of the rotation trade that we saw, people getting money to have kind of arrows in their quiver for these elements that are coming into the market. But it seems like, you know, investors are ready to put money to work in these areas. They see long-term growth potential there, and they're not worried about balance sheets as of yet. That could become an issue further on as we see free cash flow continue to decline in some of these big tech names. But for right now, investors are game and ready to go.
Victoria, so wonderful to have you on. Thank you so much for joining. That's Victoria Fernandez of Crossmark. About 8 minutes into your trading day, let's get a check on your equity markets. And again, we rise higher. We need to get to, I think it's 76.09 or thereabouts was the last record. So we need to surpass that in order to hit another record. We're not too far away. We're gaining about 0.5% so far this morning. What is leading us there? It is Mag 7 and the big cap tech. Apple, Amazon, Microsoft, Broadcom, Tesla, Alphabet, all leading the charge. Bank stocks continue to rally with JP Morgan and Bank of America. One of the interesting things, Vonnie and I were talking about this, the fact that chip makers are declining today and a lot of the memory stocks. It feels like this trade that you can't have both the Mag 7 and the chip makers gaining in the same day. One of them is up, the other one's going to be down, and that's still the case today with Micron and SanDisk leading the declines in terms of points moved to the S&P. A really bad day for healthcare too. Eli Lilly is down. Elevance Health is down because J&J had pretty poor earnings. I don't see J&J on the biggest decliners list, interestingly enough, but it is bringing down all of healthcare with it. And if you look at the sectors, healthcare is the worst performing. That safety stock index, or now it's energy actually, it was healthcare just a moment ago, but both of them are pretty evenly tied, down about 1/3 of 1%. And then at the top, you have consumer discretionary, communication services with the big Mag 7. And again, financials having a very strong day yet again, Vonnie.
Yeah, we didn't get quite the bump from the PPI that we got from the CPI, that's for sure, Danny.
Yep, already priced in.
Yeah, exactly. Coming up, Goldman's Global co-head of Capital Solutions shares his outlook following a blockbuster quarter for the bank. This is Bloomberg Open Interest.
my old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years, and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start on the third floor or the lobby. You actually have to start in the basement.
The global economic playbook is being rewritten, and the levers of power are moving in real time.
To see where the world is headed, you have to look where the action is.
I'm Haslinda Amin in Singapore.
I'm Menika Doshi in Mumbai.
Welcome to Emerging the New Economy podcast.
Each month, we dive deep into how the world's most exciting rising economies are shaping the global future.
Join the conversation. Subscribe to Emerging on your favorite podcast platform today.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Let's get a little check on markets now. As you can see, we are higher on all of the major averages, but not by as much as we were earlier. That PPI boost not holding, right? So we got the CPI yesterday and markets really rallied, and today just a little bit more trepidation. I would say as well the ASML call is about to start, and so investors have actually erased gains in ASML. They had been higher earlier after we got basically a 3-year outlook for those chips, but as you can see, all of the major averages are higher. Time now for top calls. Some of the analyst action in focus this morning. First up, Oppenheimer is cutting IBM in the wake of its negative pre-announcement that spurred an historic sell-off in the stock. The firm says the miss makes it harder for IBM to hit its full-year outlook or deliver on double-digit growth. Still higher, though. Next up, Allstate is getting downgraded at UBS. The firm says Allstate's underwriting margins are likely to deteriorate over the next 6 months, and that would lead to declining earnings and a higher risk of earnings misses. And finally, Raymond James downgrading Checkpoint Software, saying the cybersecurity company's comeback is taking longer than expected. The firm points to slowing demand and a weak second half sales pipeline. And that's interesting because the cybersecurity firms actually had a nice little bump off the IBM CEO's comments yesterday, Danny.
Let's get back to bank earnings, though. And Goldman Sachs delivered a blockbuster second quarter with debt underwriting hitting a fresh record. Equity underwriting more than doubled. I spoke with Mahesh Sairedi, who runs the business that oversees all of that. He is global co-head of the Capital Solutions Group at Goldman Sachs. I asked him about those results.
If you take a step back and look at what's driving this, right? There's 3 different themes that are driving this. The first one really is what's happening with AI and CapEx globally, right? It's again, the numbers keep going up every day, but let's call it like 7 to 9 trillion of CapEx that has to happen into AI over the next 3 to 5 years. Theme number 1. Second theme is what's happening with our merger franchise. You look at M&A activity, year to date, we are already at 3 trillion, probably end up with another record in terms of total M&A volume. And then the third thing is the private capital that keeps coming into the market, right? So we have about 14 to 15 trillion of AUM sitting with the private capital. So if you combine all of this, it kind of plays right into our debt and equity businesses because all these things need capital, and we are sitting right in the middle of all of this. So to your specific question, I do feel that the momentum that we have, the tailwinds we have from all of these, I think are going to keep markets pretty active for the second half for sure.
Kind of a new baseline, would you say? This is the new normal, just considering all the trends you're talking about?
Now, obviously, as with everything, right, it will never be a straight line, right? So as we're just talking about, the markets always will have some volatility, right? So we will see these phases, but if I take like a longer horizon and look at kind of these themes that are there, I think these themes are here to persist. I don't think these themes are going to go away anytime soon. So I would think of this as like we're in a market where everything is bigger and there's going to be more activity.
Let's pick through some of those themes, and starting with AI, because the amount of supply that has come to market for AI has been quite remarkable, and you've kind of been at the forefront of all of them, whether it be SpaceX, whether it be SK Hynix. On the debt side, we've also had huge issuings too. I think Amazon alone has offered about $100 billion so far this year in debt markets. What happens when that much supply comes to market and it continues at pace, considering you have a lot of the same capital competing for it?
Yeah, so let's look at some of the data, right? Like, this year to date, there's already about 1.4 trillion in IG issuance in the US. 20% of that is something related to AI. But I think the more important thing, Danny, there is this year alone, there's 10 deals that got done, which are 20 plus billion. And to contextualize that, over the last 7 years, that number is about 11. So we are seeing a lot more deals which are much larger in size. And even with all of that, now again, obviously spreads widened out a little bit over the past week especially, right? Like the IG universe overall still is largely unchanged, whereas the hyperscaler spreads are widening probably at around 30 basis points over the last week. So I think the supply absorption capacity is there. I think it's just a question of like, what is the pricing at which it gets absorbed? That might change depending on kind of where we are in the cycle and asset allocation. But big picture though, we feel there is a lot of capital that's available to kind of fund these things. So, but we will have gyrations in the market. That's pretty normal for any.
How do you distinguish between a gyration and what we're seeing now with the spreads widening versus saying, okay, this is a market that has become more discerning. It's not just going to buy every debt. It's not going to buy every single equity offering that comes to market. Is this a market that's getting more selective?
Yeah, I would say there's a stat that we spend a lot of time looking at, which is kind of the single name equity wall versus index wall. So if you look at kind of like, so index is kind of a representation of what the market thinks about broadly, how is the economy going to evolve. So index wall is actually as low as it's been. Whereas single name wall is the difference between single name and index wall is as high it's been. So that goes exactly to the point that you're making, which is markets are very discerning about each and every name. Like pricing a single name actually is a much more of a premium right now because we're in a very uncertain world. We're in a world where the impact of AI and how it's going to evolve is very uncertain. So there is going to be name by name analysis that has to get done.
Do you think that makes more companies who have yet to come to market? I'm thinking of an OpenAI. I know there's some rumors about Samsung doing an ADR. They've since denied that. But do you think it makes companies more hesitant to come to market than maybe they were in the first half, just given the volatility that we've seen erupt?
I think what we really find is like the companies which have a good underlying story, especially again, anything around AI theme, I think there is still so much appetite from the market that I don't think this is going to change anything. Now, again, the timing might be different. If some macro thing changes, that could kind of postpone some of the things. But bigger picture, though, I do think this momentum that's there in the AI theme, that would mean more of the companies will be tapping both equity and debt markets.
Well, let's go to private capital, where I know you spent a large chunk of your time as well.
Of course.
Private capital has seen this backlog. Your colleague David Solomon was talking about it on the earnings call, basically saying that yes, M&A markets are really robust, but we have seen sponsor activity lag below its 10-year averages. What brings back private capital and private equity specifically? Yeah, so if you kind of, again, private capital itself obviously is a much larger space. If you break it down between private equity and private credit, we can come back to private credit, but private equity is really where there's been a little bit of a jam, right? If you look at the numbers again, there is about 4 trillion of assets that have to kind of get disposed of by private equity. But the stat that I'm very focused on is the average time it takes for an asset to get disposed. And that's at 7 years right now. And that's an all-time high, right? So, and the other stat that we spend a lot of time thinking about is the return of capital, which is what, LPs are very focused on. And that's kind of been around the 10 to 12% range over the last 3 years.
versus averages of 16 to 17. So I think there is some work to be done there. The kind of the software hiccup that has happened is not helping that too. So private equity overall, I do think will have a little bit more time before kind of it gets back to its normal run rate in terms of capital return, etc. But having said that, I think one of the things that all of us tend to do is when these trends emerge, we tend to kind of, go in two different directions of like, oh, is this the end of, what's happening with private equity? And in a world where if you look at the overall equity capitalization, it's about 150 trillion now, globally, right? So that needs private capital. So on a 3 to 5 year horizon basis, I think this backlog will get cleaned up.
But does the backlog get cleaned up by capitulation? That's something Scott Kleinman of Apollo has said. Do you think that's what these funds are going to need to do to clear it up?
I think it'll be a combination of things. Again, we are seeing that obviously in terms of like valuation discounts that companies are comfortable taking versus historical. So there will be some valuation reset for sure. I mean, some companies will obviously benefit from the AI tailwind and they'll probably perform well. And some will actually come to the public markets, but I think it's going to take some time.
That was Mahesh Saireddy of Goldman Sachs off the back of record earnings from Goldman Sachs. Coming up on the show, Palantir Chief Technology Officer joins us to discuss the future of defense technology. Right after this break, you're watching Open Interest.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersetchi in El Ola, Saudi Arabia, and this is Bloomberg. Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Let's head to the U.S. Army War College, where defense and technology leaders are gathering this week to discuss the future of America's defense industrial base. Bloomberg Washington correspondent Tyler Kendall is there with Palantir's Chief Technology Officer. Tyler.
Hey, Danny, thanks so much. As you mentioned, I'm pleased to say I'm joined now by the Chief Technology Officer of Palantir, Shyam Sankar. Shyam, it's so nice to see you here on a day where we are talking about bolstering the U.S. defense industrial base, made perhaps even more urgent by the fact that we are seeing the conflict in Iran. The Pentagon keeps asking defense tech to move faster. Can you give us a status update on what the relationship is right now between innovative companies and the Pentagon, and what hurdles still remain?
Well, I don't want to sound too Pollyannish, but I really think this team at the Pentagon has dismantled almost every hurdle that exists and has sent a clear signal that they want to hear about the remaining hurdles that people do confront. They've sent a clear message that this team should meet the urgency of the moment here. And while we can look at the conflict in Iran and look at the rate at which we're expending munitions, really this is a challenge that's grown over the last 30 or 40 years of how we've managed and thought about our defense industrial base.
I'm not sure if everyone would agree with the fact that the Pentagon has dismantled the hurdles. What about when it comes to defense spending, for example? I'm curious how you're tracking that. The Trump administration has requested $1.5 trillion, seeming to indicate that there is a big need from the administration's view to help bolster our own capabilities, including when it comes to replenishing our stockpiles.
Well, I think it's going to be very clear that we need both more of our existing exquisite weapons, and we need capital to invest in a whole new class of weapons to meet the asymmetry of the moment here. And the side that moves faster is going to win. And our exquisite weapons are amazing, but most of them we really built in the 80s. And they've been designed in a way that meets the manufacturing of the 80s. And we're starting to see enormous success with a whole new generation of weapon systems. We look at the Saronics kinetic strikes in Iran just a couple days ago. We look at the success that these new platforms are happening in conflicts in Ukraine. We need to be moving capital there. If you look at the 27 budget, there's a huge amount of resource that's made available to these autonomous systems and to AI, which really, I'd say the Pentagon has actually been one of the fastest places to adopt AI in the American economy. Given the stakes, they're existential, it's a binary win-lose. Nonetheless, they've done all of that by essentially cobbling together budgets from various line items. 27 will be the first time they put a real stake in the ground, real capital that's committed to accelerate the pace-setting projects that will drive us to an entire revolution in how we fight.
So part of this is about keeping the U.S. competitive, and we saw the other week the French government actually decide to end its relationship with Palantir, in part because of a need to bolster their own domestic capabilities. And we're seeing this play out among some other European allies. Talk about this concern about being too reliant on U.S. tech. Are you concerned at all about Palantir losing a foothold in Europe, or that this could expand to other international markets that you're part of?
The product really stands for itself. I think serious people, the Germans have looked at it, they've examined the software, they know there's no backdoors in it. There's a huge part of this that really comes down to almost an economic argument of we really want to spend our money on our own companies, and I don't begrudge them that. I think the kind of vicious, underhanded campaign of lies and rumors is probably beyond the line of what's fair there. But every country should make a decision based on what's going to give them the most amount of deterrence. And clearly the U.S. has carried the load there. We have the most experience, the most reps, the most innovation stimulus here. And I think it's going to take an entire allied Western force to really confront the challenges across the axis of authoritarianism that's clearly present and creating chaos in the world.
Well, I'll keep on the international theme, if you will, because we're seeing U.S. companies start to use Chinese open source LLMs. From your view, does this pose national security risks?
Well, I think it poses, my view is that national security is not an end unto itself. It's a means to an end. And the actual end is American prosperity. And so I think it poses a threat to American prosperity. These Chinese open source models are really the result of distillation attacks. Most of this is just stolen American IP from Frontier Labs. And I think the Frontier Labs should do more to protect that IP, and that's in their own economic interest. But I'm less worried about it in the present moment because the gravest threat to us is not homicide, it's suicide. It's an inability to turn these tokens into economic value and generate American prosperity for it. You see that with the proposed moratorium in New York on data centers. Like, turning our back on AI would be as consequential a mistake as turning our back on the atom in the 70s. And we're starting to see a burgeoning, it's just the beginning, but a burgeoning U.S. open model ecosystem forming. NVIDIA's Nemotron models are very good. I think you're going to see in the next month a slate of announcements of other American companies, non-Frontier Labs, sometimes called Neo Labs, who are putting out open weight models that companies are going to be able to cheaply fine-tune and capture their own alpha in weights they control.
In the final minute that I have you, part of the U.S.'s strategy when it comes to national security has been to have the government take equity stakes in companies that are deemed critical to national security. We know the idea has been floated when it comes to some of these frontier labs. I'm wondering what you make of this strategy. Is this the right way for the U.S. to go about it?
Well, I think it's very case dependent. I'm glad it's an option on the table. I think for some companies where they need a huge equity injection, it could make a lot of sense. For other companies, based on where they are in the mix of business they do between the commercial and government world, I'm not sure it makes as much sense. But I'm glad it's an option that's on the table. It should be a consideration.
All right, Sham Sankar, the Palantir Chief Technology Officer, thank you so much for joining us here on Bloomberg Television and Radio. This has been a conversation on the sidelines of the Defense Summit here in Pennsylvania, and I'll toss it back to you.
All right, Tyler Kendall, thank you so much. That is Tyler Kendall there with Palantir's CTO. Just want to point out that we erased all of our gains in the NASDAQ 100, but we've actually just put on a couple of points again, so we're still in the green, barely. We are much
From ABC News, I'm Chuck Sievertson. Right now in Capitol Hill, Acting Attorney General Todd Blanche will face questioning by members of the Senate Judiciary Committee, who will decide whether he gets the job permanently. They're all making opening comments. Senator Chuck Grassley is the chair.
The Senate has already judged your fitness for high office and confirmed you as the department's second in command.
The top Democrat on the committee, Illinois Senator Dick Durbin.
The Attorney General is the chief law enforcement officer of the United States of America. Since you were confirmed, the Department of Justice has literally violated dozens of court orders to advance the president's agenda.
Blanche had his opening statement, too.
In recent years, we watched the Justice Department turned against many of you and a former president, and it damaged the public's faith in justice. We are fixing that.
Questions could range from the handling of the Epstein files to the so-called anti-weaponization fund. The U.S. military says it fired missiles at Iranian missile launch and storage sites in the first daytime attack since the first 5 months and a half of the war. A new threat from President Trump today, setting a next Wednesday deadline.
We're going to knock out all their power plants. We're going to knock out all their bridges unless they get to the table and negotiate.
Iran's threatening to stop all energy exports from the region. New numbers about the cost of living this morning. The Producer Price Index, tracking prices at the wholesale level. Declining energy costs in June helped to drive down the index 0.3%, but prices were still 5.5% higher than a year ago. President Trump posts on social media that vehicle stops by immigration police cannot be suspended, as was announced by an ICE official hours ago in an email after recent deaths during traffic stops in Maine and Texas. Unclear if the stops will be paused. You're listening to ABC News.
Wireless companies in America, only one has 5 stars in every category from Consumer Reports, and that company is Pure Talk. Coverage, support, value, data. 5 stars across the board. Plus, no service contracts and no cancellation fees. Just phenomenal U.S. customer service on a crazy fast 5G network. Dial pound 250, say micro, and switch to a 5-star American wireless company that won't let you down. Pure Talk.
Ever wonder why you have insurance for your car or home, but not your digital life? Meet WebRoot Total Protection, your digital bodyguard that includes antivirus, identity protection, VPN, cloud backup, and more. With plans for individuals and families, WebRoot takes the guessing game out of cybersecurity so you can get back to living your best life online. Go to webroot.com/protect and get 60% off today. That's webroot.com/protect to get 60% off today. Live a better digital life with WebRoot, because peace of mind shouldn't be optional.
Some of the same parts of Texas devastated by flash flooding last year could get hit again today, west of San Antonio, says ABC's Jim Ryan.
Among the 59 counties covered by Governor Greg Abbott's disaster declaration is Kerr County, where more than 100 people died in the catastrophic flooding of July 4th, 2025. The current threat provides the first real-world test of warning systems, including audible sirens that have been installed throughout the Texas Hill Country in the 12 months since the disaster.
ABC's Jim Ryan in Dallas-Fort Worth. Confirmed cases of Ebola in the Democratic Republic of Congo have reached over 2,000, including over 750 deaths, says government data. Today's the second semifinal in the World Cup. Defending champs Argentina facing England this after Spain beat France. Games in Atlanta at 3 p.m. Eastern. A normal workday for tree trimmers Isaac and Andrew Reyes in Ponca City, Oklahoma, turning into a long road to recovery. A cable snapped. They both fell 45 feet to the ground. Isaac.
Both knew it was going to happen. He blew right through his bucket on the ground, and my legs absorbed all the force. And, yeah, it's pretty much the last thing we remember.
Isaac has a broken leg and 2 broken ankles. His brother Andrew has a fractured jaw and a broken nose.
It's been a blessing, shocking for sure.
blessing a lot of good people in the city.
That comment noting how friends and family set up a GoFundMe online, and a local restaurant is hosting a fundraiser. Chuck Sievertson, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they perform.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Wednesday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we're streaming live on YouTube. We are streaming live on Bloomberg.com/video. Coming up today, Fed Chairman Kevin Warsh testifies before the Senate Banking Committee. We will start and carry that Q&A when that starts later this hour. We're going to talk to Neil Sipes, Bloomberg Intelligence U.S. financial analyst, on earnings from Morgan Stanley and BlackRock. Some strong numbers again coming out of Global Wall Street. Kyle Schlief, Chief Market Strategist at BMO Wealth Management, will come on and give us her thoughts on these markets. But again, most of this Bloomberg Intelligence program will be for the Kevin Warsh testimony in front of the Senate Banking Committee. It's Scarlett Fu and Paul Sweeney live here with you. Let's start off with a Bloomberg Business Flash. We go to Alexis Christophers. Alexis.
All right, thanks a lot, Paul. And this Bloomberg Business Flash is brought to you by IBKR. For the past 3 years, Interactive Brokers' individual clients averaged 24.3% annually, beating the S&P 500. Lower costs and access to 170-plus global markets matter. Visit ibkr.com/performance. We have got an up picture here in the early going on Wall Street. All three major indexes higher across the board, with the S&P 500 up about 31 points. Dow Jones Industrial Average up 168 points, or 1/3%. NASDAQ Composite up about 0.7%, or 180 points. This is after back-to-back days of tame inflation. Many traders now betting the Federal Reserve may not have to raise interest rates possibly at all this year. We've also got crude oil on the rise once again. Brent crude actually is now down 0.1% at 84.56 a barrel, but WTI crude is up 1/3% at 79.57 a barrel. Shares of Nexstar Media Group up about 7% on news the FCC is expected to repeal a nationwide audience cap that has limited the number of TV viewing households that a single broadcaster could reach. So the deregulation is key for Nexstar's acquisition of Tegna, which would roughly reach 80% of U.S. households. Also, quick check of IBM up 1.5%, trying to make up some ground after plunging 25% yesterday after that rare earnings warning. And that is your Bloomberg Business Flash. Back to Paul and Scarlett.
In a prior life, I was banking, covering the TV radio station industry, and they had a lot of ownership restrictions loosened, so you got really big radio companies and TV companies.
Exactly.
But the last one to fall was this one, which just says you have a cap on how many you can cover around the country, and the FCC just threw that out. We've been pushing for that for like 25 years.
You missed the boat on that one, Paul.
The Telecom Act of 1996 was about 1,000 pages.
Yeah.
10 pages were for deregulating the radio industry. I made a career off of those 10 pages.
I'm sure you did. Well, they rolled that back today, or it looks like they're going to. It's not official yet.
Better. So anyway, they can close that deal. All right, so a lot going on out there. Alexis Christophers and Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. As Alexis was reporting, some green on the screen out there, but let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Avalon Purnell. Avalon, what are you looking at?
We have to start off with PayPal. That's ticker PYPL. It's currently surging about 16%, most intraday on record. And that's after Reuters reports that Stripe and a private equity firm named Advent International have made a joint offer to buy the company for about $60 per share. That deal would value the company at more than $53 billion. And analysts are definitely quite bullish about it. KeyBank saying that while a PayPal mega deal wasn't expected this year, it remains interesting and kind of unclear to see how willing the PayPal board will be to pursue the takeover offer. And also worth noting that Bloomberg Intelligence analysts write that the bid could leave room for a higher offer.
Okay, so we'll keep an eye on that one. And of course, if anything does come out of it, we will be covering it on Bloomberg Deals, which airs every Wednesday at 12 p.m., hosted by Danny Berger and myself. Just a shameless plug there. Let's move on to the second stock you're watching, Elevance Health, which is a weird name because you don't know what companies it owns.
Yes, that is ticker ELV. It is a managed care or health insurer. It's currently dropping about 8.8% most intraday since March, and that's after the insurer's full-year profit guidance boost was just a little bit lower than its second quarter beat. Jefferies analyst writing that the small beat and raise was very unlikely to satisfy the market after a recent rally in managed care stocks since the first quarter, and this is driving their peers like Humana, Molina, and Bellwether United Health lower this morning, which we will be getting United Health's results tomorrow as well. So we'll be interesting to see how that changes the sector.
Absolutely. And Elevance Health, by the way, is the owner of Anthem, along with a bunch of other brand names that you probably have heard of, like WellPoint and Amerigroup. Paul?
And Anthem is our insurance.
Yes, it is.
Right?
Yes, it is.
Full disclosure there. Okay, one more here.
Yes, ASML, ticker ASML. Those ADRs are currently edging up about 0.4 percentage point, and that's after the chip equipment firm raised its full-year guidance. Analysts say that the outlook for tools generally exceeds estimates, which should ease investor concerns about the supply constraints. Morgan Stanley specifically noting that while the company no longer reports on bookings, the company did talk about very strong order intake continuing across the first half, and also customers looking to accelerate capacity expansions, which obviously will be good news for the stock.
All right, thank you so much, Avalon Purnell. Avalon is one of our equity reporters here at Bloomberg News, and for more conversations like this, be sure to subscribe to our Stock Movers Reports, where we offer 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. It is all about the big bank earnings. Yesterday, we got a bonanza, 5 of them. Today, we get the last of the big 6 banks, and that is Morgan Stanley. BlackRock also reported as well. So let's bring in Neil Sipes. He is Bloomberg Intelligence U.S. financials analyst. And Neil, the takeaway from the big banks results yesterday was that trading revenue has gone gangbusters. And I think we got more proof of that today from Morgan Stanley.
Yeah, we sure did. And I think you've seen it across all the names that have reported so far. I think a lot of people have been using eye-popping numbers, right? I mean, beats that are in the billions of dollars in beats, not numbers we're used to seeing. We'll put it that way. And I think, again, the trading business, I think where we stand today, we've seen really strong equity markets, particularly in the second quarter where you had sort of a V-shaped recovery really at the beginning, around the Middle East tension sort of easing off of a cliff. And then you had, of course, SpaceX IPO. There's rumors of more coming either in the second half. Maybe they get pushed into 2027. So there's tailwinds there that have been driving this activity. There's themes like Asia. There's themes like AI. All of this is sort of fueling particularly equities trading. Again, when you think about the trading business, it's kind of fickle, right? So the repetitiveness of something like the second quarter that we saw, I think that's what people are asking is there more to come on the investment banking side? I think the answer is yes there, right? Because we see really strong pipelines. We see Goldman posting the best fees since 2021 and saying the pipeline's actually higher than it has been in the past 5 years, which, by the way, was 2021. So it feels like second half even better in that business.
How much can you count on the pipelines to deliver? I mean, it's stuff that's in progress but has not, been finalized or completed. So is that basically as good as it gets? Yeah,
and to be fair, the pipelines there's always optimism in the pipelines, even when things are not that great. So I think that's where we stand is you have to have the inputs to execute on that pipeline. And the biggest inputs are really the markets, broader sentiment,
makes sense,
macro conditions. All of that sort of feeds into, okay, are these deals actually going to come to market? Are capital issuers and capital providers all willing to meet at the same time? And the conditions have generally been there, aside from a couple brief moments in the past couple of years, and the expectation is for more of that to come. But you snap your fingers and markets go against you. All of that can sort of ice over for at least a couple weeks, if not longer.
When I think of Morgan Stanley, and I think a lot of investors, they want to get a sense of the private wealth business, and because it's such a big part of their business, and they're so good at it. What are they saying about that business?
Yeah, so it's it's over half of earnings now for Morgan Stanley. So it is really the driver of the franchise. Again, the headlines are generated by capital markets because it can swing so much. The through the cycle ballast is wealth management, and I think that business, again, market dependent, it's firing, right? We got margins at 30%, which is the target, organic growth at 8%. I think an interesting component here in the second quarter was the sort of windfall of flows coming from the IPOs that we saw in the second quarter. So you think about all the wealth that's tied up, within employees and early investors in something like SpaceX. Almost half of the $150 billion of flows was derived from IPOs in the quarter that Morgan Stanley was involved in. So you think about that flywheel. I mean, that's Morgan Stanley in a nutshell.
That number is so big, it's kind of hard to believe.
I never heard something like that.
$150 billion in net new assets in its wealth management business in a 3-month period. That's kind of nuts.
Yeah, I think the only one that comes to mind right off the hop is something like a BlackRock, who's producing numbers like that, who also reported this morning with also stellar results. So
now these are the dumb numbers. The BlackRock numbers are just dumb. The assets under management are what now?
15 trillion.
Trillion.
15.3. Again,
isn't that incredible?
But so much of it is in passive investments, right? I mean, it's, put it there and forget about it.
It is, but I think the story with BlackRock now is a little bit of a shift underneath the surface. So yeah, we initially think of iShares, and that's been the powerhouse for BlackRock, but increasingly the growth is coming from the higher fee buckets. Now we have active ETFs that are really taking off. You have things like private markets. So impressively, the growth at BlackRock has started to shift a little bit more and be more consistent in those non-ultra low beta type funds and into things that are more lucrative, which is obviously positive to the business. So, they did a handful of alternatives transactions in the past couple of years. Those look like they're bearing fruit. And yeah, I mean, the growth remains pretty stellar, which, by the way, the growth tends to be harder to come by once you reach 15 trillion, but they keep putting up the numbers, and I think it's getting rewarded for that.
It is just amazing.
BlackRock has 25,000 employees as of March 31st.
Yeah. And, think about it, and managing all the money. It's just one of the extraordinary stories. And we're not even talking about Blackstone. You got BlackRock, Blackstone. I mean, those two, just amazing out there. All right, Neil. You're like Mandeep Singh. The numbers he comes in with are so big.
I know. It's
like
eye-popping.
AI and asset management, investment banking. It's all the numbers are just
and
amazing.
They keep getting bigger.
They keep getting bigger. All right, Neil Sipes, thanks so much. Appreciate that. Neil covers a lot of the banks for Bloomberg Intelligence, all the asset managers and all that kind of good stuff here. Markets moving higher again today here. Let's get a sense of kind of where we go with these markets as we plow into the second half of this year. Carol Schleif, she's the Chief Market Strategist at BMO Wealth Management. Carol, what's the conversation you're having mid-year with your clients?
I think, good morning, thanks for having me. And I think a big piece of it has to do with the fact that there's a lot of continuity and a lot of stability, if you will, underneath the markets, because coming off the kinds of highs, the first half performance that we've got in most markets across the board, you'd expect those for full year numbers. But they're supported by earnings and revenues that we saw in the when the first quarter was announced, and we're coming into this quarter with really solid expectations. And the previous segment about the bank earnings, and it's a good time to be in financial services because all of that activity, the IPO activity, M&A activity, that stuff creates interest in markets and new liquidity and new capital flows.
Although we did have some bouts of volatility as well in the first half and in the second quarter. How does that set us up for how patient investors are likely to be in the second half of the year with little miniature bouts of volatility that we're probably going to get, given that this war in Iran is definitely not settled and looks like it will continue to be on and off for a while?
Yeah, it's interesting you bring that up because I had some interns run some numbers for me in the last day or two for a piece I'm writing this week, and we looked at the subsectors, and of the 25 subsectors we pulled in the S&P, all but one of them had a 10% correction in the last 12 months. Something like 14 of them had 15% or more. And so that sort of volatility means that under the surface, there's a lot of that repositioning going on, which shows up in the bank earnings because they benefit from the trading activity. But it also allows investors to be able to trim a little here. When something runs up, they trim here, they can buy here, the repositioning. And our long-term investors have us in front of them all the time explaining that volatility is something not to be feared, but it allows opportunity to be able to reposition portfolios, to keep readdressing those long-term objectives. And are we in line with where we want to go? Because it's been pretty easy to see pullbacks overall, but then also run-ups that dictate the need to take a little bit of profit.
Looks like we're getting a broadening out in this marketplace. The Russell 2000 outperforming the S&P pretty handily here. Is that kind of what you're seeing? And you think this thing has some legs here?
Yeah, definitely double. When I pulled the numbers last night, it looked like year to date, the Russell 2500, a SMID cap measure, was up almost 20% or a little over 20% year to date, while the S&P, the cap weighted S&P, is only up 10. But you're seeing that broadening, which actually in aggregate, given that you've got the duck paddling underneath the surface of individual sectors, is positive, because we've had the exact opposite with this market, where it was very narrow to begin with for years on the AI trade, and now we're seeing it broaden. And typically lasting bull markets start broad and then get narrow. So the fact that we're doing that transition and being able to do the handoff is actually pretty constructive for intermediate and longer term markets.
In the second half, we've got the midterm elections coming up, and I recognize that, you know, we're still kind of far away from it. We're mid-July. The elections come around in early November. But are you anticipating any degree of not just volatility, but positioning or, I don't know, issues or just unexpected news that could, you know, send everyone for cover because they get nervous about what kind of stuff comes up?
Yeah, it's interesting you mentioned that, because I was on the road earlier this spring with our head of government affairs, and we just co-wrote a piece this week called Politics and Portfolios. And we talk about mixing the two typically doesn't work. But one of the most interesting things in talking to clients in a variety of key markets, one of the most interesting things in this election cycle is that you've got a lot of industry backing. It's not a Democrat versus Republican, it's industry backing in terms of crypto picking candidates. They want to support AI picking candidates. They want to support it. So there's a lot more interaction in individual markets. There's also obviously a lot of controversy around AI, those who are super supportive of it, those who are pushing back against the data centers, those who are in favor of nuclear. So there's a lot to talk about, but like my co-author said, it's a lifetime between here and the midterms, and a lot can happen in 4 or 5 months.
Carol, how do you guys think about U.S. versus rest of the world these days?
I think that broadening that you're seeing also is going on in the rest of the world. We're not necessarily thrilled with a lot of the developed markets, particularly in Europe, but there's opportunity in emerging markets. They handled the constriction, if you will, of what's gone on through the Strait of Hormuz very well. You've got a lot of activity going there. We need to be careful. You've got a lot of leveraged ETFs, moving indexes there. So investors need to know what they're doing. But it's a very interesting market, and we think both technologically and from a portfolio diversification standpoint that you'll see a lot of continued activity there.
Carol, is South Korea, and you talk about the leveraged single stock ETFs, and of course I'm thinking about, oh, you know what? We need to end our conversation now because Kevin Warsh, the Fed chair, has begun the Q&A session. Carol, thank you so much for joining us. Carol Schleif, of course, Chief Market Strategist at BMO Wealth Management. Let's go now to Washington, where we are going to be listening to Kevin Warsh, the Fed chair, answer questions from the Senate Finance Committee. Paul, he spoke with the the House Financial Services Committee yesterday.
Yes.
And it was a 3-hour ordeal,
Yes,
I believe?
it was.
Okay, so this one's going to be shorter because there are fewer members. But we're looking right now at Senator Scott asking him a question. Let's listen in.
From my perspective, I think it lends itself to having more confidence in the Federal Reserve. I want to give you a minute to talk about one part of it, and then I want to move quickly to AI.
All right, let me be brief, Mr. Chairman, but you're highlighting something that's awfully important. All institutions, including the Federal Reserve, which I am so proud to lead, filled with great people.
Yeah.
On occasion, we need to bring new ideas to the fore. And after 63 months of inflation above the Fed's target, it struck me that any new leader should arrive at this organization and look to the very best minds that we could find. There's a lot of great ones at the Fed, but there's a lot of great ones that aren't even in the economics profession. And I reached out to 15 people who I have known and trusted with a diversity of views to see whether they would take the most important questions that are going to be the determinants of monetary policy and the determinants of the economy in the next 5 years and see if they could sharpen their pencils and do their best work. It's a move towards transparency and new ideas. I'll just give one example before turning it back to you. In the last couple of days, we've gotten data on the Consumer Price Index, today on the producer price index. Any central bank would be happy to have the data going in the right direction. My view is these are all imperfect measures of the state of underlying inflation. So one of the task force is going to see whether we can do better, have better data from external sources, and even better ideas as to how important organizations like the Bureau of Labor Statistics, the Bureau of Economic Affairs, might think about how they could do a better job in an evolving economy.
Thank you. We met just a few weeks ago with Dr. Phelan, who's slated to be the head of the president's economic advisors, and we talked a lot about artificial intelligence and the impact it will have on our economy, and whether or not it will destroy jobs, create jobs, and ultimately, at the end of the day, his conclusion was it'll create more jobs. Artificial intelligence has an opportunity to change how we do so many things, and much of the debate for me can be bifurcated into automation, things go away, and augmentation. People make more money because production goes up, and you've argued that perhaps there's a way for us to see a reduction in interest rates because of the increase in productivity. One of the things standing in the way of that conversation is what's happening in South Carolina, where data centers are meeting real headwinds. New York has basically banned them. We have a moratorium in parts of South Carolina because of issues like electricity bills, water use, aesthetics. So getting to the future that we're talking about, and frankly, beating China in this AI race might come down to something as important as electricity bills and water usage, which could prevent us from having a serious conversation about productivity gains. Thoughts?
Yeah, I can't think, Mr. Chairman, of a more consequential change to the U.S. and global economy in my adult lifetime than the surge of investment and the potential in around AI. That's part of the reason why one of my task forces is to focus on what's the effect of this general purpose technology on both parts of the Fed's mandate, on ensuring stable prices, but also on full employment. You gave us both parts of that.
Yep.
We don't have any legislative orphans at the Fed. There's no disfavored part. I would say it is a huge opportunity, but it's not without challenges. I'll make two other brief points. I think the United States is extremely well positioned to be at the cutting edge and extract more productivity, which should be good for U.S. companies and U.S. workers than any other country in the world. Any other country would exchange positions with us in a moment. Second thing is, I do want to make it clear that in the near term, I think this investment is probably quite good for jobs as we're building out the infrastructure. And over the long term, my best guess is that this will improve American productivity and will improve the real wages and will help us on full employment. But between the short term and the long term, it can have a disruptive effect. And we're attuned to that. And that's part of the reason why I wanted to shed some new light on it with some outsiders.
My time is up, but I will submit one question for the record around the issue of indexing our regulatory thresholds. We've seen so much growth since 2019 that our institutions might need to see a little recalibration on the thresholds that we have put upon them. Ranking Member Warren.
Thank you, Mr. Chairman. So the Federal Reserve has long been plagued by a culture
Elizabeth Warren, Democrat, Massachusetts.
and coziness with Wall Street. Over the last 5 years, at least 6 senior Fed officials have been implicated in serious ethics scandals related to personal stock trading and self-dealing. But instead of trying to repair this broken culture, I'm concerned that you seem to be embracing it. At the time of your nomination, you owned more than $100 million worth of shares in private investment vehicles called the Juggernaut Funds and THSDFS LLC. And you refused to disclose the underlying assets to the Senate and to the public. You say now that you've sold those shares. In other words, somebody wrote you a check for more than $100 million days before you entered office. Chair Walsh, who wrote that check?
Senator Warren, this is a discussion you and I had in the public square 7 weeks ago, and I'm thrilled to tell you that I have fully honored the obligations I had under the the agreement I had with the Office of Government Ethics.
Yeah, I'm
there is
glad you
continued
did, but I
disclosure, which I'm happy to make as consistent with the agreement.
I asked you a very specific question. Who gave you $100 million right before you were sworn in? Was it a billionaire who has business with the Fed? Was it Stanley Druckenmiller, who's made billions of dollars betting on what the Fed does? Or was it a different billionaire? Who gave you the money?
I will fully comply with the Office of Government Ethics.
That's not an answer.
Well, it is an answer, actually, Senator, because there are obligations, and I will satisfy them completely.
$100 million that you got just before you were sworn in, and you won't tell the American people where it came from. Let's go to another incident. As you know, the Fed imposes a blackout period where senior Fed officials are prohibited from talking about economic issues with outsiders. The idea is to, quote, reinforce the public's confidence in the transparency and integrity of the monetary policy process. In other words, no one gets some special insider information from the Fed. But shortly after your first FOMC meeting as chair, right in the middle of the blackout period, the Fed's vice chair for supervision, Michelle Bowman, was reportedly the featured guest at a secret dinner hosted by Bank of America for its hedge fund and Wall Street clients. At this closed-door dinner, she reportedly spoke about both monetary policy topics and regulatory policy. Now, I've called on the Inspector General to review her conduct, but you're the guy in charge. As chair, you set the tone on culture. Did Vice Chair Bowman provide any non-public information to the attendees at that secret dinner or discuss any regulatory policy matters that are subject to open comment periods?
Senator, I agree with one of the premises of your question, which is I do set the culture.
Good.
After my very first week at the Fed, I sent a letter to the 21,000 people at the Fed outlining our culture.
I appreciate that, but we have very limited time and a very strict chairman. So can you just answer the question about the vice chair and her secret meeting?
Sure, I'm happy to the extent I can share it with you. The vice chair has been an excellent colleague in my first 7 weeks. I'm aware of the letter you sent to the Inspector General. Out of an enormous respect for him, his investigation, what he chooses to do with it, I'm going to leave to him to do without trying to micromanage that.
So you
and I'd be interested in the judgments that he comes to.
So you will support his investigation. Have you made your own investigation? Did you ask her if she spoke at a secret meeting during the blackout period?
I agree with the suggestion that the Inspector General is an independent actor, and I'd be very interested in his decision.
You just said you're the guy in charge. Did you ask her about the secret meeting that took place? Did you ask her?
I can answer a simple question, which is I wasn't at the meeting. I don't know the facts.
No one.
But I'd be very interested in the fact finding being done by an independent Inspector General.
Did you care enough to ask? How can you be chair and not ask your own vice chair whether or not she violated the blackout period, violated the law?
I think it'd be inappropriate for me to prejudge facts that are being discovered by an independent actor.
I don't know how you prejudge them if you don't ask.
Well, I don't know how to prejudge them if I wasn't in the attendance of a meeting.
Did you ask?
She's been an excellent colleague.
Did you ask?
I've asked her a lot of things about supervision and regulation because we've been busy doing a lot of real work over the last 7 weeks.
I got to say, I'm going to take the same time you did. I just got to say.
You hope so.
The tone that you are setting is one that seems to invite corruption, and that's going to be a real problem.
We've had 7 weeks, Senator Warren, and we've set a tone of performance, accountability, responsibility, and integrity.
Senator Rounds has the floor.
Thank you, Mr. Chairman. Mr. Warsh, welcome to your first meeting.
Thank you, Senator.
Let me give you an opportunity. I think I've got some questions that I think are important with regard to the Basel III and what we're going to do with it. But before we get into
we're listening to Mike Rounds. He's a senator, Republican from South Dakota.
Making accusations to you. Let me give you just a minute to perhaps respond in a just straightforward manner to some of this stuff. Anybody give you $100 million?
No, Senator. No one did any such thing.
it possible that you may have had assets that were sold based upon an agreement that you had as you became the nominee for the chairmanship?
Yes, I had earned assets over a long period of time and went over and above any ethics agreements and have sold or in the process of selling, have nearly completely sold everything that I had earned during that period and have rolled those into the equivalent of cash and T-bills.
So basically away from investments based upon the market and back to treasuries.
Yes, exactly right. I thought that that was the prudent thing to do given the responsibilities and the importance of setting the tone at the top. Culture is the big driver of a lot of things, and in my first 7 weeks, Senator, we're doing our very best in the best of the Fed's traditions to get the culture right, to get the strategy right, and to get policy right. And if we can do those things, all of which are to the left of the decimal point, might not be of such great interest to people that are trading on Wall Street, but I think the decisions we make to the right of the decimal point can be better, so we can do a better job of fulfilling the mandate you gave us.
Yeah, the ranking member had asked a question with regard to another member on the committee, Nikki Bowman, and you indicated that if there was an accusation being made as to an inappropriate meeting, that if the Inspector General was doing it, that you were going to be hands off on it. It seems to me that that's pretty appropriate, because if you would have gotten involved in it, the accusation from some members on this committee would have been that you were trying to influence it.
Yes.
Can you talk a little bit about the logic? Am I on the right track with regard to the reasoning that you have for allowing the Inspector General to do the job that they were asked to do in the first place by members on this committee?
Yes, Senator, you're exactly on the right track. I'll just say more broadly that my fellow governors, my Reserve Bank presidents, they've received me incredibly warmly. I admit that I show up with a lot of ideas for reform in monetary policy and supervision and regulation and payments. I've only been there a short while, for 7 weeks, but instead of an institution acting inert, what I've found is my colleagues are really open-minded to change. What I found is we're going to have a good family fight. I'm not imposing ideas. That's part of the idea of the task forces the chairman referenced. But we're going to try to be better at our jobs, fulfill our mission, be accountable, be responsible, and do it all with the utmost integrity. That's my intention. We're early into this. I don't want to prejudge outcomes. We made a lot of progress in a short period of time, and frankly, I'm proud of it.
I like the idea that you're putting together working groups. I think that will give an opportunity for a fresh look at a lot of things going on. As I shared with you in a phone call earlier, it's not a matter of being necessarily vindictive or angry with previous chairs or previous members. It's a matter of making things better for the American people, and that's really what we ought to be talking about today. So let me just, in the minute and 14 seconds that I've got left on mine, let me talk a little bit about Basel III in particular. I think you and Vice Chairman Bowman and the respective financial regulators, I think you've done a good job in terms of your roles with regard to the Basel III re-proposal that was issued this March. The 2023 proposal would have substantially increased common equity capital requirements for Category 1 and Category 2 banks by approximately 19%, failing to strike a balance between maintaining resiliency of our banking system and doing so without hampering lending. I think this is a really critical item, and next to what artificial intelligence is going to do in terms of our productivity, I think it's one of the biggest issues out there. With the June 18th comment deadline now behind us, are there any other categories of feedback that you're weighing more heavily than others, such as the adjustments to leverage ratios or anything along that line? And if I could, is there going to be a go-live date this year sometime? Any idea when you might actually be able to talk about when this thing is going to go public for us?
Senator, well, thank you for your question on supervision regulation. As I mentioned before, I've shown up with a lot of ideas for reform, not just in monetary policy, but in supervision and regulation too. When I was before this committee some 20 years ago, there was a debate about what the Basel process should be. Boy, we should get to the bottom of that 20 years later, and we should end up with a set of reforms in the United States that makes our financial system and our banks safer, sounder, and more competitive. It is that competition which provides better and more agile credit to the real economy. The Basel endgame, Senator, is not America's endgame. I am happy to work with international regulators to try to find common views, but we're going to do the right thing for the U.S. economy. As you mentioned, we're out for public comment. I'll be very interested in the comments before we go final with the proposed final rule.
Let me just say, this is already off to a good start. But we're going to stay around 5 minutes, period. Thank y'all. Senator Reid, the floor is yours.
Thank you, Mr. Chairman. Chairman Walsh, I want to see if I put a cap on this discussion between Senator
We're listening
Warren
to
and Senator
Jack Reed,
Rouse.
Democrat from
When
Rhode Island.
will you disclose who brought your assets? When?
I believe there's periodic requirements under the ethics laws, and I'll fully comply with them. I think the next reporting requirement is at some point in the next quarter or so.
And you will fully disclose who you sold your assets to?
I'll fully comply with the law and the ethics agreement.
Thank you. AI is making a huge impact on everything we do, particularly the banking system. And as you're aware, an interagency governmental group, Commerce, Treasury, Energy, et cetera, has authorized the major banks, the 8 major banks, to use Mythos to evaluate their security. Would you agree that it's important for all financial institutions to have access to these types of AI tools so that they could analyze their operations for cyber vulnerabilities?
Yes, I think the broad financial system has new vulnerabilities with these new technologies. I wouldn't want to just isolate Mythos, though. The other large language models have rival products. The efficient frontier has changed even in the last month. But as these new models find their way more broadly, our banking system and, frankly, the Federal Reserve needs to do all we can to patch any vulnerabilities that we have.
What are you doing to ensure that these mid-size and smaller banking institutions have access to whatever AI tool is appropriate as quickly as possible?
Yeah, so I share the sentiment, Senator Reid. We are not the deciders as to who has access, but I have not been shy in sharing my views with authorities across the government about the vulnerabilities and have been asking for access, not just for the Federal Reserve, but for other institutions, to a whole range of these new artificial intelligence models so that they can protect themselves. If you said to me, what worries you over the course of the next several months, I want to make sure that we're as protected as we can be from foreign actors that want to do us harm.
Well, let me stay with AI, but change the focus a moment. Recently, Governor Waller and New York Fed President John Williams have warned that AI investments may be increasing inflation, and many economists have similar warnings. So are AI investments current drivers of inflation?
This is one of the good family fights. Let me give my own view on it, which might be somewhat nuanced from the way you just described it and some of my colleagues. The shock of AI, the supply shock of AI, has an effect on demand and supply. We see the effect on demand much more quickly. We see it in the capital investment I referenced. We see it in the prices of chips that are going up. We're inferring, which is just a fancy word for guessing, when the effects will happen on the supply side of the economy. I don't view a one-time change in prices as necessarily being inflationary, because I think there's a supply response. In that way, this is different from a foreign conflict and what it might do, which tends to reduce the supply side of the economy. Will it increase measured prices over the course of the next 12 months? I suspect it will be. Whether that's inflationary or not, that's up to the Federal Reserve, and we're going to have something to say about that.
Okay. Now, one of the interesting things about our economy is becoming more and more productive. But one of the disappointing things is that household pay is not rising relative to that productivity. And we're seeing less benefit from productivity gains. So what's driving this trend?
Yeah, it's a great question. I don't have a perfect answer to it. Like you, we think a lot about real take-home pay. The part that the Fed can do a lot about is the real part. If inflation were lower, real take-home pay would be higher. That's just the arithmetic. Your other question's a broader one, which is what are we going to see the productivity improvements lead to a surge in wages? Wages have moved up at a reasonable pace, but it's likely that as productivity moves up more, we should see wages move more. Getting that timing right, understanding when that happens, that's a puzzle, and it's a puzzle we're going to continue to work on.
In the last 10 seconds, will AI eliminate jobs at a catastrophic rate?
So you're asking me to prejudge the task force. My short answer is over the long term, absolutely not. I believe that this is a long-term job creator, but will it be disruptive? And will some people have their jobs at jeopardy because of the new technologies? On that, I can't offer any sort of guarantee or comfort.
Senator Britt.
Thank you, Mr. Chairman. Chair, thank you so much for being here with us today. Certainly appreciate the opportunity to have a conversation, and obviously so early in your tenure in this new role. In this year's
Katie
monetary
Britt,
policy,
Republican from Alabama.
one of the most encouraging themes is the increased in business investment that we're seeing across the country. In Alabama and many places, we're seeing companies expand, manufacturers grow, and communities are benefiting from that investment. I believe that these are good signs and that they're also important for the future because they help us determine whether America remains the most competitive economy in the world. My question for you is, as you look at the economy, what data tells you that today's investments are laying the groundwork and the foundation for a stronger long-term growth and greater American competitiveness?
So it's a great question, and thanks for highlighting the capital investment boom. This is what most countries are searching for. This is the seed corn for the next group of job creation and productivity. To be honest, over the last dozen or so years, we have been waiting for the surge in business investment. I know in some academic accounting sense, this is leading to a surge in prices in the next 12 months. I don't want to sound dismissive of it. The surge in prices is real, but I'd sure rather the most successful companies in the world investing in property, plant, and equipment than doing a share buyback. So I'm encouraged by it. The trend is our friend here, and this business capital investment is contributing massively to the GDP we've seen in the last 12 months. My colleagues know I'm not big for forward guidance, but I would guess that that trend continues. What gives me optimism about it? Well, when the private sector deploys this amount of capital, they must see something shiny at the other end of that rainbow. They must see a very good return on investment. That's why they're taking this capital and they're putting it to work. I tend to think that private investment has a multiplier way higher than one. I'll let you and others judge whether that's true of government spending too.
I'm going to go ahead and switch gears because I know we're on a tight time frame today, which I appreciate. And I'm going to follow up on a question that the chairman asked. I'd like to get you to kind of dig into this. Some banks are already approaching and crossing into new tailoring categories, and they're making staffing and compliance and long-term business decisions based on thresholds that haven't been updated since 2019. At the same time, the Federal Reserve continues to rely on those categories and other regulatory frameworks. So my question is, how are you thinking about updating these tailoring frameworks when it comes to what banks can expect to see and proposals in the future?
So it's a great question, one I take seriously. To be candid with you and the chairman and the other members of the committee, monetary policy has distracted me a bit in the first 7 weeks, but the Federal Reserve chairman is supposed to be the chairman of monetary policy and payments and consumer affairs and supervision regulation. But I can tell you this, Vice Chairman Bowman has been working on these initiatives. She has briefed me about them. And broadly, I'll step back and say modernizing our banking system, streamlining regulations so that the rules that apply to the systemically important financial institutions are not one size fits all for every other. The secret to the American economy is we have a few thousand banks and other providers of credit who know their smaller markets bigger. I'd rather have that system than what most of our G20 peers have, where they have a half a dozen institutions implicitly backed by their government. I think reform is coming to supervision and regulation. I have my own ideas that might be as dramatic as I've already shared on monetary policy here. And I think the sooner we can get to the bottom of it, the better. If I could say one more thing, the reforms we've been putting in place over the last 15 years coming out of Dodd-Frank, as we learned in the Silicon Valley Bank example and the First Republic example, they didn't work perfectly. My predecessors had very little choice but then to do another overall bailout. We don't want that to happen again. So we want to tailor the rules and the capital so they serve the best interests of the U.S. economy, which I describe as a system that is safe, sound, and competitive.
And I just hope, given what you've said, we double down on reviewing the framework. We know how important tailoring is, and also just the need for regulatory certainty. So thank you for that. In my last remaining seconds, I just want to say thank you for your commitment in the first 7 weeks, almost 2 months. You said it earlier, but to performance, to accountability, to responsibility, and to integrity. Appreciate what you're doing and look forward to continuing to work with you.
Thank you, Senator.
Senator Warner.
Thank you, Mr. Chairman. Chairman Walsh, it's good to see you again. 7 weeks in.
We're now listening to Senator Mark Warner. He is a Democrat from Virginia.
How you predict the president's chaotic foreign policy, wars in the Middle East. I'm going to come to an AI question, but let me be clear. As I said to you yesterday, I didn't vote for you. But we're going to find a lot of common ground to work together. I am going to hold you, and I've been appreciative of your comments about inflation, about the Fed's independence. But I think there are many, many common areas we can work together on, and look forward to that. I want to hit, when one of the things that most impressed me in our first meeting was your recognition that probably the biggest issue you're going to face is AI. My 2 cents is I think it is going to have long-term, I agree with you, it's going to be job creation. Very short-term, I think you may see some upsurge in terms of, energy production and data center build-out. Years 2 through 5, 2 through 6, I think there could be massive economic disruption, particularly towards new college grads. It's a policymaker's job, but if this is going to have the potential effect, I hope I'm wrong, but I'd take a bet with you that 3 years out, we could see 30% recent college grad unemployment. If we see that, what do you see as the Fed's role is in terms of urging your actions, but also helping us sort that out?
Senator, first of all, I appreciate it. I promised this.
Don't say nice things about me. He's got me on a clock. Answer my question.
All right, good. Well, let me just say.
I do indeed.
Let me just say this. I appreciate that you haven't given up on me. I haven't given up on you. I haven't given up on your colleagues. I'm the independent head of a central bank. No matter how people voted, I'm going to be serving all of you.
This doesn't count against my time.
AI, let me get to the core of your question. I am more confident that there will be a surge in output because the U.S. is at the cutting edge of AI than any certainty about the effect on the labor market in the next few years. The United States will be a winner. That is my informed judgment. But this is a time filled with both challenges and risks. We take both parts of our dual mandate seriously. Do I believe that the productivity improvements over time will be structurally disinflationary? I do. I believe everything technology touches ultimately gets cheaper. Your background, I think, would be consistent with that. What are going to be the effect on the labor markets in years 2 through 5? It's a fair question. The way I would frame it to you on college graduates, if you're a new college graduate, AI is probably native to you. You've been playing with AI effectively since your high school years. I feel as though you likely have the skills and the intuitions the same way that people of my generation or younger were native to the internet. If you've already been in the workforce for a while and you're a little resistant to change, that's where the encouragement needs to be to think about how these skills can make you more productive. These are fair questions. I don't have easy answers, but I do have a task force that's going to be thinking about it.
We have to work together on it because if we hit this bump, and I think it's going to come, we got to collaborate. Now, Senator Reid asked a very good question about Mythos, and I 100% agree. Mythos is already yesterday's news,
right?
Because these models are coming out so quickly and they pose such security risks. I think it's incumbent because of the risk it provides to our financial system that at some point you're going to be. And I'm asking you now. I think personally, I believe we need some level of mandatory testing pre-release because of the potentially draconian and dramatic effects. Now, how long, who's on that panel is critical, but what do you think about pre-testing release regime going forward, more than just the voluntary willingness of a company to come forward?
Yeah, so two things. First, these models are in their capabilities are growing at an exponential rate. In technology, we would say hyper Moore's law. It wasn't long ago people sitting in my position thought that the U.S. was a time of secular stagnation. All the good stuff had been invented. Boy, that seems awfully anachronistic. We're moving fast. So what can we do? I don't have, as it currently structured, decision rights as to who has access. But I do have a bully pulpit, as you mentioned, and I'm unafraid to share my views with the Treasury Secretary and others. The cutting edge is moving very quickly. Key institutions are vulnerable. The sooner they can mitigate their vulnerabilities, the better. I'm looking forward to.
Well, I hope that you will be willing to advocate moving on beyond a voluntary regime, because the downside risk. 12 seconds. Quickly address the role of all of the Federal Reserve banks and your vision of what the role they should play.
So very quickly, I'll just say this. We should be good stewards of taxpayer money. We should be consolidating functions where we can. But my mental model, Senator, as I mentioned to you yesterday, is we should have 12 centers of excellence. I've got more than 12 problems on my plate. And if each reserve bank were to develop an expertise on something that matters to our remit and the American economy, I'd encourage them to develop that advantage.
Senator Ricketts.
Thank you, Mr. Chairman. Chairman Walsh, great to see you. Thank you for being here, and congratulations on your first semi-annual report. It's good to see you here again. We got some good news this week. Inflation was down, and that's progress under this administration and under your new leadership at the Fed. During the Biden administration, we saw reckless spending that drove prices up and left Nebraska families to foot the bill. In 2019, the federal deficit was roughly $900 billion, and by 2024, that was $1.9 trillion. And we saw inflation go up 20%.
This is
really
Senator Pete Ricketts,
stressing Nebraska
Republican from
families
Nevada.
at the grocery store. Cleaning up this mess is going to take discipline, and it's going to take reform. Chairman Walsh, we discussed in our meeting also how to implement some reforms, such as process improvement. We talked specifically about Lean Six Sigma and the opportunity there. You promised to have a reform-oriented Federal Reserve, and we're willing to break up or make a break from some of the mistakes of the past. I commend you for that and want to work with you to see it through. One of the most important places to start is with the Fed's balance sheet, an issue I've consistently raised with other Fed governors. The Fed expanded its balance sheet dramatically during the pandemic, peaking at nearly $9 trillion. Since 2022, the Fed has shrunk it down to about $6.5 trillion in December 2025. And I'm glad to see that the Fed was making progress over the last few years, but the balance sheet is still not down to pre-COVID levels. Actually, the balance sheet is rising again and now stands at around $6.7 trillion today. Chairman Morris, do you see the balance sheet increasing again as a trend in the right direction or the wrong direction?
Senator, thank you for the question. I've been focused on the Fed's balance sheet, frankly, since my last day at the Fed some 15 years ago into the present. I don't want to prejudge the conclusions of this balance sheet task force, where, as the chairman said, I put together a team of rivals to fiddle with it, to evaluate it, to come up with their own judgments. But I'll give you my predilections. Monetary policy is made currently through at least two material instruments: interest rates and the balance sheet. In fact, we grew the balance sheet, created quantitative easing when I served the last time in the darkest days of the crisis, because we'd already cut rates to zero. So expanding the balance sheet had the intent of helping markets clear, but it was also another tool of monetary policy. I still believe that is true.
Wasn't that supposed to be temporary?
Indeed, that was our entry principle, was that we would get out of that business. The central bank has not, for a whole range of reasons, gotten out of that business. My general view is, as we think about inflation risks and we think about the conduct of monetary policy writ large, we have two instruments that we should be thinking about. The balance sheet is one of them. I'll make only one other point. Monetary policy needs to be architected, needs to be designed by the policymakers around the FOMC. The plumbing, the operations, how we do that is conducted by the New York Fed. I want the architecture to drive the plumbing, not the plumbing to drive the architecture. We're going to make a monetary policy decision with respect to the balance sheet. I'm very open-minded to changes, and any changes we make will be well-discussed, well-shared, and I think quite deliberate. And the financial markets, who have seen the balance sheet grow effectively for a generation, they'll have plenty of time to adjust if we make changes.
I know you said you just wanted to make that one comment, but I'm going to push you to ask for a little more. What do you believe is the smallest balance sheet that the Fed could operate with?
My predilection, my inclination is interest rate policy should be the driver of monetary policy. The balance sheet should be as small as practicable to conduct operations. And the balance sheet can expand when there's a crisis. The balance sheet can also expand if an institution needs liquidity. That's part of the reason why we've created a discount window. But a permanently large balance sheet with a duration of assets that are larger than the duration of assets of treasuries, for example, that are held in the broader public markets, boy, that sure seems a little bit more like fiscal policy than I'm comfortable with. So I would like us to have a leaner, meaner balance sheet, but it's a discussion for my colleagues, and I've got 3 real pros that are going to help us think it through.
All right, well, I have run out of time, and I'm sure the chair will be happy that I'm going to maybe get done before it reaches 0.
Thank you.
But I do have a question I'll follow up with, for the record, on scams, because this is something that the banking industry is telling me they're increasingly seeing, and it's costing people who have deposits a lot of money. So I'll follow up with that.
Senator, we're opposed to scams, but I'm happy to follow up.
Good to hear. Good to hear. This is great. Senator Van Hollen.
Thank you, Mr. Chairman. And Mr. Chairman, we agree on that point. Let me turn to the headline inflation numbers that came out yesterday.
You're listening to Senator Chris Van Hollen, Democrat from Maryland.
2.2% target. Prices are too high for families, and we need to get them down. I think we can agree on that. At your press conference a few weeks ago, you said that higher inflation in part, and I quote, reflects supply shocks that have driven price increases in certain sectors, including energy, unquote. In other words, a reason that we're seeing prices go up is that the supply of products and services has dropped in some areas of the economy, right?
Yes.
And I do think it's important that the public understand the causes of some of these supply shocks. You would agree, would you not, Mr. Chairman, that the war in Iran has caused a supply shock in the energy markets?
Yeah, the military conflicts have caused the price of oil to be higher than it otherwise would.
Absolutely right, and Americans are paying the burden of that as we go. We've also seen supply shocks in other areas. Last year, your colleague, Austin Goolsbee, president of the Chicago Fed, said that, and I quote, a tariff is like a negative supply shock, unquote. And we've seen plenty of tariffs. Obviously, we have the Supreme Court decision that may bring those down over time, the impact of it. But the negative supply shocks have been real and can be traced to the Trump administration agenda. So when you say that supply shocks are part of the reason prices are going up, you would acknowledge that they're the result of decisions that have been made by the president, like going to war with Iran, right?
So what I'd say is particular price shocks happen to particular prices that we don't have control over, but I don't want to suggest we don't have control over inflation in the medium term. That's our job. But screwworm affects beef prices. Other things affect oil prices and milk prices, and I understand that has an effect on people's household budgets.
Indeed, it does, and I think we've seen the price of energy go up by billions and billions of dollars, and the American people are essentially paid for that at the pump and other places in their pocketbooks. As you know, your predecessor as chairman was regularly harassed and berated by the President of the United States on social media with respect to interest rates. At least so far, you seem to have escaped that fate. But I do think it's important that we have an understanding of whether or not the president is trying to influence Fed conduct. I know you were asked recently at your last press conference about any communications with the president. I think your response was, on the president, I don't have anything for you. Mr. Chairman, was that a yes or a no with respect to whether you've had communications with President Trump?
So I like what I said the first time. Senator, I don't have anything for you. I will say this, though. I do meet with the Treasury Secretary weekly. I talk to him often between that.
Mr.
And
Chairman, I just want to make sure
I'll make my own decisions as monetary policy.
I just want to understand the answer. Have you or have you not had communications with President Trump since you took this position?
I just don't want to be in the business of sharing discussions that the president and I have.
Okay.
I will tell you what I've said to the president repeatedly and said to the Treasury Secretary. They chose an independent guy to do an independent job, and that's exactly what I plan on doing. Okay. And I'd like to think over the last 7 weeks, given the decisions we've made and the things we've done, that it's not just words, it's actions now to start to demonstrate that.
So Mr. Chairman, I mean, I think it's important. I take from your answer you've had communications. You don't want to disclose the content. Will you commit to do what your predecessor did, which was to release your appointment schedule and conversations with President Trump?
I don't know what the past practice was. I will be in full compliance with the law. As I understand it, there's an ongoing FOIA request on my calendar, and I will share it consistent with the law.
Well,
I believe the first one's already come out.
I think this was this wasn't in response to any legal requirement forced by FOIA. It was a question of transparency, and I do think, given the president's past record of trying to influence Fed behavior via social media, with respect to your predecessor, if he's trying to influence Fed behavior through private conversations with you, I think that needs to be something the public is aware of. And I'm asking you whether you will commit to disclosing when you have conversations with the President of the United States.
Senator, I can offer you this assurance. The president has not, before I took this office, before I raised my right hand, he has not tried to influence the conduct of monetary policy. And if he tried to, I would continue to keep my head down and do the job. I don't have a long record, but I've got a 7-week record, and before that I had a 25-year record, and I think that should count for something.
I appreciate that. I hope you'll just follow the precedent your predecessor.
Senator Kennedy, the floor is yours.
Well, Senator Van Hollen's my buddy, so this is not meant toward him, but I always get a kick out of my Democratic friends talking about transparency. Toward the end, God bless him, you could bake a Thanksgiving turkey in the time that it took.
Listening
President
to
Biden
Senator John
walk
Kennedy,
across the
Republican
stage.
from Louisiana.
And they kept it quiet till they couldn't. I'm sorry he was in that condition, but this transparency stuff cuts both ways. What's wrong with you talking to the President of the United States?
So, Senator, I've got a wide lens. I'm interested in hearing points of view from a whole range of people. We have a narrow remit. I'm interested in what's happening in the world, in the Middle East, and elsewhere.
Is there anything wrong with it? Do you have to, when you do it, do you have to go out and look for the last phone booth in Washington and put a bag over your head and sneak in there and call him? Or return his call? Is there anything wrong with that?
I certainly don't feel uncomfortable receiving a call from the chairman of this committee or the President of the United States.
Okay. You think Ben Bernanke ever talked to the president?
When I was a governor, I recall several conversations and frequent
How about Alan
meetings.
Greenspan?
When I was a young staffer in the White House, I remember being honored by him coming into the White House and meeting with the president and the president's advisors quite frequently.
Okay. I think what would give me concern, and I think it's the basis for my colleagues' concern, is that you just do whatever the president says, but you're not going to do that, are you, or are you?
Senator, I'm going to call it the best I see it. The president never asked me to do anything inappropriate, and if he did, I wouldn't do it.
Okay.
I'm going to follow the law and do my best to follow the remit you gave us.
Okay, so in the last year or so, recent past, I'll say, the Fed cut rates 3 times because they were worried about the labor market. Is that a fair assessment?
That's my sense of what they did before Mr. Robel.
It worked, correct?
Well, that's a longer discussion. They did
is the labor market in a mess today?
The labor market's in good shape, but I wouldn't want to draw that causal connection.
So I don't have much time, Mr. Chairman. I love you like a taco, but you don't filibuster on me. So it worked. Okay. Now we have inflation. Okay. What caused it? In 20 seconds.
In 20 seconds, inflation is caused when a one-time change in price is broadened out.
I know what inflation is.
And the Federal
Tell me what
Reserve,
caused it.
monetary policy, sir.
Okay, well, I would say what is causing it is AI, the conflict with Iran, and probably the residual effect of the fact that some imports have become more expensive. Okay? And I think any fair-minded person would conclude that. There was a lot of economists said, oh, you know, the impact of inflation on the rise in the cost of imports would be a one-shot deal. You know, you can teach that one round or flat. I don't know. I think it's probably had a residual effect. Okay, is it temporary? Is it permanent? The inflation.
It's not going to be permanent under my watch, Senator.
Okay, what are you going to do about it?
So we're going to do three things. One is for those people in markets that think the Fed really was comfortable with a higher level of inflation, we're doing our best to disabuse them.
Okay, you're going to talk about it. What's the second thing you're going to do?
We're going to take ownership of it. We're going to say we have the power to do something.
Okay, you're going to own it.
That's
What's the third thing you're going to do?
We're going to look at our tools in the changing economy, both balance sheet and interest rate, and see whether we need to adjust policy to take it head on.
You're going to look at your tools. That's the third thing. I'm not asking you what action the Fed's going to take. That would be improper, Mr. Chairman. I wouldn't do that, and you wouldn't tell me anyway. Give specifically, like you're talking to a 10th grader, okay? Not. What are your options? Leave it alone, right? Leave rates alone. This is one option.
That is an option, Senator.
Raise rates.
Another option.
Cut rates.
A third option. A non-exclusive list of options, but yes.
Well, and a lot of it depends on whether it's temporary or permanent. So how do you decide whether it's temporary or permanent? I got that in with 6 seconds left.
Well done.
You use 5 task forces to get to the big and hard questions instead of trying to paper it over with policies that have not been proven as successful.
Senator Cortez Masto.
Thank you, Mr. Chairman. Chairman Morse, good to see you again.
Nice
Thank you
to
for
see you,
meeting
sir.
with me.
Thank you.
You've talked about the task forces. What's the timeline for getting reports from the task forces?
So I'm not a very patient person. People have said that to do all this good work, you'll need years. I gave them 6 months.
Wonderful. Thank you. And that will be made public?
Yeah, the details, even much of the deliberations, I want to do that in the public square because we all own these decisions at the end of the day. Ultimately, decisions will be made by my FOMC colleagues. I think they'll start to get briefings on some of the early reports from the task force, early indications, hopefully as early as September, with my expectation and hope by year end, we're going to hear their conclusions and decide what to do with it.
Thank you. And then just for clarification, in January of 2025, do you recall the inflation rate? It was about 3%, correct?
I'm going to have to take your word for the precise number, but I knew
Tina Smith, Democrat from Minnesota.
Yeah, it was about 3%, and that's when Joe Biden left office. And the current inflation rate right now is about 3.5%, is that correct?
There are various measures. I'm confident in telling you it's been above target for 63 months.
Is it above 3%?
By some measures, by other measures, it's not. But I don't want to suggest I'm happy with any of those measures. I'm not.
Okay, I appreciate it. Let me talk a little bit about an area that is important for me, and I think many states that deal with a hospitality tourism industry. Unfortunately, under this administration, we've seen significant declines in the number of international visitors to the U.S. The current situation has actually led to our travel trade deficit in this country.
We're listening to Senator Catherine Cortez Masto, Democrat from Nevada.
2019 to a $72 billion deficit today. How does the Federal Reserve governors consider the specific impact of higher unemployment, lower wages, and reduced economic activities in communities with large tourism economies like Las Vegas?
So we are consumers of this information. We are keenly interested in the good side of the economy and the services side of the economy. My view, which is not universally shared in the economics profession, is that there's no limit to what this economy can grow. Productivity-led growth can move higher, and that doesn't tell me it's inflationary. But we care about the services part of the economy, and we're trying to take that into account when we try to make decisions about the dual mandate.
Well, I appreciate that because you're right. Your dual mandate is maintain stable prices and full employment. Let me tell you what's happening in the hospitality industry because of the policies of this administration. When you talk about full employment, it is not happening. What I am hearing from people in my state is that it's not necessarily full employment with good wages and livable wages. They're patching together multiple low-wage jobs because they are taking down from full employment to part-time employment. Do you consider that in your analysis, going from full-time employment to part-time and many individuals having several part-time jobs? How do you calculate that into your analysis?
So we think hard about it. You heard in my opening statement the clear judgment of my colleagues and me, which is the labor market broadly looks in balance, but I don't want to make that sound like it's easy for hardworking Americans in your state and other places. There's a lot of dynamism happening in the economy. There's a lot of structural change, and during periods of transition, it's often true that the labor markets in aggregate look better than people feel in different parts. And during disruption, they try to recreate a job they had before through the gig economy and other means. We take it into account. Overall, I would say the labor market part of our mandate looks pretty good. The price stability part of our mandate looks less good.
All right, and I am concerned because not just Las Vegas, but many tourism-based industries and hospitality, what we're seeing is lower full employment. And I would hope, and this is a conversation I've had with previous chairs as well, I would hope that you're considering that. It is a large sector of employment across the country. And I know you made a statement that rise in prices is not necessarily inflationary, correct? At what point do you consider it to be inflationary? Is there a timeline associated with that?
So when an increase in prices in a particular category like oil or like milk or eggs, when we see that broaden out and affect the generalized price level, that's something we can do something about. That's the way I think of inflation. When prices go up, I know it hits your constituents every day. I'm not trying to sound dismissive of it, but I also don't want to say that there's much that we can do about cattle prices or milk prices today. But there's a lot we can do to make sure that the entire grocery aisle doesn't have higher prices, and that's what we're committed to do.
Thank you.
Senator Haggerty.
Thank you, Mr. Chairman. Chairman Walsh, on July 18th, almost a year ago today,
Now listening to Senator Bill
President
Haggerty,
Trump signed my
Republican from
legislation, the
Tennessee.
Genius Act, into law. A thorough rulemaking process is absolutely vital to ensure that U.S. dollar dominance exists here in the digital age. And I look forward to seeing the Federal Reserve's ongoing work in this matter. I just want to make that point clear. It's important, needs to be done, and very much appreciate the Fed's attention to it. I want to turn now, though, to a broader concern, and that has to do with the independence of monetary policy. You've had a number of conversations with my colleagues about this. I want to emphasize something that I think is quite important. The special insulation that the Fed receives with regard to monetary policy, I think as far as I'm concerned, it shouldn't extend to every other function of what the Fed does. I think it should be limited to monetary policy. For example, you think about bank regulations and supervision. That's entirely distinct from monetary policy. Regulation requires normative policy judgments about capital, about credit availability, about risk, economic growth, the structure of the banking system. All of these considerations need to roll into it. And you think about what's happened in recent years, regulation has even strayed far afield. You think about what's happened with respect to climate policy, or Michael Barr's failed Basel III proposal. These decisions are not the same as setting interest rates or managing the Fed's balance sheet. And quite simply, I think they're forms of executive regulatory power. The Supreme Court has clarified, for example, that the FDIC is subject to ordinary principles of executive accountability. Comparable regulatory functions at the Fed shouldn't be held to a different standard, in my view, simply because they sit within the central bank. So my question is this, Mr. Chairman, do you agree that the Federal Reserve's independence should be narrowly tied to its monetary mandate?
Senator, thank you for the question. Like you said, independence is at its peak in the conduct of monetary policy. I believe that when I showed up at the Fed in 2006. I believed at my confirmation hearing 7 or 8 weeks ago. I believe it now. In the conduct of bank and regulatory policy on things like the Genius Act, My general view is we should be working with our bank regulators, the other bank regulators, the OCC and the FDIC, see if we can't put out our rules together. What I don't think we want is any kind of regulatory arbitrage where firms are trying to game who's got the lightest regulation and race there. I don't think there's anything wrong with us working together with other bank regulators to try to figure out what's the best policy. I've got some extraordinary colleagues at the Fed. They've been able to think hard about these issues. I think those discussions should happen and do happen.
I don't disagree at all with that, and I like your approach in terms of coordination, but there's something deeper that I'm concerned about, Mr. Chairman, and that is, and just make an example, let's suppose a future Congress decides to embed some sort of regulatory function inside the Fed, seeking to insulate it from our supervision, from our oversight. In some way, that could become a backdoor that I don't think any of us want to see. And what I'm trying to make clear is that beyond monetary policy, I'll ask you the question, do you think that this special insulation applies to other regulatory and supervisory types of functions?
So I spent 8 weeks as a summer associate at a law firm, so I'm probably not best positioned to opine on the Supreme Court. Senator Warren could do a better job than I. I do recall in the most recent opinion a footnote from the majority that says we are not suggesting that if other things went to the Federal Reserve, it would get any insulation. Beyond that, I'm on shaky ground in trying to opine on what the Supreme Court opinion means prospectively.
Yeah, I wasn't looking for your legal opinion, but I do just think as a matter of common sense, I wanted to get that on the record, that there is a real distinction here, and I appreciate that. I want to turn to another important matter, and that's the monetary policy report that you work with. The most recent monetary policy report added a new aggregate to the measurements, the M2 aggregate. And I just wanted to ask you to explain why this metric is useful and why it's been added.
Thank you, Senator. That was an Easter egg that we hid in there to see if anyone read these monetary policy reports. So I'm encouraged that you did. There is almost a page talking about M2 and monetary aggregates. That was done with a purpose. I do not show up here as a monetarist. I do not show up and say the secret to inflation is if we only knew M2, everything would be swell. But monetary aggregates had been taken out of the monetary policy report probably about a decade ago, maybe a bit longer. My view is that a modern central banker should have a mosaic of information and should not be allergic to any data that happens to be inconsistent with dogma that he or she might have been taught in Econ 1. I have this old-fashioned view that monetary policy has something to do with money. I remember an old professor of mine that said, who was a proper Keynesian economist, he said, well, I don't understand how to think about inflation in a place like Zimbabwe without talking about money. So I think money matters. What we witnessed when we looked at some of the monetary aggregates is they are not perfect. We don't measure money very well. We don't measure the velocity of money very well. But it's a pretty good cross-check. And had we seen the surge and paid attention to the surge in inflation and money in 21-22, we might have seen this problem sooner. I apologize, Mr.
Senator Smith.
Thank you, Mr. Chair and Ranking Member. Chair Warsh, welcome to the committee.
We're listening to Senator Tina Smith, a Democrat from Minnesota.
Senator Hubert Humphrey, who's once held the seat that I now occupy from Minnesota, led the charge in Congress to include maximum employment as part of the Fed's dual mandate. And we can probably agree that keeping these two goals of maximum employment and stable prices within the confines of the monetary policy power that the Fed wields, that just makes sense. Because it's a strategy that delivers stable prices, a strategy that delivers stable prices while working people can't find jobs or can't afford their lives. I mean, that's not a healthy economy. I expect you to agree with that.
And I do, thank you.
So I was very interested in the task forces that you established last month to advise you on reform and modernization. And I want to just ask you about one of them in particular. You've created a task force looking at productivity and jobs, and that's really good, it seems to me. This task force should be able to get at the power of the Fed's dual mandate and ask also some of the big questions that everyone is asking about the power, the impact of AI on wages and people's income and employment. So let me just ask about this particular task force on productivity and jobs. So as I understand it, It is led by three people, venture capitalist and investor Mark Andreessen, who's made billions from AI and is a major Trump donor, another tech executive who recently laid off thousands of people, and then an academic economist from my alma mater, Stanford University, who is currently on leave to do research at Anthropic. So I want to ask about this. Is there anyone on the task force who has experience in the labor market, or somebody who can bring the perspective of an employer rather than an investor to the questions that are going to be asked and hopefully answered by this task force?
So if I could say two things. One is those three people you referenced are three of the smartest people that I know. And I've been...
I'm not disputing that. I'm wondering how you intend to bring into this work the perspective of people who are working people, bring in the perspective of labor and not just investors.
I think it's a fair question. I've got 18 colleagues who are going to join me and consume the deliberations they have in the report, and we're the ones that have the dual mandate. And as I said to your colleague, there is no disfavored part of our mandate, and we're awfully focused on full employment. So that's my commitment to you. We haven't outsourced this decision to three people. What we've outsourced to is a bunch of thinking about this massive technology shock. And I'll only note one other thing. Chad Jones, that professor that you mentioned, his academic work, he's an academic, I'll admit that. But
I'm not opposed to that. I'm just trying to figure out.
But his academic work has been very, very focused on what is the effect of the labor markets of these technology shocks, both the good and the bad. And I think that history he can bring to bear to the work of the task force.
So can you understand why a task force that is led by people in large part who are likely to get richer by AI might not be the most credible people to folks on the ground who are doing the work, who are worried about what impact this AI is going to have on their jobs? And there's the concern, of course, is that the productivity that is expected to be delivered by AI, if that actually happens, that the benefits of that productivity are going to accrue to capital and not to labor. And that, it seems to me, the credibility of this task force rests on hearing the perspective of working folks in their deliberations.
I would expect before they come to their conclusions, they are going to hear from folks that will be affected. They are going to hear from employers that are getting struck with this technology shock and have disruption in their labor force. But I don't want to suggest to you that in any of these task forces that we have the 19 people of all different backgrounds. But what I want to tell you is if you think they have a credibility deficit, I don't. I think they're incredibly talented, and we will make sure to take both parts of our dual mandate in consideration of their output.
I think the issue, sir, is that when there are the big guys sitting at the table, is there anybody sitting at the table who's bringing the perspective of working people to those really important questions? There are labor leaders, there are labor economists, there are folks whose expertise is in issues around wage stagnation and how that impacts working people. And I would ask you to consider bringing that perspective, not to be heard on the side, but to be actually at the table with the big guys. I think that is a credibility issue that you could address very easily. Thank you, Mr. Chair.
Thank you, Senator.
Senator Tillis.
Good morning.
Good morning.
I think you're doing a great job today. I appreciate your composure. Mr. Walsh, a quick question on just immigration. You know, some people are proudly discussing how we had almost...
This is Senator Tom Tillis, Republican from North Carolina.
Immigration in the last quarter, but we're starting to look a little bit like China, Japan, European countries in terms of our replacement rate, in terms of natural replacement rate. So if net immigration were to remain near zero for an extended period, how would that change your estimates on GDP, the neutral interest rate, and the amount of non-inflationary job growth the economy can sustain? And in some ways, it touches on, I think, Senator Cortez Masto's question, too, about jobs unfilled, but just curious.
Thank you, Senator. You sure didn't toss up a softball there. The way I think about it is immigration policy is set by you and the administration, but we are...
Yeah, I mean, I don't want you to talk about policy. What I'm trying to do is communicate to the American people we can make the mistake of Western Europe, Japan, and other industrialized nations, or we can fix this population growth problem. If we don't, these are policies, then how does that make your job more difficult if we were to sustain the current trajectory?
The way those decisions affect us is it affects potential GDP. The biggest, hardest decision we make is what can this economy produce? How fast can we grow? Potential GDP is a function of two things. How many hours are we working? People in this country working.
But just in a word, because I want to ask a few other questions.
And then second, productivity.
If, at the end of the day,
if the worker hours are constant, we need a productivity boom.
Just a real quick question. Would you be thrilled to know that we could guarantee zero net growth for the next decade because that would make your job easier?
We're going to take the number of hours the American people and your policies produce, and we're going to do it the best we can.
We got a problem. You can't fix it. But what I'm saying is if we're trying to make your job easier, having this on the agenda is not going to make your job easier. And I understand the position you have to take, but I want to point to something that people are high-fiving and talking about net zero immigration growth as if it's a good thing. It's only a good thing if you want to repeat the mistakes of Western Europe, Japan, China, and other nations that didn't get their replacement rate right. You know, bringing in great people that may have been born in Colombia and aspired to become a senator, for example, those sorts of things. I mean, didn't get it right every time, but no. Mr. Warsh, I told you also, and just for the American people, do you have a magic wand where you can just walk in and convince 7 people of the FOMC to vote exactly the way you want them to?
Perhaps I wish I do, but I do not have such a wand.
So you are one of a body where you have to gain consensus to make an interest rate move, right? Monetary policy move, right?
Yes, and it's a consensus-led organization.
And based on some of the comments from even Governor Waller, who we'd consider to be pretty hawkish just this week, he's not guaranteeing that we're going to be able to lower interest rates anytime soon based on data-driven decisions. Did that just occur this week? In a speech, I think, up in New York?
There are a diversity of views. I wouldn't want to dwell on any one of them in particular.
No, it's okay. But what I'm trying to explain to people who think the president can give you a call, you make a decision, it happens, that never happens. Wouldn't have happened under Powell, wouldn't happen under you, wouldn't happen under anybody who's responsible chairman. I just wanted to make that point. The last thing, if you could just tell me, I know you don't want to get in. I think Senator Britt asked you some questions. I love the fact that you're doing reform. I would like to see the project charter for the task forces, if you have that. If people are managing this, milestones, any sort of dashboard you have, the things that any well-put-together set of task forces would have assembled for a 6-month project. I'd like to just track it, not necessarily for the record, but if you could commit to have a meeting with the people running it with me, I'd like to see that just to watch the mechanics play out over the next 6 months. And then lastly, if you can, I believe Silicon Valley Bank is a classic example of why the Fed needs to have its independence on monetary policy, but on bank examination and supervision. I believe a U.S. senator should minimally be able to go into a SCIF and understand why banks like Silicon Valley Bank had multiple matters requiring attention and then matters requiring immediate attention well before they failed. And nobody knew except some examiner and likely people in San Francisco, in the San Francisco Fed. That stuff has got to change. I don't see any rational basis for that independence, and we've got some legislation I'd like to talk with you about. Thank you, Mr. Chair.
Thank you.
The chair recognizes Mr. Warnock.
Well, thank you so very much,
Lucky
Madam
you.
Chair. The American economy is heavily leveraged on...
We're now listening to Senator Raphael Warnock, Democrat from Georgia.
And this is an issue that I'm very interested in, been engaging and talking to folks in the industry and folks outside of the industry, various stakeholders. According to a Bloomberg analysis, AI spending most recently climbed to about 8% of the U.S. gross domestic product, driving the country's economic growth. Chair Walsh, you have long been bullish on AI. However, up to now, despite investors betting big on them, none of the major AI models have been meaningfully profitable. What are the consequences to our economy if none of these companies ever ever become profitable.
So if they were to disappoint investors, I think the capital markets would dry up for them, and some of that capital investment would be curtailed.
I guess that's one way of putting it. I guess I'm getting at where ordinary folks are in the midst of that. The markets, behind the markets are real people who have retirement savings and who are trying to make their present as well as their future work. American retirement accounts are increasingly tied to AI. And so there's the human issue, driven by massive increases in the stock prices of chip and AI companies. You might talk about the current markets in a way it's it's tall and narrow. Let's imagine if we are in an AI bubble. What would happen to our economy and more specifically Americans' retirement savings if that bubble popped?
So I think it's a fair question, Senator. I take it seriously. I'm not in the business of providing a Wall Street newsletter, but I'll say broadly to your question about the effects on the economy. Booms and busts do not help the real economy, and they don't make the central bank's job easier. What the central bank is trying to achieve is price stability, full employment, all in the context of financial stability. On the question of these AI companies, certainly the surge in their investment and the surge in their valuations is notable, but I'll also note one other thing, Senator. Over the course of the last couple of months, we've seen the market cap, both of the public companies and of private companies, under some pressure. At the overall indices, we do seem to see a broadening out. Now, why is that? Because earnings now for the last several quarters more broadly are moving up. I don't want to suggest that that should give us any complacency, but what the Fed's looking for is economic strength to broaden and the inflation that we talked about earlier to become more narrow.
So I'd be worried about a massive economic slowdown. You know, the impact of Wall Street on Main Street, and I'd be worried about job losses. Stock prices tumbling would mean Americans could not retire as planned. And I don't want to see taxpayers holding the bag should this AI bubble pop. I'm not against AI. AI is not going anywhere. Right. It has both promise and peril. I just want us to be thinking critically about this from all angles. Earlier this month, you announced a new task force to assess the effect of AI on productivity and jobs. The three individuals you chose for the task force are tech executives who have directly worked for or with AI labs, all three of them. Yes or no, will the Fed include anyone on this task force with an alternative viewpoint on AI? For example, anyone who represents the workers whose lives may be upended by increased adoption of AI tools and technology.
So, Senator, it's a fair question. As I mentioned to your colleague a few moments ago, what I'd say is one of the people on those task forces is an academic. Now, I don't want to suggest that the academic is representing some
You don't want to suggest that the academic is being academic.
I don't want to suggest that, but this isn't a faculty lounge discussion. What I do want to suggest is that academics' work has spent a lot of time talking about prior technology shocks and the displacement that it has on labor. The assurance I can give you is that these three people on that task force, like the other task forces, they're not the deciders. You're talking to one of the deciders.
Right.
The 19 of us around the FOMC with a breadth of backgrounds and interest, we're going to decide what we think of their conclusions.
Yeah, but as a decision maker, I always want various viewpoints. I certainly have nothing against an academic expertise. I think, you know, that's important, and it's too often ignored in some of the appointments that we've seen around here lately. But here's my problem. Americans are worried about what AI will mean for the economy. I'm wrapping up, sir. And I'm worried that this viewpoint isn't represented at the Fed, and I would look to broaden.
Senator Lummis, your time is yours.
Thank you so much.
Thank you, Mr. Chairman, and welcome, Mr. Chairman. I have a couple questions.
You're
about
listening to
bank
Senator Cynthia
supervision
Lummis,
before we go
Republican
to
from
monetary
Wyoming.
policy. The first one is Vice Chair Bowman has ordered an independent review of the supervision of Silicon Bank and Signature Banks. And I think that's a really good thing. I applaud her and support her efforts there. So have you instructed your staff, including the attorneys in the legal division, to cooperate with this independent review?
Yeah, so thank you, Senator Lummis. This call for a review of what happened around Silicon Valley Bank preceded my time at the Fed.
Yes, it did.
But I'm certainly aware of the ongoing investigation, and my general rule is that we should be cooperative to investigations, and we should try to get to the bottom of the facts of on regulatory and supervisory issues.
You know, there are rumors that there may have been destruction of records by some of the staff at the Division of Bank Supervision, and of course that's a crime. So if records relating to the supervision of these banks were intentionally deleted by staff before you were at the Fed, before you ever became chairman, will you order your staff to assist in recovery of these records and cooperate with law enforcement?
Yeah, so I made a bold statement to one of your colleagues before that I was opposed to scams. I can make a bold statement I'm opposed to criminal activity. I have no reason to believe there's any criminal activity here, but I think we want to get to the bottom of an investigation. If there's an ongoing investigation and investigators generally want access to things, there's no reason why they shouldn't have access.
Thank you. I want to turn to a proposed rule that is being considered and ask for your thoughts on the proposed rule. And it has to do with the Federal Reserve Board's payment accounts. Skinny master accounts is kind of a term that's used. You know, my staff has told me that if a doctor submits statements to an insurance company, they have two choices. They can pay 5% in bank fees or wait 90 to 120 days for a paper check. It seems to me that the Federal Reserve is really on to something by trying to join other countries that restrict access to the payment system to consumer-facing banks. We're the only major country in the world that restricts access to the payment system to the consumer-facing banks. So I think you're on the right track to expand the opportunities to serve consumers. And I'm curious about what your thoughts are about the proposal, how it's going, when you expect the rule to be finalized.
Yeah, so as I understand it, this skinnier master account proposal's out for comment. It was sent out before I arrived, but I'm keenly interested in what the comments are. My mental model is that the critical infrastructure, the rails that the Fed runs, should be available to those that are applicable, that can comply with our rules and regulations. If I were to draw a hard distinction, this is a public good, and it's a public good that should be used by intermediaries. I don't want the public good to be used by consumers, by people that are on the front lines. But if financial institutions, new and old, want to comply with our regulations and take advantage of this public good, my general predilection is to encourage it.
Well, I think that's admirable and important. So that's it's out for comment now. Do you anticipate finalizing sometime this year?
I owe you a better answer on the timeline from here, and I pledge to give it to you.
Thank you.
Thank you.
I share a concern that was expressed by my colleague, Mr. Haggerty, that monetary policy should enjoy the committee not having to be as transparent about its process. I agree with Senator Haggerty also that the bank supervision component should not enjoy that same level of non-scrutiny. I think we need to scrutinize bank supervision. I'm concerned that that area was sort of hidden from public view for too long. And so I want to just echo what Mr. Haggerty said. Thanks, Mr. Chairman.
Yes, ma'am. Senator Kim.
Yeah, thank you, Chairman, and Chairman, thank you for coming on out. I actually wanted to build on something that Senator Warnock was
Senator
going
Andy
into
Kim, Democrat
about
from
AI.
New Jersey.
And I guess I wanted to ask you, I've seen some public reporting that there was a report produced by Treasury staff for Secretary Bessent, the Federal Reserve, and other financial regulators that outlines the risks associated with the AI boom. Are you familiar with this report?
I can't say that I've read that report, but it's certainly a discussion that the Secretary and I have had.
Is that something we can follow up on, get a sense of where the status of this report is?
Yeah, I'd be happy to both engage in the report and share with you my views.
Yeah, but regardless of the report itself, from what I understand, it's raising concerns that that much of our financial system right now rests upon AI meeting expectations for productivity gains as profitability, and as well as raising concerns about the concentration in a small number of firms that are heavily reliant on private market financing, specifically invested in data centers in particular. I wanted to just get a sense, do you agree with these underlying economic risks, or do you believe that that analysis is overstating the risks?
So I think this is the most important change in our economy in my adult lifetime. I think it has plenty of opportunities and also plenty of risks, and I take both of them seriously.
Yeah, I mean, it's something I'm trying to grapple with too. So I'm not expecting that you have a fully baked answer right now, but I hope we can work on this together, because I do think when we're looking at that future, trying to think through the data, I'm trying to think through what data is going to allow us to understand how exposed we are, what the concerns are. And I guess I would just ask you, as you're looking at the data, how would you assess our economy, the state of our economy, if you were to isolate out AI, which I know is driving so much of our growth right now? How is the rest of our economy doing?
So it's a fair question. We can start to do a little bit of that. So I mentioned in my opening statement the importance of capital expenditures to aggregate GDP. A good share of that CapEx boom is broadly in or around infrastructure related to artificial intelligence. Not exclusively, but it's part of the real story here. If I were to fast forward 12 months, whether these AI models continue to grow in their efficacy on some exponential curve or not, most of this CapEx is going into things like data centers, new sources of energy. And let's say there was a disappointment on the returns on what AI could do. Many of these investments have alternative uses. But if the question is really how much productivity do we expect to ultimately get from AI, the answer is I don't know, but I'm optimistic that over a longer time horizon, it'll be quite good for the United States and good for both parts of the dual mandate, lower prices and a stronger labor force.
Well, I hope we can work on this together and try to get a clearer understanding of just how much risk there is. And look, I'm glad to hear about this, this task force that you're putting together about the productivity side. I will just say the concern amongst young people in particular is very potent and very real. And we have to come up with an answer to them to help them feel reassured right now. Because I get it, they are, as you said, more native in the technology. But that doesn't necessarily help them when the companies themselves are saying, we don't need to hire as many junior associates or other jobs, especially on the more entry level side of things. No matter how much native fluency that they have or understanding and skills, if the businesses are saying, we don't need as many people at the younger, lower end. And so as you're dealing with this task force, I hope it's something that can interact with this committee. I hope we have a chance to be able to talk to some of them and hear from them in that capacity. But I also say, we need to make sure we're speaking human about this and not just getting kind of caught up in that. So I just wanted to flag that for you. One last thing I wanted to just touch base on is, Senator Reid mentioned the concerns about whatever we want to call it, mythos proofing or AI proofing, using AI to be able to shore up our vulnerabilities. A number of us have been talking to some of the financial sector, other critical infrastructure. I guess I just wanted to ask you, does the Fed have all it needs to be able to kind of shore up our vulnerabilities, patch up any vulnerabilities? Has that been a process that you all feel have confidence in so far?
Closer to a yes or no answer on that one.
I'm working on it, and I look forward to working with you on it as well.
Let us know how we can help.
Yeah.
Thank you, Senator Moreno.
Thank you, Mr. Chairman, and thank you to you, Chairman Walsh, for being here. It is such
We are
a
now
pleasure
listening to Senator
to have you
Bernie
here.
Moreno, Republican from Ohio.
I can't explain to you in words the feelings that I had when your predecessor testified versus the feelings of having you here. So truly appreciate the hard work. Some quick questions. You obviously think we have a whole regulatory structure around banks. What's happened to deposits in American banks since last August? Have they gone up, stayed the same, or gone down?
Generally speaking, there are differences, but generally speaking, deposits held in banks is moving positively over that period.
And you worry about that, of course. You watch that, because if you had a massive deposit flight, that would be a problem, correct?
I worry about it, but I also use it as a helpful input. When average deposit balances are up, sometimes that could be for good or bad reasons. My sense of the underlying growth is more good than bad.
Right, but as a banker, if the bankers want deposits to go up.
They sure do.
And I just find that interesting as a data point, Mr. Chairman, because we've talked about, or we've had testimony anecdotally from the bank CEOs saying that stable coins were going to drop deposits in banks. And I just want to point out for the record that the exact opposite has happened. So as they say, that was a bunch of blankety blank argument. Okay. You have two mandates. Let's talk about full employment for a second. If we have incentives that we put in place here legislatively for Americans not to work, does that round counter to your objective of full employment?
It doesn't make the Fed's life any easier.
Right. So if we actually incentivize somebody from actually participating and being productive in a workforce, that's not good. Things like, for example, we did in the Working Families Tax Cuts last year, which is to put in place where you have to verify twice a year whether you're working, volunteering, or studying, would be a positive demotivator for not working, correct? Meaning it encourages work.
I can't opine on the policies you make, but for the implications for the Fed, we're in the business of assessing potential growth. The more hours that are worked and the more productive those hours are, the stronger the economy can be.
Which is good when you're mandated. Yep. And if you had tens of millions of people entering the country illegally, it makes your challenge of full employment more difficult also, correct?
I'm going to steer clear from immigration policy and leave it with you and the administration.
So pretend they're just naturally grown humans on the soil of America. If you have dramatically more humans in the United States looking for work, by definition, it makes full employment more difficult, correct?
So if those people are employed and are working and are productive, that's a good thing.
No, if they're not employed.
Well, that can be a challenge to one, if not both parts of our mandate.
Okay, let's talk about data centers really quick. So if you felt, or the Federal Reserve felt, that data center investment was driving inflation, what is the tool that you could use to combat that?
So I think that investment in data centers and in AI generally do affect the demand side of the economy, and we can see it, and we can see prices move up. But unlike some of these other shocks, with a lag, it also affects the supply side.
No, but what I'm saying is, if you felt that you had to do something about it, would it be accurate to say, really, you don't have a lot of tools? I think some of my colleagues think that you do have a magic wand, but ultimately you'd have to raise interest rates. The idea would be you're going to make it more expensive to borrow money to build these things. Ultimately, that's basically the tool that you have, just roughly speaking, correct?
We have powerful tools to deal with what we deem to be inflation above target.
Right. So you would raise interest rates if you really is the tool that you'd use. Does it make any sense for us to be thinking that inflation is being caused by data center investment, and the answer would be to look to the Fed to raise interest rates, when in reality you have government that's providing tax subsidies, which is lowering the cost and thus encouraging more irrational investment? Doesn't it make more sense to say, let's not do any tax subsidies? Now, we can't do that here at the federal level because a lot of these subsidies are coming from cities, counties, and states. I actually believe, and I think, Chairman, we should think about providing 100% federal tax on these subsidies, so that if a company wants to take subsidies from some state, tax it at the federal level 100% to discourage it, because I think it is absolutely insanity for us to use taxpayer dollars to subsidize multi-billion-dollar companies. And by the way, those incentives don't exist. Would you agree that that seems reasonable?
Fiscal policy is your decision. I'm going to let you guys fight that one out.
Good.
Early, thank you. Senator Alsobrooks.
All right, thank you so much, Chair Scott and Ranking Member Warren, for holding today's hearing, and Chairman Walsh.
We're now listening to Senator Angela Alsobrooks, Democrat
before we talk
from
about
Maryland.
the economy, I want to briefly return to your confirmation hearing, where under questioning from Senator Gallego and myself, you said that the president never, quote, generally or specifically instructed you to lower interest rates. And your testimony at the time did contradict reporting by the Wall Street Journal. So Senator Gallego and I sent you a letter on April 26th clarifying your testimony, and we have not yet received a response. So as we stated in our letter, President Trump told the Wall Street Journal that he thinks you have to lower, his quote was, he thinks you have to lower interest rates. And under your sworn testimony in this committee, you said that the president never generally or specifically instructed you on interest rates. And so I wonder whether you will just commit to responding to our letter.
Sure. I stand by every word that I said at my confirmation hearing, and now I have a 7-week track record subsequent to that, and you can judge not just my words but my actions. And I'm happy to continue the discussion with you about this topic if you think it's fruitful. I will say I've spent 7 weeks doing a lot of hard business of reform, but I'm happy to continue to engage.
Okay, and you will respond to the letter that Senator Gallego and I sent to you.
I'm happy to find the letter. I think it came to me before I was confirmed to the Fed. I'm happy to find it and work with you and your colleagues to answer any questions you have.
Okay, thank you. Now, Federal Governor Christopher Waller recently announced a framework to radically transform the Fed systems of 12 regional reserve banks, and Congress deliberately created a centralized system of 12 regional banks to ensure that regional economies and communities are represented when the Fed makes consequential decisions. The Federal Reserve Bank of Richmond, which serves Maryland, employs over 100 of my constituents at the bank's Baltimore branch, and I share our ranking member's concern that these changes are being pursued without consideration of Congress. And so do you agree that regional presidents and board directors are responsible for day-to-day operations under the Federal Reserve Act and not the Federal Reserve Board in Washington?
So I love the structure of the Board of Governors and the Reserve Banks in the Federal Reserve Act, and I love the Humphrey Hawkins testimony. I am obligated to give it to you. As the Federal Reserve Act makes clear, as you know, is the reserve banks run operations and their budgets are reviewed and approved by the Board of Governors. With respect more broadly to the proposal you suggested, I think we need to try to do two things at the same time. Be good stewards of taxpayer money and continue to drive efficiencies throughout the system, and at the same time, respect the independence of the reserve banks so that they can show up in Washington at an FOMC meeting and feel as though they have the resources at their disposal to argue their point of view. My addition to what's already been said publicly is my view is the 12 reserve banks should be 12 centers of excellence. And if there is some savings that we're necessarily driving through consolidation of overlapping functions, they should at the same time be able to build out capabilities and solve any of a number of problems of economic policy that are inside of our remit. I've encouraged the 12 reserve banks to think about what they could do to have a center of excellence.
So, Mr. Chair, your answer is yes, you do agree that the regional presidents and board directors are responsible for day-to-day operations under that act.
I do believe that's subject to the oversight of the Board of Governors and the statute.
Okay. Just one last question. Now, you've suggested that artificial intelligence will generate productivity gains that will reduce inflation and help lower interest rates. And I'm optimistic as well about the promise of AI, but we need to be really clear-eyed, I think, in considering the whole economy and the impact there. The Fed has two mandates, low inflation and maximum employment, and you've spoken often about AI's impact on prices and inflation, but inflation is still high. So it's important that the Fed also addresses the employment piece of this mandate, and just as urgently, the Fed should consider who benefits from AI. So some economic models for AI's economic effects foresee gigantic returns for capital holders, but stagnant wages and job losses for workers. So as it relates to AI, what specifically is the Fed doing, studying, or preparing for under your maximum employment mandate?
So I endorse both parts of the dual mandate, and I don't want to suggest that productivity and the AI wave only impacts one part of it. We've got no legislative orphans, and I think that the effect on the labor markets is real and something we're thinking long and hard about, short-term, medium-term, and long-term.
Okay. Thank you.
Senator Banks.
Thank you, Mr. Chairman. Chairman Warsh, welcome back to the committee for the first time as the chairman of the Federal Reserve. I was proud to vote for your confirmation back in May, and it's great to have you come back. I understand we do this on the committee, Mr. Chairman, twice a year. I'm looking forward to continued dialogues with you and before this committee for many years to come. You're very familiar with my state, Indiana. We've talked about Indiana a great deal. There's no state in America that has a stronger manufacturing base than Indiana.
Senator Jim Banks, Republican from
Manufacturing jobs are the biggest share of our workforce in our state and accounts for about a quarter of our state's economy. For decades, though, policymakers here in Washington have turned a blind eye as foreign countries erode our manufacturing base and rely on artificially cheap labor. But under President Trump, we have a renewed focus on fighting back and protecting America's manufacturing edge. In addition to President Trump's tariffs, we are helping American companies compete against foreign competition by investing in new technologies that help American workers make better quality goods more efficiently than countries that rely on cheap labor. Mr. Chairman, business investment in the U.S. is surging right now. Fixed investment grew at a rate of 10.1% in the first quarter of 2026. Can you talk more about that and about how rising investment in new technologies like AI and robotics can strengthen America's competitive position against the rest of the world, especially when it comes to manufacturing?
So thank you, Senator Banks. The CapEx surge is remarkable. This is a CapEx investment boom that the country hasn't seen in more than a generation. It is the seed corn for productivity and GDP improvement over the next decade. The way these waves typically go historically, which doesn't mean it has to happen this time, is a surge in CapEx with some lag leads to stronger economic potential, stronger growth, higher wages, and more productivity. This surge is different. It's happened faster, it's probably going to be bigger, and it's accelerating in real time. The effect on the Fed's mandate is something we're taking very seriously. But I would far rather have a capital expenditure boom than have large corporate profits go back into share buybacks and dividends. Investing here is a good thing, and all other things being equal, it's going to have fruits for the American economy.
Good. Later this year, bank regulators are expected to finalize new rules covering capital and stress testing. The Fed's new rules are a world away from the harmful Basel Endgame proposal that the Biden regulators tried to jam through, which would have hit working families in Indiana with a hidden tax on every mortgage and small business loan. But the transition still has to be handled well. These capital rules touch every part of a bank's planning. Implementing the new rules with a clear and organized timeline is critical. Will you commit to coordinating the rollout of these new rules across all major bank regulators so community banks especially can rely on clear guidance to follow?
Yeah, I think clarity here is really important. These rules, as you know, are out for comment. I'm keenly interested in the comments as they come in. I think it is a very good thing if the bank regulators can speak with one voice. What we saw going into the 2008 financial crisis was a lot of regulatory arbitrage where institutions were choosing the regulator that best served their needs. I would love to have one standard, and I'm committed to work with the other regulators to see if we can achieve it. I'll just make one other point. You referenced the stress tests. The stress tests were a design and idea that we came up with one dark evening in the 2008 financial crisis. Stress tests have been used from that year till this year. I'm open-minded to reforms around the stress tests, so the stress tests aren't merely a compliance exercise, but help reveal both to the regulator and institutions what would really happen under a series of stresses.
Good. When you were here during the confirmation hearing, you and I talked about the China threat, something that you focused on for years. I know you're only 2 months into the job as chairman, but any updates or on how you can assess the threat that China poses to the dollar's role as the world's reserve economy?
So they're pacing power. They are the AI, the fight over AI is one of a proxy fight between these two economies that are striving for significance and influence over the next decade. I think we are on the front end of those technologies, but I don't want to sound complacent about it. And like with all technologies, they can be used by friends or adversaries. And so if there's a subject upon which I've been focused related to this in my first 7 weeks is making sure the institutions we regulate and the Fed itself is aware of our vulnerabilities. And I still think we've got some work to do on that.
Good. Thank you. I yield back.
Senator Blunt Rochester.
Thank you, Mr. Chairman, and thank you, Ranking Member Warren. It's good to see you, Chairman Warsh. I will tell you, I've been in and out of the room because I have 4 committees happening at the exact same time. And so going back and forth, and I know a lot of the things that I wanted to talk about or questions I wanted to ask, some have already been asked, so I may not use the whole time. But when we talked before during your confirmation hearing, I raised questions about primarily 3 things. One was the independence of the Federal Reserve, and you've spoken a lot about that today in the hearing. I talked about transparency around reforms and what does regime change mean, and how does this connect with our regional Federal Reserve boards. And then I also shared with you just my real deep concerns about the impact of AI as well as the opportunities for AI and just the changing landscape, particularly when we talk about that mandate of full employment, maximum employment. And lastly, I would also say really important to me, and I shared that with you as well, is that the focus primarily a lot of times what is talked about is the Wall Street side and not the Main Street side. And so how Main Street has equal footing to Wall Street. And so a lot of the questions that have come, one of the things that you shared in your testimony was about the task forces that you have established, which I think is a really good idea. And I think the choices of things that you're focused on, from communication, to AI and the influence, all of those things are really important. And I think some of my other colleagues might have asked questions. I was on the AI one in particular. I hope that there will be the inclusion of other voices beyond economic experts and tech individuals, but actually families, businesses, people that are actually both consuming and impacted by AI. So if you could talk a little bit more about the makeup of that one in particular and how you will include people both in the task force and how you will include Main Street in your ongoing work at the Fed, because before we had the Fed Listens tours, and I heard positive from both folks on the Federal Reserve side as well as the community side. So could you talk about the inclusion of Main Street on the task forces, and then ongoing in your work, how will you include Main Street?
Yeah, so let me address both those questions, Senator. First, on the task forces, we have 15 people across 5 task forces. I think there's a breadth of views, perspectives, expertise. They're all fantastic. They aren't decision makers. You're talking to one of the ultimate decision makers. And I believe, like you do, in the reserve banks. The reserve bank presidents bring a breadth of views from their communities, from their businesses, and they and we are going to be the deciders about what to do with these. I don't want you to think that I've outsourced anything to these task forces other than coming up with new ideas.
Which is fine. My question is more related to the makeup. One of the concerns I have, even on technology, we've seen incredible advances where voices were not included of other folks. And so therefore we had technology that mistakenly took a black judge and thought that he was a criminal based on bad input of how the technology. So I'm talking about the input in the task forces as well as your ongoing input.
Yeah.
I don't know if you will continue with like Fed Listens or any of those things, but how will you get feedback from community organizations, small businesses, consumers?
Yeah. I don't mean to give you an excuse. I've been here 7 weeks. We've been pushing for reforms, but you have my commitment. The focus under my chairmanship at the Fed is what's happening in the real economy. And by the way, there are plenty of people on Wall Street who are upset with me already that I'm somehow not feeding them all the information they'd gotten before, and if they only had my dot, everything would be swell. My message to them is play the ball, don't play the Fed. By that I mean figure out what's happening in the real economy, respond to data that's happening in the real economy, rather than somehow suggest that we're going to be focused on Wall Street. So you have my commitment to focus on Main Street because it matters mostly to our dual mandate.
Well, I appreciate the time. I will also follow up with questions for the record and also particularly on the data piece as well. And I yield back, Mr. Chairman.
Thank you, ma'am. For senators who wish to submit questions for the hearing record, please do so by Wednesday, July 22nd. The chairman will have 45 days from that day to submit your responses to questions for the record. This has been a great hearing. Thank you. Well done so far, so good. We look forward to even more time that we could spend together. And I frankly believe that the American people will have their trust restored under your leadership as relates to the Federal Reserve.
Thank you, Mr. Chairman.
Absolutely.
This time on the Senate side, as we just heard from the chair, Tim Scott, Republican from South Carolina, and of course the ranking member, Elizabeth Warren, the Democrat from Massachusetts, had, as expected, a fiery exchange with Mr. Warsh. But this is the second day, a very similar line of questions to what we heard yesterday in front of the House Financial Services Committee. Warsh once again professing his independence when asked repeatedly, said President Trump has not tried to interfere with the central bank, stating the president, quote, has not tried to influence the conduct of monetary policy, unquote, and that he would continue to do his job if President Trump attempted to influence him, saying that he would, quote, keep his head down and do the job, unquote, if the president made such an attempt. Saying toward the end there as well that investors should figure out what's happening in the economy, saying that plenty of people on Wall Street are upset with me already. We'll keep tabs, of course, on a series of hearings on Capitol Hill today. Warsh was just one of them. We've got the president's nominees, actual confirmation hearings as opposed to updates from their agencies. His nominees for Attorney General and for DNI. We'll talk more about that as Republicans also release their plans, their framework for Reconciliation 3.0. We're talking defense spending here and farm relief. We'll get to that in a moment with Eric Watson, who is live on Capitol Hill today. But why don't we set the baseline first with our friend Charlie Pellet. He's been watching the markets as Kevin Warsh has been talking as we get to stocks, bonds, oil, and a lot more. Charlie, take it away.
Hi, thank you very much, Joe Matthew. Little change where we stand right now on the S&P 500 index. In fact, unchanged. We have been swinging between gains and losses, but safe to say we are just about the worst level of the day right now on the S&P, down by 1 point. This Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide, goldencrestmetals.com/guide. This morning we got the PPI report. It did show softer than anticipated inflation, The Dow's now advancing 95 points, up 0.2. NASDAQ little changed on the day as well, with the NASDAQ 100 index down by 1%. 10-year 4.55%. Gold down $14 the ounce, down 0.4%. A retreat for crude, little change, down 0.2%. 79.14 a barrel on WTI. Brent crude right now 84.47, down 0.3%. And that, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie, we thank you, sir. We'll get back to Charlie pretty soon, actually, about 10 minutes away with another check on Wall Street here. Red headline on the terminal as SpaceX drops below its IPO price for the first time today. A couple of stocks that have been getting a lot of attention lately are not faring terribly well. SpaceX being probably number one after staging the biggest IPO in history. It's down 3% now, 132. Remember, it debuted at 135. We're also watching Micron because it's Wednesday. That's the story just about every day in this market, for better or worse. Following SK lower, Micron shares are below $900 now, down 10%. This is a big one, losing almost $100. So we'll see if the bottom feeders are waiting on the sidelines, because history would suggest that they will at some point here be buying the dip, certainly as we approach inflection points on the moving averages. Politics raging here in Washington with a lot to discuss. So thanks for joining us here on the Wednesday edition here on Bloomberg Radio. We're streaming live on YouTube. Get in there now as we take you to Capitol Hill next. Search Bloomberg Business News Live. Find our live stream. You can pause it. You can back it up. I'm telling you, it's the coolest thing you got going. You basically have the whole terminal in your lap free. Am I even allowed to say that? Probably not. But it's kind of true. Live headlines, live stock quotes, live interviews, as the Republican leadership in the House rolls out the framework here for Reconciliation 3.0. Yes, the one everyone says doesn't have a chance to pass. They're going for it anyway, and this is not cheap stuff. We're talking about a roughly $80 billion plan, and a lot of that's going to be defense spending. $67 billion, they say, $11 billion for farm aid, and the president wants the Save America Act in this thing. If you talk to the leadership, and you were having an honest question, they would probably tell you they do not have the votes. So can they get them? Let's start there with Eric Wasson, Bloomberg, of course, congressional correspondent, live on the Hill right now. Eric, it's great to see you. I know the vice president's heading up there to rally the troops today. Will that help?
I think it will. Just to give you some updated numbers, the plan now has been released. It's a little bit more expensive. In fact, it's $95 billion total. Of that would be $73 billion for Iran war-related costs, $12 for farmers, and $10 billion, which we expect to be used for grants to incentivize states to check voters' IDs. This would sort of fall short of the main Save America Act idea of forcing states to do so, but we just really believe that would not abide with Senate budget rules. You know, Senate budget rules say these budget bills have to be fiscal in nature. So this is, they're already getting some blowback. I just saw Nancy Mace saying that she's upset that this adds to the deficit. There's no real offsets here. Early on in the discussion, there was talks of hundreds of billions of dollars in anti-fraud, as it was termed, Medicaid, Medicare, and other provisions. They're all out. The Hawks wanted $350 billion for the Pentagon. This is a much smaller one, although we're hearing rumblings maybe they'll do Reconciliation 4 in December after the election. So, you know, this is like becoming like almost like a Jason-style movie where you just have sequel after sequel. But nonetheless, it is the priority for the Speaker and the Republicans. You know, munitions are running low, whether you support the Iran war or not. They're saying, look, this is a defense emergency, and we got to get this done. The idea is to have the budget, which is the outline, on the floor of the House next week, and then come back in September and pass it. But that's right before the election. I was just looking at the polls. 60% of Americans in Quinnipiac poll do not support the Iran war. This will be a dicey vote for some Republicans about to go to the polls.
It's like a Jason movie. The hand keeps coming out of the water. Here, Eric Wasson. How did this get to be? This is amazing. $95 billion. That's incredible. Does it stand a chance of passing on the floor?
I think the smaller version has a bigger chance of passing than the $350 billion, because the $350 billion really put you in a position of, well, we need to offset some of this, but how do we do that? And our moderate's going to vote for things, even that are term fraud, that can be painted as Medicare cuts right before the election. You talk to senior Republican aides, and they say, look, if this went through the normal war funding process, it would not be offset. okay, they admit that maybe the farm aid and election money is a bit of a different story. So there might be some discussion about offsetting that. But if you look at the way this outline is written, where would you find offset for farm aid? By cutting food stamps. That would be very controversial. Where would you find, money for, it has to be within the committees of jurisdiction, right? They're not including tax measures. Ways and Means, the one that we always focus on, tax, Medicare, Medicaid, that's not in this budget. So that's not going to touch those big things. Much to the disappointment of some free market, people like Club for Growth and others that want to see the capital gains tax index and others. That's not happening this time, but maybe in the lame duck.
All right, this is really helpful. I'd like to ask you about defense spending. And this issue is looming large today. The president's on his way to Pennsylvania with Senator McCormick at his defense conference. Eric, and the NDAA, we say it every year, must pass legislation is what the boilerplate tells us, is running into some trouble here. If it's must pass, will it pass?
Well, it was blocked by Senate Democrats. They view this as a vote to sort of green light the Iran war, and they really feel like unless that's resolved, this is toxic for them. It also has a higher top line than they would like. It does include some of the administration wants to basically increase the defense budget from $1 trillion to $1.5 trillion. And part of that is in that NDAA. Part of it was part of this other budget. I know it's a bit confusing, but the Democrats are saying you can't increase the Pentagon money without fully funding or increasing our priorities. And this is the same president who's eliminating the Department of Education unilaterally, who's cutting federal workers left and right. And they just feel like, this is not a bipartisan compromise when you step back for it, as much as the Hawks normally would vote for defense. And there is acknowledgement by people like Chris Coons and others that, we have spent, our munitions. We are low on cruise missiles. We need other things that were used and continue to be used to bomb Iran. But we don't have a coherent plan from the president, in their view, an exit strategy, and frankly, even briefings. We have people from Bill Cassidy and others on the Republican side saying, why aren't you up here briefing? Very controversially, the president issued a new notification to Congress just days ago saying the Iran war has restarted. This is an attempt to avoid a 60-day clock by which he needs to get authorization from Congress under the War Powers Act.
So just quickly, what happens if NDAA does not pass? Does that add to the chorus, singing about a potential government shutdown?
Well, this is a complicated issue. The NDA is an authorization bill. The real rubber meets the road, as I always say, in the appropriations process. So there would always be a defense appropriations bill that would tend to follow the NDAA, although not exactly. That's what really matters. So what really matters as far as the shutdown is what we expect to be a CR, continuing resolution, that would need to pass by the end of September. And, that's a separate issue. There's really no meeting of the minds there on Republicans and Democrats. They can't even pass non-controversial bills.
I just mean more psychologically, Eric. If we can't get an NDAA passed, does that tell us anything about actually passing a budget, or we're going to be in CR land forever?
Well, we certainly are going to be until after the election. People are, anytime a party like the Democrats feel like they could gain an upper hand in the election, they don't want to have a final settlement. So I think, my prediction would be December or the latest in the spring before we finally see budget bills, if they can come to terms. But yeah, we're seeing series of shutdowns. We could see that again, although ICE has been taken off the table, and now potentially the Pentagon.
It's job security for Eric Wasson. Good to see you, my friend, and thank you. He's live on Capitol Hill for us, as always, combing the hallways and the corridors of power. Speaking of which, it's quite the power circle out in Aspen today. We're going to bring you there next. The Aspen Security Conference. We've deployed the asset once again. Bloomberg's David Gura is out there, and he spent some time with Mark Esper, the former defense secretary, earlier today. This is all playing in. Are you sensing a theme here yet with defense spending? You'll be sure of it by the time we get to our second hour, because Tyler Kendall is up in Pennsylvania, up in Carlisle, where the president's going today at the defense conference being run by Senator Dave McCormick. So a lot more to follow. We're going to connect with David Gura next in Aspen. We'll have our political panel ahead as well with some of the wild testimony we heard today, confirmation hearings for Blanche and Clayton. It's all ahead here on Balance of Power. We update Wall Street first. Charlie Pellet holds forth from World Headquarters in New York. Charlie, where should we start?
Right now, I'm going to start, believe it or not, with SpaceX because that closely watched IPO is now below the $135 IPO price. Right now, we got SpaceX at $133.49. This on a down day for the rest of the market, but SpaceX shares now at their lowest level since going public, breaking below the $135 a share level that it sold to investors last month. Again, SpaceX right now is trading lower, $133.48. The Dow, the S&P, NASDAQ, they are all in the red, giving up earlier gains. You're on the GIP screen on the S&P, and we are looking at lows of the day right now, down 10, 75.33, where we stand, down by about 0.1%. We've got the Dow lower by 45 points, lows of the day down 0.1%. NASDAQ turning around as well, down by 0.1%. While techs are selling off, interesting to note that the Bloomberg Mag 7 index is higher. That index up now by 2.1%. The 10-year on Warsh testimony day, 4.55%. The 2-year, 4.14%. Gold down $17 the ounce, down 0.4%. And crude holding below $80 a barrel, specifically West Texas Intermediate crude, $79.26 now, down by 0.1%. Briefly, Anthropic said to be planning IPO investor meetings as its listing nears. And sources tell Bloomberg the Yankees are in advanced talks to raise nearly $3 billion of financing from Apollo Global Management as more institutional capital flows into pro sports. Recapping stocks lower, S&P down by 0.1%, SpaceX below its IPO price. That, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie, that's what you need to know from Charlie Pellet, and he'll be back in 20 minutes with more on the markets here on Balance of Power. It's the Wednesday edition, and we have deployed the best of Bloomberg in 2 different places in the country today to follow this unfolding narrative about defense spending. While lawmakers are gnashing teeth over the NDAA and arguing about whether the Pentagon ought to have $1 trillion or $1.5 trillion budget in the next year, it'll probably land somewhere in between by the shape of things. And as we resume a war with Iran, there are 2 very important conversations happening today. One of them's in Pennsylvania, where Tyler Kendall went. The president's on his way there as well for a roundtable at Senator McCormick's defense summit that's taking place there. In Aspen, it is what has long been billed as the premier national security and foreign policy conference. They come from all over the world for the Aspen Security Forum. And we have deployed our asset, David Gura, right in the middle of it all to capture the conversations and give us a sense of the way this is unfolding as we go back to war, as I mentioned, with Iran. And what is it, a 5th day now of strikes with a market that is starting to get a little bit worried about the geopolitical direction, the price of oil and gas, and of course the cost of weaponry, rebuilding munitions that have been spent and we continue to burn in real time in the Middle East and in Ukraine. Let's get to David right now. He joins us from the Aspen Security Forum. David, it's great to have you with us here on Balance of Power. What are you hearing as you join sideline conversations about some of these tough questions?
Yeah, it is a very vibrant sideline, Joe, as you might imagine. And yes, we're at this geographic remove. This conference has happened for many decades and has drawn bipartisan members of Congress, as you mentioned, ambassadors and representatives from countries all over the world. There's no difference this year. They're all here, but everyone is tracking what's happening in the Middle East. And it's been difficult to have conversations because so much news is changing so much. So I sat down, you mentioned with the former Defense Secretary Mark Esper yesterday. That was right after a bombing campaign. The latest bombing campaign yesterday concluded when that blockade was going to go back into effect. So everyone paying acute attention to what's happening in the Middle East and thinking about the plan forward. And I was struck by how emphatic Secretary Esper was in our conversation yesterday that blockade needed to be in place, that memo of understanding is now dead, and he's counseling this administration really to go back to the drawing board, keep that blockade in place for as long as they need to come to an agreement that is more substantive than the one that they signed just a few weeks ago. There's a huge focus here on China as well, as you might imagine. I think that there's a sense here among a lot of policymakers, past and present, that the U.S. has been distracted. Its gaze has been directed eastward. Yes, what's happening in Ukraine, but the Middle East as well. And as you know, Joe, there's a lot of concern about what China is doing when it comes to AI and, of course, when it comes to trade policy as well.
Let's stick with Iran for a moment, as David mentions the comments from Mark Esper. Let's listen to what he said.
I don't think the ceasefire was ever in place. I've been describing it more as a suspension of major hostilities because we were having every few days these tit-for-tat strikes, right? That said, he's hinted at, but I'd like to hear him explicitly say the MOU is done.
The MOU is done, and the president has said that. He's saying a lot more, though, David Gura, and I'm wondering how his remarks in this interview he did with Fox might be playing there. He said next week it gets really bad for them because next week comes the power plants. Next week comes the bridges. We're going to knock out all their power plants. We're going to knock out all their bridges unless they get to the table and negotiate. Is the vibe in Aspen reacting to this statement, or is this something they've already heard before?
I mean, we've heard variations on that before, of course, Joan, and the alarm that comes with that, of course, some of these could be war crimes if he were to mount that bombing campaign that he's described there on civilian targets. But I think it belies the fact that there is no strategy beyond that. So there's this effort by the president to get back to the negotiating table. And we heard from the Iranian government that, look, they feel like the U.S. walked away from this. They don't feel like they walked away from this memo of understanding and this 60-day period. So they don't really feel a lot of propulsion to get back to having diplomatic talks with the U.S. I think that that's what's most evident to me as I talk to folks here is the emphasis on there needing to be a concrete strategy on a path forward here when it comes to Iran. And I had a fascinating conversation yesterday with Megan O'Sullivan, who's a world-renowned energy expert who's based at the Belfer Center at the Harvard Kennedy School. And she said something that I've heard echoed by a number of energy experts here, which is you look at the price of oil. It wasn't as bad as a lot of folks thought it would be, including the president. He often says, as you know, Joe, there were warnings that it could be $200 a barrel as a result of his decision to bomb Iran. And we didn't get anywhere near that number. But as we've seen in recent days, it's the crack spread. It's the difference between the price of oil and refined products that has grown wider and wider. It is this yawning gap now. And I think that that's of great concern to Dr. O'Sullivan and other energy experts here is what's that going to mean? And certainly, chiefly, what that's going to mean is that you and I are going to be paying more at the pump, and a lot of the products that we buy are going to be more expensive as well. So there's kind of a storm on the horizon here when it comes to, yes, this conflict, but its knock-on effects as well, that we haven't really felt the economic knock-on effects of that in full yet. And there's a level of complacency, I think, around the world that, look, the global economy weathered this reasonably well. A note of caution from Dr. O'Sullivan and others that we shouldn't take that at face. That's likely to change here in the weeks and months ahead.
I heard you talking about the crack spreads with McGlone on the weekend show alongside Ms. Ruffini last weekend. So we're at, AAA says we're at $3.89. Gas Buddy is pointing to $4, in the next couple of days here. I will note, though, crude oil has turned lower today. We're down just a fraction. David, what does the crew at Aspen think of a $1.5 trillion Pentagon budget? Is it expected to actually be reality?
I don't think so, at least not from the crew gathered here. And you brought up the kind of split screen that we're seeing here. Yes, there are folks from the defense world here in Aspen. There are a lot of folks from the defense world in Carlisle as well. I suspect that number is going to be more palatable to a lot of those members of the Pentagon, the National Security Staff, and the Trump administration who are gathered at that conference that's taking place simultaneously. I would say a lot of the conversation when it comes to defense spending centers on what the U.S. can learn from the conflict in Ukraine. No surprise, I think, to a lot of people who've watched that unfold. The way that a very cheaply made drone can stand up to ballistic missiles that cost many millions of dollars and takes years to make. So I think that's very much the focus here, is thinking about the defense budget in that way, looking at sort of the novel changes that we've seen when it comes to military technology, pushing aside that massive number, which I should say is just gargantuan compared to what we've seen in defense budgets past, and looking at how to spend that money smartly. A lot of conversations here about what the president promised in Ankara just a few days ago, giving that Patriots license to Ukraine, the prospect of them getting more of that missile defense system, but really thinking more broadly and more creatively about what lessons they could learn from what's happened in Ukraine and how they could be applied by the U.S. and other nations in their own defense.
You were very delicate in the way you referenced the event in Pennsylvania today, David Gura. The headline that I see at the Hill, Trump administration snubs Aspen Security Forum for second consecutive year. I remember when this came about last year, there was a reference from Sean Parnell, the spokesman for the Pentagon, said the event does not align with the values of the DOD. What's this story? What's this all about?
So I think you and I spoke last year about this right after it had happened. A number of generals and defense staff were scheduled to be here at this forum last year. At the very last minute, Secretary of Defense Pete Hegseth told them that they couldn't go. And it was kind of the beginning of what we've seen over the last year, which is him kind of canceling fellowship programs with major universities, for instance, kind of scaling back the level of engagement the Pentagon would have with events like these and institutions like Harvard, Princeton, where customarily the Pentagon has allowed members of the military to go for further education. That wounded the organizers of this conference. I think I can say that very safely because for so long, as I mentioned, this has been a conference kind of above partisanship. And they do miss, I think, having members of the administration here in the way that they would have had during past administrations. Look, there's no soreness about the fact that this other conference is going on, but I think that what you would hear from Ambassador Nick Burns, who is one of the organizers of this conference, is that what has made this conference great is having people from all backgrounds coming together to talk. And I think what's sorely missed here on the issues that we've been talking about, whether that's defense spending or the future of military technology or China, is the opportunity to hear directly from members of this administration, from the U.S. government itself. We are not getting that in quite the way that we have in years past. And I should say this is largely confined to the national security apparatus. We don't have members of the Defense Department, members of the State Department really aren't here, save for a couple of ambassadors, including Tom Barrack, who's coming here from the Middle East. But you do see a presence on the economic side, and I'm going to sit down a bit later today with Jameson Greer, the U.S. Trade Representative. There is still an eagerness, I think, on the part of the economic side of this administration to introduce that to members of this wider community as well.
Fascinating. Well, I'm looking at this backdrop. I mean, it's another ugly location that you've decided to locate yourself, David Gura. What do you do in the summer there? I mean, you're not skiing.
Yes.
You playing like disc golf after the show, or what do you do at this time of year?
So this takes place at the Aspen Meadows Resort, which the Aspen Institute created. And so when you walk in, you pass all of the pickleball courts. And I should say I've not played any pickleball since I've been here. But you're right to point out that the setting is picturesque and beautiful. The morning starts for participants here with bird watching. If you're one of the first 15 to get here, I was not one of them today. But it is a special place with a lot of remove, as I mentioned at the top. And I think that it is conducive to folks getting together for casual conversations on the sidelines. I've been very lucky to be able to film a number of those, and we'll continue to do so today and tomorrow.
Great, I love that. Think social video, David. We need more of that. Get the bird watchers. We'll put it all over the website or something like that. It's great to see you, my friend. Be safe out there. Aspen Security Forum with the one and only David Gura. He'll be back later on in the broadcast as he shares some of these great conversations with us. And coming up, we're going to assemble our political panel. As I mentioned, some key testimony today on Capitol Hill. Todd Blanche, the president's choice to be Attorney General, in the throwdown with Republicans and Democrats. Listen.
In recent years, we watched the Justice Department turned against many of you and a former president, and it damaged the public's faith in justice. We are fixing that. Members of this committee on both sides have fair questions about the hard debates of the past year, and I welcome them.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. SpaceX falls below its IPO price. The NASDAQ 100 index is now down 1.2%. Chip stocks are being hit hard, with the SOX now down by 5%. That is the Philadelphia Stock Exchange Semiconductor Index. The Dow, the S&P, NASDAQ all in the red right now. A rout in chip makers weighing on stocks. S&P down 14, drop there of 0.2%. NASDAQ down 51, decline of 0.2%. As we mentioned, NASDAQ 100 index lower, down now by 1.3%. The Dow, by the way, down just about 0.1%. The Bloomberg Mag 7 index, however, trading higher, up now by 2%. Again, the SOX down by 5%. 10-year 4.55%, with a 2-year 4.14%. Spot gold is down $22 the ounce to $4,030, down 0.5. West Texas Intermediate crude now higher, just advancing by 0.1%. 79.38 a barrel. Brent does remain lower, little change, down under 0.1%. 84.68 a barrel on Brent. Wall Street further dialing back bets on Fed interest rate increases this year, but could we perhaps see a rate hike before the midterms in September? Stephen Stanley is chief economist at Santander U.S. Capital Markets. He was interviewed on Bloomberg Surveillance.
That would actually be exhibit one in Warsh's argument for, hey, we're independent, right? So in some ways, hiking in September, which, would be kind of something that the Fed typically has avoided moving right before the election. But I think moving in September actually bolsters his credibility in a way, especially if there's a strong case for the move.
Stephen Stanley, chief economist at Santander U.S. Capital Markets, interviewed on Surveillance. After earnings, Morgan Stanley shares down 1%. Goldman, which reported yesterday, down 1.7%. Right now, we've got BlackRock after earnings up by 6.9%. I'm Charlie Pellet. That's Joe Matthew. This is a Bloomberg Business Flash.
All right, Charlie, we do thank you. As the president takes to Truth Social, while he was listening to Charlie Pellet, he was grabbing the phone there, hit send right when Charlie sent it back to me. Upset about data centers. Big story yesterday, if you didn't hear it, on Balance of Power. Kathy Hochul, the governor of New York, put up a 1-year moratorium on data centers. New York. And as I read from Bloomberg Intelligence, our litigation analyst, Justin Teresi, says it's probably not the last. After Hochul's July 14 executive order paused new large data centers in New York for up to a year, he writes, hyperscalers like Alphabet, Amazon, Microsoft, as well as developers such as Equinix, and yes, Digital Realty Trust face increased policy risk as political will appears to be building and spillover is likely. Digital Realty shares lower today by about 0.5%, giving up some important technical levels on the way down. Enter President Trump asking New York to change its policy. Let's get to Truth Social here and see what the president has in mind. Quote, New York State has made a terrible decision. Data centers are tremendous wins for the states and communities that are lucky enough to get them. New York should change its policy immediately, all caps. The radical left Democrats, as he writes, must not be allowed to cause us to lose data centers, AI, and all of this incredible new technology to China and other countries. If you also search the terminal, though, you will find that some Republicans finding a populist streak when it comes to data centers. This is more complex than just left versus right, and certainly more complex than the hyperscalers versus the rest of the world. We're talking about competing for water and power, which is pretty important for neighborhoods, not to mention the racket that some of these things can make. Park that. We'll have more on it later with high drama today on Capitol Hill and a couple of confirmation hearings that we wanted to bring you in on here. We brought you the second day of testimony from Kevin Warsh, but it was the confirmation hearings for President Trump's nominees for Attorney General and DNI that had our attention. And we'll start with Acting Attorney General Todd Blanche before the Senate Judiciary Committee today, speaking with very skeptical Democrats, even a couple of skeptical Republicans when it came to John Cornyn, Tom Tillis, and others. Cornyn saying that there's a way for Blanche to earn his vote, but he could also lose it. Enter John Kennedy, the Republican from Louisiana, the folksy voice of the Republican caucus, with a back and forth That got to the heart of the matter when it comes to independence for President Trump. Listen.
Are you and President Trump friends?
I'm his lawyer, was his lawyer, and now I'm the Deputy Attorney General. So I met him as his criminal defense attorney. I'm not sure there's very many people who have ever had a criminal defense attorney who calls that person their friend. I now have a...
Well, let me put it this way. Are you enemies?
No, we're not enemies at all.
We assembled our political panel to help us walk through some of these because, you know, the conventional wisdom is no matter how much fireworks we get, still waiting on that Guinness record, by the way, from July 4th. Both of these gentlemen are likely to be confirmed. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are with us. Jeannie is our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Rick is a Republican strategist and partner at Stone Court Capital. Jeannie, I could listen to John Kennedy all day long, and I think you could too. I'm just wondering if that exchange highlights the issue here and if it even matters, because Blanche will be confirmed either way.
I am not as convinced that it is a done deal. I think if I had to be a guessing person, probably like, 60-40, he gets confirmed. But the trick is he's got to get out of committee, and that means he's got to keep Cornyn and Tillis on his side. And, just before we came on, Joe, I have to confess, I've been listening to this since 9 a.m., so I'm all into this. But right before we came on, you had Tom Tillis there, and I'm going to quote him directly. He said, "I want to stick a fork into this turkey of the 1776 fund." And of course, what he's referring to there is the big holdup for him and for John Cornyn, at least one of the biggest ones, which is this anti-weaponization fund. And the fact that in response to questions from John Cornyn, you had Todd Blanche unwilling again to put in writing that this fund is dead. And of course, lawyers will tell you the reason you don't put it out in writing is because it is a contract. It can be negotiated as we go forward. And so you now have Tom Tillis talking about Congress taking action and passing legislation to say that this fund is dead. And of course, many Democrats and Republicans don't want to do that because this was not anything to do with Congress to begin with. So that, I think, is going to be the biggest sticking point, is this anti-weaponization fund and the fact that it protects the Trump family from auditing by the IRS going forward.
Well, what do you think here, Rick? I mean, if there was one thing from you had one job category, it would be this, to hose down concerns about the anti-weaponization fund. Does his response imply to you that Donald Trump wants to keep the door open to this?
Yeah, the fact that there isn't a written agreement to not go forward with it, since there is a written agreement to go forward with it under certain terms and conditions, seems to me that he really wasn't prepared for this hearing. I mean, it's a no-brainer. You've made the decision, a Sherman-esque statement, there will be no fund. Then just do what the document that it makes it exist says, which is write a memo to the president and get his signature on it that says there will be no weaponization fund. I don't know why that's so hard. I mean, unless the back door is still open to trying to do this at a later date, after the elections, after confirmation. I mean, he's just really picking a fight he doesn't need to pick if you are to believe what he's telling the committee. But this same guy who said he would not have any political repercussions going after political figures at the Justice Department, and we see how that kind of turned out. So, yeah, I think it could cause him a little bit of heartburn. I mean, I don't think Tillis and Cornyn are kidding when they say they have to be satisfied. The question is, did today satisfy them? If I were them, I'd want it in writing.
Okay, and I suppose they could get that still, Jeannie. If not, maybe you're right. Maybe this isn't so easy, because there were two sticking points. It was the anti-weaponization fund, and then it was the Epstein files. Were you satisfied with everything you heard from Blanche on this? He referred to the law that was passed and said that the Justice Department has released every document that it is aware of. This is case closed, it sounds like to him. How about you?
Yeah, he may say it's case closed. I'm not sure he has convinced all the members. And this is another area that was pretty stunning to me about the testimony. And it's something that we saw with Pam Bondi, this refusal to meet with the victims. He was asked by Dick Durbin, he was asked by others, can you tell us that you will meet face to face with these victims? And he talked about other people in the office meeting with them. He was hemming and hawing, but he would not commit. And, you know, I think Rick raises an excellent point. Either he was ill prepared on the Epstein files and also on this issue of the anti-weaponization fund, or they were banking on the fact, rightly so, like most of us, that Lindsey Graham would be in that empty seat there, and they wouldn't have to have this come down potentially to Cornyn or Tillis, these free agents sort of going rogue. But now that's the situation they're in, and it is pretty stunning, particularly again on the anti-weaponization fund, because it is such a sticking point for those two, that he will not commit to putting that in writing, except that he is doing that at the direction or at the behest of the president, for whom that fund matters an awful lot. And that gets back to the issue of independence that so many people are concerned about.
All right, so nothing's changed here. It's pretty wild when you come out of a confirmation hearing like this, you're not actually sure if this person's going to get confirmed or not. But there was another pretty important one today for DNI. Rick Davis, Jay Clayton testifying before the Senate Intelligence Committee. And the stakes are a little bit different here because Republicans and Democrats want anyone other than Bill Pulte. So I don't know, maybe this is a done deal no matter what he says. I will tell you that Senator Warner, Rick, from your state of Virginia, Democrat Mark Warner, wanted to know about the 2020 election and whether he, in fact, believed that Donald Trump won it. Here's what Clayton said.
I'm not an election denier. Joe Biden was certified as the president of the United States. We have substantial work to do, and I've made it in improving our electoral processes. It's part of national security, and I feel strongly about that.
Was certified to be president. Is that the same as he won, Rick? Is that good enough?
It's not the same as he won. And I just once would like to see some federal office holder say that America has the greatest election systems in the face of the earth and that we should be the beacon of what everybody strives for, because we are. I mean, that's a fact. There are no other facts. They've been tested in hundreds of courts around the country. And why leading legal officials in the Trump administration just can't say the words. And we know why, because Donald Trump doesn't want him to say those words. I guess, you know, I'm getting to the point where I'm almost bored by the question because every nominee gets it and every nominee says the same thing, which is what we heard today. But look, it is a red flag. I mean, like, well, so we're going to give you a public office to potentially go back to the 2020 elections and try to find dirt that has not been found to date. I mean, all the people who've been looking for it have not been able to find it, then maybe we should just stop looking.
Wow. Great answer, Jeannie. I don't know about you, but I keep hearing that Democrats are so upset with the idea of Bill Pulte that they will help to clear Jay Clayton. What's going to happen with this one?
They very well might, and that was certainly our understanding. But of course, in the meantime, after the president pulled his hearing prior, hoping to force Republicans to move on the Save America Act, what happened was Jay Clayton, in his role as the U.S. Attorney for the Southern District of New York, served subpoenas on New York Times reporters. And this has sparked a huge, huge controversy over the freedom of the press and the First Amendment. Why is he serving subpoenas at the home over the weekend of New York Times reporters? Because they dared to question the president's use or non-use, as it was leaving Ankara, of his new Qatari Air Force One jet. They weren't the only ones to do it. It wasn't really that stunning of a story given everything we read these days, but it got under the skin of Donald Trump and out went those subpoenas. And apparently Kash Patel couldn't go to Vegas over the weekend or his girlfriend's concert. He had to stay in the White House for 8 hours and work on this case. And it was Jay Clayton who delivered those subpoenas. So while Democrats may have been inclined to support him in comparison with Bill Pulte for good reason, that really does throw a monkey wrench into these hearings and the support they're going to give to him. I think in the end he gets over the line only because Bill Pulte is so objectionable to so many people with his lack of experience.
Wow. You'd say you can only go down from here, but I wouldn't say it out loud. Rick Davis and Jeannie Shanzano are with us. I'm happy to say, and they'll be back in our second hour, our great panel with our two politics contributors. Kaylee Lyons will join us, and so too will our global television audience. Stay here. Hour 2 of Balance of Power is on the way on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lyons.
Defense spending comes into focus as the U.S. goes back to war with Iran. Welcome to the Wednesday edition as President Trump heads for Pennsylvania today to take part in a defense industry conference just as the Aspen Security Forum gets underway in Colorado. I'm Joe Matthew alongside Kaylee Lyons here in Washington, reminding us, Kaylee, it's not only about how we are using weapons in places like the Middle East or Ukraine, but which weapons we're using.
Yeah, as the face of warfare changes, and increasingly the U.S. has to position itself for the threat of drones, maybe trying to make some cheaper things to shoot down cheaper threats that, of course, are being posed as we speak to U.S. forces in the Middle East, as we are seeing once again a volleying of strikes between the U.S. and Iran. It is now the 5th day that the U.S. has been conducting these renewed operations against Iran, and the president warned in an interview yesterday that they will only get more intense and potentially target civilian infrastructure like bridges and power plants next week if Iran doesn't come back to the negotiating table.
That's on the menu for next week, according to the president. As far as today goes, we're watching a very difficult debate over the NDAA, the Annual Defense Authorization Bill on Capitol Hill. President wants $1.5 trillion for the Pentagon this year, and he's looking at a couple of different vehicles to do that. But the shopping list is already being drawn up. And over the course of this hour, we're going to talk about that with our Tyler Kendall, who is in position in Carlisle, Pennsylvania, where the president also will be taking place in a roundtable, talking about procurement reform and exactly what we should be investing all this money in.
We also have to talk about how busy of a day it is on Capitol Hill, not just because of the NDAA or the budget reconciliation package that Republicans in the House are trying to get together, but also because we had a lot of testimony in the Senate today. Kevin Warsh, day 2 before the Banking Committee, but also the confirmation hearings for the president's nominee to be Attorney General, Todd Blanche, and the next Director of National Intelligence in Jay Clayton. Both of those were pretty tough hearings.
Some tenuous questioning for sure, some tenuous moments, some drama came out of these with obviously partisan interests. Kaylee, most people seem to think that they will both be confirmed. When it comes to Todd Blanche, might be a little bit closer than Republicans consider comfortable.
Yeah, so we'll get into that this hour. But of course, we also have to check on the markets, as we always do at the very beginning. And for that, we turn to Charlie Pellet up in New York. Hey, Charlie.
Hi, thank you very much, Kaylee and Joe. Indeed, a choppy session on Wall Street. We are back in the green right now, barely on the S&P. Let's get right to the numbers here. A lot of moving parts to this market. S&P 500 index higher by 1 point right now, little changed. We are seeing a rout in chip makers. The SOX, the Philadelphia Stock Exchange Semiconductor Index, down 3.8%. NASDAQ 100 down almost 1% right now. The Dow up 0.1%. NASDAQ higher by 0.1%. And again, the NASDAQ 100 index down by just about 1%. We've got the 10-year currently yielding 4.54%. The 2-year 4.13% with Kevin Warsh on Capitol Hill. Spot gold down $15 the ounce to $4,037, drop there of 0.4%. West Texas Intermediate crude bouncing around flat right now, $79.35 a barrel. Brent, the global benchmark, $84.70. It is down by just under 0.1%. SpaceX shares currently trading at $134.53. That means SpaceX is now below its IPO price of $135. Sources tell Bloomberg the New York Yankees are in advanced talks to raise nearly $3 billion of financing from Apollo Global Management as more institutional capital flows into pro sports. Again, little change right now for West Texas Intermediate crude, $79.34 a barrel. Taking a look at oil majors, they are trading lower. ExxonMobil right now down 1.4%. Chevron down 1.1%. ConocoPhillips lower by 1.1% as well. Recapping, S&P 500 index flat on the day. Joe Matthew and Kaylee Lyons, that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. Live in New York today. And we're live here in Washington, where, as we mentioned, it's a busy day on Capitol Hill, not just because of hearings, confirmation, and otherwise that are happening on Capitol Hill, but also as Republicans are trying to rally around a budget blueprint that would provide for a third reconciliation package that includes $73 billion to pay for costs related to the Iran war. The Vice President, J.D. Vance, is actually going to head to the Hill himself today to make the case for this. And of course, Joe, $73 billion, really just a drop in the bucket when we consider the asks this administration is making of Congress when it comes to defense related to spending.
That's true. That we should note this price tag got bigger. It's at $95 billion now for the full framework that was outlined, with ever more for defense, $60 billion, $12 billion, $13 that would be instructed by committees to dole out as well. Farmers get a piece of this, and as far as the Save America Act goes, it instructs House Republicans to enact as much of it as possible. That's a little bit difficult to quantify at this moment.
Yeah, keeping in mind that there are restrictions in the Senate. The parliamentarian has to rule that any measure within this is budgetary in nature, hence why this is going to maybe look more like grants for states to implement things like voter ID and proof of citizenship rather than just the wide piece of legislation the president wants to see get done, the Save America Act.
We're also looking at the NDAA, the Annual Defense Authorization Act, that has ground to a halt here, with Democrats seeing this as a red or a green light for operations in Iran, it seems. This is a must-pass, as we always hear each year, and something that we'll be following closely. It also includes an element that would prevent defense contractors from buying back their own stocks. But it brings us to this moment in time with the Aspen Security Forum underway, where they're talking about strategy, and spending is a big part of the conversation at the Pennsylvania Defense and Innovation Summit. That's getting underway today as well, with the help of Senator David McCormick, who is running this, bringing together, as he says, defense and tech leaders, including senior military commanders, industry CEOs, also a president of the United States. Donald Trump will be there a little bit later on today to take part in a roundtable. And Bloomberg's Washington correspondent Tyler Kendall has made her way to Carlisle to be part of this conversation, traveling with the president, and joins us right now with a special guest. Tyler, take it away.
Thanks so much, Joe. As you mentioned, I am joined by a special guest, the chair and president of the U.S. Export-Import Bank, John Yovanovitch. John, it is so nice to see you again here at the summit, where we are talking about bolstering the U.S. defense industrial base. So let's just start broadly. How can export financing for commercial dual-use domestic defense manufacturers help when it comes towards meeting that supply that our allies are looking at? And how are you thinking about replenishing stockpiles, even if it's indirectly?
So one of the best things about revitalizing XM has been figuring out ways where our financial tools can help bring about not just supply chain security, energy security domestically for everyday Americans, but how we can be great partners with our allies all around the world. So it really came down to it as President Franklin Roosevelt started XM in 1934. And the reasons he founded the bank then rhyme with all the challenges that we're trying to meet today. So number one, how do we help American companies win all around the globe? And I can tell you right now, we've never had more demand to partner with U.S. technology, to get U.S. industry involved in every single bit of growth projects all around the planet. Number two, energy security. How can we help bring American energy molecules and technologies to every corner of the globe? Number three, supply chain security, things like Project Vault, supply chain resiliency, Make More in America. These are things that are become so foundational to economic and national security. And last but not least, you may not think about a 92-year-old sleepy institution like XM as being focused on winning in the industries in the future, but when it comes to global AI exports, dual-use technologies, which we're talking a lot about here today, advanced mobility, these are areas where we're trying to help ensure that we can not just innovate in America, but that we can iterate, manufacture, and deliver.
Part of what's adding to the urgency is, of course, the conflict in Iran. And yesterday, we saw President Trump move off of a threat for a 20% reimbursement fee and instead says that regional allies are going to invest in the U.S. when it comes to trade and financing deals. I'm curious, can you give us any context here? Are these new investments or building on commitments that we've already gotten?
Look, what the president's doing in Iran is long overdue. What I could tell you about XM's role is that we're focused on delivering energy dominance, which involves not just energy security all across America, because I'll tell you what, if you are a state in America, like Pennsylvania, like Texas, like Louisiana, that enjoys a lot of energy exports, you also have low cost of electricity for all of your residents. But it's also about bringing about energy technology that we have to every corner of the globe. And so it's more than energy security, though, when you think about what it takes to respond to a global environment like the one we're in today. It's also about fostering next generation innovation like we have here today. It's about supply chain security, because no matter what you're trying to build and deliver, having the foundational building blocks in terms of critical raw materials is absolutely essential. And that's why what Dave and Dina McCormick have done here, convene capital providers, innovators, some of the largest companies, but also those who really are bringing and infusing innovation into the equation. That's what's most important, and that's where XM has found new life in our revitalization.
Well, how has the conflict in Iran perhaps mobilized capital to regional partners who may be thinking a little bit differently now about a reliance on the Strait of Hormuz or their own defense capabilities and holes within them?
It's funny, what we've seen is a continuation of what we experienced even before the conflict broke out, which was people coming to us at XM and saying, we want to partner with American energy technology. We want to procure American energy molecules, understanding that that's the best way to build a long-term strategic relationship. We want nuclear technology to be front and center. We want to partner with American SMRs or American large-scale reactors. And what it comes down to is that buying American is a good bet for building your future. And so what we want to do is allow everyday working class Americans to have more well-paying jobs, to have the opportunity to continue to flourish, all the while we deliver American goods, services, and technologies to every corner of the globe.
And part of this is the evolving nature of technology and AI. It's my understanding that you've just launched an initiative that would essentially help to fast track these tech exports. Can you talk to me about what the demand has been like?
Absolutely. So, thanks to the president's leadership, he issued a global AI export plan, which the Export-Import Bank we were very proud to be a part of. Now, I will say that we were the first federal agency named in the executive order that's delivered, right? So we've revamped an entirely new export program specifically tailored to the AI tech stack. And we've learned our lesson from 5G, from the telecom space only a few years ago, to understand that we needed to pivot and innovate right before we had this onslaught of demand. Because what I can tell you is every country that comes and meet with us, every company from around the world, one of the first things they ask is, how can we partner with American AI? Right? They're not just asking the president, they're asking us too. And so we want to be a frontline economic tool that allows the American technology stack to win and to be brought to every corner of the globe. Because it's not just AI. AI is going to be a foundational part of every single industry, and we want to make sure American companies win.
I understand the demand, but we're also seeing in some ways growing concern from European allies about being too reliant on U.S. tech, perhaps highlighted by the fact that the U.S. Commerce Department imposed and then lifted those export controls related to Anthropic's most advanced technology. I was just speaking with the Palantir CTO about how the French government moved to cut ties with that company in a bid to bolster their own technology. I'm wondering how you're thinking about financing technology that could be restricted overnight.
Well, what I can tell you is that we are inundated with demand for American technology partnerships, but also if you think about what it takes to deliver on the promise of AI, it's a brick and mortar process, right? It requires molecules, it requires processing, it requires infrastructure. And so all of those things are traditionally things that XM has focused on. And so from our perspective, we want American companies to win. We want us to be able to deliver a promise, because delivering an AI future is one that you and I want to be comfortable with, is going to ensure that these industries thrive for many more years to come.
In the final few minutes, I have you just quickly first on Project Volt, which you did mention at the top. Can you give us an update on how that is going when it comes to building up that critical minerals stockpile? Any sort of update that the market could be looking for?
Yeah, it's great. So Project Vault, for your viewers at home, was actually an initiative that President Trump announced in early February, where the Export-Import Bank partnered with the private sector to be able to bring about a strategic reserve for critical raw materials. And so we're very pleased to say that it's being operationalized. Project Vault has executive leadership in place. Brett Lampert, someone who's a career veteran, dedicated his entire career to supply chain security and resiliency, and so we're making great strides there.
And then final question, can you just talk to me about how you're thinking about institutional independence? Because there have been some questions raised, including by Senator Elizabeth Warren, about one financing deal that has alleged ties to the Trump family. How do you maintain institutional independence?
Look, process is key at XM. Every single applicant that comes through the door has the exact same process. And what we can tell you is that we're wide open for business. But the bottom line is that the foundational elements of every deal have to pass muster. And we're very, very comfortable with what we do all day, every day.
All right. The president and chairman of the U.S. Export-Import Bank, John Jovanovic, thank you so much for joining us here live on Bloomberg Television and Radio. Joe and Kaylee, this has been a conversation on the sidelines of the Pennsylvania Defense Summit, and I'll send it back to you.
All right, great work. Bloomberg's Tyler Kendall, thank you so much. And we'll be checking it back in with Tyler throughout the day here on Bloomberg TV and radio. She brings us great interviews from the summit. And interesting for Tyler to end there on the idea of institutional independence. It's something we've been hearing a lot about on Capitol Hill over the last few days, including from the Fed chair, Kevin Warsh, who had to repeatedly tell members of both the House and Senate that he will maintain independence from the president and not answer to him directly when it comes to rates. But the nominees who had to testify today as well faced similar questions. the acting attorney general who wants to become the attorney general. Todd Blanche had to talk about not being the president's friend or his lawyer any longer. And of course, the man who was tapped to lead the nation's intelligence services, Jay Clayton, was asked repeatedly about whether he's going to be willing, Joe, to face the president and give him tough information and potentially go against him in the Oval Office, which is why so many Democrats in particular were pressing him on the question of whether or not Trump won or lost the 2020 election, but the idea being that the intelligence is going to inform many of the president's decisions, including, of course, what is ongoing in the Middle East as we speak.
Well, that's true, and this is also why, a lot of Democrats are willing to potentially put up with a Jay Clayton because it means someone other than Bill Pulte, who has had the keys to the intelligence apparatus for several weeks now. But you're right. The intelligence that's surrounding the war in Iran is something that the president was presented with in the Situation Room once again yesterday. It was a room full as he considers options for what might come next, with full-on war being one of them. And as the president made clear in an interview on Fox News, Kaylee, civilian targets, infrastructure, power plants, etc., are still on the table and could be attacked as soon as next week. Listen.
I'll save the energy targets for last, but ultimately we'll hit energy targets, yeah. But we're going to hit them very hard tonight. We're going to hit them very hard tomorrow night. We're going to hit them very hard the night after. And then next week it gets really bad for them because next week comes the power plants. Next week comes the bridges.
So let's get more into this now as to whether or not this threat is real or just an attempt by the president to get Iran back to the table in a more meaningful way, as we turn to Chris Kennedy of Bloomberg Economics, who's here with us in our Washington, D.C. studio. So, Chris, when we consider this threat once again to go after infrastructure, which we have heard from the president before, only for him to back off, is it more real this time now that he's proved willing to resume strikes against Iran in the absence of real deal-making?
Well, we never know with the president, but clearly he's following through on the threats to continue strikes on Iran. We're seeing those strikes continue through today. We're seeing retaliatory strikes from Iran. And I think the broader point is that we're at a very precarious moment in this conflict. There's a real risk of further escalation that could cause lasting damage to Gulf energy infrastructure, for instance, or there's threats to open the conflict on other fronts, including in the Red Sea, which would cause further disruption.
So what would that mean for Iran's neighbors, if you will, if President Trump followed through with civilian targeting? Obviously, Iran would have some sort of response, whether that was asymmetric. What would it mean for Kuwait, for Jordan, we saw targeted, or even Israel?
Yeah, so far over the past few days, Iran has primarily been limiting its targeting to either vessels or to U.S. military installations in some of these countries. I think you would imagine that if the U.S. does actively target civilian infrastructure in Iran, you would see a similar response from Iran on some of its regional neighbors. Now, whether all of them or certain elements, I think it's to be seen, but clearly the risk of escalation is there. Water desalination plants are particularly sensitive type of infrastructure in the region. But energy export facilities, if they're targeted, it could take quite some time to bring those supplies back online, especially some of these LNG facilities like we saw targeted in the early stages of the war.
Well, and if we were to see that, or even with just what we are already seeing, would you assume, Chris, that the trajectory of oil prices is going to be one that continues higher for the time being?
I think for the time being, the market is digesting what's happening right now. We just had some new releases from U.S. Information on oil supplies. I think markets responded positively in the sense that oil prices tamped down a little bit based on that. But yes, I think if things stay where they are, even if they don't escalate, we're going to be entering another uncertain time. We've seen, emergency releases are continuing for now, but those will only last for so long. Probably by mid-October, we'll start to see those taper off. And then China is a big wild card. They've really cut down their imports over the past couple of months. How long will that last?
Interesting. Goldman Sachs today warning of a rise back above $100 a barrel after Iran targeted a couple of UAE tankers. Chris Kennedy, we'd love to pull you into the conversation around defense spending today because we've got a couple of events we're looking at. We just heard from Tyler at this Pennsylvania event that Senator McCormick is running. The Aspen Security Forum is happening simultaneously, and the president is asking Congress for $1.5 trillion. You specialize in economic statecraft, and we can bend that in a couple of different ways. But when you consider the big stick here, the president's mantra has been, this is how you avoid forever wars, is by having an even bigger military. Will he get that money, and what will it mean in terms of psychological impact globally?
That's a great question. I think it faces an uphill battle on the Hill. Right now, the president, he's facing a lot of challenges, I think, from both his party and, of course, Democrats on the Hill. There are a lot of questions over this war. I think Congress wants to have more of a say in some of these interventions that we've seen the president undertake over the past several months, but also before. So I think it's going to be difficult. But, of course, the thesis, yes, of course, the U.S. is still the most powerful military in the world, but we're seeing the limits right now, and I think the entire world is seeing the limits.
I also want to ask you, as we consider whether or not he's going to get what he wants in terms of defense spending from Congress, whether or not sanctions, tighter sanctions related to Russia will be getting through Congress, as there is now a renewed push for this in the Senate in the aftermath of the death of Senator Lindsey Graham, who, of course, was spearheading this effort. This package, as we understand it, wouldn't mandate the president to do anything, but it would give him optionality in terms of people who consume Russian energy products, being able to impose 100% tariff. That right there is very real economic statecraft. Is that something that could be effective and potentially turn the tide of Russia's war with Ukraine?
That's a great question. So, I mean, the bill is interesting because, of course, the president, before his tariffs were thrown out by the Supreme Court in February, was imposing these secondary tariffs, tariffs on countries doing business with, Venezuela or, in any case, he's done this. Now he doesn't have that tool because of the Supreme Court. This bill would, for the first time, delegate this secondary tariff authority to the president. I would find it hard to believe the president would want to accept the bill as it's written because it does sort of lock him in. But I could imagine now, that he doesn't have this IEPA tool, that he would like some sort of congressional legislation that would allow him to, again, use his favorite tool, which is tariffs, in more creative ways.
He said yesterday, Kaylee, and you probably heard this when he was in the Oval, he'd like to add Iran and Hezbollah to that legislation. Is that realistic, or Chris, does that slow it down?
I mean, we imagine there would be some additional markup on this bill. I'm sure the president would like to have as much flexibility as he could possibly get out of this legislation. Whether or not it's realistic, I think there are many on the Hill that are skeptical of the way in which President Trump has deployed tariffs. Whether they want to give him this tool at this point, we'll have to see.
He's on one of the best teams we have at Bloomberg Economics. Chris Kennedy leads our coverage of economic statecraft. It is great to have you with us, as always, Chris, as part of our conversation. We're going to play a lot of these themes to our panel coming up next. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us. But first, we stop down on the markets, as we do every day at this time, with Charlie Pellet, who's at World Headquarters in New York. Charlie, how's Wall Street looking?
Right now, we are higher. It's been a choppy day, Joe Matthew. Lots going on. Let's get right to the numbers, because we have got the S&P 500 index back in the green, barely up under 0.1% right now. Higher by 5, indeed a PPI Wednesday. We've got the S&P at 75.48. Dow Industrials flat on the day right now. Little change there. NASDAQ up 57, up 0.2%. However, the NASDAQ 100 index, full of those big tech names, it is down 0.7%. Very interesting divergence with the Bloomberg Mag 7 index pushing higher by 1.8%, and semis selling off again. We've got the SOX, the Philadelphia Stock Exchange Semiconductor Index, down now by 3%. 10-year, 4.54% with Kevin Warsh on Capitol Hill. Spot gold down 0.4%, 4,037 the ounce. West Texas Intermediate crude lower, little change, down under 0.1%. Right now, WTI 79.28 a barrel. Briefly, Anthropic is planning IPO investor meetings as its mega listing nears. SpaceX falling below its IPO price for the first time as the hype fades. SpaceX index now at 134.73. You recall it went out at 135. And the Yankees are said to be in talks for $3 billion in Apollo financing. Apple has received Chinese government approval to roll out Apple Intelligence in China. Apple now up by 3.6%. And from Apple to the Big Apple, New York City's air quality index has now deteriorated to, quote, unhealthy for everyone. This is wildfire smoke from Canada hits the Northeast. That's according to the EPA's airnow.gov tracker. It's recommended that people reduce strenuous outdoor activity and take extra breaks when indoors. Again, recapping, equities higher, little change. The key takeaway at this hour with the S&P up 6 points now, higher by 0.1%. Joe Matthew and Kaylee Lyons, that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. And he'll be back in just about 20 minutes' time with more on the markets as we connect the dots between policy and Wall Street trading every day here on Balance of Power. Thanks for being with us on the Wednesday edition. We've got our eyes, of course, on Pennsylvania, where President Trump is going to be traveling today. He'll be taking part in a roundtable discussion at the Carlisle, Pennsylvania Defense Summit, where we heard earlier this hour from Bloomberg's Tyler Kendall. President's there along with a number of luminaries from industry. Jamie Dimon is there, and it's a big conversation about not only how much we're spending, Kaylee, but what we're spending it on. Drone companies, for instance, are expected to be a big player in this conversation today, with some deals expected to be announced when the president talks later.
Yeah, and of course, drones at top of mind for many in the community, defense community right now, and for this president, given what has been happening in the Middle East over the last several months. Yeah. In the aftermath of Operation Epic Fury, which I don't know if we're saying Operation Epic Fury is back on, or this is just a restart.
I think that's right.
Some operations. Yeah. Of course, the president earlier this week notified Congress that the war with Iran had resumed, trying to restart that 60-day clock for war powers, as we're seeing today a 5th day of strikes, daylight strikes, in fact, announced by Central Command, which we haven't seen in some time. These usually happen over the evening. And of course, President Trump, in an interview on Fox News yesterday, suggested that the strikes could escalate next week if Iran doesn't come back to the negotiating table, once again renewing his threats against energy infrastructure and civilian infrastructure like bridges and power plants. So we want to get into this now with our political panelists. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano join us. Rick, of course, is a Stonecourt Capital partner and Republican strategist. Jeannie, our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Rick, just to begin with you, this is not a unique or novel threat made by President Trump. He has threatened this infrastructure repeatedly in the past, only to back down. Do you have the sense that this time would be different?
Hard to tell. I think the level of frustration is higher than it's been in the past. I think President Trump thought that he could cow the Iranians into not only completing the negotiations that had already started, but coming out with a deal. And the fact that the Iranians have slipped out of that noose and now continue to harass U.S. assets and maritime assets in the Gulf. I can't imagine how much more frustrated he must be. So we know this is a president that tends to govern through emotion. Yeah, I'd love to have been a fly on the wall in the meeting that he had on Tuesday at the White House to talk about options, because I'm sure he was pushing our national security team to be ever more aggressive. So yes, I think there could be some especially symbolic hits against civilian targets that may be dual use, bridges, things like that, that the president will instruct in order to make a point. The question is, does any of this really have an effect on Iran? And we have not seen anything to date that the president's done that has cowed that leadership.
You know, in that same Fox interview, Jeannie, where the president talked about power plants and bridges next week, he was asked about Pickaxe Mountain, which is something that he discussed on the Hugh Hewitt program a day earlier. He said U.S. bunker busters can go deep, but claimed nobody knows if they can reach Pickaxe Mountain, where the U.S. is monitoring suspicious Iranian activity. They think that's where they want to shelter the nuclear program from airstrikes. Is that the kind of conversation that should be had publicly like this in the media?
No, it's not. But of course, that's in keeping with the way President Trump governs. He says everything, presumably publicly. And I think where we are today is we just have to look back at the June 17th MOU. We signed that MOU because Iran backed us into a corner. And we signed it because we had no military strategy to defeat Iran. And then once it was signed, we tried to open this separate Omani channel in the Persian Gulf. Iran was having none of it, saw it as a violation of the MOU, which it was. And we are back now to this tit for tat and these constant going back and forths, trading strikes. But the problem for the president, and by extension, the United States, is that nothing about this has changed. And the president does not have a clear winning strategy here. He's got a lot of, bombastic, threatening comments to make online and publicly. But beyond that, what is the strategy to defeat Iran? There is no military strategy, and you can't bomb somebody back to the negotiating table. And that's the dilemma we've been in, and that's the dilemma we continue to be in. I do think there are great people in the State Department with good ideas about how to move forward, but Donald Trump doesn't seem to be listening to them. He's listening to people like Steve Witkoff and Jared Kushner, who, for all of the things that they have to offer, foreign policy negotiations are not amongst them. And so that's where we sit today.
Well, you have to wonder to what extent the president will listen to financial markets as well. As he previously said, he went for the memorandum of understanding, rather an all-out resumption of the war against Iran, because it risked economic catastrophe if the Strait of Hormuz remained closed and energy prices remained at the levels where they were. Of course, there's a lot of consternation around energy prices, and it isn't just affected by policy in the Middle East. It's also affected by policy here at home, and it's at the very heart of the debate around data centers in particular. We, of course, saw action in New York yesterday as the governor, Kathy Hochul, announced a one-year moratorium on data center construction in that state, and she talked about it on Bloomberg's Odd Lots podcast with Joe Weisenthal and Tracy Alloway. Listen.
I want to make sure that we take the time to have a community investment framework to give to localities, but also you have to be able to power yourselves. You either bring your own power source or you have to pay a premium to use our grid. And those are the basic foundations of what we're doing with this moratorium.
This moratorium is not sitting well with President Trump, who took to Truth Social today to criticize Hochul and the state of New York, saying, in part, New York State has made a terrible decision, going on to say it should change its policy immediately. Quote, the radical left Democrats, he says, must not be allowed to cause us to lose data centers, AI, and all of this incredible new technology to China and other countries. Rick, I would love your thoughts on this. First, this notion of a data center moratorium in the first place, and whether or not it could be spreading throughout the country to other states, not just New York, and if that might ultimately include red states, not just blue states that are easy for the president to attack over.
Yeah, I think that there are two separate issues here. One is states are starting to set standards by which they will allow data centers to come into their state. And Kathy Hochul, governor of New York, just said, here are my standards, and it included you got to bring your own power. But then to apply a moratorium on top of that doesn't really make much sense. Here's what you got to do to be able to come into my state, but I'm not going to allow you to do that for a while until we really study this thoroughly. There is a race to deploy capital. There is a race to build infrastructure and capacity. And I think the kind of approach that Kathy Hochul's taken and some other governors around the country are basically keeping their states from benefiting from this immense amount of infrastructure development that's going on in the country right now. So, yes, I think that there are going to be states because to have moratoriums because they will follow the political crowd, right? They'll read the polls, say people, even though it doesn't affect them directly right now, boy, they're afraid of it because of what they read. But I think leadership is what makes a difference there, and giving standards to companies to do business in their state is perfectly acceptable. Why have a moratorium?
So where are we going here, Jeannie? The analysis at Bloomberg Intelligence says it all. New York statewide data center ban is first, likely not last. As we write, hyperscalers like Alphabet, Amazon, and Microsoft, as well as developers like Equinix and Digital Realty Trust, all, of course, deeply invested in this infrastructure, faced increased policy risk. BI is putting an 80% likelihood of comparable data center rules elsewhere. Is this just the beginning?
I think it is just the beginning. I have to tell you both, I have been stunned by the number of young people who, without me even raising this issue at universities and colleges, have expressed that their families are concerned about these data centers cropping up, and not just in New York, but around the country. Because it's not something I think many of us thought about, a year or two ago, 3 years ago. But boy, is it a big issue. We saw it in Virginia with energy crisis, New Jersey, and recent elections. Now here in New York, I think it spreads around. Polls on this are very difficult to sort of tease out, but Americans are concerned about the impact on their cost for them for their electricity. They believe that they're already paying a good amount. Now they're going to pay more. They're concerned about the impact on water usage. They don't want them in their neighborhood. We may all want to use these online, this as we go online, but we don't want them in our neighborhood. So I think this is going to be a growing issue. I think a lot of education has to be done here to help people understand the impact. And also, Joe and Kaylee, I think we're going to see a lot more movement of attempts to put data centers in space, and that has an impact as well.
They go into space or under the ocean? I still haven't figured that out.
Elon Musk says they're going to space, even though
Depends who you ask.
SpaceX
Yeah.
dropped below the IPO price.
Yeah.
Maybe not a lot of people buying that theory right now.
$133, I think, last time I looked. Rick Davis, Jeannie Shanzano, thank you. Our great panel, Bloomberg Politics contributors, Charlie Pellet, will check markets, and SpaceX coming up right here on Bloomberg.
1:40 on Wall Street. We do check markets all day long here at Bloomberg. Most stocks pushing higher. Semiconductor names lower. However, Mag 7 stocks are higher as a group, but the NASDAQ 100 index down right now by 0.5%. This amid a rout in chip stocks. We're looking at the SOX, the Philadelphia Stock Exchange Semiconductor Index, down now by 2.9%. The Dow and the S&P, they're both higher by 0.2%. NASDAQ doing a little bit better, of 0.4%. But again, the NASDAQ 100 index down 0.5%. The 10-year yield, 4.54%, with a 2-year currently yielding 4.13%. Gold up $4 the ounce. A little change there, up 0.1%, $4,057 the ounce. West Texas Intermediate crude now lower by 0.4%. WTI 79.04 a barrel. Brent 84.45 barrel of Brent, down by 0.3%. Earnings news: Johnson & Johnson among the names reporting this morning. J&J down now by 2%. SpaceX has fallen below its IPO price for the first time as the hype fades. SpaceX now at $134.83. SpaceX went out at $135. Anthropic plans IPO investor meetings as its mega listing nears, and the Yankees are said to be in talks for $3 billion in Apollo financing. And New York City's air quality index has now deteriorated to, quote, unhealthy for everyone. This is wildfire smoke from Canada hits the Northeast again. That's according to the EPA's airnow.gov tracker. Recapping, S&P up 15, up 0.2%. Joe and Kaylee, that is a Bloomberg Business Flash.
Can't even see across town.
Yeah, doesn't look too pleasant up there. You stay safe, Charlie Pellet. I think we have it a little easier down here in D.C., even if we're suffering from yet another heat wave. Yeah. Something to behold. The president, of course, right now is about to escape D.C., go just a little bit further north as he heads to Carlisle, Pennsylvania. Well, he'll be speaking today at the Pennsylvania Defense and Innovation Summit, talking, presumably, about the need for more spending in defense in the United States and investments in the defense industrial base, in particular, into new technologies equipped to fight the wars of the present and future, of course, all shaped by the conflict ongoing with Iran. Because, yes, we are calling it an ongoing conflict now. The president has notified Congress of as much. We're now 5 days into renewed strikes against Iranian targets. And the president, as we've told you, told Fox News last night that those strikes could very well escalate next week.
Yeah, he says we'll be hitting power plants and taking down bridges if, in fact, this continues into next week, which remains a question. The president was in the Situation Room with his top military advisors just yesterday. J.D. Vance, who's on Capitol Hill today, Secretary of State Marco Rubio, Pete Hegseth, the Defense Secretary, along with the chair of the Joint Chief of Staff, CIA Director, White House Envoy Steve Witkoff, and other senior officials. It was a room full, Kaylee, as he's trying to manage this situation, and maybe he'll shed some light on this when he speaks later on in Pennsylvania. It's a big topic of conversation on the other side of the country as well, in Colorado, where the Aspen Security Forum is underway. Bloomberg's David Gura is there, as a matter of fact, and he spent some time with one of the forces behind Aspen, and that would be Nicholas Burns, the former U.S. ambassador to China, who's in fact vice chair of the Aspen Strategy Group and the Security Forum, weighed in on what's happening in Iran. Let's listen.
I think it's crystal clear right now that this ceasefire agreement has fallen apart, that it's not being honored by the government of Iran, that there's substantial differences between the United States and Iran on what that ceasefire agreement said. The Iranians believe, I think erroneously, that they get to run the Gulf, the Strait of Hormuz. They get to be the toll keeper, exact fees, establish a fee structure. There's not a government in the world that agrees with that. And I don't see any way that President Trump can ever agree to that. That would mean Iran emerges from this long war of 4.5 months stronger in that respect than when the war began. It would be injurious to the global economy, to insurance companies, to shippers, to people who, the companies that depend on the free flow of commercial traffic. So I think that the president cannot, and I believe will not give in, our president, on that issue. I don't think the Iranians are going to give in. So where does that leave us? I think a cat and mouse, probably next couple of weeks or months leading into the autumn, where there's a back and forth. They agree to a ceasefire. The ceasefire is honored, then not honored. They go back to exchange of fire. And I think that's where we are, because these are hard-bitten, highly ideological leaders in Iran. They think they can play us for time, and so they're testing us. It's very important that President Trump stands up to them in that respect and not give in on issues like Iranians becoming the Tony Soprano of the state of Hormuz, exacting tribute from other countries.
If Steve Witkoff were to give you a call, or Jared Kushner, what counsel would you give them about how to move forward here? It sounds like what you're prescribing or anticipating is a long period where things are effectively stuck.
Well, certainly I wish President Trump and his team well. We want them to succeed on behalf of the United States. I do think the original agreement, was not well done. A lot of loopholes. The Iranians are trying to race through the loopholes. So on the one hand, you may need to go back and renegotiate this, and that could take a substantial amount of time. I don't think it's reasonable to expect that there's going to be a perfect deal, perfectly arrived at and implemented anytime soon. I think we're going to be in a period of instability in terms of shipping through the Strait, a low-intensity conflict between the United States and Iran, major disagreement on the future of the Strait. I see this going into the autumn.
Any of this a surprise to you, based on how it's all unfolded?
It's not. I must say I was the first Iran nuclear negotiator for President George W. Bush, Condi Rice, 20 years ago, a long time ago. But you took the measure of them then. They haven't changed.
Former U.S. ambassador to China, and of course, longtime State Department dignitary across multiple administrations, Nicholas Burns, now the co-chair of the Aspen Security Forum, in conversation with our colleague David Gura yesterday, weighing in on what he sees as something that could take a while here, this conflict between the U.S. and Iran, which in his mind at least could take a great deal longer to come to a firm resolution. And the question, of course, is how much money it may need to spend, the U.S. may need to spend in this interim period as we see renewed strikes against Iran. Of course, we are looking at a request to Congress for supplemental funding for the war in Iran, and it looks like that is going to be at least attempted to be rolled into a third reconciliation package. The package is $95 billion in total. More than $70 billion of that would be for the Defense Department. The question, of course, is whether or not it has a chance of getting through both chambers, as there don't appear to be offsets embedded in this package in particular. And it's on that note that we start with Bloomberg Politics contributor and former chair of the House Financial Services Committee, also former Speaker Pro Tem, Patrick McHenry, who is back with us on Bloomberg TV and radio. Mr. Chairman, good to have you as always. Your former colleague, Warren Davidson, is pointing to the lack of offsets in particular and saying, therefore, that this is going to be a no-go. Does this $95 billion package have a chance at getting through?
It has a chance, but this is really a test of political wills. On Capitol Hill, you have fractious majorities in the House and the Senate that are really tight for Republicans. The House is particularly challenged at passing legislation over the last month. Have been locked down over debate on immigration. It appears that House Republicans have a plan forward for reconciliation, a partisan package that will not need Democratic votes in the U.S. Senate to get enacted. It totals nearly $100 billion. Some of this deals with election security, voter ID, and immigration issues domestically that can help sweeten the pot, as well as these important defense priorities. What this means is House Republicans are trying to go around Democratic opposition to this president and this president's intervention in Iran, and ensure that Democrats won't have a point of leverage to bring in their spending policies and priorities and other domestic priorities into the debate. So therefore, the package is smaller, they're saying to fellow Republicans. This package is smaller than the deal they would have to do with Democrats necessary to get their support and their votes. So in that way, Congressman Davidson is exactly right. This is an expensive package, but the alternative here is a more expensive package done with the support of Democratic lawmakers. That's really the narrow scope of the narrow range of scope and debate they're having on Capitol Hill in order to get this package done. And over the next couple of days, tomorrow will be a crucial day for House Republicans on getting that bill through the Budget Committee.
Yeah. All right. So let's say Speaker Johnson, Mr. Chairman, pulls a rabbit out of a hat, and he's done it before. This thing actually comes out of committee and it passes the House. What happens next door in the Senate?
Well, the Senate, look, we have the untimely passing of Senator Lindsey Graham and his sister's quick appointment to that seat. We have Mitch McConnell, who is ailing. And so you have an attendance problem in the U.S. Senate, and you have a disagreement on the approach as well on immigration and these domestic priorities on voter ID. So this is going to be a second very, very narrow path through the U.S. Senate. But as you said, Speaker Johnson has pulled a rabbit out of the hat before with the help of President Trump, and I think likewise Leader Thune will be able to get this package through if it's able to get out of the U.S. House, which then unlocks a second process. Once you have a budget resolution, that is just the opening act for them to actually write this policy, and to pull that rabbit out of that hat is a second sort of tricky set of things that need to happen. It's a lot to do in a July of a midterm election year, but a necessary priority for the president to see this through the Congress.
I'd like to ask you about something else the president has called a priority. In fact, he mentioned that this should be passed in honor of the legacy of Senator Lindsey Graham after his passing, which you mentioned, which is the Clarity Act, which it's not clear that Senator Graham was particularly passionate about crypto market structure in particular, but there are many that are. And Politico is reporting that tomorrow at the White House, a group of senators will be meeting with the president about the path forward for this legislation. Mr. Chairman, are they going to have to tell the president if he wants to see this done, he's going to have to agree to restrictions on the actions of him and his family in the crypto space?
Well, that's certainly what the Democratic senators are saying, is their objection to passing Clarity. Look, this path to getting clear law on crypto is really the ethics issue for elected officials and for the private sector, frankly. We need to define what is a digital asset and its means of exchange. We currently don't have any federal law dictating those two things on a very important, very large market that now traditional finance is getting heavily engaged in. So, frankly, the pitch here is that ethics is downstream of us actually having sound law and a clear set of rules and regulations at the federal level. That's what Clarity will bring. The opposition by Democratic lawmakers here, I think, is really trying to bring this into the political debate about the president's financial disclosure statement and his engagement across financial markets and investment activities, business activities for he and his family. That is a separate issue than having sound law on crypto, which is what the Clarity Act would bring about. It's really an open question whether or not the Democrats in the Senate will stand firm in opposition unless we have some additional ethics language here for government officials, most specifically the president and vice president. A lot's going to be riding on this test vote the Senate will have on Clarity, hopefully next week or the following week.
30,000-foot view, Mr. Chairman. There are real concerns about whether anything is going to get out of this Congress between now and the lame duck. Sarah Chamberlain from the Republican Main Street Partnership said in our studio yesterday that the store is basically closed. We'd be lucky to get a CR right now, and she expects the government likely will shut down for some period of time and could, in fact, be a lengthy one following the end of September. How about you?
Well, I think a government shutdown is more likely than not on September 30th. And that's because we saw the Democratic Party pay no price for the longest government shutdown in American history, led by Democratic Senate opposition. And so because they didn't pay a political price then, they believe they're unlikely to pay a political price this fall. I think that is a really tricky thing for the Congress to negotiate. That is also why they're pushing this Reconciliation 3.0 so intently. Defense supplementals have always been bipartisan over the last decades. And now you see Republicans facing unified Democratic opposition to replenishing our stocks and supplies of weaponry. That's why they're going this partisan path. That doesn't make a government shutdown more likely. It doesn't make a government shutdown less likely. It probably makes it more likely in the fall. But time will tell. And politics, especially these days, is quite fickle day to day and week to week.
Well, not the truth. We're always lucky to have you walk us through it. Patrick McHenry, Bloomberg Politics contributor, former congressman, of course, Republican, former Speaker Pro Tem. He actually held the gavel for some time, and I feel like he's still really glad that he's not doing that anymore.
Yeah, although I wonder if he missed chairing the Financial Services Committee, which had the chance to question the new chair of the Federal Reserve, Kevin Warsh, this week.
Fair enough. French Hill had pretty efficient process today, I will say. We're going to head up to the Senate. I'll meet you up there for the late edition at 5 p.m. Eastern. Dramatic day on Capitol Hill. This is Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
And a very good afternoon, everybody. It is a Fed Wednesday for a couple of reasons. It is, of course, July 15, 2026. Carol Masser along with Tim Stenivek.
Hi, happy middle of July. Hot enough for you?
I haven't been outside since I walked in this morning.
All right, well, we'll be talking about the weather in our 4 o'clock hour a little bit.
It's definitely on our mind, and so is the air quality, to give you a little hint of what's to come. Hey, in terms of it being a Fed Wednesday, Fed Chair Kevin Warsh up on Capitol Capitol Hill for a second day, his semi-annual testimony before lawmakers. We're also awaiting the release, crossing any moment now, the Fed's Beige Book. I bet you are glued to the Fed's website.
I'm glued to the Fed's website, I'm glued to the terminal, and I'm not seeing anything yet, but it does come just a little after 2 o'clock. We are going to bring you that as soon as we get it, and Mike McKee is going to be joining us for some details and analysis on that. He's out there in Idaho, so we're looking forward to talking to him.
Yeah, we certainly are in terms of what he's hearing on the ground. Some analysis from him, too, on another read on inflation. We got the PPI this morning. Also coming up on the trade, Marianne Bartels is back with us. She's Chief Investment Strategist at Sanctuary Wealth. She's going to get into why tech remains the secular bull market sector. She's going to talk earnings backdrop. She likes semiconductors, or points out how they are providing the momentum.
Also, OpenAI, fresh off a lawsuit from Apple accusing it of stealing trade secrets, moving forward with its first device. Mark Gurman's going to be stopping by in just a minute.
Talk about timing.
Yeah, he's got the details on this. A Bloomberg exclusive. Very cool.
He does. We've also going to get a read on the consumer, the bar and pub space, and the World Cup. We're going to do that with someone who has been in the food service industry, really equipment we're talking about. We're going to talk with the president of Silver Chef US, John Jacobs, will be with us.
All right, got some Beige Book headlines coming across the Bloomberg terminal and on the Fed's website, too. Economic activity increased at a slight to moderate pace in 11 of 12 Federal Reserve districts in late May and June. Well, one district reported no change. The pace of growth was quite close to that of last period, when activity expanded in 10 districts, was flat in one and down in one. Here's an interesting one, Carol. Consumer spending edged up as higher prices, particularly for fuel, dampened sales in other categories. So people spending more on gas, meaning they're spending less on other things. Several districts noted declines in spending on discretionary items or trading down to more affordable varieties. Tourism was up, with some districts receiving a boost from World Cup visitors, and auto dealers reported little change in sales, but spending on repairs grew as consumers held onto vehicles for longer.
Interesting. Remember, it's anecdotal evidence, if you will, snapshot of economic conditions across the 12 Fed districts. So we're going to dig into what Tim just read and get some analysis with our Mike McKee in just a moment. We do want to get you caught up, though, on the market trade on this Wednesday as well. We've seen stocks definitely bounce off their lows of the session. Still down, though, a little bit on the NASDAQ 100. Over to Charlie Pellet we go.
Hi, thank you very much. And here's what's going on, Carol and Tim. Lots of moving parts to this market today, and I got you covered with the S&P right now up 26, 75.69 where we stand. That is a gain of just about 0.3%. Dow Industrials up 164 points. That is a gain there of 0.3%. While NASDAQ higher by 156 points, up 0.6%. But tech stocks, the NASDAQ 100 tumbling now by 0.3%. All of this with another rout for semis. The SOX, the Philadelphia Stock Exchange Semiconductor Index, it is down now by 2.4%. 10-year with Kevin Warsh on Capitol Hill, 4.54%. The 2-year, 4.12%. Gold up $13 the ounce to $4,066, up 0.3%. And West Texas Intermediate crude WTI down 0.6%, 78.90 a barrel on WTI. Earnings news. We heard from Morgan Stanley this morning. Its stock traders set another quarterly record, $6.3 billion from equity trading. That is a 69% jump from its previous all-time high. Morgan Stanley shares up 0.8%. Rival Goldman Sachs up by 0.2%. BlackRock after earnings surging now by 5.9%. Other headlines: Anthropic planning an IPO investor meeting as its mega listing nears. SpaceX today trading right around its IPO price, actually just above now, $136.21, but for much of the day was trading below that $135 level. And sources tell Bloomberg the Yankees are in advanced talks to raise nearly $3 billion of financing from Apollo Global Management. In the Northeast, it's hot, the air is bad. Extreme heat testing power grids across much of the U.S. as air quality drops from wildfire smoke drifting in from Canada. New York City's air quality index has now deteriorated to a rating of, quote, unhealthy for everyone. Recapping, S&P up by about 0.4%. Carol and Tim, that is a Bloomberg Business Flash.
All right. Appreciate that. Charlie Pellet there. We'll come back to Charlie a little bit later on. Hey, we do want to get back to what we got in terms of the Beige Book. Tim reading some of the highlights, if you will, but it is an anecdotal read from regional banks, part of the Federal Reserve, on labor markets, on prices, on economic activity.
Yeah, let's talk a little bit about prices. They did increase moderately overall. 9 districts reported moderate growth, 2 robust growth, and 1 slight growth. Compared with the last reporting period, price growth was the same or slower 4 in all districts. On the labor market, Carol, employment rose on balance. 5 districts showed modest, moderate, or solid gains in employment. 7 districts experienced little to no change. But I think the overall economic activity is the one that I'm focused on. It does say that economic activity increased at a slight to moderate pace in 11 of 12 Federal Reserve districts in late May and in June, with 1 district reporting no change.
All right, so let's get to it, because this is coming on a day where Fed Chair Kevin Warsh was back up on Capitol Hill before the Senate Banking Committee. We also had producer prices coming in tame, showing a broad-based cooling in several key categories that have been boosted in recent months by the fallout from the war. In terms of Kevin Warsh, we just kind of want to give you a little highlight of what happened up on Capitol Hill in the nation's capital, Washington, D.C., of course. He was pressed by Democratic Senator Chris Van Hollen. Chair Warsh saying that the president has not, before I took this office, before I raised my right hand, he has not tried to influence the conduct of monetary policy.
Have you or have you not had communications with President Trump since you took this position?
I just don't want to be in the business of sharing discussions that the president and I have. Okay. I will tell you what I've said to the president repeatedly and said to the Treasury Secretary. They chose an independent guy to do an independent job, and that's exactly what I plan on doing. Okay. And I'd like to think over the last 7 weeks, given the decisions we've made and the things we've done, that it's not just words, it's actions now to start to demonstrate that.
All right, that, of course, was Fed Chair Kevin Warsh up on Capitol Hill today. Let's get to it. Beige Book, PPI, Kevin Warsh, Bloomberg TV and Radio International Economics and Policy Correspondent Michael McKee. He is at the 13th Annual Rocky Mountain Economic Summit. He is in Victor, Idaho, as we speak. Hey, Mike, so good to have you here with us. I don't know. Should we start with Beige Book? Is that what matters? Anything helpful here?
Nothing really helpful. And speaking of healthful, the air here a lot better than it is in New York City, from what I understand. The Beige Book tells you a little bit about what people were thinking before July 6th. That's the closing date for this Beige Book, which was prepared by the Federal Reserve Bank of Chicago. And what's interesting to me in it is that in the section on prices, they talk about businesses saying that prices are still going up in those areas. And that was about a week or so after, in theory, the memorandum of understanding started pushing oil prices down. So there's a lag, and it may be that the inflation warning in the Beige Book is a little out of date. I would say it was out of date, except for the fact that now we're seeing prices rise again for energy. So we'll see what happens going forward.
Just remind us when this data set is taken, Mike.
Well, they basically collect data between the 2 Fed meetings. Now, the last Fed meeting in June was on the 17th. So between the 17th and the 6th of July is when the data were collected, and the bank was getting information from various other banks around the nation. And so, as Tim was pointing out, a wide variety of them were seeing increases in prices. So the lagged effect of the war is definitely on view in this report.
The consumer spending, Mike, related to oil prices, as we mentioned, consumer spending edged up as higher prices, particularly for fuel, dampened sales in other categories. Several districts, as we noted, declines in spending on discretionary items or trading down to more affordable varieties. Is that more of the same? Is there anything new in that as with regard to discretionary spending? Is it the same stuff that we heard from the big box retailers a few months ago?
Yeah, essentially, it's the same thing that we're hearing from all the retailers, and what we have been expecting to hear, that people trade down a little bit. More money goes into gasoline and less money goes into other discretionary purposes. And on Thursday, tomorrow, we get the retail sales report for June, and we'll see if that plays out. I would expect we'd see a big increase in gasoline station sales because, again, that was in June, and the lagged effects of the price increases from oil were still in the gas prices, and gas prices didn't go down as much as oil prices did. So you'll probably see some of that tomorrow. The question is what happens going forward, and I think the July and particularly August retail reports will be more important to the Fed because that's back to school season. We'll see if people are really cutting back or if they still feel like they can keep spending.
Mike, I don't know what it is about you economic and Fed types, man, though, but when you do a summit, you're usually in some pretty cool places.
Yeah, Sintra, Portugal, Victor, Idaho, Jackson Hole. What's the deal?
Like, what's up with that? Like, what's really going on there?
what's really going on here is business people and economists are coming together, and definitely not fishing. There's no fishing going on. There's no horseback riding or anything like that. It's all talk about the economy, which actually it was. I was sitting with Paul McCulley, the former PIMCO economist, this morning at breakfast, and we were talking about Kevin Warsh, of course.
And what did he say, just real quickly?
Well, the feeling is that Warsh has got to earn his credibility because he did say that he thought the economy could use lower rates when he was trying to get the job. And I think that's what you're seeing now. He's building his credibility with the markets. He said the markets are upset with him. I don't think that's the case. I think the markets like what they hear. And he gave them a little bit today of the sort of reaction function, saying that the Fed wants to see the growth broaden and inflation narrow. Didn't really mention any categories, but you can imagine the kind of things they're looking at.
All right, good stuff. All right, looking forward to your reporting out of that, Mike, and your interviews.
You just stay there for the next month, Mike, until Jackson Hole? Or how does that work? Or do you come back here and get some work done?
I was thinking about it. If you could stop by my desk and forward my phone, that would be great.
Okay, noted, done.
We are on it. All right, Bloomberg TV and radio, international economics and policy correspondent Michael McKee. He's at the 13th annual Rocky Mountain Economic Summit underway there in Idaho.
I just can't see all those Fed officials like in Vegas, you know?
No, exactly. They're never there, right? Or those big convention centers. It just doesn't come out that way. All right, folks, that is certainly your economic backdrop. Marketing and or market watchers and really investors right now, they are looking at the economy too and what we're getting in terms of Fed policy, what that means in terms of valuations and the trade.
For more on markets, back on Bloomberg, Marianne Bartels, Chief Investment Strategist at Sanctuary Wealth. It's got $64 billion in assets on its platform. The firm provides tech compliance, investment research, back office services to its partner firms across more than 30 states. She joins us from New York. I want to start on where we were talking about with Mike just now and sort of the macroeconomic backdrop. What we got from the Beige Book, what we heard from Fed Chair Kevin Warsh, the recent inflation and other economic data. What do you think should matter to investors the most right now?
Well, I think really what matters the most is how are second quarter earnings going to come in. What I do like what Chair Walsh has done is really set confidence in the markets that they're going to tackle inflation. And the inflation gauges of both CPI and PPI came in remarkably below expectations. So I think setting a positive tone on inflation gauges easing up, we can really now focus on earnings. First quarter earnings came in almost up 30% year on year. It's possible we have another quarter where we get close to 30% growth. A lot of that being driven by the tech sector, but having a strong backdrop for the economy, the consumer's doing well, spending is going up in all phases or all areas of the consumer, high, low, and middle are all rising with a big uptick in the low-end consumer. I mean, this really feels like we're still sitting in Goldilocks land.
So you were on a little less than a month ago, Marianne. S&P 500 is up about 2.5% since then. I think this was like kind of late June. SOX is down 9.6%. Bloomberg Mag 7 is up 9%. NASDAQ 100 is kind of flat. Outperforming major industry groups in the S&P 500 are communication stocks, financials, healthcare, consumer discretionary, and energy. What's changed since we talked in late June in terms of market leaders and fundamentals, especially as we now are kicking off earnings? Have the earnings estimates been rising for a lot of groups, or just technology, or what?
Well, there's big upgrades happening within technology, but energy actually is the sector that's supposed to produce the best earnings in the quarter. And I'm not hearing a lot of people talk about that. And I know a lot of strategists lowered their oil prices when we thought that there was a good ceasefire, but we've seen oil prices firm. So I'm really going to be paying attention to what's happening in the energy sector. What's happening within the market overall is we're we're getting a lot of sector rotation. So we did get a correction in the Mag 7. They look like they've bottomed and they're rallying. Semiconductors have been strong leaders, but I do think that they're at risk of correcting. And when they correct, they can correct pretty sharply, somewhere in the range of 30 to 50%. And when we saw them correct in the mid 1990s, that was the range that they corrected and resumed their uptrend. I'm not a big fan of healthcare. I know there's been some defensive money moving there. I do like biotech. Don't like the consumer staples at all. I don't really feel that they have good pricing in there. And when we look at communication services, I like that area because I'm really a big fan of Alphabet. And, you know, Meta may have bottomed, but you do have part of the Mag 7 in comm services.
Did you get anything from Kevin Warsh's testimony today with regard to AI or the Mag 7 that is of interest to you? I mean, what stuck out to me is he says in the near term, I think AI investment is good for jobs. He said that if AI firms disappoint investors, capital would dry up. He says the surge in valuations of AI companies is notable. He had some interesting commentary, too, about the way that college grads right now have the tools, he thinks, to succeed in a world with AI. Since you do follow tech so closely, I'm just curious what you think about what he said.
Yeah, I think the things that you just brought up about the jobs and AI, I think there's been a lot of fear that we're going to lose jobs. And we've even written the surprises probably that we're going to create jobs. When we've looked at major technological advancements in our economy, they haven't taken away jobs. They've always created fear that it would take away jobs, but in fact, they actually create jobs. And they probably are going to create some jobs that have never existed before. And this is something that we're still kind of learning. So I think that, you know, AI is going to be transformative. We just put out our mid-year report, but as I was writing on technology, there was so much to talk about. I actually wrote a separate report just on technology because it is the major driver. It's the biggest leap in technology, we think, since the 1700s when we created the steam engine. I know there's a lot of talk relative to the railroads, and there is good comparison, especially in terms of the capital intensity that's needed for the build out in AI.
Marianne, just got 25 seconds. Semiconductors and the big like Mag 7, just quickly, all of that you like? Or you think has opportunity?
From a leadership standpoint, they're still the leaders. But if I had to buy today, I think you're getting better value in the Mag 7. I am looking for a correction in semis, but I would be a buyer on that correction.
All right, great stuff. Really appreciate it. Marianne Bartel, she's Chief Investment Strategist at Sanctuary Wealth. They've got $64 billion in assets on their platform, joining us right here in New York City. Coming up next, OpenAI just off a lawsuit from Apple accusing it of stealing trade secrets. It's moving toward its first device.
Yeah, Mark Gurman has the Bloomberg exclusive. He's going to stop by in just a few minutes. That's next on Bloomberg Business Week Daily.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg PPI Wednesday. And this morning we got a report showing softer than anticipated inflation. That is driving stocks and bonds higher for the most part. S&P up 27 now to 75.71. That is a gain of 0.4%. Dow Industrials up 133 points. The Dow up by 0.3%. NASDAQ is up 0.7%, but a tough day for a lot of big tech names. The NASDAQ 100 index down 0.2%. Interestingly, though, we're seeing semiconductors hit hard today, with the Mag 7 index now advancing by 2.3%. The SOX, the Philadelphia Stock Exchange's semiconductor index, down now by 2.3%. All of this with a VIX below 16 and a 10-year at 4.54%, the 2-year 4.12%. Gold is up $18 the ounce. Spot gold at $4,071, up by about 0.5%. West Texas Intermediate crude just about flat on the day, below 80 on WTI, 79.31 a barrel. Brent, the global benchmark, below 85 at 84.72 a barrel. Sources tell Bloomberg the payment processing firm Stripe and private equity firm Advent International have offered to buy fintech pioneer PayPal Holdings for more than $50 billion. PayPal shares, they're surging now by 16.8%. Briefly, Anthropic plans IPO investor meetings as its mega listing nears. SpaceX now trading slightly above $135. That was the IPO price. Right now, it is at $135.91. Did spend much of the morning below $135. And the Yankees are said to be in talks for $3 billion in financing from Apollo. Recapping, S&P 500 index up 29 now, up by about 0.4%. Carol and Tim, that is your Bloomberg Business Flash.
All right, everybody, we want to get to a Bloomberg exclusive. Bloomberg's Mark Gurman reporting AI darling OpenAI's first device will be a human-like AI companion of sorts in the form of a mobile screen-free smart speaker.
Am I getting flashbacks to
what?
Alexa first being announced by Amazon?
Maybe.
I don't know. Let's ask Mark Gurman. Yeah. He reported this exclusively. He's Bloomberg News managing editor for Global Consumer Tech. He joins us here in the studio. Interestingly, and you noted this in your piece, Sonos shares took a dive when
Sonos shares took a
published
dive,
this.
yeah, because if you think about it, all they do is smart speakers and smart home stuff, and it's all very commoditized. And this OpenAI device is going to blow the Sonos device out of the water for AI purposes. I'd be shocked if they came anywhere close to Sonos from an audio quality standpoint. So they really are distinct products from that standpoint. But you're right. This is like the original Alexa pitch 12 years ago, really brought to life for the first time.
How is it brought to life?
Well,
or how will it be brought to life, according to your reporting?
They see the smart speaker as a new type of computer. They call it an AI computer, the first computer built for the AI era. It's kind of ridiculous, but no screen, speaker, you talk to it, and they see it as a companion in your home. So it can listen, it can learn about you over time, you can have back and forth conversations, and it really gets to know you and your personal data based on what you've hooked up to ChatGPT, and it becomes a better companion over time as it learns more about you, being able to chime in actually during live conversations. So it's like another human in your home.
Have you played with it?
No.
Oh, okay.
I wish.
Well, so when is it coming? So this is just them saying that it does all this?
No, we're breaking news on this.
Okay.
So they're not commenting on this.
Okay.
To be clear, when is it coming? Well, they hope to introduce it this year and roll it out next year. But obviously the Apple lawsuit, as we talked about the other day, that's a big overhang. And so at this point, while this is the plan, they're going through forensic sweeps and trying to understand what the trademark or the trade secret situation is within OpenAI to see if this is something that's going to get delayed or have an impact on this first product launch.
Are Johnny Ive's fingerprints all over it?
His fingerprints are all over it. So Love From has a lot of former Apple designers on staff. And if you look back at the history of Apple, what these people are known to do is help people connect to technology, making technology feel personal, making technology feel more alive and emotive. And that's the deal with this smart speaker. It's the first smart speaker that feels like it was designed by Johnny Ive and very emotive. Obviously, Apple's got the HomePod.
Yeah.
But that thing is hot garbage. It's not a great product. This will be different.
I mean, does everybody have to be worried about
Mark
OpenAI?
because he's subtle.
I know. If you would just tell us more, Mark. No, but I mean, so does everybody have to be worried about what they've got? Because it sounds like it can blow everybody away.
Yeah, I think that Apple should be worried about what they've got.
Google, should they be worried?
Google should be worried. But the real secret sauce here is the AI models. And at some point, though, these are all going to get commoditized, and everyone will be in the same place, right? I mean,
Meaning like Claude will be the same as ChatGPT.
Yeah, like at some
will be
point,
the same as Llama.
yeah,
or whatever.
ChatGPT is way ahead of everyone else right now in terms of these voice interactions. If you've tried GPT Live, the new voice system they rolled out last week, it's excellent.
Yeah.
You can hold back and forth conversations. It can interrupt you. It can listen and talk at the same time. Very advanced tech. Others will catch up with them eventually. So that's really the secret sauce is the AI models, and they have great designers. But Apple's got great designers. Google has great designers. So, others will be able to catch up in this space too. And Apple, for its part, is about to roll out a bunch of smart home appliances too.
Can we talk Siri? Because we were talking about before we got going. I thought I heard you on Surveillance with Tom and Paul saying that you've been playing with the new AI stuff on Apple, and you.
That wasn't me. No, I'm joking. It was me.
I might not have had all my coffee in the morning when I heard it.
The Siri AI is very competent. That's what I would say. They're going from.
I've worked with people who are very competent, and they're not always my faves.
Like Tim?
No.
I'm joking.
Hey,
Tim is way above competent.
Go back to LA.
So Tim is like ChatGPT.
Yeah.
Okay.
Oh, thank you.
And someone who's competent is like Siri AI, and someone who shouldn't be here is like the old Siri. Okay.
Okay.
So that's the difference. You're not anywhere near ChatGPT, but Siri's going to do everything you throw at it and ask for it. It's just not going to do it as well as Tim over here.
Yeah. On what pieces of hardware?
The Siri AI?
Yeah.
Well, I've used it on everything.
No, but will it work on old phones? Will it work well on old phones?
It's supposed to work on the 15 Pro and up. Probably works fine on the 15 Pro and up. Some of the newer features, there's some features like with the voice, you can change the voice expressiveness. Those require the newer models and more RAM that you can get on the 16s the 17s and the Air and newer.
I think I can't remember what question I asked. It was like such a basic. I think actually it was. I asked Siri the other day, when is the next Fed meeting? And it was like, it said. Here's what Siri said to me. There's nothing in your calendar like that.
All right, so let's.
That is the most.
Let's try it.
Was it in your calendar?
When is the next Fed meeting? I've got the new Siri. The next Federal Reserve meeting is scheduled for July 28th to 29, 2026.
So it doesn't work on my old iPhone, but it works on your new one.
But that's why I say it's competent. You would expect Siri to be able to answer those questions. Now it can answer those questions, but it's not going to help you do extensive travel planning, extensive research programs, and whatnot, or creating things at the degree you can create and generate with ChatGPT. But I will say the image gen on the new Siri is pretty darn good now.
What's the platform they're using to do that?
So the models are Apple models, but they've sort of opened the hood, and you've got a lot of Gemini technology in there. So same as the new Siri.
Okay.
Okay. So is everybody going to now, Mark, look at OpenAI when it comes to device innovation? Has Apple kind of lost its edge here?
I don't think Apple's lost its edge.
Okay.
But I do think ChatGPT, OpenAI have the unique opportunity, at least in the short term, of combining top-tier models with top-tier engineering and top-tier design. But I think the bar to replace Apple and the bar to replace the iPhone is sky high. And don't forget the lawsuit.
Well, that's what I want. Yeah, go.
Like I said, you'd be nuts to leave Apple for OpenAI after reading that lawsuit and as an employee. And don't get me wrong. They're sending that lawsuit around to all the employees internally so they know this is what's going on. You don't want to do this. They don't want to lose more people to OpenAI, and I think that's part of why they're doing it.
But these devices that OpenAI is starting to roll out, are they at risk depending on how this lawsuit plays out? I know you've talked about how this lawsuit is a warning.
Well, no, there can be an injunction out of this. They could be halted by the courts. Apple could get the ITC involved, that's the International Trade Commission. If Apple finds trade secrets of theirs in these products, they're going to go to war against OpenAI. This is just a small battle right now.
We're speaking with Mark Gurman. He's Bloomberg News managing editor for Global Consumer Tech. He joins us here in the Bloomberg Business
You
Week
want to talk
studio.
about this picture, right? They're so chummy.
We've had that
Johnny
picture for a while. I just love it.
Sam Altman,
the two of them.
That's their press shot, the two of them. It's a big partnership. I mean, you're combining like the best AI guy. Arguably, people have a lot of thoughts on Sam Altman, but it's hard to argue with the tech. So you're partnering with the CEO of the best AI tech with like the best designer of his generation.
And yet, I still have the question, is this a device that people are going to want? 12 years ago, we saw that first video for Alexa from Amazon, and people were like, this is not something that people are going to adopt. We think this is not going to work. Amazon stunned everybody, and everybody adopted the Amazon Echo devices, and the rest is
I
history.
think the difference between 2014, when the Alexa was announced, and 2026 or 27, when this is going to be announced, people are scared of AI.
Yeah.
Okay.
Do you want this in your home? I don't know.
You know enough about AI to know that you could be a little afraid of it. 12 years ago, it was so novel and nascent. No one's ever heard about it before. You couldn't really be afraid of it. People are into privacy now, right? People see the ads that Apple has against Meta and whatnot. People are into this stuff now, whereas 12 years ago, they didn't think about it. So the bar's a little higher.
I mean, an always listening AI device.
It's not always listening. It's not going to listen at all times, but it will have sensors and cameras to get context throughout the day.
I have a mixed love affair. Like, we have Google Home, and there are things that I love just kind of asking it. And then there are times I'm like, I don't love that I'm yelling at or talking constantly, but it does sound like we're changing. I want to go to Apple for a moment, just because when you were on with Tom and Paul, you were super excited about Apple products that are coming our way.
Yeah, there's a lot. There's a lot.
Yeah.
I'm going to have to take my wallet, put it in a drawer, lock it, and throw the key out, because there's a ton of stuff coming. You've never seen anything like this. This is going to be the most prolific period of new products in Apple's history.
Starting in September?
Starting in September.
What are we going to get?
In September? Well, what can I talk about? The new iPhones. Obviously, the 18 Pro Max, kind of whatever. The iPhone Ultra. That's what I'm calling the foldable phone. I'm so excited. I wanted a foldable phone for so long, but I just don't want to leave iMessage or the Apple ecosystem or iOS. Now I won't have to. It's going to be expensive, but I can't wait. Just getting that screen real estate to pop that thing open, multitask. It's going to be, I just love being productive on the go. So I'm excited as a tech nerd. There'll be more stuff.
There'll be more stuff.
Next year, the Foldable 2. Next year, the 20th anniversary iPhone.
What about some wearable health tech that's not the Apple Watch? There's been discussion of maybe a ring or a
They've
smart
looked
band.
at, well, neither soon, but they've looked at smart glasses and how they can integrate health into the smart glasses.
Okay.
I'm not sure that's going to be there in Gen 1, but something they've definitely looked at.
Is there any health in AirPods right now?
There's the heart rate.
Okay.
But
that's the extent of it.
It's the extent of it. No, there's also the hearing aid.
That's right. Yep.
But the heart rate on the AirPods is worthless if you're wearing an Apple Watch. So who it's really good for are people who work out without an Apple Watch. And so it's kind of cool where it's like, if you don't want to wear an Apple Watch, you can get all that data from the ears.
Hey, just got about 40 seconds real quick. Apple received government approval to roll out Apple Intelligence in China. Big deal, real quickly.
China is it's a hypermarket. It's the most competitive smartphone market. Apple has been leaving users behind there without their AI features. If it's the first-gen Apple Intelligence, it's kind of worthless because those features don't work. The real meat and potatoes will be when they get approval for Siri AI and the new Apple Intelligence in China, because like we talked about a few minutes ago, that's really good.
All right.
Yeah, our daily dose of Mark there, man. I love it. We love having you in New York, Mark.
So much
Thank you.
fun. Just commute back and forth.
Yeah, sure.
Okay.
Every week.
Especially when the weather's like this, he doesn't miss LA.
Well, I saw there was like a warning, like don't go outside. The air quality.
I know.
What does
Canada.
What does that even mean?
Yeah.
Is there something going on?
It's
wildfires far away.
Yeah, coming down from Canada. Mark Gurman, he's Bloomberg News managing editor for Global Consumer Tech. AI maybe can fix that. Maybe?
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg, and stocks continue to push higher. This as inflation data from this morning. The PPI report is outweighing a rout in chip names. Got to begin with what is going on with semiconductors. Looking at the stocks right now, Philadelphia Stock Exchange Semiconductor Index, it is down 2.6%. It is helping send the NASDAQ 100 index down by 0.3%. But ex semiconductors, we're looking at a market moving higher. S&P up 26 now, 75.70. It is up by about 0.4%. Dow Industrials up 170, up 0.3%. NASDAQ higher by 0.6%. All of this with the Mag 7 index rallying now by 2.3%. Again, the SOX down by 2.6%. The 10-year on a PPI Wednesday, 10-year yield 3.54%. The 2-year 4.12%. Gold up $17 the ounce to $4,069. That is a gain of 0.4%. Crude now at $79.88 a barrel, up 0.7. Talking about WTI, barrel of Brent back above 85 at 85.18. Brent crude up by 0.5%. Apple shares are rallying now by 4.1%. Apple has received Chinese government approval to roll out Apple Intelligence in China. SpaceX right around its IPO price, $135.37, spent much of the day trading below $135. Right now we're looking at SpaceX down by 0.5%. And Anthropic is planning IPO investor meetings as its mega listing nears. Also, the Yankees said to be in talks for $3 billion in financing from Apollo. Recapping, S&P up by 0.4%. Tim and Carol, that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master, along with Tim Stanovic, live here at Bloomberg headquarters in New York City. Hard to believe that the World Cup wraps up this weekend.
I know everybody should be watching our program starting in 18 minutes. But I think some people will be watching the semifinals of the World Cup with Argentina.
One of our
and England
producers,
today.
Sebastian, who's from Colombia, man, he every time it comes in, he's got some little great factoid or an update on.
He's working today. He will not be watching the World Cup. He will be working the whole time.
He's a multitasker. Can I just put that out there?
He
and
is.
He does
Okay.
both, everything, all well. All right, so we're saying it's wrapping up this weekend, which is hard to believe.
Did you see the Beige Book actually had some data about tourism related to the World
what
Cup?
did it say?
They said some districts report an increase in tourism as a result of the World Cup.
I love that you went there because back in early June, we actually reported out here at Bloomberg that strong hiring in leisure and hospitality helped fuel a surge in hiring in the U.S. and Canada. That was for the month of May, so it was kind of leading up to the World Cup. They talked about boosted by hiring at restaurants, bars, and hotels. The U.S. hospitality industry added the most jobs in more than 3 years in May, according to government data. Canada also saw a jump in employment, driven in part by strong hiring in the sector. That was according to a separate report. The point is, though, also, many experts and watchers said the gains are probably going to be fleeting. It's because of the World Cup.
Yeah, we'll see what John Jacobs has to say about this. He's president of U.S. operations at Silver Chef. It's operating in 4 countries, the U.S., Australia, New Zealand, Canada. About 100,000 customers globally, founded back in 1986. What they do is provide flexible restaurant equipment financing for things like stoves, fans, refrigerators, and more. John joins us from Atlanta. John, just tell us what you're seeing with your business, what you do for restaurants in bars, pubs, and how that's changed in anticipation of and during the World Cup.
Well, first, thank you for having me today. And the change has been dramatic. As we start to look at the growth and the pickup of the hospitality industry as a whole, the restaurant owners, independent restaurant owners specifically, have had this option. They needed to upskill, and that's not just in equipment, but also in staffing and point of sale materials, marketing, and everything else, and it all costs dollars. And the ability to do this in advance. Hospitality has always been one of the leading industries, and to be able to have the World Cup as an event that helps jumpstart the economy this summer has been fantastic. So Silver Chef's been able to help us as we go forward in this industry because our flexible financing has provided the opportunity to move with the restaurant market. What do I mean by that? This isn't just a one-time event. As a restaurant owner needs to look at preserving cash or to spend in advance of the event, we're here to help. but we're also here to help and provide that flexible opportunity, meaning today you needed an ice cream machine. Tomorrow, as the world changes, as we get past this World Cup event, as we head into maybe even the 2028 Olympics, you can change with your constituents and their needs and their ask.
So, John, when these guys, and like, I think you make a really good point. I mean, we've had John Tapper on tons of times here to talk about bars. I mean, bars, restaurants, it's a really tough business, slim margins, certainly when it comes to restaurants, and there's the failure rate. We all know the stories that have been talked about by that. For these folks that you work with, so you're really providing them a financial lifeline to be able to meet their needs, their demands, build out their business. So when they do something, is it often they're renting, and or what percentage actually rent to own ultimately? Or is it just that they rent it for, an uptick in demand, if you will, like something for the World Cup?
So that's a great question. It could be rented for the World Cup, but it is a 12-month weekly payment. So there is a portion of the payments that go toward equity. 60% of every payment made goes toward equity in there. Mm-hmm. We allow a restaurant owner to buy the equipment at any point in time using the equity that's built into it. There are end-of-term options. Once we go past 52 weeks, there's a loyalty program that we can put you on, or you can continue month to month with the same payment. But the biggest advantage is the flexibility, right? And that's, in this industry, in finance, nobody wants the asset back. But what we do is we say, it's cool, I want it back. Give it back to me. Let me help you grow. Today you need a single-door fridge. Tomorrow you've grown, you need a two-door fridge. We take that single-door fridge back and allow you to put a two-door fridge on a new contract and move forward. It is a remarkable concept.
You've got a great, because you're active in these different countries and you have so many customers, you have a great view on what's happening in certain regions of the world, certain parts of this country. What's hot and what's not in the U.S. right now?
Well, excluding the World Cup, which has been very hot in most markets, and not just in those host cities, but in cities that have been able to have watch parties in support of different countries. There's a lot going on. Now, I will preface this by saying that the U.S. and Canada has gone through this period of both economic question and also heat, and heat being one of the biggest issues for the summer. Most people don't want to go out, and economic disparity coming to the use of disposable income. But the growth has been in family style opportunities. People still have a little bit of this COVID hangover, and they want to go out and they want to meet. And that's what's been the beauty of the World Cup, because you go out and you support your team, regardless of what team that is. And we're all marching at the same drum. We're all paying attention to it. We're all there. You can walk to anybody in the event, whether it's at a bar or a restaurant or any other hospitality function, and be in a family environment. So we're humans. We want to be.
No, totally get it. And we've been talking about it too. It's been fun walking just in and around New York City, and just even outside of the city, just the community feel of people at restaurants, bars, watching games together. It's been a kind of a pretty cool thing to see. Having said that, though, you could be and are a great read on the economy through small business. And just got about 40 seconds left here, John. How would you describe, you've seen different cycles, your company's been around for a while. How would you describe the market for the restaurant community right now and small business, real quickly?
The restaurant community in the U.S. right now is experiencing a period of what I would consider dormant growth. What we're looking at is everybody is scaling up. Now, what they're scaling up to may be 3 months or 6 months down the road, but people are starting to put their capital at work. Now, the advantage, again, with Silver Chef is they can keep the capital in their business specifically, and we provide the financing to move forward. But there is this level of growth that everybody is ramping up to. The one thing that I hear from the kitchen equipment dealers more often than not is they are spending a lot of time generating opportunities and quotes for businesses to move forward.
All right, interesting stuff. Definitely a cool take, certainly on small business, on restaurants, and on the World Cup. John Jacobs, thank you so much. President of U.S. Operations at Silver Chef. joining us from Atlanta.
Hey, coming up next on Bloomberg Business Week Daily, we got stocks on the move with the S&P 500 up 0.3%, the NASDAQ Composite up 0.4%, the Dow up 0.2%.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, if you're just joining us, we're getting ready for the last hour of trade on this Wednesday. Carol Masser, Tim Stenovec, live here in our Bloomberg headquarters in New York City, bouncing around here on the equity trade. Little change, not even up 0.2% on the S&P, a gain of about 13 points. Dow is up about 100, 0.2% move to the upside. And the NASDAQ 100 slightly lower, down 173 points. That's good for a decline of about 0.6%. It feels to me like a meh trade.
Well, I mean, it's less meh than it was earlier today when the indices were when the indexes were completely flat.
Meh?
Yeah, I mean, but what do you want in July?
I know. I also think
a lot of people are out of town when there are a lot of parking spots in Brooklyn.
It's so true. Or commuting, you can actually get a seat. It's really sweet.
Energy's down about 1% in terms of industry groups. Utilities, information technology, and industrials are lower. Communication services is leading the pack in the S&P 500, up 2.5%. Consumer discretionary up 1.4%.
I feel like my new indicator of markets, or just like something wacky, is the SOX. The SOX is just up about 0.2%.
It is?
Oh, did I have the wrong thing?
Well, it was lower earlier.
Wait, maybe I came up with the wrong ticker. Oh, I'm sorry, it's down 3%.
Okay.
My fingers didn't do the walking correctly, apparently, on the Bloomberg. Yeah, it's been down 5%, still down about 3%.
Okay.
Yeah?
Cool. Just making sure. It's my first decliner, so.
Yeah, okay.
Yeah.
Your heart went a little fast.
It's going to be okay. Just find a new one.
Tim,
but
it is going to be okay.
It's going to be okay. That's what,
All right.
what we know.
I'm Carol Master, along with Tim Stenvick. Let's get to some stocks on the move this Wednesday. With us today at Bloomberg News, cross-asset reporter Denitsa Sikova with Stock Movers. Where do you want to begin?
I have one more decliner for you in case this doesn't work. We're going to start with SpaceX.
Oh, I love when you do this.
Shares are lower down today, and they're lower than this threshold we've been looking for weeks, the $135 mark. It's just slightly lower, but nevertheless, it's an important threshold. Of course, the ticker is SPSX. It's been a very, very volatile IPO.
Don't you feel like we could have
every
called
IPO.
this?
We could have called this.
Kind of is,
yeah,
right?
but it's always easy after, right?
Yeah, totally.
It surged nearly 50% in the first 3 days of trading, losing nearly a quarter of the value over the next 3 sessions. Obviously very volatile. A few interesting things we've been looking at. Passive flows. So SpaceX was added both to the Russell and the NASDAQ 100, and we've seen some of this boost from obviously passive funds buying up the shares. Bloomberg Intelligence says this is about $5.4 billion in buying from index funds. How long is this going to last? I guess most of this is done. So that's one pressure point. Of course, we're going to have the first quarter report. That's a massive pressure. People are worried. Is this massive spending on XAI and AI build out? What does it mean for cash flow? The numbers are coming.
Yeah.
There are some folks out there who argue that this, like other Elon Musk companies, is not necessarily trading on fundamentals currently. And, you know, when we...
So the question is, will it ever? And also, will it ever have fundamentals that make it more reasonable in terms of its valuation? Will it be profitable, right? Will it make
Analysts
money?
are positive on it.
Yeah, if you look at Wall Street, we have an $800 price target from Raymond James, but overall, 80% of analysts has a buy rating. Like, it's pretty optimistic. No one is ready to say sell. So, you know, some pressure there.
So revenues forecasted, adjusted revenues of about $39 billion this year. And what's the market cap?
Over 2 trillion, right?
Yeah.
Yeah.
I think it's suppressed.
Free cash flow, I mean, super negative.
1.7 with the declines, 1.7 trillion.
Yeah.
Excuse me, 1.8 trillion.
But still, it reached 2 trillion.
Yes.
This is the predicament that is anything to do with Elon, right? Because if you think about what he did with Tesla, same story, right?
Exactly,
Everybody was
yeah.
questioning for a long time.
And that type of volatility is pretty common and it comes and goes. And for those who dare to short some of those names, it's been a pretty painful time.
Are people shorting this one?
I don't think short interest is pretty high.
17%?
Yeah, that's actually high. That's higher than I thought.
Yeah, okay. All right, good one. BlackRock, I love this. This is a gainer today.
BlackRock, it's all about the fees, at least in my opinion. BlackRock is up today, having a pretty strong day. The ticker is BLK. So Larry Fink made this big bet to combine index funds that are low fee, passive, but obviously massive in assets with higher fee active ETFs in private markets, and that's paying off. Shares rose as much as 8.3% in earlier trading, now a little bit less. If we look at the assets under management,
This is amazing.
It's a crazy
But not
number.
a surprise.
I don't even know how many zeros to put there.
I know.
15 trillion, crossing 15 trillion for the first time. Of course, a lot of this is passive S&P flows, which is like in the trillions. But nevertheless, it's fascinating. BlackRock has been pushing into those active ETFs, in those private funds. And one important metric people are looking at, they reported 8% growth in organic base fees. And investors really care about that. It means that they can charge investors more for those massive funds. And maybe that's one reason we're seeing such a spike in the stock that didn't receive lots of love this year.
Speaking of spikes, just 20 seconds on PayPal.
PayPal obviously is working. We have reports with Goldman, Evercore, big acquisition may be coming. Stripe and Advent is looking big pop. Stock is up 17% today. We're yet to see what happens, but historic move.
Yeah. Definitely a big mover. Denitsa, thank you so much. Denitsa Sikova with Stock Movers. Check out our Stock Movers podcast. 5-minute episodes, big winners and losers. You can find it on Apple, Spotify, or anywhere. Get your podcast.
Coming up next on Bloomberg Business Week Daily, we're going all in on this extreme weather, from California heat to flash flooding in Texas, and what it all means for the grid. That's next.
ABC News, I'm Michelle Franzen. The directive issued by HHS Secretary Mark Wayne Mullen to pause vehicle stops by federal agents following officer-involved shootings in Texas and Maine has been overturned by President Trump. In Maine, the state attorney general's office says it continues to investigate the fatal use of deadly force by federal law enforcement in this week's shooting of Colombian immigrant. ABC's Victor Oquendo says the family demanding a transparent investigation.
Outrage grows over a deadly shooting in Biddeford, Maine, where 25-year-old Johann Sebastian Guerrero was shot and killed, even though he was not the intended target of immigration officers. According to representation for the family, Guerrero had a social security number, as well as work authorization in the United States. DHS says Guerrero entered the country illegally in September 2023, but obtained a work permit in 2025.
The U.S. carried out a new round of strikes today targeting Iran's coastal defense systems. It comes as Iran and U.S. vow to control the Strait of Hormuz. Iran also firing at U.S. assets in the region. Acting Attorney General Todd Blanche facing heated questions at a Senate confirmation hearing today. Senators across the aisle asking Blanche about the Justice Department's handling of the Epstein files and the DOJ IRS settlement with President Trump that led to the creation of the Anti-Weaponization Fund, which faced scrutiny from lawmakers and the courts.
The settlement fund's just not moving forward. There's no modification. It's just, it never started. No money went from the Treasury to any other account. There's no commissioners. It's not moving forward.
A Senate confirmation hearing also taking place for Jay Clayton, President Trump's pick to serve as the new Director of National Intelligence. In Atlanta, World Cup fans cheering on England or Argentina in the semifinal match getting underway this hour. The winner of today's game will take on Spain in the World Cup final on Sunday in New Jersey. That after Spain beat France yesterday. You're listening to ABC News. The search for missing boaters in San Francisco Bay continuing after the vessel began sinking yesterday.
The search remains ongoing for 3 victims on board who went missing when the boat capsized. Why the boat took on water remains unclear today. It was a cabin cruiser type boat near Alcatraz. San Francisco Fire Chief Dean Crispin.
Our understanding was there was some kind of memorial service that they were engaging in. That's why they were using this particular vessel. They were hit by a wave or took on water, and the boat capsized.
1 victim died shortly after being found. 20 in total were on the boat. The effort now is to find the missing. Alex Stone, ABC News.
A bipartisan panel in Wisconsin found that the world's richest man likely broke state law when he handed out $1 million checks to voters in the 2025 state Supreme Court election.
The Wisconsin Elections Commission has referred complaints against billionaire Elon Musk to prosecutors, saying there's probable cause he violated the state's election bribery law. The panel points to Musk's social media posts and $1 million checks handed to voters just before the 2025 Wisconsin Supreme Court election. The Brown County District Attorney will now decide whether to file criminal charges. Musk's attorneys have argued the giveaways were protected free speech and designed to promote opposition to what they called activist judges.
ABC's Dave Packer. A 67-million-old T-Rex fossil sold for $50.1 million. The most valuable dinosaur ever sold at auction. Michelle Franzen, ABC News.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business